variants of terrorism, cyber threats in a world which is getting increasingly digitized. They all constitute an important threats for us.
All right, then that's some key commentary coming in on the cyber risks. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open, right here on NDTV Profit with me, Neeraj Shah, my colleagues Alex Matthew and Hiral Daria. And guys, 2 or 3 key things aside of all the Trump commentary that has come in. One, that Asia is not looking as bad as it did yesterday. In fact, smelling like roses compared to what it looked like yesterday. So a bit of a bounce in Samsung, SK Hynix, Kospi, etc. And oil staying lower. So I think in some sense, a perfect cocktail for a bull to be happy about this morning.
Yeah, and I think more than anything else, and it'll be evident from what we say in the recap for what has happened around the globe, it is the chip stocks that have gotten sold into primarily, right? And the AI plays that have gotten affected.
Yesterday.
And so therefore from, this morning, but I think from our perspective, you don't need to worry about that.
Right. We don't know about that, but I think IT as a play continues to trade under pressure. I think that's something we need to watch out for, because the global sell-off in terms of IT has not stopped in the US markets as well.
Yeah.
That continues in terms of India
as well, absolutely. Yeah, let's get you up to speed with everything that's happened. Some uncertainty persists about the absolute fine points of the Iran resolution, because US President Donald Trump has said that Iran has agreed to nuclear inspections indefinitely, in his words, to infinity. And Tehran has reportedly said that no such concessions have been made. By the way, important update politically from the perspective of Donald Trump and his office. The US Senate has backed legislation directing the halt of US military action against Iran. Now, this is mostly symbolic, but it is also a message to Donald Trump that says that even the Senate, which is controlled by the Republicans, has actually voted in favor to the extent of 50 to 48 of the war powers resolution, which essentially means that they voted against the action, military action or continued military action in Iran. 4 Republicans have backed Democrats in backing that resolution. Domestic support, therefore, for the war in Iran has waned quite considerably. Now, what happened and what we were speaking about just a short while back, Wall Street dropped on account of sharp losses in semiconductor stocks. Concerns are rising about debt-funded AI spending and also in that context, a tightening Fed which would raise the cost of debt. The Dow has dropped as much as 0.1%, so it wasn't too much damage there. But the S&P 500 dropped 1.4%, the tech-heavy Nasdaq dropping 2.2%. But take a look at the Philadelphia SE Semiconductor Index. That index fell as much as 8% in trade today, and of course Nvidia closing with cuts of 4%. Selling in chip stocks followed a 12% drop in Samsung and SK Hynix yesterday. Remember, if you were following NDTV Profit, you would know that the Kospi in South Korea had to halt trading for a short while, and it ended with cuts of nearly 10%. Basically, it hit a circuit. Micron earnings later today will be eyed very closely because that will give you a sense of whether the earnings are supporting this massive up move that you've seen in tech stocks. Neeraj also alluded to this. Oil is cooling. Brent crude has now fallen by over 40% from the Iran war peak, and Brent crude in fact has closed at the lowest point since the conflict began. Asia, at least in the early risers, there you go. So that's Brent. It's currently at 76.7. Mixed is what I saw earlier today, and that continues to be the case. The Nikkei 225 down just about 0.2%, similar for Shanghai, and the Hang Seng trading just about flat. Let's listen in to some of what Donald Trump said, among various other things, on Iran.
Iran's been great. I mean, you know, if Iran's reasonable, if they're smart, otherwise we'll have to finish the job. Yesterday, 19 million barrels of oil flowed out of the Strait of Hormuz, a very beautiful place. You've never seen anything like that. It's called an oil gush, and most importantly, they did it for this reason, 99% for this. Iran will never have a nuclear weapon, and they've agreed to that. Now we're leaving Iran with no navy, no air force, no anti-aircraft, no missile capability, no nuclear program. We're leaving them without any nuclear capacity, and they've agreed to that, and we're getting along quite well.
Okay, I'm getting along quite well, but there are still some questions that are unanswered. It essentially has to do with control over the Strait of Hormuz. U.S. Secretary of State Marco Rubio making it clear that no nation can control or charge passage in international waters. Here, listen in.
Well, that's the law. It's an international waterway. No country is allowed to charge tolls or fees on an international waterway. That's existing international law. That's the way it is in international waterways all over the world.
Okay, so that's what the administration in the US and their stance is. Tim Waterer, Chief Market Analyst, KCM Trade, joining us this morning. Tim, thanks so much for taking the time. Your initial thoughts on the way that risk assets have moved in the very recent past? Some might call it a bit of profit taking that has been coming for some time. Would you see it as that?
Nice to be with you. Yes, I certainly think profit taking was one of the reasons we did see a sell-off. You mentioned the Kospi, and it's a sharp move down yesterday. So I think it's not surprising that it happened on the back of that record that was set recently. The Nikkei, same sort of thing there. We've also seen US indices notching up record highs this year, even with everything that's going on in the world on the geopolitical stage and what we've seen in terms of high oil prices. Yes, they've come down now. So yeah, profit taking to an extent. I think every now and then we see the market start to ask a few more questions about tech sector valuations. That popped up again this week. We're seeing a bit of a bounce back so far. Let's see if that remains the case, because I think what generally happens is tech sector gets sold off, markets reassess things and think, well, where am I going to get the best yield, best returns moving forward? And they generally tend to move back in the direction of the tech sector. Let's see if that plays out again this time round. But yeah, look, we've got lower oil prices. I think that'll continue to help sentiment, even though the bond market doesn't seem to have got the message yet, with yields still pretty high in treasuries right now.
Right. Tim, good morning. This is Hiral on this side. Taking cues from there, if you have to look at what's happening to the dollar, good amount of strength over there. You see the dollar index, which is at a 13-month high. You're above levels of 101. Now, do you see a potential, for a Fed rate hike from here on, in terms of it's getting fast-tracked? And what are the parameters that you would be tracking to actually ascertain that? Because apart from energy, a lot of other things that everyone should be watching out for.
That's right. The dollar index riding high, as you mentioned, now trading above the 101 level, very much fueled by that pivot we've seen this year when we entered 2026 expecting a rate cut from the Fed. Now it's flipped completely to expecting rate hikes, looking potentially to occur in Q3 or Q4 this year. US inflation running hot at above 4%. Let's see how this week the macro data picture plays out. We'll get a read on the core PCE, the Fed's favoured inflation gauge. Look, if we saw another upside beat there, potentially we could see a further leg higher in the dollar and also a move north by treasury yields as well. And that could test the quite resilient risk market sentiment we've seen so far this year. So, yeah, very much a story of interest rates. We had a hawkish sounding Fed new chairman last week. I'm not sure if that was what Donald Trump was expecting when he put him in the top job there at the FOMC. But that certainly fueled the dollar higher, and certainly oil prices, that had driven the dollar higher pretty much during Q2 this year, but now the dollar's finding its own strength now that we could have this inflation legacy of the US-Iran conflict, even though we are in this period of de-escalation right now.
Tim, because the oil prices have come off, the markets which were beaten down because of the rising oil prices, do they provide an opportunity if indeed what happened yesterday to the chip stocks, albeit it happened because of a very specific reason in Korea, but if it were to happen again, could the oil battered markets of the last 3 months provide an opportunity for global money?
Yes, I think so. If you look at the big energy importers who have been left out in the lurch a little bit, then I think certainly seeing Brent right now at sub $80, it's much more attractive to enter into those energy importing markets compared to when Brent was at $100 just a month or so ago. So yes, I think there is a potential there for a bounce back for those markets. I guess the big question is, does it stay here? I don't think, it's certainly not ironclad. I don't think this agreement we have between the US and Iran, I don't think they're still seeing eye to eye on what normalization will look like in terms of the Strait of Hormuz. So yes, oil down, but I still think cautiously so. And I think until we do see traffic numbers basically back above 100 in terms of shipping movements per day in the Strait of Hormuz to give the market some comfort, I think that could delay a return to pre-war crude prices. So yes, those markets who were left out in the lurch earlier in the year could get a move higher, but I think pre-war crude could be the trigger that could see money flowing into those markets more so.
I think so. That's what we should be watching out for. Thank you, Tim, so much for joining us. Always a pleasure to speak to you. So pre-war crude prices could be one of the key triggers that one should be watching out for to take a cue that money could start flowing back into those emerging markets as well. But in terms of overnight trade, or I would say yesterday's session, a very interesting day of trade, because if you see in terms of what happened, that selling pressure intensified in that last hour. Your benchmark indices witnessed broad-based selling, and you closed near the day's lowest levels after that sharp decline in the second half of the trading session. Overall, if you talk about the market sentiment as well, absolutely weak is what you would say. And this was mainly on the back of the negative global cues, because your Asian markets were lower in terms of closing. US futures were also indicating a negative opening, and Europe was trading weak. Overall, you've seen that weakness that has continued, and profit booking in AI-related technology stocks is what weighed in as well. Nifty closed with cuts of almost 1.2%. We settled somewhere around the 23,000, I beg your pardon, 800 mark, while The Sensex closed around 76,200. On the sectoral front, metals, IT, PSU banks, media, the top laggards in terms of yesterday's session, whereas you had pharma and healthcare that continued to outperform the broader market. I think it's the fourth or the fifth consecutive session of gains that we've seen in terms of pharma counters. In terms of broader markets as well, we ended in the negative territory, wherein the mid-cap index saw cuts of nearly 1% and the small-cap index fell comparatively lower, almost a 0.5% cut, to settle at around 18,800. Now, this is indicating, buying interest in select small cap stocks at lower levels. So that's where probably the alpha is right now. So clearly, the problem over here, Neeraj, is we're not able to sustain above those 24,000 levels for a long time. I mean, it's some reason or the other we are giving up that support or resistance, whatever we can call it, overall. Today as well, if you see Gift Nifty, again a flattish day is what is indicated.
Yeah, I think maybe all of us at some point of time will need to get out of looking at the Nifty and thinking of the Indian markets. Lest we be like what Japan was between 2000 to 2013, right? Or actually UK was between 2000 to 2013. Japan for a much longer time, since 1989 or 90. I mean, the Nifty may just do that. Now think of this, right? I mean, here's a very interesting statistic that, and I borrowed this from Varsity, that out of the 2,87,000 odd crores of FI selling in 2026 so far, nearly 45% has come out of one sector, which is banking. And banking is, of course, an index heavyweight as well. And therefore, if indeed some of the large banks are continuously seeing FI selling, and therefore the prices are range bound with the negative bias, it's very difficult for the Nifty to do anything, right? And therefore, I think from a trade setup, near some trade setup perspective, you could argue that Nifty is once again drifted towards that support zone, 23,800, 23,750 odd support zone. Let's see if it finds support around that or no. There is significant put open interest at 23,800, 23,500 strikes, making them fairly important support levels, I would reckon. And I guess Puneet will come in and talk about this in greater detail, but this is something you want to watch out for. I think if therefore it's becoming bottom up, and pharma is once again proving that it is the resilient sector of 2026. Time and again, you've seen pharma bets paying off, and yesterday was no different. IT cooled off, had some selling, banking has been sluggish, but pharma, in fact, if I'm not wrong, did really well in trade yesterday. So in some sense, that sector continues to be the bulwark, if you will. And frankly, if you just look at what Lawrence Belanco, for example, is observing on price action, it kind of tells you the same thing, right? He's saying that mid-cap breaking out or breakout building, but the large caps remain range bound. The Nifty mid-cap 100, according to him, is pressing against a cup and handle breakout, which is that 62,113 to 62,907, targeting 77,687 to 78,000 levels, with the upside bias intact about the 200 DMA. He's flagging Aditya Birla Capital and Nykaa as buy candidates. On the Nifty though, he says there's limited change in the Nifty. It remains range bound between this 21,743 to 26,319 range, and the key support remains anchored at 21,743 to 23,000, while resistance is at those upper levels. So I don't think too many people are interested in the Nifty, unfortunately, guys.
Absolutely. I mean, but still, I think levels do become important.
Of course they do.
To track as well. But if you look at a couple of other factors, the environment in terms of markets has shifted distinctly from a buy-on-dip structure to a slightly cautious structure right now. You are seeing a very range-bound phase, and this is coming in with a negative bias, and this is mainly on the back of the tech-led global rout that is evident. Now, your immediate critical support levels, again, that's resting at your 20-day EMA, which is 23,750. If this is broken in intraday trade, you could see some bit of more pressure. But if breached on the upside, there is strong positional support and cushioning that's coming in at levels of around 23,650 to 23,630 as well. A break below 23,630 could actually escalate selling down to levels of 23,500 as well, and there is resistance at 24,000. Apart from that, if you look at Bank Nifty as well, look out for levels of 57,750 on the upside resistance side, and on the support of 57,070. is what you should be watching out for. But clearly in yesterday's session as well, you didn't see that kind of participation coming in from banking majors. But let's quickly understand as to what the F&O cues are also indicating right now, because yesterday's sell-off that we saw was also on the back of the expiry. Puneet, good morning. What are the cues indicating today?
Well, good morning to all three of you. As you rightly mentioned, the last hour of the trading session continued to put pressure on what has been a good last 3-4 days. So we ended below yet again, very close to that support level, as Neeraj also highlighted, at 23,800, and look for a direction yet again. Now, the Bank Nifty has been offering support, but over the last couple of trading sessions, you're seeing yet again yesterday a 1.3% downtake. So very close to and below that 57,200 mark. Of course, we'll get those levels as well, but continue to monitor if we can maintain that 57,000 level, because only then will we have the next leg of rally, which is around 58,200, 58,400 and 58,800. So those levels still are some time away. We've been highlighting that from the first you'll start to get some banking updates, so maybe that could be the next key trigger on the fundamental side of things as well, but much needed as we look at strength, which a lot of participants are hoping for, at least from this benchmark compared to the Nifty 50 at this point of time. What we have seen on the cash market though, very flat kind of moves yesterday by foreign investors as well, but in terms of yesterday's trading session, and as we go into the next month also, the index long, which for the month of June as well. So we've seen 2 consecutive months where there has been no participation by foreign investors in the F&O market. April was somewhere around 20%, still not seeing those levels going into the last 8 to 9 weeks, but we continue to monitor those as well. In terms of open interest distribution, we've highlighted 24,000 as a key important level where you've seen one of the highest call open interest being built in. 23,500 has seen active participation yesterday from the put side, as Neeraj spoke about that as well. So the lower levels now starting to get some key interest, but still much lower than the historical last couple of weeks that we've seen across those green bars that you see on the left of your screen. Finally, stock-specific action. You've highlighted that within the small caps, there's been a lot more action. So IRFC, 4% kind of move in OI change, not too much, but Vedanta was under pressure yesterday, and Bharat Forge was the other one as well. But in terms of the open interest losers though, you've seen APL Apollo and Hindalco continue to be a couple of names which have seen longs being unwinded as well. So overall, continue to monitor these individual stock-specific actions, because the benchmarks are taking a nap for now.
You said it all right. That's a good way of putting it. Let's talk about those individual stocks. And on my list, I've got IRFC. This is a development, of course, that you should keep an eye on. The government announcing an OFS, or offer for sale, to sell 2% stake in the company. There's a base size set at 1% with an oversubscription green shoe option of a further 1%, which takes the total possible sale to 2%. The floor price has been set at 91 rupees per share, which is a 7.8% discount to yesterday's closing price, and you saw a 2.2% slide in trade yesterday as well. The non-retail bidding opens today, and the retail bidding is set to take place on Thursday. This is basically just an update for you to keep an eye on. Solarium Green Energy is the next counter on my list, and it has secured a engineering milestone by winning a 186 crore solar EPC subcontract to build solar infrastructure across Maharashtra, and not the largest counter, and so therefore keep an eye on this one in trade. Syngene, Macquarie has maintained and outperformed and cut the target price to 735 from 835 earlier. They're saying what they see with regard to Syngene is it's moving from transition to transformation. The Syngene stock's recent correction factors in headwinds for its contract manufacturing business, and that is from one product, but it fails to capture, in the opinion of Macquarie, the upside potential from medium-term growth levers. The new management is prioritizing stronger commercial execution and driving higher capacity utilization for improvement in profitability as well as return on capital employed. In FY27, the guidance appears to be conservative according to Macquarie as well, and they have cut the target price to reflect the recent headwinds in the contract development and manufacturing business as well. But there could be upside, is what they're saying.
Yeah, I mean, from a 436 CMP, you still have a 750 to go to, so it's a 100 rupees cut that's coming in. on the target price. On my list, it's an interesting one. I mean, you have Adani Enterprises, one brokerage note, where Morgan Stanley, what they've said is they've initiated coverage with an overweight rating. They have a target price of 3,638, a substantial upside from the current market price. They're calling it that it's anchored to the new India and India's premier incubator with exposure to multi-decade themes. They're forecasting an EBITDA that will scale up by almost 3 times by FY30. This will be driven by airports, new energy and primary industries. FY27, what they're saying, is marking as an earnings inflection for Adani Enterprises, and the drivers will be NMIA, Ganga Expressway and the copper plant, as well as the new energy capacity expansion as well. And for FY30, they're expecting Adani Enterprises to handle nearly 145 million passengers. Then this will be across its airports and have a 2 gigawatt DC portfolio through the JV route. So watch out for this one in trade. Rashi Peripherals, a smaller one, they've acquired 67% stake in VDA Info Solutions. Now this acquisition is done for clearly close to 368 odd crores. And if you talk about VDA Info Solutions, it's an enterprise technology and digital infrastructure solutions company. What they've said is they will acquire the balance 33% over the next 3 years, and this will be through a predefined mechanism. Excuse me. VDA has been valued at almost 550 odd crores, and this 100% acquisition is scheduled to be completed by August 2029. And what it helps Rashi Peripherals do is shift from its core ICT distribution business into high-margin enterprise technology solutions, digital infrastructure, and data lifestyle management. So watch out for this one in trade. And very lastly, Honasa Consumer. Now, it's interesting to see this company enter the nutraceutical segment. They're acquiring 58% stake in Fluence Pharma. The acquisition is close to 135 odd crores, and that's the enterprise value. And the buy, they've said that they will be buying the remaining 42% over the next 5 to 7 years. Currently, the sales for target entity are entirely B2B, and they're looking to create a B2C portfolio in the nutraceutical space and scale it as they go forward. They've incorporated a new arm, which is Honasa Health, for the nutraceutical B2C business as well. And in terms of valuations, the deal is valued close to 3.4 times in terms of sales, and the acquisition is small. If you have to look at approximately 1.7% to 3.6% of companies' FY26 sales to EBITDA. And in terms of Fluence Pharma, the company is a science-backed nutraceutical company. It's known for its differentiated and patented cyclical nutrition therapy, and they have a strong dermatology-led distribution network as well. So watch out for a Honasa in trade.
Okay. Well, a few names on my list today. I thought what Nandan Nilekani said on IT was interesting. So I know it's been highlighted before, but I just want to bring it up again because I also have Infosys as one of the stocks that I wanted to speak about. So Nilekani said that AI will complement and not replace traditional software systems, and said that clients will prefer building their software to meet the requirements or buying it directly from Infosys. But he says, or he thinks, it creates an even larger opportunity for Infosys. He's likely indicating that this gives the firm a market for supply of infrastructural components such as AI models, cloud infra, application programming interfaces, and more. Now, the debate is already there because this comment has been debated vociferously by both sides, people who are not so skeptical and people who are skeptical. I don't know if too many people who are bullish right now per se, but that's interesting. Infosys on its part has announced an expanded multi-year collaboration with NASDAQ-listed Global Foundries, a leading semiconductor manufacturer, to deliver AI-led managed services across GF's enterprise IT landscape. So interesting one. Let's see if there is some respite for IT today and Infosys in particular. While real estate stocks have been sluggish, Anantraj, because of its data center story, has largely been on the eyes of all the bulls. Now we're seeing a target price cut. I think, to my mind, the first target price cut that I've seen on Anantraj in a while. Nomura maintains a buy, but they've cut the target price to 650 from 700. They're saying visibility on revenues from the cloud segment should improve from Q2. Luxury group housing project to be launched in Q2 as well. But there is an EPS cut for 27 and 28 by 8 to 10% on slower than expected ramp up of cloud capacity and residential project launches. So the data center promise remains, but there's a lot of other things which contribute to Anandraj's earnings, which according to Nomura have seen a downtick, and therefore they are not so constructive. Again, a stock which has multiple promises around whatever data center capacities, but has not done too much. In fact, precious little. Real estate has just been very, very sluggish. Think of everything, right? Think of DLF, think of Godrej Properties, think of Marathon. I mean, large, mid, small, everything has been sluggish the last 6 months, so not quite going anywhere.
But I think, do you think, Neeraj, in terms of real estate, what's happening is the pace of new launches is something which is slowing down, and that probably is the concerning area right now.
That too, but I wonder if there is also a belief that margins will get squeezed because of the cost pressures uptick and the fact that the demand is a bit sluggish.
Yeah, and the inability therefore to pass things on, right? And delays also in construction, particularly in Mumbai projects.
Because of the water.
Not just water, right? So you had the assembly elections that had the labor issue earlier in the year. You had the West Asia crisis that caused supply chain issues. And then you had the pollution issue that because of asbestos particles and higher pollution or EQI in Mumbai, you had a situation where there was a stoppage of work that was announced by the BMC, and then now the latest water issue. So it's been a tough year.
And lest people think that we are talking about Mumbai real estate because we are in Mumbai. No, MMR constitutes a lion's share of overall India real estate sales. I think a very large percentage. So keep that in mind. Okay, and lastly, Jefferies on Tata Motors, PV, the PV business, they maintain and underperform with a target price of 300. Now, various brokerages have various views here. Morgan Stanley, I think, is equal weight, but I've chosen the Jefferies note because they spell it out to my mind very clearly that in their analyst meet that strong revenue but modest margin guidance for the India PV business. They say the console guidance implies a big margin expansion for JLR, which Jefferies believes would be tough to achieve. So that seems to be that principal pickle that Jefferies has in mind. Okay, we need to slip into a break on the note that you will get to see the whole watch list which is on our radar as we hit that break. Stay tuned though, we'll be right back.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence, and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to India Market Open on NDTV Profit. Now, months after the government has actually allowed 100% FDI in the insurance sector, sources tell NDTV Profit that the insurance regulator has actually received applications under the new regime. Shrimi joins in with more details. Shrimi, what are you picking up? These are exclusive details that you're picking up.
Well, that's right. India's opening up of the insurance sector to 100% FDI is beginning to see strong interest from the global insurers. What we are picking up is that IRDAI insurance regulator has received 3 to 4 applications from foreign insurance players seeking approvals for acquisition, joint venture and ownership restructuring under the new FDI regime. In fact, among the these proposals under review is Prudential's plan to acquire 75% stake in Bharti Life Insurance. Also said that regulator has received this application last week itself and said to be examining the proposal, including the implication of Prudential's existing stake in ICICI. So under the current IRDAI norms, Prudential may have to reduce its holding in ICICI below 10% of the transaction proceed, as the current rule won't allow them to actually hold majority stake in 2 insurance entities. Now, sources further indicating that a handful of global insurers are already in discussion with Indian counterparts and are expected to announce partnership, acquisition, and even the stake increase over the coming quarters. In fact, some preliminary queries have already been made to Department of Financial Services under Finance Ministry, and that indication is quite positive, as they are seeking some sort of changes in their ongoing talks. Now, given the interest emerging in the sector, industry expects significant changes this fiscal year itself. Just to underline, the space already been buzzing in the recent past. For example, Alliance has announced a strategic partnership with Jio, Piramal Group and Shriram Group are exploring life insurance venture as well. Mahindra and Mahindra Manulife are also in active discussion. So overall, government officials expect the liberalized FDI regime to attract a lot of fresh capital, and as a result, a lot of action expected in the coming quarter.
All right, Shrimi, thanks so much for that important story there, and keep an eye on the insurance stocks. We've got Parag Thakkar joining us in studio along with Kush Bora as usual. And gentlemen, thanks so much for taking the time, and good morning to the both of you. Kush, you saw drops from the top. You want to start about football or you want to talk about markets? I must ask you that first. Let's talk about markets. Let's talk about markets.
We will.
Because, I mean, yesterday Ronaldo scored 2 goals. Nothing really to talk about. Messi has already done all of the magic and he'll do it again. So let's talk about the markets, right?
You kind of covered the football bit for me. I mean, that's as much as I want to talk about Ronaldo's goals. But yeah, I mean, deserves a mention. I mean, they're always in the same league, for goals. Of course, Messi, for me, Messi stands out.
They're literally not in the same league. Yeah, one plays in the Spanish league and the other does.
That is a good one.
Our executive producer, Prakrant Tiwari, is taking offense to this.
Oh, he's a Messi fan?
Ronaldo fan.
Oh, he's a Ronaldo fan. Minority.
Sorry, Prax, I tried.
No. But just now to come back to markets. See, today is actually a perfect day for a technical analysis class, right? If the team can bring up the Nifty chart with the 100-day moving average and the 50-day moving average. Look how beautifully the Nifty has respected the resistance at the 100-day moving average, which was close to the 24,200 mark, which we've been speaking of as the resistance, and then the immediate support at the 50-day moving average at the 23,850 mark. So that level has been broadly respected. Of course, we ended just below that, and now if the team can switch to, let's say, the 20-day moving average, that's the next important level, which actually comes in at 23,650. So the 20-day moving average for Nifty at 23,650, that's the next immediate resistance. So for now, Like I said, Nifty following the technical, the technicals perfectly fine. Also the derivatives data. Remember how we've constantly been speaking about, the two heavyweights, Reliance and HDFC, having that wall of worry, if I can call that now, in terms of the call option base, around that 813.50 mark. That's acted up. Of course, even I didn't expect such a drastic fall, if I can call it drastic, but such a sharp fall. That could be attributed to expiry. If you look at the action in the last 15 minutes, right? Last 30 minutes, in fact, the 3 p.m. trade as we call it, very clearly that can be attributed to the expiry moves. So for now, the kind of data that is being set up, I would once again reiterate, Nifty is a no-go, Nifty is a no trade from a positional standpoint, because the 24,000 call option, 24,100 call option again have started to build massive bases, and the supports come in at 23,650. Like I said, the risk reward ratio not favorable. Where do you trade? Bank Nifty still the index to go to. It respected the 200-day moving average near that 57,000 mark. It's holding that. Also, the immediate support on the downside at the 100-day moving average, beautiful. At the 100-day moving average comes in at 56,400. So the risk-reward ratio is favorable. The Bank Nifty can again go up and test the 58,000 levels and move higher. So yes, with a stop loss at around 56,400, Bank Nifty is still your index to go to for a long trade.
Okay, and Kush, with that view, what are the stocks that you are recommending today?
No surprise, they have to be from this mid space. But I want to highlight one thing. मंडे को बोला था क्लियरली कि एग्जॉशन साइंस हैं इन द मिड स्पेड स्पेस, एटलीस्ट इंडेक्स लेवल पे हैं. तो कल इंडेक्स बहुत ज्यादा नहीं गिरा होगा, बट हमने देखा था द मार्केट ब्रेथ वाज वेरी वीक, राइट? तो थोड़ा बहुत प्रॉफिट बुकिंग बनता है. आई होप द व्यूअर्स आल्सो डिड दैट, और एटलीस्ट होल्ड देम विद TSLs, राइट, ट्रेलिंग स्टॉप लॉसेस, सो दैट द कट्स aren't as deep. That could well continue some consolidation here or there, but the view on the mid space remains positive. This is perhaps just a profit booking dip. With that view, the calls for today: Granules, FDC and Genus Power. Now Granules is a positional bet with slightly bigger targets. So 825, 865, these are your targets. 747 is where you keep that stop loss. FDC comes on the radar after a while. It's seen a good run over the last 5-10 sessions. Good healthy volume accumulation, clearing a few resistance hurdles. So 424, 436, these are your targets. 400 is where you keep that stop loss. And Genus Power, this is by the way an extension because we discussed it about 5-6 sessions ago. For targets of 340 and 350, came very close to that second target yesterday. Massive volume breakout, right? And of course the price action also following suit. So you can hold it or now buy it with targets of 360 and 370 with a stop loss at 335.
Got it. Okay, Parag bhai, good morning first of all. And the question is, in moments like this where you've seen the benchmark rise for 6 out of 7 days and the broader market's looking quite good, in these moments when there is a dip is the moment where you look to add, right?
Yeah, definitely. So my view doesn't change. The only problem which has happened is dollar index. Because of hawkish Fed statement, or market has taken it very in a way which is very hawkish. And that's why dollar index is now at 101.21. And that has created this is a new problem. Now war problem is just behind, oil price is below 80. But dollar index is a new problem for emerging markets and for any other asset class, right? Okay. So that is a new problem. But my channel checks.
I wanted to get to that, Parag bhai. Yes, charts, हवा में बातें एक है. दूसरा on ground reality.
Yes,
So you've now done some tremendous work on ground, right? Tell us a synopsis of what you observed.
Yeah, so I'll tell you, start with financials first. Whether it is large banks like ICICI Bank, Axis, Kotak, SBI, asset quality is absolutely pristine. There is no problem in asset quality as of now.
Despite the
the war conflict, despite the tariff things, so there is no asset quality issue. First
across
of all,
sizes.
Across. So this I'm saying large banks,
large
right?
banks. Okay, fine.
And plus credit growth is also very good. As I said, corporate credit growth has picked up. People like Axis are saying that even on the unsecured side, or Kotak is also saying, for example, that on unsecured side also they are becoming more confident, which is a positive news. Of course, credit card remains a little bit muted thing, and where everybody is watchful also. So there is no problem. Then when I speak to affordable housing finance companies like Home First, Aadhar, mainly these two, and they are saying that disbursement growth, which generally goes down. Seasonally, Q1 is weakest in terms of disbursement and weakest in terms of asset quality. There I have got the feedback that This time, the disbursement growth YOY is about 24-25%. Okay, and asset quality is as good as Q4. Seasonally, Q4 is the best quarter for them in terms of asset quality and disbursement. This time, asset quality is as good as Q4, surprisingly.
Why is the disbursement
and that too,
higher?
These guys are lending to the people in Surat, people in Coimbatore, which are affected zones.
Sure. So,
Right.
but why is the disbursement higher? What are they saying about why the disbursement?
So the demand is good. They were actually lending slowly in some of these areas which were tariff affected.
So pent up demand.
But they were slow, but they realized that actually people have figured out and people are actually repaying their EMIs on time.
Okay.
And so now they have again accelerated growth. So these are the businesses which 4.5% ROA, 4 to 4.5% ROA, available at 2 times price to book, growing at about 20%.
Okay, so large banks, affordable housing.
Affordable housing. The third one which I did was ceramic tiles. So in ceramic tiles, for example, the listed ones are actually benefiting because Morbi was slow because of the gas issue. So the market share has shifted. The prices of ceramic tiles have gone up by 20-25%. So all these guys like Kajarias and Somanis of the world will report higher revenue growth because they have increased the prices, plus they have gained volume from the unorganized people.
Correct, and that's what Somani Ceramics, we spoke to the management as well, and that's what they indicated, that they got a lot of market share because they had the raw material supplies with them, which the unorganized players did not. So in all of this, if you have to look at value.
Fourth point, let me just complete. Fourth point is that auto components. For example, Forging, NRB bearing, Rolex ring, all this, either they are of our portfolio companies or they are under my radar. Everywhere the problem was April, you had a gas issue.
Correct.
May, you had a labor issue because we had election in Bengal. And plus, because of that LPG shortage thing, workers went away to their homes. But now from June, everything is okay. And they have got huge orders. Okay. Again, there also, the people who are prepared, who are large, who are under-leveraged, they are gaining from the people who are not prepared and who do not have access to capital. So I would say on-ground channel checks, it is not as bad as people have anticipated sitting somewhere in US that India to gaya. Because oil price went up, because tariffs were 50% for some time. You know, if you speak to companies like LG Equipment and various other companies which are either in my portfolio or under my radar, the picture is not as bad, at least for the organized, under-leveraged listed companies.
Okay, ceramic tiles and auto Ank. Anything new that you've identified which will be on your radar right now?
Affordable housing finance, very clearly. These two companies which I spoke of, I think very clearly it's a 20% and above compounding, available at 14-15 PE on FY28 and 4% and above ROA, available at 2 times FY28. It's a very compelling opportunity.
Okay, that's housing finance. Anything quickly in terms of auto Ank or ceramic tiles, as you mentioned about both these?
So there I'm still doing my work and a lot of auto components. So we have discussed earlier also, like Vindacop and Samvardhana, Motherson and all that. And there the structural theme is content per vehicle increase and premiumization. And that also continues. And gaining market share from other unorganized or I would say fragmented ones.
You know, sector-wise, yesterday though, if you talk about the sectors that underperformed, of course, metal was the worst performer, but IT was not too far behind. It is in focus yet again today. Infosys management used its FY26 AGM to reinforce confidence in the company's AI strategy. Neeraj referred to some parts of that. Jasmeet joining in to talk about all of the insights from that AGM. Jasmeet?
Well, very good morning, Alison. Thank you for that. The Infosys AGM for FY26 was more of positioning itself towards the AI, where the company gave out its AI outlook and where it sees itself in the coming years. While Nandan Nilekani, the chairman of the company, gives out the commentary saying that the disruption of technology is real and this time the AI is far larger and more disruptive. While it also calls out that the Infosys is better positioned when you look at the overall AI disruption space and it's in a better place to take out the more opportunities. And he also calls out again that saying that there's an AI deployment gap which is at large large, and keeping out that gap between the AI models and what enterprise can do is a real opportunity. While he also mentioned about second opportunity, stating that the clients are shifting from using software to building in-house, where the companies like Infosys also see opportunity in building out that as well. While lastly also mentions that the overall addressable market is roughly at $300 to $400 billion by FY30, and AI will not replace companies like Infosys. When you look at the commentary by Salil Parekh, he gives more of commentary over the AI revenue of the company, which currently stands at $1 billion odd. Further, he also states that the AI revenue has been growing consistently, and last quarter in Q3, the company had given out the overall AI revenue contributing 5.3%. But this, the company shows how strong they are in the AI space, unlike the other players.
Okay. Yes, this has been an interesting time for IT. Remember, we spoke about this, that while Friday was a bad one, some bit of recovery seen, and then again some bit of selling. So it's all over the place, or was it the other way around? But anyway, my point being, every large purchase into IT is followed up with some bit of profit booking that is happening as well. So unfortunately, that's not quite working out. Parag, you are very selective now, right? Earlier you may have been concerned, but now you're very selective. Not
confused is a better word. Let us admit it. Yeah.
Not too many people admit it. So yeah. Okay,
so I clearly admit it is to and fro in IT. And one thing is for sure, valuations are extremely compelling. Extremely compelling.
Got it.
They have gone to a level where people have said that the FY27 is completely wash out, and even FY28 growth is under doubt. I hope that is not the real case. I am equal weight, and that shows my confusion.
Okay, right. Hear you. Let's get in Manav Medewala. He's from Mirae Asset Share Khan, Henny Johnson, to dissect this analyst day and the outcome thereof and the comments that have come in. What did you make of the commentary, and what's your view on Infosys, Manav? The jury split right down the middle.
So, as rightly said by Sir, it's more of an equal weight right now. We believe the recovery for Indian IT is likely to be more gradual rather than sharp. The revenue contribution remains nascent. There are not much of a growth drivers at the moment right now. So FY27 is more likely to be a transition year, focused more on defending existing revenue streams, improving productivity, and kind of pivoting towards AI-led offering. So not much of a growth to be expected in FY27 is what I believe.
But what about the valuations, Manav? Because over the course of the last 3 or 4 months, I think the valuation conversation has drifted from, they're not as expensive as they have been in the past, to moving to look at terminal value, to looking at certain other metrics to say, hey, now is the time when they're looking attractive. And every time you've had that conversation, they've dropped further. So how are you looking at the valuation picture?
So, yes, valuations are at a all-time low, but what's happening right now is even a slight miss in the result or a commentary is turning out to be, bad for the stock. Let's say what happened with Accenture on Thursday and Friday, right? So, yes, valuations are at all-time, comfort levels. One can go and one can look at the valuation, but the question remains the same. Will AI disrupt IT companies completely, or will IT companies will be able to pivot back and gain back their valuation and revenue growth?
Well, I think Manav, thank you so much for that, and thank you for taking the time out. And I think it's an important point that he's making, that tactically, if the market is in the mood of punishing some of these names, then maybe there is merit in staying equal weight and not overweight, simply because the stocks could get pummeled even if the valuations are good, as happened with maybe Accenture or some of the others that could happen. So
as we've said, as we've noted, as we've spoken to certain proponents of IT in the past who are now underweight and have barely any position in it, either equal weight or underweight. That is not just Parag Bhai, I'm talking about others as well.
Many others, agree.
So if you listen to the commentary also, only Coforge is coming on the front foot and saying, of course yesterday Mr. Nilkani has also said.
I think emphasis is done that, Parag Bhai.
Emphasis, correct. But market is not willing to listen to it.
Okay, Kush Boda, आप short कर रहे हो किसी IT stock को?
Not really. See, I can have my views, but the market will do what it has to, right? We've tried to be constructive, but like you said, every second day, there is a selling pressure that comes in. Right now, if you ask me, there are a couple of, legs of, positive divergences setting up on the Nifty IT index, even some of the heavyweights. So as long as this recent low of 26,600 is protected on the index, I think there's a possibility of a rebound on IT, but I would still prefer the mid-tier names, Persistent, Coforge and Emphasis, these three in particular.
Okay, stocks wise, and there is a development, by the way, with regard to the steel space. India has initiated anti-dumping probe against imports of electrical steel from China and 3 other nations. So that's something to keep an eye on with regard to the steel pack. But the metal pack as a whole just collapsed in trade yesterday, didn't it? Is there possibility that it will go even further?
A very good possibility, because metals is typically a momentum play, both on the way up and on the way down, right? So I've said in the past that yes, I remain constructive on the metal names. Where do I buy these stocks from? A lot of these is when they start to show stability and that first rebound. Like I said, I don't like to catch the falling knife. There is still volume-backed downtick on some of these names. Look at SAIL, look at Tata Steel. They are coming close to support levels, but whether they respect these or actually slide further remains to be seen. No point being preemptive. There are a host of other stocks and sectors to be constructive on. So for now, metals on the wait and watch list. That downside pressure might just persist for some time.
Okay, so metals on the wait and watch list from a technical perspective. Parag bhai, for you, across, you have steel prices which have corrected, aluminium, aluminium, silver, gold, and I don't think so anyone's expecting an improvement immediately. But where valuations stack, and if there is a correction that comes in terms of metals, would you look at buying at lower levels?
So there's one stock which is in my portfolio, which is JSW Steel, which I'll keep buying on dips, and another stock is Hindalco, which I'll keep on radar and I'll buy on dips, which is not there right now in the portfolio. The reason for entire metal correction is very simple: dollar index is going up. So once this entire anticipation that the new Fed chairman is going to be hawkish or is going to increase interest rates, that anticipation of the market goes, that cools off, that expectation of a rate hike. Then you will see reversal in metals and you will see reversal in dollar index, which is going up. So till then you'll have to wait. But I would say that JSW Steel, as I've told many times, it's a structural buy for me. He is the most efficient converter, and he puts plant at the lowest capex per ton, and he operates plant at lowest opex per ton, and he's a converter. So I would say that unless steel demand in India falters, or there is huge dumping in India by China, or which government of India has thankfully stopped, unless those two things happen, JSW Steel, nothing changes too much. And they have already said, Jayant Acharya, the CEO, has said that their worst case floor EBITDA per ton is 9,000.
Okay.
So,
got it. Okay. Yeah. All right. So watch out for JSW Steel from the steel pack. Soumit Sarkar joining in to tell you what the chatter in the dealing rooms is. And it's an interesting day, particularly after you've seen cracks in the broader markets. Not necessarily the index level, but certainly stocks that are seeing cracks, right, Soumit? So what are you picking up?
Well, a few stocks that dealers have highlighted that one should keep an eye out for in trade. Firstly is Vaibhav Global. There are sell flows on the large HNI and PMS desk. Dealers are expecting a block deal very soon in this counter. Dealers expect Nalanda Fund could be a potential seller here. For Haikal, there's a buzz of a potential inter-promoter transfer. Earlier, there was a buzz of a big block deal coming in, but dealers are indicating that it would be an inter-promoter transfer only. When it comes to ICICI Bank, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter at lower levels, and delivery volumes are seen on the higher side. For Deepak Fertilizer, there are buy flows on the large HNI desk. Dealers are expecting the first quarter earnings to be quite strong for Deepak Fertilizer. For CMR Green, the company will be reporting its Q4 numbers on 30th of June, and dealers are expecting a strong set of numbers here. For JSW Infra, dealers indicate that the QIP demand has been quite strong, and they have highlighted few names like SBI Mutual Fund, HDFC Mutual Fund, GQG and Capital Group among the top buyers. And Craftsman Auto was part of a segment yesterday where we did indicate that the block deal was largely the big buyers in the block deal were HDFC Mutual Fund and Invesco, and that has come out to be true if you look at the bulk and block deal data. HDFC Mutual Fund and Invesco were among the big buyers of a Craftsman Auto block deal that happened yesterday.
Interesting, yeah. And some of these, some pretty good names into Craftsman for sure. Thanks so much for that, Soumit. it is interesting that the markets have a semblance of sanity, and there are a bunch of OFSs and QIPs and fundraisers, even though we are not seeing too many IPOs. So that's one thing to note. Remember, an IPO takes a lot more planning than a QIP, if you will, I would presume. But be that as it may. Craftsman, interesting one. A lot of good buyers out there, Parag Thakkar, but expensive?
Yeah. So basically, it's a great company. I have been tracking it since its IPO. It came at 1,200, 1,300 rupees. Very good company, clean promoter, doing very well. Of course, right now stock has gone up too much, so I'm not a buyer at this price. But clean quality company and clean profit making, very good, decent proxy to India's economy, CV cycle, and.
Okay, good company is you've got the tag from Parag Bhai, so watch out for Craftsman. It's had a tremendous run over the last 1 year. Let's talk about individual counters, and we've spoken about quite a few, but let's round up the list. We've got Puneet joining in to tell you about what's on his watch list this morning. Puneet?
Well, thank you for that. The one key counter today is Tata Power, which will be continuing to be in focus. They've received an operational extension for the Mundra plant, and the Ministry of Power has essentially extended the validity of Section 11 directions under the Electricity Act 2003 to September 30th. Now, this is important because, as my colleague Varsha also was highlighting to me, that the extension was only till June 30th earlier, and given the rising power demand, the extension has now come till September 30th. So you will see 2 quarters of that in this particular year of FY27 for the company. Regulatory mandate also forces the full capacity operations of ultra mega power plants as well, and hence this is a key operational update coming for the company as well. They operate 5 units of 800 megawatts each in Mundra currently. The second one, very interesting names, a couple of them in the banking space. City Union Bank is the next one. They're looking at a capital raising framework, essentially looking to raise 500 crores via QIP in the next board meeting. Comes at an interesting time because we've seen a management change at the company. R. Vijay has taken over as the CEO on 1st May of 2026, replacing the outgoing Mr. Kamakodi, who was there for 15 years. So capital raising, something to watch for City Union. Similar one for Yes Bank as well. Interestingly, a management change there as well. They're looking, June 29th is when the board meeting is scheduled to happen, and they're looking at various instruments, including QIP. So these 3 stocks continue to be in focus today.
Got it. Okay, so interesting. Some interesting names coming in there, and in fact, Tata Power is an interesting one. City Union Bank as well, but Tata Power specifically, the Mundra plant gets an operational extension clearance. We've not heard too much about the power producers in the recent past, right? And there was this whole theme: data centers will require more power, etc., etc. That's gone a little quiet. Why do you think that is?
Monsoon market is right now running on very short-term narratives. So when summer was there, power demand went up to 11%. So now everybody was that time everybody was talking about power. Now monsoon has come, so now nobody talks of power. Now people will find out something else. But it's okay. It doesn't change the intrinsic value of the business, according to me, especially in the predictable businesses like power producers, who have a long-term PPAs and regulated ROE of 15.5%. So I would say that NTPC looks reasonably valued.
There was an update for NTPC today as well.
NTPC looks reasonably valued at current valuations, and of course you can have a look at it's a sector where you can expect 10-12% CAGR return, not too much from it, because it's a regulated sector. You have a 15.5% ROE business, and it's a predictable. Your growth is in line with your capacity growth.
Yeah, okay. And there's more to talk about in that space as well. But I want to talk about one of, if not Parag Bhai's favorite sector. So Jeffries on banks. RBI FCNRB FAQs have come through, and there's more clarity that has come through. What is Jeffries saying about that? They're saying that it's supportive, but some rate hikes are needed to lift the mobilization of the FCNR deposits, permitting foreign branch leveraging, which can reduce friction and counterplay risks, might just be positive. Allowing different rates based on tenor and value is also something that could work. There are supportive, or rather those 2 measures are supportive to FCNRB mobilization. They feel, Jeffries, that banks are offering lower rates or internal rates of returns, which can limit the mobilization. They expect the FCNRB rate hikes to take place, especially for large ticket deposits for 3 years, and will wait for rate changes by banks. Citi, by the way, has waited on banks as well. The clarification reframes the FCNRB scheme's character entirely from cost arbitrage instrument to a full spectrum balance sheet expansion play, and is extremely positive for the Indian banks. Layered atop the CRR, that's a cash reserve ratio, and SLR, that's a statutory liquidity ratio, which is what banks have to maintain in the form of government bonds. The exemption with regard to those two ratios and the favorable LCR treatment. The value proposition, according to Citi, is multidimensional, and it can potentially attract higher foreign deposits or borrowings flow than 2013. That's saying something, because if I remember correctly, $40 billion was mopped up in 2013, so you're expecting more than that from this,
50,
particularly
50, yeah.
$50 billion.
And plus now this leveraging is allowed. So, this is the thing which I wanted to highlight, that government and RBI, all this short sellers, all these short sellers who are shorting the Indian markets and treating Indian markets like a punching bag, or a funding short, as they call it. Just one thing, that government has done whatever was required, right? GST cut was timely. Now this in tax incidence on debt, withholding tax reduction, and all that was timely. Then RBI did not rush in and say, then I'll increase interest rates, because it was a supply side shock and it was not an overheating of economy. So he took a call, which was a brave call, not to increase interest rates. We have heard many banks, central banks, increasing interest rates, right in the middle of the war. When you know that war is going to end sometimes, or actually oil prices will fall, but still our RBI held on and they said that no increase in interest rates. And now this FCNRB deposits to attract for FPI flows. So government and RBI are also doing all correct things, and they are in full force. So I would say that I am not seeing so much of negative signs as what market is indicating.
Okay.
But I mean, the only thing out here is that for specific banks, I was just looking at the stock price, and then we'll of course mark the markets. But HDFC Bank has been at this range bound, 750, 770 for 5 years. Now, yes, it's a high quality bank. Yes, it's traditionally given returns. At some point of time, I'm sure it will. But you could have made this argument in 2024, and still for 2 years on, it's still not given returns. That's the problem with. I mean, it's HDFC Bank. ICICI Bank has. I mean, some of the others have, but Kotak, HDFC Bank haven't, and that's the truth. But anyways, so no comment. I mean, ICICI Bank, fabulous franchise and has given returns. So it's very, very bottom up also within this larger banking pack as well. So please keep in mind, and your risk appetite and your time horizon could be very different from experts who comment about this on air. So please bear that in mind when you're making your investments. But the markets have started, the pre-open rates at least have started. So let's pull the rates up. Not too much in terms of news flow today, I think. But IRFC, for example, there is an OFS at a floor price of 91 maybe. So that stock could be in focus, about 94, 4% lower. Yes, Bank has a board meet to consider raising of funds through issuance of equity and debt on June 29th. Maybe it is in focus, but just struggling at 24. SIS, board meet for a proposal of buyback of equity shares. Maybe this market likes it, up about 3% odd. And Craftsman had some very good buyers in the block. HDFC, Invesco, Franklin Templeton, etc. Maybe that overhang going could help the stock. And of course, then a clutch of brokerage notes, right? Jefferies on Tata Motors, PVs maintained underperform. CLSA has come out with a note on Vedanta Aluminum with an outperform in a target price of 540. So multiple stocks. But Biocon is certainly strengthening its Malaysia play as the partner duo Pharma wins a sizable government insulin contract. Varsha has details on this. Varsha.
Total contract value stands at around 515 crore, and the Biocon's Malaysia partner has won insulin contracts from government. Now, what will Biocon do? So, Biocon Malaysian arm will supply insulin products, which includes your human insulin, insulin glargine, and of course insulin aspart. Now, this supply is only meant for Malaysian government healthcare system, which is to improve access to affordable insulin for diabetes patients. Now, if you see, around 4.75 million people in Malaysia have diabetes, and this will actually strengthen Biocon's presence in Malaysian market, which will also support government push for better healthcare access. And onto the capacity, almost $600 million has been invested into this Malaysian unit since 2011, and this facility is actually approved by US FDA, EMA, and other global regulators, and only Malaysian facility which has been approved by both US FDA and EMA approvals for Stellite Biologics. So overall, yes, a positive development when it comes to Biocon.
Got it, got it. All right, Varsha, thanks so much for that. Stock is up about 0.9% in the pre-open session. Let's see where it goes. In the meanwhile, we've got Chandan Taparia, who's Head Technical and Derivatives Research at Motilal Oswal, joining us this morning. Chandan, very good morning to you, and thanks so much as always for taking the time. When you look at the equity markets, do you think that yesterday's drop was warranted after the kind of run-up that we've seen, particularly in the broader markets? And are you looking at the rest of the week positively?
Good morning. Thanks for having me. So yes, the market fell to cheer an important level of 24,224, and after the struggle of 3-4 days, it witnessed a corrective move. Multiple reasons are there behind the same, because market rallied by more than 1,000 points after forming the bottom of 23,072. It headed to 24,189. Again, now it's flirting near its 50-day exponential moving average, but yesterday decline was sharp, and that is restricting the upside as of now. So I believe again market could be the range bound. On downside, 23,600 could be the support. Upside, 24,000 to 24,100 will be the hurdle. So the trading range is going to be there, and upside seems to be kept. We have seen some change in the data setup. The India VIX has seen a spike of around 9%, now back to 14 marks. FI's long short ratio is near 13. Put call ratio has seen a decline, and the Bank Nifty, which was comparatively holding well, also witnessed a corrective move of 700-800 points from higher levels. So I think because of that, some more consolidative could be there. 23,600 could be the key trigger for the week to again attract for the buying or decline strategy in the market scenario.
So, a range-bound upside is capped, Chandan. In this kind of a market scenario, what would your top picks be?
Yeah, so positive on the Nifty Pharma. We have noticed that Nifty Pharma Index has given a consolidation breakout. In fact, a formation of bullish pole and flag on the weekly chart. So most of the counters are doing well, and here I would prefer to go long in Lotus Lab, one of the strongest counter, which is up by more than 33% in this year. It has given a consolidation breakout on the daily and the weekly chart, has been making higher highs, higher lows. So with support of 1444, look for an upside target towards 1540 marks. One is the mid-cap idea, that is the Janus Power. And this counter has seen a major consolidation breakout with significant spurt in the trading volume. It has given a consolidation breakout of almost 33 trading session with a decisive close above 335, 340. So one can buy with support of 335, and this counter can head towards 365 to 370 marks.
Again, there is a bit of a commonality. Chandan, thank you so much for that. Kush, did I hear you talk about Janus Power as well?
Absolutely, for targets of 360 and 370 with the stop loss at 335. Yeah.
Okay, 360, 370. Can I just bring up Chandan's recommendation on Janus Power and the target price as well, if we can? Chandan's target price is circa 365, wedged right there, right? So 349, guys, two experts talking about Janus Power. Keep this at the back of your mind. Now, guys, I'm seeing a sales note today from Nuvama, I think, which is saying that transformers channel checks, they've done some transformer channel checks, and therefore we should bring up the stocks like Taril, Voltap transformers and some others. So they are saying that their channel checks are suggesting that transmission capex is plateauing and transformer pricing has started to come off and may reflect in operating profit margins. Of course, they say FY 29-30, that far out, but they are saying no new trigger after the current HVDC ordering in September. Softer pricing also led by higher capacities coming in 400 kV, and therefore all high voltage transformer companies could be impacted barring CG Power. Now, Parag bhai, the belief is that with the kind of capex happening in the power sector and the shortage of transformers, the golden run could continue. They are saying that the capex is plateauing and pricing is starting to come off. Will it show in the transformer stocks if indeed pricing is coming off?
So I'll tell you, as I've spoken earlier also, I was with a very good one of the names which you showed, and they are very clean and honest people. So they told me that current margins, which was there 2 quarters ago, 21% EBITDA margin. He said we had never dreamt of that. We are making just a simple product transformer, and we can make 21% margins. And now the margins are correcting. So I agree with this note that margins are going to correct. And I would say that, see, nowadays this is my biggest problem with the market. Because of these algorithms, hedge funds, one trade catches, then it just goes on and on and on. and takes you to the completely overvalued zone where there is no fault of company, but you have taken it to such a level that it cannot resist there. So I would say that this is happening across things. So again, this space is also, I think, highly overrated. The multiples here are tremendously expensive.
All of them, Parag bhai, Taril, Voltamp, CG Power, etc. You think all of them?
So CG Power, as this report also says, is slightly different. Yeah, they are putting semiconductor plant also. Of course, the stock is very expensive, but it will find its buyers because the management is superb and growth is there.
But the others, there is a risk of a price erosion.
100%. Even I would say that even this AI-led automation, robotics, whatever you call it, okay, ABB or Hitachi Energy or all this, above 100p.
You won't get that. Okay, fine. But lest viewers get confused, sorry, very quickly. We are sticking to transformers and Kush Bora. I want you to tell me on the charts, transformers and rectifiers, as well as Voltamp transformers. Two names out there. What do they look? How do they look?
Very steady, very gradual uptick. I wouldn't really play for momentum, but if I were playing for like a steady uptrend in a positional manner, I would consider Voltamp in particular with a stop loss at about 9,500.
Okay, so that's for Trill and Voltamp. Voltamp is still slightly on the expensive side as well. But if you have to look at, it's 9:10. It's time for the big brokerage call as well. JP Morgan has downgraded IT. And what they've said is they're calling it as the sector continues to remain under pressure with AI deflation being the key headwind for the upcoming years. Sharad joins us with more details. Sharad, what are you picking up?
Well, good morning, Hiral. And largely what you're seeing from JP Morgan is a downgrade coming in for the large cap IT names. HCL Tech's downgrade is there. It's pretty significant, to be honest, from the target price. If you look at it, Wipro, Tata Tech also have been downgraded to the underweight category. Now, of course, they've stated that the Indian IT faces an uncertain demand environment going ahead. Also, a little bit of concern is just a 2 to 3% revenue growth, which has come over the last 2 to 3 years from the industry. And the AI deflation is only in the year 2. Also, in the light of this uncertainty around the timing of positive inflection, there's they are moderating their medium to long-term growth estimates. They do not expect large caps to hit mid-single-digit growth and over around that 3 to 4% revenue growth. And lastly, the overweight at least remains for TCS, Infosys, Tech Mahindra, Coforge, Persistent, and Sagility.
Got it. All right. So quite a few stocks there. By the way, since we were talking about power-related companies, GE Vernova, T&D, this is something that Jefferies weighed in on yesterday, and there was a note that they said it was a hold with a target price of 6,000, which is still a considerable upside, but they say that no large parent orders in FY26, gross margin upside may be limited in FY28 to 29. The value of the company at 65 times price to earnings for 36% EPS CAGR over FY26 to 28 does not offer upside from this point. So it's effectively the same that you've said
valuations,
right now.
There is no fault of companies. The valuations market has taken to some crazy levels.
Okay, 2 minutes left. Let's nail it down to that one top idea from both our experts. Chandan Taparia, you've given us 2 ideas. One of them was Genius Power, I distinctly remember. But now that the pre-open rates have settled and you know the rates at which some of these stocks might open up, what is your one top call for the day today?
So I think better to go with Genius Power if you consider that idea. With support of 335, I've given the target of 365, but one can revise the target to 385 to 400 also.
But Kush?
How would it be if I said the same stock, right?
It's cool.
No, of course.
That is your top idea, sure.
No, it is. And, the consensus itself kind of speaks for the strength of the stock, but I will go with another one, which is FDC. Also a stock that we discussed at opening marginally, in the green. So the risk reward ratio is still favorable. 424, 436 targets, to reiterate. 400 stop loss. Maybe if you want, you could bump it up to 404.
Either Monday or Friday, ZF Commercial was something that you highlighted, right?
Yes.
The stock is up 5% in pre-open. What would you do?
Absolutely. I would continue to hold. Well spotted, Alex. Thank you so much for that. It was the weekly pick. Now very close to the first target. In that case, it was 16,500. I think there's a bonus of 5:1 on this one. And hence, you're seeing the price change. I would continue holding on to this. Just bump up my trailing stop losses to about 2650, 2700.
Okay. I would want to talk to Parag Bhai about Honasa, but we'll do that after the opening. On the charts, if you look at a Honasa, Kush, would you be a buyer? There is some uptick, but on the fundamental side, it's diversifying into nutraceuticals as well.
There is certainly an uptick. Risk reward ratio at these levels not favorable. So maybe a dip closer to 410, 415 levels is what will make an interesting entry point for Honasa.
Okay. Well, some fabulous calls given by our experts the last few days. Some great conversations today on the show as well, I must admit. So now, as we prepare for the market to reopen, remember, Asia is a lot more measured in its performance right now relative to yesterday. I think some of those markets, including Korea, have bounced back, and Samsung and SK Hynix are in the green, so that helps. But let's see how we start off. We'll start off presumably a bit lower today. The question is, what do we do post that? And do we kind of hold on to those lower levels, or do we bounce back? For now, flattish actually. Not bad, really. It's actually not a bad start, with the market with it looking good. So suffice to say that the mid caps and small caps may not be cracking under any way. Small cap index is flat, mid caps are flat too. Actually, it's a fairly flat start, you could argue, for almost all key indices. Nifty IT though is bouncing back 0.5%. Interesting to see if Infosys is actually leading the charts or no. Let's get the heat map up on the screen and see what's moving and what is not. See what is in the green. It's even Stevens, by the way, so keep that in mind. Equal number of green and red. Tech Mahindra and Infosys, two stocks in the green at the top of the pile, followed by Adani Enterprises about 1%. Dr. Reddy is up about 1%. Cipla is also in the green. ICICI Bank making its presence felt. So a bit of IT, a bit of pharma. Only ICICI Bank, no other banking name in the green really. So bear that in mind. I saw Indigo somewhere. There is an HSBC note today which is saying that key questions answered and they are constructive there with a target price of 5,500. Indigo is doing okay. What is not doing well? Bajaj Auto 1.5% lower. Airtel down about 1% as well. HCL Tech down about 1%. Hindalco down about 1%. I think the markets are choosing Parag Thakkar stocks today and shorting them. Eicher Motors, Grasim, HDFC Life and NTPC are some of the others. But really fairly muted start on the gainers and the losers. IT is doing well, interestingly. So bear that in mind. Maybe the pressure on the bourses is coming in from the losses in Airtel because it's a heavyweight for sure. Maybe a bit of Maruti as well. So I think those are the ones which are kind of pulling the index lower. But Alex, not bad for IT.
Not bad for IT, particularly in the context of what happened yesterday.
Sorry, one more point. Sorry, I just missed it. Adani Enterprises, I think it's on account of that Morgan Stanley.
There is a Morgan Stanley note, and considerable upside is being seen even from this point. But let's talk about the sectoral picture as well, because this is kind of likely going to reflect what you're seeing here. Yeah, exactly. So you have IT that was the second worst performer in trade sectorally yesterday. It's bouncing back somewhat, about 0.8%. Pharma continues its up move from yesterday. It ended with gains about 0.9% as a pack. As a whole, it is still gaining about 0.6%. Healthcare was okay yesterday, continues to do well today. PSU banks just about 0.4%. Nothing really to write home about. In the Nifty Bank, that's the preferred index, at least if you look at the sectoral indices. Kush spoke about it today, but 0.33%. Let's see where it goes towards the end of trade. What is not doing well at this moment? Auto, but just about 0.25% lower, and media, not too much to speak of here as well. Consumer durable. So what you'll take, I guess, is the fact that you're not seeing too many big cracks on the screen. The only question is, when will the momentum kick in on the upside, if at all? So let's talk about individual stocks, and Honasa stands out. This is the acquisition that they've made, and we spoke about it a fair amount of detail. We'll speak some more about it after. No, it's completely unchanged in the nutraceutical space. So it's certainly something to watch out for, but we'll see what this stock does in the rest of the session. Tata Power, positive regulatory development for the Mundra plant. Stock is up about 0.5%. Rashi Peripherals, they set to acquire 67% controlling stake in VDA Info Solutions. The stock is reacting up about 5.2%. City Union Bank, there's a QIP that has been approved by the bank. Let's see what it's doing. It's about 0.9% higher. A couple of order wins. Solarium, which we can't show you, it's doing pretty well, but remember, it's a sub 500 crore market cap company, so bear that in mind. And GRSE, there's an order win here as well. But the steel companies losing ground today as well, but less so, I would think, than the aluminium counters. Of course, there's a probe by the government with regard to dumping of certain electrical steels from China and certain other nations. Yes Bank is set to consider fundraising. The stock is up about 1% or so. You have SIS, the board meeting is set to discuss a buyback 5.6% or thereabouts. IRFC is losing ground. It was expected to do so. It was a 7.7% discount to yesterday's closing price, the floor price that has been set for the OFS. And finally, solar export stocks. The WTO body has agreed to examine Indian solar tariffs. According to an official, all those stocks are currently in the green. So Hiral, frankly, not too much in the way of stock-specific information or fundamental news. I wonder if there are any big movers in the broader markets.
Yeah, I mean, in the broader markets, I can also pick up a Rashi Peripherals on the back of the acquisition. That stock is seeing some strength in today's day, 6% up move coming in there. On a Bajaj Auto as well, the reason you're seeing pressure is because it's the buyback record date today. So that's the reason why you're seeing that 1.7% kind of a cut coming in terms of Bajaj Auto. Apart from that, you have IRCTC, 5% downtake on the CMD resigning. The news did come in yesterday, and that stock is seeing cuts right now. I think we're seeing 0.3% on the charts right now, but I think my screen is showing me something else. But a KPR Mills, let's pull up that one on the screen. 7 to 8% up move coming in on that one. The pharma pack is very interesting because it's the 5th or the 6th consecutive session, but the gains have continued. And today as well, you have the healthcare and the pharma index, which is the top gaining one. In fact, let me ask Chandan this one. Chandan, from the pharma pack, anything that can see further momentum on the upside from here on?
Yeah, so I like most of the pharma counter. In fact, in the early commentary, I discussed about Lotus Lab, but I'll mention one mid-cap idea as well here. That is the Marksons Pharma, one of the strongest counter, which is all set to give a fresh leg of rally. In fact, on the monthly chart, it formed a rounding formation, making higher top, higher bottom on the daily and the weekly chart. So here we can look for long side of position with support of 263. It can head towards 290 kind of level. Apart from that, as I mentioned, Lotus Lab could be on radar. Counter like Biocon could be in focus. Apollo Hospital and hospital stocks or healthcare stock could be in focus. One can look at the Apollo Hospital with support of 83.80 for upside target towards 87.80 kind of level. So these are the couple of pharma names which can do better, but entire pharma index looks better in this market scenario.
Okay. Very quickly, we'll make that point. You wanted to make a point because this Markson was your pick as well, right? So you want to revise your levels?
Markson Pharma was a weekly pick a couple of weeks ago for a second target of 275. That was also a bump up, because we previously mentioned that with targets of about 240, 245. So on the run, you might want to continue holding on to this stock. In fact, I'll add a few more names, KIMS and Shilpa Medicare. Look at the kind of moves that these stocks made in the market yesterday when we saw that deep gash. The point being that all three of them were weekly picks. They're continuing to do well. KIMS a little soft, but nonetheless, a good momentum in these. So I would keep these on my radar.
Okay. Gemen, all of you, thank you so much for taking the time out and being with us. Really appreciate your time this morning and your ideas, of course. Some of them are making wealth for our viewers for sure. Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital, joins in right now on the show. Sandeep, great having you. Thanks so much for taking the time out and being with us. Neeraj here, good morning. I believe you guys had a conference, your annual India Investor Conference in the last 2-3 weeks sometime. Tell us, what has been your view by and large? Was it reinforced at the conference when you spoke to companies as well as your clients alike? And what's the post-conference outlook?
Well, we had the Asia conference, which happens every year in Hong Kong, and we have companies coming in from India and for the entire Asian region. And the outlook as far as India is concerned actually was completely benign and in fact a bit positive. We didn't see, we are not seeing companies showing any stress in top line growth. We are not seeing banks report any issues with non-performing loans with the MSME sector. So I think the sense one got is that for now the business is still strong. I think on a run rate basis we see automobile numbers hold up well. Consumption was also broadly fine. So that's the message I got. But what I of course was very interesting was what the rest of Asia is seeing, and the whole focus was AI, chips, and Korea and Taiwan. And the biggest question was, how long will this AI rally last? and whether India can perform this year. So that was the real, interesting part of this conference. But underlying fundamentals of India seem to be holding up well.
Sandeep, so whether India can perform this year or no would be a factor of what the Nifty does, or will India set to have performed even if Nifty were to flatline, but individual pockets do well? I mean, normally people say don't miss the forest for the trees. Is this the time to let go of the forest view and focus on the trees?
Yeah, I would tend to agree with what we are saying. Actually, we are seeing a lot of movement and positive wealth creators below the Nifty headline stocks. So to that extent, yes, I would agree. But finally, if you look at foreigners or large institutional investors, their exposure is still with the large cap stocks and Nifty and all these large movers. So to say that the market will continue to perform if these indices flatline may be a bit challenging, but that doesn't mean there's not opportunity below the headline stocks. That's the way I see it. But finally, the large institutional index players, so on, will still always look at the Nifty, and comparisons will be made across countries on headline indices.
Sandeep, very good morning. Alex here. So therefore, that begs the question, couple of questions actually. One, if you're saying that the underlying growth, top line growth, and for banks, the asset quality, etc., is looking benign, it's looking good. So therefore, can the argument be made that the underperformance of large cap India vis-a-vis various other countries, because of the favor that AI has found, when that unwinds to a certain extent, which to a certain extent we're already seeing, we'll see that catch-up trade? That's one. And two, is there still room at the broader end? Because we've seen at the index level itself, Sandeep, since the start of April, 25% on the small cap index, 18% on the mid cap index, and much more in the way of individual stocks. Is there still room on the valuation side?
So, I think there are two parts to your question. Yes. So one, whether India will see the catch-up trade. I think India can see the catch-up trade, but in the interim, India will see pressure. We are seeing pressure come through because stocks in the region are coming off. So if there is a broad-based sell down in the US or in Asia, I mean, essentially the US, because if US sells off, then Asia will sell off, and then India will also sell off in the interim. Because on the large cap stocks, there's not still much big valuation comfort, or there's no real expectation of big earnings surprises. What I said was that we are doing fine. That doesn't mean we are going to surprise on the upsides in terms of earnings and fundamentals. India itself has come through a difficult phase on all prices. We've seen RBI cut its GDP growth numbers. We've seen RBI raise its inflation expectations. So net, while India is doing broadly okay, we are not going to be a big surprise. So the catch-up trade can only happen if there's an earnings surprise or there's real valuation, a comfort in terms of the valuations are very cheap. So I would think that in the near term, India will therefore remain in line with the market movements overseas, especially US and Asia. And then if we see real valuation comfort or earnings surprise happen, then we can see earnings, the market start catch-up trade and the reverse trade. As far as mid cap, small cap, yes, but these are very specific and very individual company driven. So to that extent, you need much more due diligence and much more research than some of the large caps, which are known items and have much better quality of disclosures and management. So the risks are higher in these.
Fair point, Sandeep. Let me ask you about your earnings expectations, right? And a lot of people are contemplating what the impact of the West Asia crisis will be on Q1 and what bearing that will have on the rest of the financial year. And I guess to a certain extent, we'll know in the next 2 to 3 weeks, right? At least we'll start to get to know. What is your baseline and what would surprise you on the upside, on the downside?
I think the baseline is around 12 to 14% earnings growth for the reported indices. But the real issue is whether we'll see margin compression happen in especially the reporting which happens in July. The June reporting, will be June margins will broadly hold up because I think the raw material inventory was at lower prices. So historical lower price inventory will come in and probably boost margins for the July quarter. But the July to September and October to December quarter, is where the margin compression will come up. So that's what we need to watch for. So maybe it's not in the next 2 to 4 weeks that we'll see margin and earnings compression come through. We'll probably see after the July-September quarter.
So that's with regards to overall markets. Sandeep, good morning. Hiral here. My question to you is with regards to banks, because we were just looking at what's happened between PSUs and private banks, and your private bank underperformance is something which has continued. What is it that will take the private banking space to actually break out of that narrow range? And to add to that, you need some things that will be done at the global level as well. Like, for example, if you look at the Fed, people are expecting something from the Fed. You are seeing something that will translate into, what the RBI does as well. So overall, what is it that you're watching out for to start seeing private banks move now?
Well, I think the banks sector as a whole is doing fine. The private banks are essentially marred by one large cap bank, HDFC Bank, which has been a large underperformer. So if we see that change, then I think the private sector banks will come through. In fact, everyone thinks that the US should see a rate increase by the end of this year. India may also have to do a rate increase if all around the world we see rate increases, just so that India's currency doesn't come under pressure. Broadly, NIMs for banks will actually be in a good place. The loan growth we are seeing across the board come through much stronger than it has been in the last couple of years. So banks' earnings will do actually better than average. The real question is whether we'll see some of the large cap private sector bank names start performing. If that happens, I think the entire private sector pack will also perform.
That's an interesting point that you make, especially when it comes to an HDFC bank, and that's what Neeraj was pointing out as well in our earlier conversations. The other question I have for you, Sandeep, is with regards to where capex goes. Now, if you have to look at the corporate credit growth as well, how is the current pace of the kind of government capex that you're seeing impacting your near-term corporate credit growth? How are you looking at that entire schematics of things play out? Because the West Asia crisis is something did put a lot of things on the back burner. There are jitters amongst within corporate India as well as to on what direction to go to. So how are you looking at it?
So we did actually a couple of tours also after the Asia conference. We've done West Bengal tour after the change of government. We also did a pharma tour in Hyderabad and Bangalore. And all across, clearly capex plans are still ongoing. There's no big rollback, but I don't think that the entire bank lending growth will be driven primarily by capex. It will still be driven by retail loan growth and private sector and individual loan growth. To that extent, I think as far as the economy holds up, there should not be a problem for banks.
Sandeep, I do want to ask about the earnings and what you referred to when you spoke to me, right? And you answered with regard to your expectations on earnings, and you spoke about margin compression. One of the features of the last few quarters has been the resilience in margins, and in several situations, pretty decent expansion in margins, but the top line growth was in question. Generally, when you have pressure on commodity prices, various other issues coming through on that front, the tendency is to gravitate towards market leaders because of the resiliences that they showcase, right, in their individual sectors. Is that something that you anticipate will play out in the first and the second quarter earnings?
So I think the large cap can show earnings resilience to the extent that we don't see margin compression. I think that may happen in the commodity sector, which have seen price growth. But I think we'll have to wait and see, and it would be a positive surprise if margins expand in the September-October reporting period. So if we see that happen, that would, at least to my mind, be a positive surprise for the markets. I would still think that there would be some margin compression in manufacturing come through in the second in the July-September period. Definitely, that's what I would expect, because the margin expansion which we saw in June was essentially due to lower priced raw material inventories.
Sandeep, there is one concern, maybe because of the delayed monsoon plus all that's happening, the conflict, so on and so forth, that the second half of the year might see a reduction in demand and finances for the household, for the state, for the center, etc., and therefore consumption may as a whole suffer, and therefore this 18-19% earnings growth being penciled in at the start of the year for FY27 might well come off, independent of the conflict as well. By the way, where are you on this argument, and therefore do you believe that if that were to happen, there is a downside risk to the headline Nifty levels as well, and therefore some of the other sectors might also get pulled down along with?
So we had a conference call with the chief economic advisor, Dr. Nageshwaran, and he said some very interesting points. He says that the fiscal deficit, the government wants to keep it under control and borrowing under control. We've seen these public sector OFSs happen to raise more revenue. India generally has missed its divestment target, but we are actually doing better on a run rate basis for the current year than we have done for a long time. So to that extent, the government is aware of the fact that there could be pressures on consumption, there could be pressures on top line growth, which is what you're asking me. We'll have to wait and see the interplay of factors. Right now, I would not think 18-19% earnings growth happens. I would think 12 to 14% earnings growth happens. And mostly the large cap names, undershoot in terms of earnings. And if that happens, the headline Nifty, as we have discussed in the beginning, would basically be flatline or single digit returns at best. But under the hood, there is still strong fundamentals, strong growth happening in the economy. There's no real large cause for concern. If the physical supply of LNG, of oil, as we now expect and now see, comes into India, most of the pressures that we anticipated, India will be able to tide through by September, November. The real issue is now, how rainfall can hit consumption and agricultural output and broad consumer staple demand. So that's the only negative variable that we need to monitor.
Okay. Sandeep, that's on the consumption side as well, what we need to monitor. My question to you now is in terms of IT. Overall, the word on the street right now is that probably once you see the AI demand, or not demand actually, the euphoria around AI and the global markets tapering to some extent, then is when you will see that momentum pick up in terms of Indian markets as well. Currently, what is your stance if you have to look at Indian IT players, may it be large caps or mid caps? Because it's a very divided view that everyone has right now.
So IT is clearly a pain point for this market. And in the interim, that doesn't change because the entire AI food chain, primarily starting from the hardware suppliers, are making a lot of money. Hand on heart, I don't think anyone exactly knows what is the medium to long-term impact of AI. We have leaders such as Nandan Nilekani say that India will actually benefit. I don't think anyone can, as an investor, I would basically continue to be a bit cautious. I've seen all kinds of meltdowns happen. We saw that happen after the Y2K boom, and everyone said that now there would not be any work. We saw that in the financial crisis in 2008 when IT budgets for banks and financial institutions were being cut because that's the largest client segment for IT companies. And if they see cuts there, then there's clearly trouble. And now we're seeing the AI-driven issues on the entire IT sector. I would not be as bearish as what the prices are currently indicating, but this is clearly a transition period, and that transition period could well last for the next couple of months. So wait and watch, but it's not completely bad news in my view.
Sandeep, just to follow up to that, and of course, your focus is obviously India, but I do want to ask whether you have an opinion on this global dialogue, and you had people like Ashwant Damodaran weigh in and talk about the entire AI boom and what has happened to risk assets therein, and what the implications are. You referred to the dot-com boom and bust, right? And he juxtaposed the two, and he said that if there is a bust, it would be far worse than the dot-com bust because of the kind of capex spend that people are doing or companies are doing, and they're funding it with debt. If there is a bust, and nobody knows whether this will happen, what are the implications for India, which has missed this entire rally in the first place?
So exactly, I think that's the most debatable and the most important point. As I have said in the beginning, it's going to be Asian markets, US markets, which will decide the headline performance for India. Though despite that, broad economic fundamentals look good. So to answer your question straight up, I think if there's a major bust and there are real financial issues, fiscal issues in the US, then all markets will suffer, including India. So that's what I would think would happen. It's impossible to predict when and what is the extent of this blow up, and if that is something which is long lasting in terms of its fiscal impact. Clearly, in 2008, when there was a major financial crisis globally, every market fell off, and so did India. India did better eventually than other markets, and that's what I would think would happen if there's an AI bust up.
So thank you, Sandeep, so much. Your views are always welcome and always a pleasure to speak to you on NDTV Profit. But moving on, Paras Defense, that's a stock that you should be watching out for from the entire pack. In fact, defense as a sector also, as we're saying, has been in focus. We've witnessed a sharp rally in the recent months. 65% up move that's coming in on the Paras Defense in the month of June itself. And that's mainly driven by optimism around the defense optics business, a strong order pipeline that everyone's talking about. We will speak to Jyoti Gupta, Senior Research Analyst at Ashika Institutional Equities, to talk about Paras Defense and the sector as a whole. But before that, Sharad joins us with a deeper dive in terms of what's happening with the Paras. Sharad, over to you.
Well, Hiral, interestingly, this is just, the euphoria is there for just one product, and that is the periscope for a submarine. And interestingly, India's only supplier happens to be Paras Defense. If you look at the overall momentum in the stock, there has been very strong momentum. The stock is up more than 50% in the last 1 month itself. And tomorrow there is a mega meet of more than 65 investors. Now, of course, this also includes astute investors, fund houses, FIs and DIs, and the street is quite bullish on this important announcement. But the question remains is there a further upside left? Firstly, this is less likely right now. The stock has already gone up. If you look at the 12-month forward P ratio, that's at 90 times right now. Compare that with its 2-year average, that comes in at 57.5 times. Also, the consensus target price suggests almost a 47% negative return over the next 12 months. And also the fourth quarter, we had seen that there was a rising raw material cost, almost 118% year-on-year growth coming in the fourth quarter as well. So maybe the stock has run up a lot and valuations are not attractive at all.
Interesting. Thanks so much for getting us those details on Paras Defense. But to talk about the space as a whole, we're joined by Jyoti Gupta, Senior Research Analyst, Ashika Institutional Equities. Jyoti, thanks so much for taking the time. Always a pleasure speaking with you. Let me ask you about what you make of the space, right? Because in the recent past, you've seen orders come through. You've seen greater intent from the perspective of the government to float defense orders to the private sector players, right? What are the implications of that, and what are the numbers that you have been focused on this year?
Are you asking? Good morning, and thank you for having me on the show. So is it about the industry that you're looking at?
Yes, that's right. We'll delve into individual counters post that. I wanted your view on the sector as a whole first.
So see, I am structurally very constructive on the sector. It's no longer cyclical. One is the huge order book gives you multi-year revenue visibility. And, in terms of private participation, which was 20% in FY20, has actually gone up to 24%. And I believe this will increase to 30% by FY30, maybe more. In terms of export, we closed the year FY26 with 24,000 crores. And I think the government has kept a target of 50,000, but I think we should easily cross 75,000 plus crores of exports by FY30. So overall, the industry does look good. Second is that, you are no longer looking at, we're looking at orders which are technologically driven orders, and we are no longer looking at repairs. It's a full platform based orders which are coming through. So obviously the revenue visibility is quite high for the sector for the next 5 years at least.
So when you drill down into that, Jyoti, though, and there are a few interesting platforms that are being spoken about, but there's also ordnance. There's also the BrahMos missile program. So, and there's interest from various countries around the world, for example, in some of the armaments that are being created. So there's one aspect which is the regularity of the income that might be expected, because one would assume that armaments would yield you more regular income as compared to some of the platforms which would have a very long gestation, and the export side. So is that giving you comfort with regard to the revenue visibility for some of these companies?
See, when you look at something like BrahMos missile, possibly the revenue visibility would be anywhere between 24 months to 36 months. And what we should not look at BrahMos as just just an order value. It is, I think it's our world's fastest operation supersonic cruise missile, and the export order from India means growing technological capabilities and geopolitical acceptance as a trusted defense partner. I think if this BrahMos deal goes through, it means we know that GCC is a large defense spending region, and a successful deal with UAE could open opportunities across the GCC countries for Indian defense manufacturers. Apart from that, when you're looking at platforms, you're looking at submarines. Submarines have a life cycle of 5 years. So a complete production life cycle would be 5 years for submarines. For aircrafts, could be around 5 to 6 years. But now, if we look at LCA Tejas, it should not be more than 6 months, because the first 6 aircraft should get delivered by August. And let's say if the next lot of 12 aircrafts have to be, of course, contingent upon the availability of GE engines, it should be delivered by March 27, because we already have 30 aircrafts already completely, the aerostructures are ready. So what I mean is the revenue visibility in terms of platforms would depend on the timelines. So your missiles could be two years, submarines could be 5 years, aircrafts would be anywhere between 6 to 9 months. So that's how it is. But if it is with aerostructures and engines, then it could become 12 to 14 months.
Okay. Jyoti, good morning. This is Hiral on this side. You mentioned about a couple of benefits that you would see as well. Now, apart from BrahMos UAE deal, you're also talking about a BrahMos deal that could be struck with Vietnam, and that's what a couple of media reports were indicating last week. To add to that, you have Akash Tir also, which is coming in. Now, yes, a couple of your private players now become beneficiaries because the sector has opened up, because initially there was a lot of concentration that was going to the PSU side of the business. If you have to specifically look at a Paras defense, as we know, it does also benefit from BrahMos. With the kind of upside that has come in the month of June, how would you look at a Paras versus the other private players? And if someone who's invested in Paras, would you say to book profits and switch to another defense player?
Okay. First of all, we cannot compare Paras with most other companies which are in the market. This company has a significant market share in telescope and homegrown periscope, which I don't think so you don't have close competition there. Second thing is the optics division maintains margin which is in excess of 60%, significantly higher than the company's average. Then the company's moat appears relatively durable, and this could strengthen significantly because it is a precision optical manufacturing and company, and it requires ultra high accuracy machining, specialized polishing, optical coating, system integration, defense qualification, years of customer validation, and these capabilities cannot be replicated quickly. So once an optical supplier is qualified for a platform, switching suppliers is expensive and risky. And this also creates a sticky relationships and repeat orders. So in fact, this is not only with Paras, it is across most of the companies which have developed a certain capability. The government also doesn't want to onboard to replicate that capability. In fact, they would prefer the companies to come up with an add-on feature or something, other than what the company is already doing, because the entire onboarding process for the same, capability is expensive. So even the government is not actually encouraging, to replicate capabilities which already a company has done.
That's an interesting point, Jyoti, that you make. So then, if you have to look at any of the other companies right now in terms of valuations, we'll come to the pecking order, but continuing with the Paras from the link that, what my colleague brought to us as well. The stock is trading at rich valuations, number one. Your forward P is at 90 times versus an average of 57 times, last 2 years average. And if I'm looking at the consensus, what analysts have on a Paras defense, it's giving you a negative return of nearly 47% that could be on the cards. If you have to look at this aspect, how are you looking at it? Do you think it's still a viable investment opportunity?
So first thing is, I don't think anybody covers Paras as in hard coverage, which we do. Second thing is, the company expects to double its current. What I would actually look into this company is, one, the order book, which it intends to double, potentially reaching to somewhere around 2,000 crores, minus the deliveries. Second is, I would look at ISRO contract, the conversion of 2,500 crores, inactive bids from ISRO into firm orders. The company is actually expecting a significant potential exponential hike in space mission orders to begin within next 4 to 6 months. Then the subsidy approval and pay for OSAT, which is outsourced semiconductor assembly and test facility, which is conditional upon receiving 80%, total subsidy, which is 50% from the central government and 30% from the state. See, what we need to understand is that, apart from this, there's a huge demand which will come from this massive requirement for almost 6,000 units of control systems for armored vehicle upgrades and new platforms like FRC and FC. Now, this will feature fully stabilized cameras, making them a major production driver for Paras. Now, if you look at Paras order, their current order book gives me a very healthy near-term revenue visibility. Now, optical systems and electro-optics is a platform agnostic technologies, across applications, with applications across anti-drone detection, tracking, laser-based neutralization, integration, electro-optic payloads. In space, you would look at satellite. There's so many, and this sector, this particular, segment has high entry barriers and limited domestic competition. So obviously, I would be positive on the company. Near term, of course, the valuations look rich.
Yeah.
But FY30 definitely looks good.
Yeah, absolutely. So, Jyoti, unfortunately, you have to cut it off at that, but I'd love to touch base again to talk about the rest of the space and how you view it. But thanks so much for taking the time.
Thank you, sir.
All right, so quickly go across to the management of City Union Bank joining us right now, set to raise over 500 crore rupees via QIP, and to talk about what the utilization of these funds is going to be for and the outlook for the rest of the year. We're joined by Vijay Anand Ramamurthy, who's the Managing Director and Chief Executive Officer of the bank. Mr. Ramamurthy, thanks so much for taking the time. First, this is obviously a fundraise. It will add to the Tier 1 capital. What is the plan here?
Good morning. Thanks a lot. It's just an enabling resolution. We have been taking this since 2009. We have utilized only once in 2013 or so. It's just an enabling resolution we have taken, and it's more of a formality.
Okay, so it's procedural. Where does the Tier 1 capital currently sit at, the CAR? How does it stand?
We are almost at 21.5%, as you would be aware. So now I need much capital.
Yeah, very, very comfortable from that perspective. Can you give us a sense of what the situation is on the ground? Because everyone is taking notice of the fact that banks are resilient on the asset quality side. But the real question is, how has the credit side moved? What are the signs that you're seeing, sir?
The growth is stronger. In fact, the portfolio has been behaving very well. I think whatever the MSME performance has been exemplary. We did not see much. I can speak only basis the numbers what we have got. I think the numbers are looking phenomenal in terms of portfolio behavior. And in terms of growth, I think our asset quality growth has been pretty good. The growth is stronger. The margin looks decent, and looks like we are as per the plan.
Mr. Ramamurthy, good morning. We were talking to an expert who did a lot of on-ground checks and suggested that despite the conflict, the asset quality, the disbursements, etc., have all stayed okay. predominantly for large banks and housing finance companies, but he extended that argument to well-run mid-sized banks as well. I would love to know, what is your experience been for what was arguably the troubled quarter, which is April to June?
Absolutely bang on. The portfolio behavior has been phenomenal. As you would be aware, we closed last year with SMA 012 at 2.5%. And even this quarter, we are running at the right direction. I think the asset quality has been phenomenal, and the bouncing back of MSME has been excellent. And over and above that, the ECGLS rolled out by regulator is absolutely fantastic. This is helping the MSME sector in a big way. As of now, the figures are quite comfortable. I don't see much disturbance on the portfolio behavior as we speak.
So here's the question, sir. Most people say that even on the earnings front or the growth front, we were doing very well as a country, but for this conflict to come in. Now that it's showing signs of receding, and if during this quarter as well things were good, can things become better in the next 3 quarters, or do you foresee a bit of a consumption slowdown ahead?
I'm quite optimistic on the growth because if we have managed this crisis well, and there is a good demand on MSME, I think I'm quite confident and optimistic for the next Q2, Q3, Q4 as well. I don't see much issues because the growth is stronger, as I said a couple of minutes before, and margins have been stable. We don't see much issue. We are quite optimistic on this front.
Okay.
And whatever we are speaking is as per the figures what we have got. I think this is quite good, encouraging.
Absolutely encouraging. And we'll speak very soon, Mr. Ramamurthy, to talk about your Q1 results. And I'm sure that we'll have a more detailed conversation at that point. Thank you so much for taking the time.
Thank you. Thanks a lot.
All right, we have to slip into a very quick break. But on the other side, we've got the address by the chairman of the Adani Group, Gautam Adani, lined up for you. It's the 34th annual general meeting of the Adani Group. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to India Market Open on NDTV Profit. Let's quickly pull up what's happening with the markets as well, because we did open up with slight cuts, but there you go. We've come back to around 23,850, but probably trying to inch higher towards that 23,900 mark right now. Let's pull up Bank Nifty as well and see what's happening on that front along with the broader markets, because it's the small cap index which was slightly more resilient. Very similar moves in terms of Bank Nifty as we speak, and in terms of broader markets, you're seeing the mid cap 150s trading with cuts of nearly 0.4%, and likewise the small cap 250 as well, seeing slight bit of pressure down almost 0.5% in trade. It's very interesting to see what's happening with the Honasa consumer. Now, they've entered the fast-growing nutraceutical market through the acquisition of a majority stake in Fluence Pharma. That stock now almost near the day's lowest levels with cuts of 3% coming in there. My colleague Mahima joins us with more details. Mahima, I mean, overall, at the face of it, it seemed that the acquisition seems to be positive, entry into the nutraceutical space as well. But I think the street is not very happy. Stock down nearly 2.5–3%. Anything that is negative that you're picking up as to why you could see pressure?
Right, so I think more than negative, I think, Hiral, it's not per se a very big acquisition that will add to its top line. If you take a look at the acquisition, it's just 1.7% of their FY26 revenue and just 3.6 times its FY26 EBITDA. So that's probably the reason as to why the street has not paid much attention to it. Overall, yes, it's a 135 crore acquisition. Fairly valued in terms of 3.4 times price to sales. But overall, they've decided that they'll acquire 58% right now and 42% in the next 5 to 7 years. Just that this company is into science-backed nutraceutical products and has patented clinical nutrition therapy products as well. Has strong dermatologist-led distribution network as well. Right now, it's in B2B, but going forward, using Honasa's distribution, it is going to be expanding into the B2C area. Overall, sales CAGR has been around 7.5%. This is between FY23 to 26, and EBITDA margin is healthy at 20%, which is better than Honasa, by the way, at 10% in FY26. This is important because we've seen significant rise in terms of where this entire TAM goes for nutraceuticals, especially beauty from inside, and the estimated value of this TAM is at around 16,000 odd crore, and a lot of FMCG companies lately have gone ahead and acquired names in nutraceuticals. For example, HUL acquired Oziva, Marico acquired Cosmix, Plix, etc. So that's why it just makes this acquisition an interesting one, because FMCG now is focusing in this segment as well.
All right, thanks so much for that. And it's come off just a tad bit from the low point of the day, but still languishing in trade, down about 2.5%. But this is par for the course, looking at the way that the broader markets are doing. Hiral just pointed that out to you. But I would like to pull up the advance decline ratio chart as well. The line graph, which will tell you that the switch has happened not too long back, and you have advances that have slipped now below the declines. It looks like it's going to be a pretty eventful session. But if you look at the broader markets and take a look at the stocks that were buzzing early on, there are a few that stand out. From the losing end, you have IRFC, that's obviously reacting on account of the OFS that has been announced and the pricing of it, 7.7% discount to yesterday's closing. You have Gujarat Gas that's losing ground, GT&D, Hitachi Energy. We spoke about these power equipment related companies as well. Siemens as well losing ground, nearly 4% or thereabout. Certain questions being raised about the sustainability of margins. KPR Mills, though, on the other end of the spectrum, doing particularly well, up as much as 13%.
What's interesting right now is we were talking about the advanced decline ratio, but in consonance to that, you look at the markets. you are seeing they're trying to make that mild recovery as well. So don't be surprised if again you see the advances taking over the declines, and that's what if the charts are also indicating. After that switch, again that gap is narrowing down, and if you see the broader market, especially the mid cap and the small cap indices, as Alex was pointing to, there is a possibility that that switch could happen, but the advances take over the declines because of that recovery that potentially could come in as well. So that's going to be the interesting aspect to watch out for. But apart from that, let's just quickly pull up a Syngene as well on the screens and see what a Syngene is doing in trade. You know, Alex had highlighted the Macquarie note. That stock is now seeing marginal gains of around 0.8 to 0.9%. And along with the Syngene, you have a Biocon also that is in focus because their Malaysian counterpart has got some decent orders, but nothing happening in terms of Biocon. You know, one stock, Alex, New India Assurance, from the time the NSE DRHP was filed, was on a tear.
Yeah.
Just look at the kind of performance. If you just pull up the 1 month chart, you'll see the kind of gains that have come in the last 5 to 7 trading sessions. In the last 1 week, 16 to 17% is the kind of upside. But there you go. I mean, strong moves as well that we've seen on this counter.
Yesterday it dropped 8%.
Profit booking has started. Today, the downtick continues with cuts of 3.5% coming in there. Sharad joins us with more details on this one. Sharad, a deeper dive into this, because that has been one of the modes or one of the triggers that we had seen in terms of New India Assurance. However, with the way business has been panning out, is there any further upside momentum that remains in the New India Assurance? What are details actually indicating? Over to you.
Well, Hiral, you are right. The further capping of growth we can expect, especially in the recent run-up which we have seen for New India Assurance. But let's see how the rally has actually panned out. And now we are seeing that has actually snapping. It's a gaining streak. The stock was up almost 45% in the last 7 sessions. Stock is trading at its nearest 52-week high levels. 2 days of correction, but still above 80% in FY27. NSE stake has driven this surge. Of course, this is the biggest value creation, but remember, this is happening on its books as well. It has not been realized yet. They have almost 1.42% stake. Now that's valued at 2,100 crore rupees. And if we take the unlisted price, it's ranging between 1,900 to almost 2,000 odd rupees. And they had acquired NSE shares at just 32 paise. So of course, there's a massive wealth, created by NSE, and currently they are trading at around 2,000 rupees in the unlisted market. But the story remains is, overall, are the operational parameters doing really well, or is there some overhang in FY26, especially on the underwriting? That's what we will actually talk about. And moving on, if you look at it, these are the important numbers also. A little bit of concern definitely coming in the FY25, but some reversals happening especially in FY26. Also, the investment book is driving the story. The investment portfolio has reached 1 lakh crore mark, and this income is now almost, you could say, 1/4 of the overall premiums. Now, the strong equity markets have boosted the earnings sharply. This is nothing but a treasury kind of a move, and now the NSE stake also gives in a good important booster on their books. But what's the underwriting portion? That's the missing piece, and that's where the concern comes. This has deteriorated in FY26. If you look at the other sectors also, the motor and the aviation, that losses has weighed in on profitability. And also, third important point, and that's also a kind of an overhang for the stock, is the insurance operations that has remained under pressure. So the core business is not doing that well. But of course, on the treasury and the NSE stake, that is where the driving is happening of most of the stocks. So this is the entire picture for New India Assurance. But definitely, one side it's the NSE stake, the other side, the business operational parameters are not that good.
Absolutely. In fact, if you see in terms of the consensus price also, that's around 170. A return potential of 20% is what the NR is indicating. You have JP Morgan, which has downgraded the stock to a neutral, and the HDFC Research has maintained an ad on the counter. So it's going to be interesting to watch out for what happens to this one. But moving on to an exclusive conversation, ESAF Small Finance Bank. Let's pull up that one on the screens and see what's happening. Before we do that, let's quickly go across to the annual general meeting of Adani Group. We have the chairman speaking.
Welcome to the 34th annual general meeting of Adani Enterprises. There are some years in a group's history that are more than milestones. They become defining years. Years that prove the strength of conviction. Years that demonstrate the power of resilience. Years that reveal the difference between those who wait for clarity and those that build through volatility. FY 2025-26 was one such year for your group. It was a year in which the world grew more fractured. Complex energy security models returned to the center of national strategy, and technology became inseparable from sovereignty. However, even in the face of these challenges, your Adani Group remained anchored to an unwavering belief India's future cannot wait. While others debated, your group built, advancing its journey as the world's most integrated infrastructure platform across energy, transport, logistics, utilities, and industrial manufacturing. This progress did not come in a calm conditions for us. It came in the middle of extraordinary scrutiny. However, we did not bend. We did not pause. Because what we have always been defined by is not the noise that surrounds us, but the strength of our response. Not the intensity of the challenge, but the clarity of our purpose. Not the criticisms, but the nation building we intensely to believe in. Just one example of this belief was our rupees 25,000 crore rights issue earlier this year. This was more than a capital event. I saw it as a referendum on our credibility. It was one of the largest rights issue in the history of India Inc. And your response was very clear. At a time when some tried to create doubt, you answered with convictions. You responded with a participations, and you provided us the mandate to help keep building India. And true to this spirit of a nation building, the theme of my address this year focuses on accelerating infrastructure, leveraging intelligence. These are no longer two separate priorities. They are the twin global engines that must shape India's strength, secure India's sovereignty, and accelerate India's journey to becoming one of the defining powers of this century. The first engine, infrastructure, is the roads, ports, airports, transmission lines, power plants, renewable parks, gas networks, logistics platforms, cement capacity, water systems, and our industrial ecosystems that make national growth possible. The second engine, intelligence, is data centers, the use of AI, automations, predictive systems, digital platforms, real-time analytics, and machine-led decision support to make every one of these assets more responsive. Infrastructure gives a nation muscle. Intelligence gives a nation mastery. And today, the two are inseparable. We are now one of the very few global companies that are not reacting to the future, but are prepared for it. The fact is that we have been positioning for this day since years. We saw early that the world was entering a new era, one where geopolitical fault lines would deepen, supply chains would fragment, and energy security would return as a strategic priority. We saw that the race for technological leaderships and sovereignty would be constrained not by ambitions but by infrastructure. Allow me to elaborate. Our strength lies in the way our infrastructure pieces connect. From mining and power generations to transmission and distribution to ports and logistics to data centers and fulfillment centers and roads to water, we have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. Let me begin with a few numbers that capture the scale of what we are building. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. For us, this is more than a financial number. It is a statement of belief, and there can be no stronger testimony to our commitment to nation building than the scale at which we continue to invest in the infrastructure that will power India's next chapter. So let me shift to a few tangible examples of what we delivered over the past year. At Adani Energy Solutions, our transmission order book rose to rupees 72,000 crore. We secured several major projects, including the Khavda South Olpad HVDC line, reinforcing our positions as India's only private sector player with a proven HVDC capability. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. We are also honored to be partnering with the government of Bhutan's Druk Green Power Corporation. As a part of these partnerships, the Adani Group and the DGPC will jointly develop 5,000 megawatts of hydro projects in Bhutan. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future. With land identified and a 10 gigawatt targeted capacity by 2035, we are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. At Adani Total Gas, we accelerated and crossed the significant milestone of over 1.1 million piped natural gas home connections. Given the current geopolitical situations, we are further ramping up our PNG projects to meet India's rising demand for more accessible gas. Coming to connectivity and logistics, Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030. Our integrated network of ports, SEZs, logistics assets, and expanding maritime services places us in a unique position to keep gaining market share while lowering the cost and complexity of India's trade. I am proud to specifically say that Virinjam, one of the most strategic ports on the global maritime route, delivered a record first year by crossing 1 million TEUs. This is the fastest pace ever achieved by any Indian port and a strong signal of India's arrival on the global transshipment map. In airports, we achieved two defining milestones with the opening of Navi Mumbai International Airport and the new integrated terminal building at Guwahati airports, both inaugurated by our Honorable Prime Minister. Earlier this year, both these airports made it to the list of the world's 7 most beautiful airports. The commencement of operations at Navi Mumbai Airport in December 2025 also marked a proud moment in India's aviation landscape, with a 90 million passenger capacity airport built in a world record time of just over 4 years. In digital and industrial infrastructure, our data center business is firmly on the path to building a 3 gigawatt platform by 2030. The binding MOU for a gigawatt scale data center with a Google in a Visakhapatnam reflects both the scale of the digital demand ahead and the confidence that global technology leaders such as Google, Microsoft, Uber, and Flipkart are placing on us. Across our mining services business, 4 new MDO agreements took our capacity to a record 145 million tons per annum, thereby further consolidating our positions as India's largest private miner and helping secure critical resource flow for the broader industrial economy. At Adani Cement, we contributed to iconic national projects ranging from the Chenab Railway Bridge to Navi Mumbai International Airport and the Umayadham Foundations in Ahmedabad. Over the past year, our cement platform expanded significantly, with total capacity increasing to 110 million tons per annum. In defense and aerospace, our ambitions became even bolder. Our partnerships with Leonardo and Embraer are helping lay the foundation for integrated helicopter and regional aircraft manufacturing ecosystems in India. We are building a national aerospace platform that spans manufacturing, MRO, services, and pilot training. I'm also privileged to say that during Operation Sindoor, our drones, anti-drone systems, missiles, and ammunition supported our armed forces when it mattered the most. Now coming to our financial performance, FY 2025-26 was another year of disciplined growth and strong executions for your group. Our consolidated portfolio revenue stood at rupees 2.92 lakh crore, thereby reflecting a year-on-year growth of 7.4%. EBITDA reached rupees 94,834 crores, with the net debt to EBITDA ratio at a healthy 3.3x, thereby demonstrating the strength and resilience of our operating businesses. Profit after tax also rose by 13.9% to rupees 46,376 crores, while our cash flow stood at rupees 67,995 crores. These record numbers gives us the financial strength, liquidity, and confidence to fund our ambitious capex plans and continue building at unmatched scale across India's core infrastructure sectors. Let me therefore speak about the three foundational steps we are taking to build the organizations that will execute our vision over the next decade. First, we are simplifying the way we work. We are putting in place a three-layer structures across both our headquarters and our sites to reduce bureaucracy, sharpen accountability, and bring decisions closer to executions. Every role, every processes, and every layer must add value. Non-core activities will move either to our GCCs or to nominated partners. Second, we are changing the way we work with our contractors. We see them as a long-term partners in nation building. We will build deeper, more stable partnerships where their growth is supported, their margins are protected, and their interests are aligned with ours to help us deliver projects with a greater speed, quality, and ownership. Third, and most importantly, we are placing worker dignity at the heart of our transformations. Across our own and contracted workforce of nearly 4 lakh people, almost 85% are people who work on the ground at our sites. They are the people who turn our plants into reality. And we are committed to ensuring that every worker is treated with a dignity. This means clean living conditions, hygienic food, access to medical support, safe working environments, and fair wages paid on time. And this belief does not stop at the boundary of our businesses. It extends into the communities we serve, the families we touch, and the futures we help shape. That is why, alongside the growth of our enterprise, the Adani Foundations remain central to our purpose. The foundation currently reaches about 10 million people across 7,000 villages and 22 states, and as it enters its landmark 30th year, the foundation is deepening its mission with unprecedented scale and convictions under the able leadership of Dr. Priti Adani. In healthcare, we are building one of India's most ambitious rural vision care model ecosystems in Bihar, combining all aspects of affordable eye care. Through the Adani University of Higher Education and Research and the Gujarat Adani Institute of Medical Sciences in Bhuj, we are now also creating centers of excellence in affordable healthcare educations and delivery. Alongside this, Adani Health City marks a yet another defining step in our healthcare journey. With integrated health campuses coming up in Ahmedabad and Mumbai to bring together 1,000-bed multi-speciality hospitals, medical colleges, transitional care and research facilities. Coming to skill development, we are skilling more than 1.2 lakh youth across rural India, turning aspiration into employability and employability into dignity. This year, we moved from training as an activity to training as an industrialized capability, delivering tens of thousands of training hours and strengthening workforce readiness. Also in Kutch in Gujarat, our adoptions of ITIs under the Karma Utsav initiative is creating a powerful local employment engine, reducing talent migrations. Therefore, when I look at our journey, I see one integrated purpose: to build infrastructure that powers India and to build institutions that ensure human dignity at every level of society. This is the spirit with which we now step into the future, and so allow me to end with some words of gratitude. To our shareholders, thank you for your trust, your patience, and your resilience. You have stood by us not only in moments of achievement, but also through periods of intense scrutiny. Your faith is our strength. To every Adanian, you are the heartbeat of this enterprise. Every port we operate, every airport we run, every transmission line we build, every data center we imagine, every road, mine, warehouse, power plant, and project we deliver carries your discipline, your courage, and your pride. To our partners, lenders, and communities, we are humbled by the trust you place in us. Scale is never built alone. It is built through collaborations and a shared belief that India's rise is larger than any one institution. To our families, you carry the burden behind our public achievement. You give us the strength to stay grounded and the emotional foundation to keep building. And to India, we remain deeply grateful for the privilege of serving our nations whose greatest chapters are still being written and whose most defining pages are yet to come. And as this India takes shape, allow me to say this not in the language of business, but in the language of our nation. हर ईंट में सपना, हर धड़कन में विश्वास, हर ईंट में सपना, हर धड़कन में विश्वास, भारत की हर सुबह रचे नया इतिहास। सपनों की यह पूंजी, संकल्पों का यह गान, सपनों की यह पूंजी, संकल्पों का यह गान, मिलकर हम गढ़ेंगे एक सशक्त हिंदुस्तान। So let this be the year we are remembered for what we built. We built when it was hardest to build. We believed when it was hardest to believe. And we proved that resilience is a way of life for us. Yes, the future will demand more ambition, more discipline, and more executions than ever before. But together, we stand ready to build, ready to serve, and ready to help shape the India whose greatest days lie ahead. Thank you. Jai Hind.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
Welcome back. You're watching NDTV Profit. This is Ask Profit, a show that gets all your stock-related queries answered. I'm Mahima Vachar, and with me is Puneet Zaveri. And for viewers who are just tuning in, you can either give us a call or send us your queries on the WhatsApp number that will be flashing on your screen up there. While you do that, let's take a quick look as to how the markets are doing. The Nifty 50 is trading 0.5% higher, around the 23,950 odd levels, trying really hard to reach those 24,000 levels as far as the Nifty 50 goes. Let's try to pull up the heat map also quickly. The IT names back in the green today. You have something like Tech Mahindra doing fairly well, Infosys, etc., trading 2% higher. But Dr. Reddy's, ICICI Bank, Interglobe Aviation, as well as Adani Enterprises, all soaring high and up about 2% each. But on the flip side, you have Bajaj Auto, which is down 1.7%. Your life insurance companies, both HDFC as well as SBI, Maruti Suzuki, continues to be under pressure. Let's try to pull up the mid-cap 150 and the small-cap 250, because the pressure today is in the broader end of spectrum. The mid-cap 150 is almost flat, but still down by about 0.05%. So is the small-cap 250, down by about 0.2%. And the advanced decline ratio tells you as to how that chart is faring. You have around 1,300 odd declines versus that of 1,200 odd advances. So that's with regards to where the broad end of spectrum goes, underperforming the benchmarks as we speak. So that's with regards to where the markets go. But let's start taking your stock related questions, and to answer them, we are now joined by Amit Goyal, who is a CMT SEBI research analyst, registered analyst, partner and co-founder at Blue Oak Wealth, and Gaurang Shah, senior vice president at Geojit Investments, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll start by taking the first question, which is on Godavari refineries, and this is from Charan, who's writing us from Bengaluru. He's got around 500 shares at the levels of 290. He says he's a long-term investor, whether he can continue to hold and maybe add more at the current levels. Gaurang, good morning to you. What would you recommend?
Morning, Mahima. Thank you so much for having me on your show. Good morning to all your viewers as well. A small disclosure, all recommendations that I'll be sharing with you this morning on your show, they're part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interests by default. So, Mahima, the problem with such stocks associated with refining or anything to do with crude oil or otherwise, they have a tendency of being volatile given the kind of current situation that we are into. Once upon a time, crude oil prices were $100, $110 a barrel, and now they are sub $80 a barrel, close to about sub $75 a barrel to be more precise. And the possibility of more Iranian crude oil coming into the world commodity market could possibly have its problems. So, and along with that, of course, on Godavari biorefineries, unfortunately, we don't have any specific comments. My sense, if you ask me, though this is not a recommendation, getting into financials would make sense. And if I have to recommend one particular stock over here, Federal Bank would be a better investment idea from a long-term point of view.
Got that view. So viewers, you got a view, a free tip as well from Gaurang just right off the bat in terms of financials. But the next question coming in from Vijay, he wants to know a short-term view on Fortis Healthcare. And let me also welcome in Amit Goyal. Amit, very good morning to you. Thanks so much for joining in. What's your view on Fortis Healthcare right now on the charts?
Hi, good morning, and thank you for having me here. So Fortis Healthcare as a sector has been doing well. It is in a breakout sort of a technical formation, the broader healthcare sector as well as the pharma. So Fortis Healthcare, if I have to speak specifically, it has been making higher lows. Right now it is in between 1,000 and 940 range, and the structure is positive. So any dips towards 900, 940, 920, 940 levels would be a good opportunity to pick it up for possible targets of about 1,050 and 1,100 also.
Got it. Well, let me go across and take the next caller from Andhra Pradesh, and Prasad is joining us for a stock query. Prasad, very good morning to you. What's your query?
Sir, good morning, sir. My query about some other Sumi wiring. I'm holding 1,100 shares at an average price of 47.
Okay.
Is it right to exit or hold, sir, for long to short term?
Got it.
Short term to long term.
Got it. Prasad, let me go across and take it with Gaurang. Gaurang, for Motherson wiring, slightly elevated levels in terms of, I think the EPS is roughly around 1.1. So, would you recommend Prasad to still continue holding average down or switch to some other play in the auto ang space?
So, Samar than Motherson, thank you so much, Purit. Good morning to you as well. So, Samar than Motherson is something that we have a positive coverage on. Unfortunately, on Motherson wiring, we don't have a coverage, so I won't be able to give you specifics. But let me say this. If our view, which is very strong as far as the entire auto ANSI sector is concerned, Puneet, if auto has to do well, then auto ancillary related companies, OEM segment, tire, battery manufacturing companies will do well. We would rather look at, even if we look at the balance sheet and the growth prospects, then Samadhan Motherson is something that we are extremely positive on. Though this is not a direct recommendation, but there are better alternatives.
Well, got that view, Gaurang. But, viewers, stay tuned. We'll just take a very short break. Coming back, we'll start with the first round of the rapid fire, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut,
Welcome back. You're watching Ask Profit right here on NDTV Profit. Let's start the first round of the rapid fire in this edition of the show. Gaurang as well as Amit, keep your answers as short as possible so that we can take as many queries in the next 3 to 4 minutes. First question coming in on Acme Solar. Our viewer is holding shares at 241. Gaurang, he wants a long-term view, if not on the name, if you have coverage on what you like in the industry.
So we are positive across, as a matter of fact. Premier Energies, Vari Energies, so on. These are some of the names we are positive on, and I think the entire sector looks quite positive. Don't have specific coverage on Acme Solar, but yeah, it is one of the decent players, if I can put it that way, in this particular sector renewable.
Okay, the next one is on Forging. Lalita from Chennai is holding 100 shares at the levels of 676. Amit, a good hold for the next 6 odd months?
Let me just pull it up. I have not seen this, but yeah, it has. Yeah, I got it. It has a good. It has formed a good base. While the overall structure is strong, it has a good base about 429. We could, hold on to it till it invalidates 429 levels.
Got it. Well, the next one's Vikram Solar. Ria from Bengaluru is holding shares, but she's currently at a 12% loss. Amit wants to know the next 1 to 3 month view on the charts.
The structure is weak. I would suggest, switch to something else in this segment.
Okay, Gokuldas Export is the other one. Our viewer has bought it from a medium-term perspective. He's bought around 771 shares and wants to know whether he can continue to hold this. Any view on this, Gaurang?
So positive on fallback of the export opportunity, no specific cards.
Indocount bought by Raja at 297. Gaurang, if any coverage or something that you like in the textile space?
So Wellspun Living is something, Puneet, that we are positive on, but at that textile sector looks to be quite positive on fallback of opportunities.
Okay, the next one that we have is on ITC. Sriram Raghuraman is holding 100 shares of ITC at the levels of 203. From a 1 year perspective, continue to hold, Gaurang?
Extremely positive, but extend your time horizon.
Advent Hotels is the next one. Ansh from Australia is holding shares at 147 and wants to know a 3 month view, Amit. What do the charts suggest?
Weak. If it invalidates 120 levels, exit.
Okay, the next one that we have is coming in on AIA Engineering. Our viewer wants to know if from a 2 to 3 year perspective, is this a good counter to enter at the current levels? Gaurang, any view?
We used to have coverage, targets are in place, stock is under review, but a strong player.
Grow bought by Narayana at 194. Amit, he wants to know if he should continue to hold his position or exit now.
Hold.
Okay, the next one that we have is on NHPC. Shankar from Bengaluru wants to buy 1,000 shares. Is this a good time to buy from a 1 month perspective, Amit?
You could, with invalidation levels below 76.
Finotex Chemicals bought at 25 rupees by Sharath from Mysore. He wants to know a long-term view on the stock. Any view, Gaurang, on the stock sector?
Prefer names like Tata Chemicals, Vinity Organics, PI Industries. Don't go for lower digit stocks. They are a trap.
Okay, the next one is coming in on Cipla. Abdul Rashad from Palakkad wants to know a 6 months view, target and stop loss on this one. Amit?
Positive on this. Invalidation levels are 1341. In fact, we have given a call yesterday also on the channel.
Bank of Maharashtra is the other one. A viewer, Reenu from Bengaluru, is holding shares at 66, Amit. Booked some profit last week at 86. Asking if this is a good level or should she wait for some more time before booking?
She should wait for some more time. If it invalidates 84 levels, then exit. Otherwise, hold for longer, trail for bigger profits.
Got it. Well, that was the first round of the rapid fire in this edition of course, Ask Profit. But let's start and continue taking your stock-related queries. We have a caller now from Mohali. Arun, dialing in for a stock query. Arun, very good morning to you. What's your query?
Good morning सबको. SBI Life long term के लिए मैं 100 शेयर खरीदना चाहता हूँ. Is it right time to buy now?
और आपके पास अरुण जी कोई और लाइफ इंश्योरेंस नेम पोर्टफोलियो में है या ये पहला होगा?
ये पहला है जी.
पहला है जी. ओके. गौरांग, SBI लाइफ पे आपका लॉन्ग टर्म व्यू क्या है? बिकॉज हमने देखा है कि जनरल इंश्योरेंस साइड पे स्टॉक परफॉर्मेंस काफी कंपनियों का अच्छा नहीं रहा है. लाइफ वालों में SBI वन ऑफ द लीडर्स. डू यू थिंक दैट अरुण जी को ये बाय कर देना चाहिए अभी?
पुनीत, जनरल में भी एक कंपनी है जिसने अच्छा रुझान दिया है, वो है ICICI लोम्बार्ड.
वो एक ही है बस, अनफॉर्चुनेटली.
लेकिन बीमा से जुड़ी हुई कंपनियों में रुझान थोड़ा नकारात्मक रहा है. लेकिन हमारी सोच और विचारधारा ये है कि इंश्योरेंस से जुड़ी हुई कंपनियों के लिए एक बहुत बड़ी मुहिम आगे जाकर के भविष्य में आएगी और वो है इंश्योरिंग द अनइंश्योर्ड. एंड जिस प्रकार की हमारी जनसंख्या है और जिस मात्रा में हमारी जनसंख्या प्रतिशत जो है जीवन बीमा लिया है, मैं बात कर रहा हूँ प्योर टर्म इंश्योरेंस की. यूलिप वगैरह की तो मैं बात ही नहीं करूंगा क्योंकि मैं उसको प्रोडक्ट नहीं समझता. तो टर्म इंश्योरेंस के लिए बहुत बड़ी जगह है. 4 कंपनियों पर हमारी खरीदारी की राय है बुनियादी दर के आधार पर लंबी अवधि के लिए. SBI लाइफ, LIC, HDFC लाइफ और ICICI प्रूडेंशियल. लेकिन समय सीमा अनिवार्य होगा कि आप कम से कम 1.5 से 2 साल की समय सीमा रखें.
Got that view, Gaurang. Thanks so much for that. But next question coming in from M. Ahmed from Delhi. He's holding on to Bank of Baroda, bought at 280 rupees per share. Wants to know a 3-month view, Amit. And and he actually bought these shares at 280 3 months ago. Wants to know if he should continue to hold this counter for the next few months. Would you recommend that?
So his holding price and the current market price are more or less similar. My invalidation level on this would be about a break below 250. While the counter is strong, so hold on for targets of at least 310 in the near future.
Got it. Well, let's go across, take another caller from Hyderabad now. Narendra has a stock query for us. Narendra, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning, panel members. My name is Narendra from Hyderabad. Regarding this TD Power, I have the 80 quantity. Okay, so currently today I'm seeing that all power stocks are lost. So can I hold? I'm looking for the long term, this one. Can I hold or can I exit? What is happening power stocks? Can you explain me something?
Got it. Narendra, so definitely, stocks down almost 7.5% today. But Gaurang, I don't know if you have coverage on TD Power, but anything that you like in that space, because we've seen, consistent interest building in power ancillary companies, all of those. Any view that you have?
Well, extremely positive, Puneet, on the sector, including power generation, power transmission and distribution, and power equipments. The kind of capacity that the government has lined up by the year 2030 is huge, almost about 300 to 350 gigawatts. 75% of that is going to be clean and green. And all these companies will tend to benefit, whether you are into power generation, whether you're into power transmission and distribution or power equipment. At TD Power, again, couple of years back, we used to have a coverage. Our targets were in place. Currently, we don't have a coverage. But we like the transmission and distribution along with power generation and power equipments. To name a few, Power Grid amongst the power transmission, Tata Power, NTPC, Torrent Power amongst power generation, modernized power equipments, names like ABB, Cummins, Hitachi Energy, and L&T.
Got that view, and Narendra, also there's nothing, at least in terms of exchange filing or news flow that's come in. Seems to be a market correction that we're seeing across names that have done well, but especially in the power space at this point of time. But go across to Vinay now, who's dialing in from Pune. Vinay, good morning. Welcome to the show. What's your query?
Yeah, good morning, and thanks again for taking my question. See, I have two questions. One is I have Divi's Laboratory bought at 4,200 at about 2 years before, and another one is TCS bought at 3,200 at 28 shares. So I would like to ask whether I should switch over from TCS to like NetWeb or Coforge, and similarly Divi's Lab, any other like Zydus Life Sciences or any other.
Well, Vinay, I can take only one stock query today at a time, so let me pick TCS.
Please.
Yes, okay.
Yeah.
And Gaurang, on TCS, he's bought shares at 3,200, so currently sitting on a loss. Do you feel that, what's your view essentially on the counter, and if that switch to Coforge or NetWeb makes sense?
So I think, Puneet, IT remains to be under pressure by default with the kind of sell-off we saw on IT-related companies, be it in the South Korean market or be it in US NASDAQ. Challenging times ahead. He got in at 3,200. Stock is currently trading at somewhere close to about 2,080, 2,100. First of all, hold on to it. We have a positive coverage, disclosure. If you have investable amount, Puneet, I would request the caller or investor to add maybe about 50% in case if he has, or maybe more in case if the investable amount is there from a long-term point of view. And if you allow me, one more pharma name if he wants to invest is Mankind Pharma.
Got that view. So hopefully, Vinay, that answers your question, and both those names that Gaurang spoke about as well. But next question coming in on Lumax Auto Tech. Now, Lokesh has bought shares at 1,734. So he bought it after a substantial run-up in that counter. Let's pull up the 1 year and the the long-term chart of 5 years as well, because from 2023 onwards, a massive re-rating was seen in this counter, up 37%. You see that almost 9x in 5 years. So from 2025 onwards, had a stellar jump as well. But Amit, his question being, he's currently sitting on losses of almost 10,000 rupees. Should he wait now? Is there a trend getting formed yet again to that 1,700 mark, or what would you recommend?
So Lumax, as you rightly said, it has been in a tearaway rally and has been trending in a upward sloping channel. Currently, it is trading at the lower end of this channel, which is a technical support. So I would suggest that you hold on to these levels. The invalidation level again comes below 1,400 levels. We should be able to see some sort of a recovery from here towards the 1,700 and 1,800 levels.
Okay, all right. The next one that we have is from Rajesh, who's writing us from Noida, asking about Tattva Chintan. He's got around 200 shares at the levels of 1365. He wants to know if he can average at the current levels, and he wants to hold it from a slightly long-term perspective. Amit, what would you recommend?
Yeah, it's actually not doing much. It has been in a consolidation range, and the invalidation level here is 1,100 rupees for targets of about 1,350. If it manages to close about 1,250, I would possibly be looking to enter into this stock.
Got that view. But next one coming in on Vedanta. Viewers holding shares at 296. And this is Jawar Babu. I don't know if he's got demerged entities also in his portfolio. But what would you recommend here, Gaurang, post the demerger? I think there's been a preference towards the aluminum business, but the others, of course, a very limited time frame, have been volatile. Any pick that you have, should he continue to hold the holding company or any other demerged entities that you like right now?
Well, so again, candid disclosure, we had positive coverage on Vedanta when it stood as a consolidated company with different businesses under its balance sheet. We had maintained our view that once the demerger happens, it will unlock value, and it has definitely unlocked value for investors. Currently, your question as far as the parent company, flagship company, Vedanta, we still have a positive coverage on Vedanta. So, and I think he must have gotten Puneet post-split because he got in at 280. Pre-split, I think the stock was at 700 plus levels.
Okay, all right. So that's the view coming on the entire Vedanta pack. The next one is from Biswajit, who's writing us from Kolkata. He wishes to buy Jindal Stainless for a year, which he says has corrected meaningfully. He's already holding JSW Steel 100 shares and Tata Steel for 500 shares. He wants to know if this is the right time to enter into something like this. Amit, would you recommend that?
I would not recommend that because Jindal Steel has not been doing much. It is in a consolidation range for them for nearly a year or so now. So I don't see any strong momentum. Even in this recent rally of metals, this has not participated. So I'm not particularly excited about Jindal Stainless.
Got it. Well, the next question coming in now, it's on stock that we get at least one query a day on, and that's on HDFC Bank. Now, a viewer is holding shares at 710 odd, and he's been holding on since pre-merger. He's mentioned. Wants to know, and this is Ram, and he wants to know, Gaurang, if he should continue to hold as well. Now, there is, of course, an obvious answer, but what are you looking at, Gaurang, in the next 1 to 3 years within the stock?
Honestly, Puneet, a lot has happened in terms of negative news flow over the last 3 to 4 months, and the stock has taken a knock on the chin. Absolutely, it was a knockout blow. At the valuation which HDFC Bank is trading currently looks extremely attractive. Again, a candid disclosure, we do have a positive coverage on HDFC Bank, and I think the management will take, and they have taken appropriate steps to straighten out things and to bring in more discipline. In terms of earnings visibility, I think the kind of credit demand that is going to come through is going to throw up a lot of opportunities for not only HDFC Bank, but most of the banks in terms of loan book growth. Interest rates remains a little bit sticky. I think the Honorable RBI Governor and the Monetary Policy Committee has taken a stance to wait and watch. Crude oil down, rupee strong. These are positivities, but monsoon plays a havoc in the immediate short to medium term. Wait and watch, and of course, continue to hold if you're a long-term investor. One thing I want to point is the investment is at a very attractive level.
Okay, all right. The next one that we have is on Garden Reach. Mahesh from Maharashtra has bought 292 shares at the levels of 3074 for a month and wants to know if he can continue to hold this or not. It's come down significantly, Amit, but what would you recommend?
I mean, again, the defense pack has been doing well, but the shippers are not doing well. They have been in a consolidation range for nearly a year. I would not recommend to add on to his loss-making trade. My invalidation level to exit the stock would be 2600 levels, and hopefully it consolidates here and moves towards 3200. But invalidation level is very clear, 2600 levels.
Got that view, Amit. But next question on Sign DLM. Our viewer bought the shares at 468 odd rupees. So, the counter has been a laggard, and this is Birandeep. Let's look at the 1 year, 5 year chart as well, and you know what I'm talking about. But Gaurang, the earnings growth and the order book growth has been very volatile, right? I mean, you saw a recovery from the April lows, but if you pull up the 5 year chart also, the returns have been just about 9 to 10 odd percent. Within the EMS space, do you think there are better picks, or should we still continue to hold Sign DLM?
We are positive on Sign DLM, and likewise, Puneet. I think the opportunity is now opening up for the entire EMS, chips, semiconductor, PCBs, whatever it is. Along with Sign DLM, we are positive on Amber Enterprises, positive on CG Power, and PG Electroplast. So again, a disclosure, long-term positive on Sign DLM.
Okay, all right. The next one that we have is coming in, and this is on Havells. Ashish from Delhi is holding 50 shares, bought at the levels of 1300. He says he can continue to hold this for the next 2 odd years. Wants to know if he can continue to hold, maybe average out for another 50 odd shares. Gaurang, would you recommend that?
Please go ahead and do that. I don't think you should wait. It's available at a decent level from the level where he got invested. Extremely positive on consumer durable white good appliances, and Havells is gaining market share.
Got that view. But the next question coming in now, it's on Bharat Dynamics. Our viewers holding shares, 65 of them at 1248, and this is Dilip from Kolkata. Wants to know the long-term investment outlook of this one. Gaurang, does it come in favor? Because it's another one which has not performed as expectations would have it. But any view on the stock now?
Allow me 30 seconds if you will, Puneet. to all your investors, if you eventually decide to invest in defense, don't look at 3 months, 6 months, 1 year, 2 year kind of time horizon. Have 3 year plus, probably 5 year time horizon. And that's because of the complexities involved in executing the order book, because the products that the manufacturer are high technology, high precision. They get an approval from a prototype and then the mass scale production starts. Having said that, we have coverage on BEL and Mazgaon docks. Amongst the private players, we are positive on L&T. Bharat, and this is not a recommendation, Puneet, just to benefit of your viewers, Bharat Dynamics, likewise BEML, likewise Garden Reach Shipbuilders, likewise Cochin Shipyard, likewise Hindustan Aeronautics Limited, Paras Defense. These are some of the strong players in the defense. But if you really want to make meaningful returns out of your investment, please have 3 to 5 year plus kind of time horizon.
Okay, all right. So that's the view coming in on the entire defense pack, and that makes sense what Gaurang just said. But we've got a caller waiting, but I think Kirtana is calling us from Hyderabad. Kirtana, a very good morning to you. Go ahead, ask your question. Hi, Kirtana, can you hear me? Okay, I think we seem to have lost the caller, but we do have her query. I think it's on Avanti Feeds. She's got around 350 odd shares that she'd bought it at the levels of 1275. She's sitting on a loss of over ₹1 lakh, and currently the stock is trading at 977. I think at this point of time, Amit, it's just for the sake of reiteration, right? It's very important for viewers to understand that if your stop loss hits, you exit, right? You should not make sure that it tanks to that level of over ₹1 lakh loss. But what would you recommend for something like an Avanti Feeds?
I mean, as a systems trader, it pains to see these kind of losses for our viewers and investors. I mean, from a technical standpoint, whenever you enter a stock, we have always been taught that there needs to be an entry, stop loss, and a target to go along with. It's not just one price. So the levels which they have entered, the invalidation of that has happened long back. It is currently, in a oversold territory. Probably, if since the loss is already magnified, probably you could hold on till it breaches 900 levels and hope that there is some sort of a recovery, purely from a technical standpoint that it is oversold. Otherwise, they should have gotten out of this stock a long back.
Right. Well, one of those tariff names, right? Because last year Focus got impacted when the tariffs were hit from the US. Once reduced, saw that massive run up. But as Amit highlighted, keep your stop losses in check as well. But when you look, let's go and start the second round of the rapid fire now. Amit as well as Gaurang, you know the drill. First question on JSW Infra. A viewer wants a 3 to 5 year view on the stock. Gaurang, is it good to hold for that long?
Well, one of the port logistic companies, I believe we had an IPO note, currently no coverage, but yeah, the sector looks quite positive.
The next is on Godrej Properties. Is this the right time to enter for the next 3 months, Amit?
There's some, let me just check the chart. It's not opening. Can I take the next chart?
Sure. The next one is on TFS. Our viewer wants to know if this is the right time to make an entry from a long-term perspective. Gaurang, any view by the time Godrej Properties is being pulled up?
So we are positive on Godrej Properties from a long-term point of view. TFS no coverage.
Okay, Amit, if you've managed to open the charts, any view on Godrej Properties?
Yeah, absolutely. 1600 happens to be the invalidation level, though it is in a consolidation range. If it breaks out about 1800, 1900 levels, then you could see targets of 2200.
Got that view, Amit. But next question on Shakti Pumps. Kaushik has bought these shares, but at elevated levels of 973. What would you recommend here, Gaurang?
Keep your stop losses in place. Don't let your capital go so much. No coverage.
Okay, the next one is on Samman Capital. 100 shares bought at the levels of 145. Our viewer Manoj Sharma wants to know in the near future if we can continue to hold this one or not. Amit, your view on the charts?
170 happens to be my invalidation level. It has seen a very sharp parabolic run-up. So right now in the consolidation range, but 170, if it breaches below that, get out.
Amit, also, if you have a view on Shakti Pumps, I think we spoke that to Gaurang, but on the charts, is there a revival expected or sideways momentum to continue?
I think Shakti Pumps is in a downward sloping trajectory. There is some attempt from 520 levels to move up. If it crosses, I would rather enter into a contra bet here if it crosses 600 levels.
Okay, the next one is on Gabriel India. 100 shares bought at the levels of 415. Thomas George from Chennai wants to know whether he can continue to hold this counter or not. Amit, your view on the charts for Gabriel India?
We had given a buy call on this few days back on your channel, and we have actually achieved the targets. So if somebody had entered a little earlier at about 1100 levels, one should be looking to book profits.
Up 3x on that investment, so probably about the companies that got listed from outside. But Jerry from Pune wants to know if ITC Hotels is a good pick to invest now and for the next 2 years. Gaurang, seen a revival from 150 odd. What's your view on the stock now?
Positive on the sector. Hospitality, Puneet, ITC Hotels and like other hotels have got huge capex, like Indian hotels.
Okay, the next one is on Tata Elxsi. The average buying price is 6172, quantity is 23. Our viewer wants to know if he can go ahead and exit right now, considering that he's sitting on a loss, of course. Amit, what would you recommend?
Yeah, again, sideways to downward sloping movement. If it breaks 3900 levels, book your losses. I don't see too much of a hope here because technically it is a weak stock.
Amit, also on Swiggy, Srinivasulu has actually bought these shares as 420. Again, I think something that we spoke about, stop losses being hit and no exits. But would you recommend is there any revival scope of this one? What would be the strategy? Because he's holding 2,800 shares now.
I mean, from a revival strategy, if I were to look, I don't see any technical reversal happening as such. So I cannot even recommend to book out of the losses because it is such a magnified loss. So the call has to be of the investors, but I don't see any near-term hope for this.
Okay, the next one is on Kirloskar Bros. Ram from Hyderabad wants to know as to what should he do next. Hold, sell. His buying price is 2180. This entire pack has been doing very well. Amit, any view on the charts?
Yeah, we have seen very sharp recent run-up in the entire Kirloskar group. 2200 was a high it hit a couple of days back.
Right.
I do see that there is some revival here. One can continue to hold on if the entry prices, low at lower levels.
Right. Okay, that brings us to the end of this rapid fire round. Gaurang and Amit, thank you so much for taking out the time and helping us answer all those stock-related queries. Viewers, like I said, completely out of time, of course, on this edition of Ask Profit, but we will come in at 2 p.m. to take more queries. So do stay tuned, and of course, KYC is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where we get you all the buzzing stocks, mid cap, small cap, and is there any alpha to be made, and we do a detailed analysis and also the conversation with management. And today a very interesting company has come. It's a small cap, mid cap company, but before that, try to guess it, and it's buzzing all over the place. It's a distribution partner for tech brands. That's the first hint for you. And the second one, where a lot of news flow is coming, is the company will be acquiring 100% stake in VDA Info Solutions. Of course, you must be getting the answer by now. And company is backed by Madhu Kela's entity, almost 2.44% stake as well. And the stock has more than doubled from March lows. Okay, these are the hints. But the company in focus is Rashi Peripherals. This is the company which we are talking about. And the main question is the acquisition announcement which has come in. So we need to understand, the first question is, what does this synergy come up between a company like Rashi Peripherals and VDA Info Solutions? Also, we'll try to understand the timelines and the acquisition details as well, and how the funding will happen. Of course, a major part of the conversation will be on this big acquisition coming in. Stock has also run up, but other key questions are also there which we need to ask the management. And of course, this also includes the timelines for the management, and also look at the business model and the moat. Does that change right now? That's the big question to be asked. Growth and margin outlook ahead. Does it change the entire trajectory of the company? And looking at the expansion plans for the semiconductor business, couple of announcements were there, so we'll try to delve into this. Apart from this, also there is a demand shaping up in the AI related products. A lot of that has come up. Are they onboarding new clients in that segment? Also, we'll try to understand, is there any other acquisition or tie-ups expected as well? So quite a strategic conversation we'll be having with the company. And of course, these are the two spokespersons also from the company where we will be asking our queries. But let's try to understand, how does the business work? What is the moat of this business? Or is there something fundamentally changing or not? The company itself is a Mumbai-based company. It was incorporated in 1989, but it's a recent listing in February 14, 2024. Almost 2.5 to 3 years of history is there. They have information and communication technology, which we call it ICT, products and solutions. And largely we can say These are related to tech. There are services also. This includes pre-sale activities, solution design, and technical support. So this is just not products. Services is also something which the company does. Apart from this, let's look at the key details. The company is backed by Madhu Kela's entity, and that is pretty much a very strong point for the stock. A pan-India distribution infrastructure that spans roughly across 700 locations. So the core business model is on the distribution front. They have 55 branches, 50 service centers, and 71 warehouses. Apart from these numbers, they have certain segments, the verticals. This is of course your PC enterprise solutions and lifestyle and IT essential, two verticals where the company is actually working with. Almost 78 global brands have partnership, and more than 10,300 channel partners is there. So of course distribution is something which the company has the moat. That's what we are understanding. But this is pretty big. The VDA Info Solutions acquisition, that's roughly 550 crore valuation coming in. But we did a little bit of calculation. The deal comes in at a price to sales of 1.5 times. This is largely value accretive as per the street analysis. The acquisition will be funded by internal accruals. That means it will be funding from the company's book in the cash levels. So this is the overall picture of the acquisition, but the balance 3,300 will be acquired in tranches. That means a total 100% stake acquisition will take place up till August 2029. VDA is in the business of enterprise technology and digital solution space, and this is the entire picture. But the question remains is, synergy क्या है? इससे फायदा क्या होने वाला है? This is very much important. Do note it down. The full spectrum of enterprise technology value comes in. Deep tech experience, as we call it, that comes in from the company. The further expansion happens for Rashi Peripherals in the value chain. Now you understand there is a distribution at play, there is a tech expertise, both of them coming together with this acquisition. Already VDA is a partner to IBM, Dell, Broadcom, Cisco and Palo Alto Networks as well. These are the large names. So definitely they onboard also good clients. The distribution meets the technical enterprise, agar isko simplify kare to. So what are the FY26 numbers, the key factors to look at? They have stated that there is a rising demand coming in for the ICT products. Two other things which have been mentioned by the management. This includes the sustained tier 2 channel stocking. That is where we are seeing a lot of interest. And lastly, favorable pricing trends are coming in the key categories such as components and storage. But this was just the FY26 number. But let's try to understand the positive and the negative portion for this company. Video Info Solutions acquisition, this is giving a lot of synergies as we have discussed. That's one point. Secondly, the balance sheet is kind of strong as well. Of course, a little bit of borrowings is there on the higher side, but the net debt to equity ratio, that has come down. They are expanding into the semiconductor footprint. This is the Singapore and Indian arms. That's what we are trying to focus on. And the distribution expansion continues for the core business as they are moving towards new states and new locations. And also, what may not work for the company, this is the execution risk for the acquisition. Kya pata samay, the timeline can be there for the execution, might be delayed. Secondly, the core business model is very low margin, 2 to 3%, that's all. So whether this will become value accretive and the margin profile changes after this acquisition, that needs to be studied. There's a lack of analyst coverage also for this company, and because of that, we tend to get these companies in KYC. Valuations are not attractive because these stocks has already seen a massive run up. So this is the entire picture for Rashi Peripherals, but let's try to get inside the KYC ratings, where we'll judge this company. Of course, this includes income statement, balance sheet, cash flow, the return ratio, the usual numbers, but also we get in the shareholding pattern, how things have moved. There is, of course, astute investors invested in this stock, and also largely the valuations and the outlook and street cred. How much has the company made money for the investors? Let's start with income statement. And I had already mentioned you the growth is coming in the top line in the operational numbers. Look at the 3-year CAGR. That is where a good momentum is coming in. 19% up, 22% up. So there is a good amount of trading revenue also being included here. Let's just see the Q4 numbers, how things have panned out, and I'll also explain you the margins. Largely the numbers were even Stevens here. Little bit of profit also going up, almost 65% on a year-on-year basis. But my only concern in this entire business model is the margins front. The margins has almost single digit margins, and that's where a little bit of concern definitely comes in. But that is something which is the inherent nature of this business. But overall, the top line, the PAT, these numbers, CAGR is good. So it's a strong thumbs up for income statement. Balance sheet, let's have a look what's happening here. A little bit of concern for me comes in because of the elevated borrowing levels. याद रखिए इस धंधे में working capital ज़्यादा लगता है. That's why at times the numbers might look stretched, but this is the model for it. Almost 81 crores of cash on the books, and this will reduce as well because of the acquisition of VDA Info Solutions. So it's a neutral rating for the balance sheet. Let's come over and understand the cash flow segment. And of course, the cash flow will be impacted going ahead because of the acquisition which I had mentioned. But definitely there seems to be a little bit of positive momentum coming in and conversions in this business model. So net, it's a neutral rating for the cash flow segment. Return ratios, on the other hand, there seems to be a little bit of improvement coming in. It's largely a very stable ROC setup, but now this number are expected to come down because of the for this acquisition. But as of now, it's on the higher side, almost 16% coming in the ROC. Let's pull up the ROE numbers to show you what's the picture looking like. Of course, it was on the higher side at almost 19% in FY23, but then a little bit of downtick. But then now again this up move coming in, and that is why I've given this a strong thumbs up as well. But remember, for the future, the return ratios might show compression for FY27. Let's also talk about shareholding, what's happening here. Promoter stake, a minor up move has happened from 63% to almost, you could say, 64%. But look at the magic here. FIs and DIs, how things have moved. It's largely stable for FIs. DIs, on the other hand, have been increasing the stake from 14% to 17%. An astute investor, Madhu Kela's at NDTV, also has 2.4% stake. So I'm going to give this a strong thumbs up when it comes to the shareholding. Let's talk about the street cred. What happens here? And remember, the company is having a very limited history from 2024 onwards, where its IPO was there. From its IPO price, it's doubled, it's up 107%. But look at the magic. Now, March itself, the lows, the stock has more than doubled up as well. So overall, there's a very strong momentum in the stock, and I'm going to give this a thumbs up. But remember, if the stock has run up, the valuations would be under the question. The 3-year average, what I've taken, is currently at 23 times. And the trailing 12-month P ratio, that stands at roughly 18 times. The 3-year peak which was there, that was also, you could say, almost 23 times. And it's just a reversal happening in this. But net, the valuations are not attractive. So I'm going to give this a thumbs down. Also, let's talk about the outlook, what's happening here. And the street is bullish on this acquisition, but there are more details to it as well. We'll try to understand that. The focus is much more on the value addition product. Of course, a little bit of forward integration also comes in. Enterprise tech and digital infra, that is where the company wants to focus going ahead. And that's why this acquisition has taken place. The synergies are expected in the distribution and the deep tech enterprise. That's all we are looking at. So this is the outlook, and it's pretty much strong right now. But let's give you the entire picture, the KYC ratings for Rashi Peripherals, how it stands. Largely income statement, CAGR numbers were strong, but a little bit of concern for the balance sheet and the cash flow. The return ratios, the past numbers have shown a good up move. Shareholding is pretty strong because the DIs are increasing their stake. On the other hand, street cred, the stock has doubled up already from March lows, and that is why the valuations are not that attractive. Outlook seems strong. The final rating for the stock is roughly 6 out of 8, which we have given for Rashi Peripherals, and this is largely on the higher side of the average for this. But of course, on the other side, we'll be speaking with the management, Kapal Pansari and Rajesh Goenka from Rashi Peripherals. But time for a quick break. We'll be right back.
सफल बनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Welcome back to KYC, and now we will be having a chat with the management of Rashi Peripherals, and of course the biggest news is their 100% acquisition of stake in VDA Info Solutions. Joining us, we are having Kapil Pansari. He's the managing director, and Rajesh Goenka, director and CEO of Rashi Peripherals. Gentlemen, good afternoon. It's always a pleasure to have you. We'll start with Mr. Pansari. Congratulations actually on this important acquisition coming in, but the way things are moving, why this acquisition has taken place, what's the total amount, and will it be funded by your internal accruals?
So thank you very much for inviting us on this on your show, Sharad. I think we are very excited about this acquisition. The prime reason for acquiring this is because the current momentum of digitization, infrastructure building in India on the IT side brings immense scope on value addition and bringing capabilities around it. And I think VDA acquisition brings a complete sweet spot to the synergies between the two organizations. And with a valuation of 550 crores, this entire transaction will be concluded in next 3 years with 67% at this point in time. And last but not the least, this continues to strengthen our enterprise portfolio as an organization.
Right, and I have a question for Mr. Goenka as well. Good afternoon, sir. So now the business model, does it change? Because of course your business model was in the ICT space. The margins, however, is very interesting. It's very single low digit numbers. Does that change? आपका धंधा क्या बदल जाता है? Is there a moat now at play?
So Sharad, first of all, let me compliment you for your fantastic KYC about Rashi Peripherals. I think you have done more due diligence about us than we have done. And I agree to your KYC except for the high company valuation. And there my reply to you and everyone is, this is just the beginning. So, yeah, on your question, I think first and foremost, both the organizations will run independently. because the DNA and the strengths are different. However, we will co-work with each other to strengthen our offerings both in the channel and in the customer segment. If you really see, this is a very strategic, I use the specific word, strategic acquiring of VDA, primarily because they are into cloud technology, cyber security, data protection, server virtualization, storage, and they also provide IT consulting services. None of these products, solutions, and offerings is there in the current Arpitec portfolio. And we have been aspiring to develop these capabilities for last few years, and we have taken some initiatives as well. But obviously, starting from zero has its own pace. With this strategic acquiring of VDA, we are getting an opportunity to accelerate our capabilities in these 6 or 7 sunrise industry and segments.
Well, that's pretty interesting. But just to understand more, Mr. Pansari, now the growth and the margin outlooks, they change, right? Now all the benefits starts coming in. By when can we see that numbers, in the numbers? It's going to take 2 to 3 years. So maybe we can expect after 2 to 3 years, the entire, the revenue outlook or the margin outlook changes for your business on a consolidated level?
Yeah. So if we look at historically, the distribution ecosystem has very stable ecosystem and the number when it comes to the margin profile. With this acquisition, obviously, the value at the moment you do it going forward, it changes. It will have small changes, but in 2 to 3 years, definitely it should start showing meaningful directionally for the organization.
Well, that's pretty interesting. But apart from these acquisitions also, there is something brewing up in your semiconductor business or your growth strategy as well. A couple of arms are there, maybe in India and Singapore. So Street also wants to know what's happening in the semiconductor space. Rajesh, sir?
Yeah, so I think it's a good question. Semiconductor is the hottest topic in the world right now because, as power centers are going to be focused on semiconductor. Coincidentally, at Arpitec, we were one of the first to take this initiative about 5 years back on this semiconductor business. Today, we have a separate vertical within the organization along with a laboratory in Bangalore where we are doing a lot of prototype development. At this stage, we are doing multiple brand businesses, right from designing to concepts to prototyping. And to give you an idea, last year we grew about 50% in this business, and we had a revenue of approximately $15 to $20 million, which in the course of coming years is going to be extrapolated at a very rapid pace. And last but not the least, I also can add that these are relatively higher margin business. So apart from the technology and the strength that we get as a company, the increased margins also are an interesting fact to get into this business.
Right. And Kapil sir, I have a question for you, especially on the AI products, because in our everyday life, AI is becoming very much important. Data is becoming important. There is hardware, there is software. So what is in store for us when it comes to the AI products from your company?
So AI is going to be entrenched in every product in every segment of our lives, whether it is right from mobile phones, laptops, desktops, to security, CCTV cameras in our homes, to networking, to servers, to entire infrastructure. I think AI is eminent. Every product, every company, every individual will eventually start using AI in some form or the other. Think of it in this way: the way emails changed posts and communications. I think AI will change the way we use technology in a very different way going forward.
Right.
Yeah,
And Rajesh sir, of course, this was a very big acquisition coming in and this will take time. But of course, your company has tie-ups with a lot of tech players as well. I just was wondering, from the first quarter or the second quarter, we can expect some large, strategic tie-ups coming in. And if yes, which are the sectors or the areas where it might be coming in? Rajesh sir?
So Sharad, on AI, I just want to add that Rashi Peripherals is very uniquely placed on providing technology AI solutions to consumer, SMB, enterprise, government, and large-scale AI data centers. We have proven case studies of supply, installation, and even warranty services across the segment. So therefore, Arpitec is very uniquely present in offering AI solutions. And we are also one of the leading distribution partners in India for AI solutions. So that's, I think, very big opportunity for you.
Right.
And,
yeah. Please go ahead.
Yeah. And you were asking me something.
Sir, the question was on any other acquisition or tie-ups we can expect, in the last 3 months, in first quarter or second quarter, any large names getting onboarded?
So as I said, this is just the beginning. I think this is where I have to stop on this specific question.
Okay, fair enough. This is the beginning. A couple of times this has been stated. So whatever is publicly announced, that's definitely there. But just one final question, Kapil sir, I have it for you, is you have a good distribution network in India. Anything you're looking in Africa or Southeast Asia? Because this business model actually can be replicated other places also. So is there anything in the anvil or in the plans?
To answer this question, I think there's enough and more opportunity in India as a geography. While we do have offices and set up outside India, but they cater to mostly for supply chain economics for India as a geography. So our focus and energies will continue to be India as a region for the time being.
Okay, for the time being, India is a huge market for your industry and your business. Gentlemen, thank you very much for taking out your time for NDTV Profit and giving the views of this company, and best of luck ahead as well. It's pretty interesting conversation. Yeah. So that's the management of Rashi Peripherals. Everybody talking about their acquisition, change in the business model, and the management has stated one very important thing, that best is yet to come. Pretty interesting story, right? So for these interesting stories, stay tuned to KYC and also keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform. Digital first. Virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where...
Benchmarks inch higher after a lackluster start on Dalal Street. Nifty and Sensex stage recovery from opening lows while broader markets underperform in trade. IT stocks rebound while financials also see fresh buying. Navratna PSU RFC hits the block with the government planning to sell up to a 2% stake through an offer for sale to boost divestment proceeds. Infosys Chairman Nandan Nilekani at company's annual general meeting, that is AGM, reinforces confidence in their AI strategies, saying AI will complement and not replace the traditional software systems. Infosys targets close to $300 billion AI addressable spends by 2030. From resilience to record investments, Adani Group Chairman maps an aggressive growth roadmap, betting big on infrastructure, digital platforms, and scale to power India's next economic cycle. A defining chapter closes at Trent with Noel Tata stepping down as chairman after almost 30 years, marking the end of a transformative leadership journey. Mumbai woke up to relentless showers as the IMD sounded a red alert for the city and Palghar warning of intense rain, thunderstorms and gusty winds as the monsoon stepped up its fury. Markets at 12 with me, Mahima Vachajani, and this is a show where we get you updates on the top buzzers and news updates at the noon. But first, let's take a quick look as to how the markets are doing. The Nifty 50, let's try to pull that up because it's trading above the 23,900 levels, about to touch the 24,000 levels, about 0.7% at its day's high point. There you go. We've already touched 24,000 on the Nifty 50. Back at least for now for the 24,000 levels. Let's try to pull up the heat map and see as to what are the counters that are positively contributing to that up move coming in. You have Trent Limited, which is up 3.6%, ICICI, Interglobe Aviation, Tech Mahindra, Dr. Reddy's, Adani Enterprises, Infosys, as well as Bajaj Finance. All of these counters, up and about in that range of 2 to 3% each. On the flip side, of course, you have Bajaj Auto down by about 2.7%, followed by two life insurance companies that continue to lag, SBI as well as HDFC, and you have Maruti Suzuki, Tata Motors, Grasim Industries also under pressure. Let's quickly try to pull up the Bank Nifty because that is up almost 1.6%. A significant recovery from the day's low point is what we've seen. 58,000 levels is what we're tracking on the bank Nifty. An up move of around 900 points is what we've seen. Let's try to pull up the sectoral heat map to see as to what sectors are doing in trade today and what the action and where the action is in fact. You have, of course, bank leading that chart, followed by IT, where there is positive buying seen today, up 1.5%. Financial services also doing fairly well. Realty also up by about 0.9%. But on the flip side, you have energy, which is lagging, down by about 0.6%, followed by auto, largely dragged by Bajaj Auto, and consumption also continues to be under pressure. Let's also quickly pull up the mid-cap 150 and the small-cap 250. The mid-cap 150 has turned back into the green, up by about 0.08%. But the small cap 250 continues to be in the red, down by about 0.1%. So broader markets continue to underperform the benchmarks. Let's quickly pull up the advanced decline ratio to see as to where that number goes right now. The advanced decline ratio, before we of course talk about the BSE 500. There you go. You have around, so slight bias towards the positiveness, because you have around 1351 odd advances versus that of 1200 odd declines, slightly in the favor of the buyers. But the BSE 500 tells you as to where the real action is in terms of some specific names. TCI Express up 12%, followed by KPR Mills. A lot of textile names, in fact, today are seeing action in trade. Ather up 7% as well. Trident up 5% as well. But on the flip side, you have Triveni Turbine, Rajesh Exports continues to be under pressure after the news update coming in. RFC, Hitachi Energy are also some of the names that are under pressure. So that's with regards to where the markets go. But to talk more about markets and to take this conversation ahead, we are now joined by Feroz Aziz, Joint CEO at Anand Rathi Wealth, joining us now. Feroz, a very good afternoon to you, and thank you so much for taking out the time. Considering that we've seen so much volatility, we've seen so much happening around the globe, right? And we've seen that reflect in markets just about yesterday, right? We've seen how global markets tanked, also saw that reaction in Indian markets. Just want to get a sense in terms of what you're picking up right now. What are the pockets that you're looking at? Because there are some sectors like pharma, defense that are still, have seen up moves despite of the volatility. So how do you explain these markets?
Good afternoon. Like you said, there has been volatility, but the volatility has been reasonably curtailed. I think I've been on your shows for 3-4 times after the war broke out. And I had said on the first weekend, February month end weekend, and the Monday, Tuesdays itself, that this event cannot create a market fall greater than 8, 10, 12%. Markets were at 25,179 on the weekend when this war broke out. The least was 30th March, 22,313. That's about 11%. Whenever markets have to crash dramatically, what do you mean by dramatically? When the markets fall more than 20, 25%, those are dramatic falls. 10, 12%, 15% is the peak to trough for every single year for the last 26 years. So every investor needs to know what kind of peak to trough travel the market can do. And in the range, if it moves 1% a day or 2% a day, it does not impact an investor, certainly impacts a trader. So point one I'm trying to make is market has been in a range, and this was predicted much in advance when pessimism was at the peak. On that weekend, I read a couple of newspapers which had published articles of 17,000, 19,000, 15,000 also. One of the most prominent articles which was there in a prominent newspaper said 15,000 Nifty, right? If the top 10 stocks of Nifty, which form 54%, and top 10 stocks of Sensex, which form 64%, if they're not at their peaks, it's impossible for the markets to fall 30%. So that's one. Second, I personally think that there are once the war gets over, every time the market goes up beyond where it started falling from. So I wouldn't be surprised if in this calendar year you retrace back the peaks of 26,350 and more once the war settles down. That's what we've seen in 11 out of 12 instances. Third, the crude oil, I've also said the mean median for this financial year on crude oil should be around 85. And that I said when it was 110. And I think that seems to be the case. On the weekend when the war broke out, oil was at 68. So what am I looking at the market? Market is far more buoyant, but the sentiment is far more pessimistic. And mutual funds have delivered 5-7% excess return on Nifty because the broader markets have done well. Small cap callers also gone. So what I'm trying to tell your viewer is don't be overly pessimistic. The market is not at the trough. And I think the market has a reasonable amount of buoyancy, and that's what an investor, long-term investor, should be interested in.
Right. Feroz, you know what? Both the mid-cap as well as the small-cap index, I mean, if you take a look at the broader end of spectrum, right? Today, of course, it's underperforming the benchmarks. But overall, since the lows that they've made, they've recovered quite a bit. Mid-cap, almost an 18%. Small-cap, 250, over 25 odd percent, right? Do you think there is, still more action to that in terms of where the broader end of spectrum goes? Do you think there's more action happening there and one should concentrate more in the broader end of spectrum as compared to large caps?
See, generally things come into flavor when the rally is done. Okay, on a few shows in the early March, maybe not on your channel, I said small cap is what you need to garner, get as much as you can, right? Of course, being sane in terms of their proportions. Now, if you look at the small cap and mid cap, till 18 June, that's our backward calculation, we have almost got 2,761 crores inflow in small cap funds, which of course is not published by Amphi yet, but that's the kind of number you're seeing till 18 June. And in mid caps, we have got 3,600 crores. These are provisional numbers. We have an algorithm to calculate. So 6,300 crores has already come in mid cap and small cap space. Why is small cap something I was bullish on much before this 19-20% rally happened? Is because most people look at earnings of small cap, NSE small cap 250 index, without realizing that 67 of its constituents changed. The earnings growth looks as minus 9% for small cap, but it was not minus 9% last year because 67 of its constituents changed. So we internally in our research compute constant constituent earnings growth, which was plus 9%. So earnings were not as bad of small cap funds, small cap stocks as much as people made it to be, because they're looking at the headline number that degrowth has been there, but there was no degrowth. 67 stocks changed. So small cap and mid cap has to be 20% each of your portfolio, and 60% of course can be large cap. Large caps have got hammered because of the index, emerging market, MSCI emerging market index, where $2 trillion actually follow that. We have lost a lot of money to Korean, Taiwan and Chinese markets because of weight shifts, which I'm sure everybody has already spoken of. So broader market definitely, but not in proportions greater than 50% in these two segments.
Feroz, the other aspect is with regards to gold and silver, right? We've seen significant correction from its high point. How do you play that now, considering that, of course, silver, we always consider it as a commodity and not as an investment. But if somebody is looking at both of these, what should one keep in mind?
See, when you're looking at both of these, most people actually are so overwhelmed by recency bias. It's just unbelievable. Now, today, Bitcoin is at 5-year lows. No one is speaking about it. Nobody is saying that now let's buy, right? Gold did very well. It was, of course, on your channel, I had given a gold sell call at $4,700, $4,800. It is but obvious. If you look at gold's history, it has done 3 rallies. Like the latest rally was 2011, where it touched a peak. And then from $2,300, it languished for about 3-4 years. And then at 4 years, it bottomed out at $1,100, $1,200, and then did a rally to reach back its peak of $2,400 after 9 years. Any asset which can be suppressed in dollar terms by 9 years is not even an asset, which I would worth considering in my portfolio. Now, of course, if an asset from $1,700 in April 2024, when 68,000 rupees per 10 grams is what was the price in India, if it moves to 1,76,000, people rush to buy. In April 24, there was a 400 crore outflow in ETFs. In January 24, January 26, when the price was 2.5 times, there was 24,000 crores of inflow. So people generally buy assets after the rally. And I've given a sell call. And today, of course, you see that gold is less than 4,100. Any asset which moves 250%, 200% in a short span of 2 years is basically a lot of recency bias rally, which once it fades, comes back to reality. So I'm not too bullish on gold. Of course, 8-9% dollar returns on gold are possible on a rolling basis, not those astronomical which people provision.
Got it. Feroz, thank you so much for taking out the time and giving us that apt perspective on where the markets go, and of course commodity as well. So thank you so much for taking out the time. Moving on to Paris Defense. Now this is one of the counters that has almost doubled in the past 3 to 4 odd months, and today of course it's seeing some profit booking coming in, but it has witnessed a sharp rally, right, driven by optimism around its defense optics business and a strong order pipeline. We have Sharad joining by to give us more detail on what's worked and what's not worked. Sharad.
Well, that's right. Paras Defense is in focus of very significant up move coming in the last 6 months, stock going up more than 50%. And only one product from the submarine, that's a periscope. They are the only player who supplies from India, and Street is quite bullish on that, especially a high margin business and a good revenue potential coming in. Interestingly, you see tomorrow, June 25th, 65 big investors, including astute investors, DIs and FIs, are flocking up to meet the company. Seems like there's a big euphoria at play, but on the other hand, if you look at it, the valuations are very expensive, almost 90 times the valuations coming compared to the overall 2-year average valuation of almost 55 to 57 times. Overall, if you look at it, almost 47% negative return potential is also there for this stock going ahead for the next 12 months as well. A stock has run up ahead of its fundamentals, but will this sustain or not? That's the big question for Paras Defense.
Thank you so much for taking out the time and, of course, helping us understand what's buzzing with regards to this particular defense name, because it's one of those names that has significantly rallied from the entire pack, right? So that's, of course, Paras Defense, but a bunch of other names are also in the spotlight, buzzing on the back of either news flow, volumes, etc. And we have Shivam joining by to give us more details and an entire list of these buzzing names. Shivam?
Yeah, the first stock in our list is the Tata Power, as the company has received operational extension for its Mundra plant. Now, Ministry of Power has extended the validity of the direction up to September 30, 2026, and this regulatory mandate will force the full capacity operations of its ultra mega power plant at Mundra. Now, this will ensure the company has the cost plus tariff compensation amidst the high seasonal power demands. And as Mundra is ultra mega power project, it has the 5 units of 800 megawatts each, and this with this plant the supplies will be to states like Gujarat, Maharashtra, Punjab, Haryana and Rajasthan. Second stock in the list is City Union Bank. The board has approved a capital raising framework and is looking to pull up around 500 crores via qualified institutional placement, and this comes at a time where there has been a change in the top management, where R. Vijay will took over as new CEO as of May 1st of 2026. Next stock is Yes Bank. The company has scheduled a board meeting on June 29 and is considering and reviewing approval of raising of for fresh equity or hybrid capital, and these borrowings will be done via issuance of debt securities.
Okay, all right. Shivam, thank you so much for getting us that entire list of buzzing names. But moving on, the Enforcement Directorate has expanded its probe into Rajesh Exports. We've seen the stock locked in lower circuit today because, they are conducting searches at 9 premises across Bengaluru and Mumbai. And Shimi joins us with more details on what's been discovered. Shimi?
Of course, in the latest on the Rajesh Export, and quite a significant development as Enforcement Directorate's action is underway for allegedly violating forex rules, covering so far 9 premises linked to the company across Bengaluru and Mumbai. What's astonishing actually is that ED's preliminary findings are already throwing up some serious red flags. Sources tells that, the investigators suspect the Benami transaction in Rajesh Export shares, through which more than $20 million may have been siphoned out of country. And that's one. The agency has also found a significant mismatch in the gold inventory, with the physical stock allegedly around 40% lower than what is recorded in the books of Rajesh Export. Another key area under scrutiny is the netting off of around 3,000 crore in trade receivables and payables involving 4 to 5 UAE-based entities with questionable credential. And this apart, over 1,000 crore of investment in African gold mining asset are also being examined, with investigator finding these investments are not reflecting in the accounts of concerned subsidiaries. Now, searches are still underway and investigators expect more details to emerge as the probe progresses. But do note that this is coming just after the SEBI massive interim order against Rajesh Export and its promoter and chairman Rajesh Mehta, where the market regulator alleged misrepresentation of nearly over 15 lakh crore in consolidated revenue between financial year 2021 and 2025.
All right, okay, Shrimi, thank you so much for getting us those details. The stock has been locked in lower circuit today. A couple of days we did see buying action coming in, but post this update, we're seeing definitely a lower circuit on this one. But you know, the heat in quick commerce race is most certainly picking up with, you know, large players like Amazon now, Flipkart Minutes also entering the race aggressively. So from the battle for market share to the road to profitability, lots is happening in that entire space. In fact, my colleague Nimit spoke to the management of Flipkart Minutes. Nimit, over to you. What did the management exactly talk about? And go ahead.
Yeah, so absolutely. Thank you for joining us, Hemant and Kunal. So the first question I really want to ask you, you are relatively a new player in this market as of now, and the market is already becoming quite a crowded space with everyone offering quicker delivery, deeper discounts and expansion to tier 2, tier 3 markets. What does Flipkart's Minutes see as its competitive moat in the market beyond what Blinkit, Instamart, Zepto and more directly Amazon now are offering?
So Nimit, it's been a 20-odd month for us in this journey. And we are happy to share that we'll be opening our 1000th minute fulfillment center in this week. So I think it's a kind of a reflection that it has been a great learning experience. And three things we find as our strength and we are, trying to solve for our customers. We have a large customer base. Okay. We have a monthly annual active user base of 250 million. And for that user base, we are really driving how can we make sure that we solve for a value grocery business in this country. So with that, we have already reach all across India. How can we use synergies across that? So these are the three dimension: large customer base, how can we solve value grocery for Bharat, powered by our deep reach and network. That's what we are trying to solve and differentiate in this market. And fundamentally, we believe that this is a go-to-market channel for us for all the Flipkart offering. Yeah, that's the way we are thinking. I would request Kunal to add some perspective from category perspectives. Yeah.
Hey, Nimit, the way we look at it at Flipkart is that it's a $700-800 billion industry for India. And right now we are just scratching the surface of it. So there's a huge potential with respect to solving the convenience, the value for customers. And Flipkart believes in providing the best possible value to its customers. So we believe we have a huge upside, a huge runway. Maybe once we relook at, how the industry plays out 10 years, 5 years later on, I think all of us will be surprised.
Absolutely, the point of value add, I absolutely see as different for you, especially because you give a lot more products because of your existing legacy systems with Flipkart. But I'd also like to understand that this has largely been a cash burning business so far, right? Most of the companies in this space are still reporting EBITDA losses continuously. Even Zepto, that's going to go to the market soon, is still reporting EBITDA losses. What is your strategy towards sustainable growth, and how much cash burn do you see in your growth plans?
Hey, Nimit, so sustainability is a very important parameter for us, and we, holding on to Flipkart ethos, the larger problem statement that we want to solve for is providing the value for our customers, ensuring that we win our customers through right selection, right experience, and we have a huge loyal base of consumers, as Hemant mentioned to you. So when we come up with some of these newer constructs, the behavior that we see is our customers get used to this new service and they start transacting more and more with us, not just on Minutes as well, but the larger Flipkart as well. So overall, it's solving for our consumers is the way we are looking at it.
Show a little more on focus on improving existing customer service, but how do you plan to do that exactly?
So Nimit, we talked about we have a large customer base. Okay, we want to kind of make best experience for them. So for us, we'll keep expanding. So typically we've been opening anywhere between 70 to 100 stores a month. We'll continue to expand those stores, and it is a combination of more store in some of the metros and tier 1 and some of the expansions in tier 2, tier 3. Yeah, so currently we are 130 plus cities when we are talking about 1,000 stores. Yeah, so the journey continues on both new city additions, which could be possibly in tier 2, tier 3, and making sure that metros, every possible location in the city is fully serviced. So broadly, that's the approach. The core focus is driving retention and driving repeats, because as I talked about, that's a flywheel which has helped us. If you talk about last year, same time versus now, our orders are 5x more. Yeah, and it is a combination of more from same store and expanding in tier 3, tier 2. So it's a hybrid strategy, and we believe that that's working for us well.
So, Nimit, just to add on, so that it helps understand what is our growth playbook, or how are we trying to grow. Of course, in addition to what Hemant mentioned, I think what we are solving for is the larger India, is what I mentioned in my initial address as well. Our 1,000 store is going to be opening on, I think, in a week's time, in the city of Gorakhpur, right? We have been receiving amazing response from all our tier 2, tier 3 cities. We went live in Ara, Dhanbad, Guwahati, Patna, although not tier 3. But the kind of responses that we are getting from the cities is just unprecedented. So that's our growth playbook. I hope I helped answer your question.
Thank you so much, Hemant and Kunal, for that. We really appreciate it, and we look forward to your growth beyond the 1,000 store as well. Back to you, Mahima.
Right, Nimit, thank you so much for bringing us that interview. Of course, Flipkart Minutes intensifies the competition in the quick commerce space, but shifting focus to a very exclusive story. CCEA may approve the Emirates NBD RBL Bank deal today, and Shimi joins us with more details on this one. Shimi, what are you picking up?
Yeah, that's right, Mahima. So today, both Cabinet Committee on Economic Affairs as well as Cabinet headed by PM Modi is happening, and it's currently underway. And they are likely to consider, the CCA specifically, likely to consider and approve Emirates NBD RBL bank transaction in today's meeting is what, indication we are getting from the top sources. And under the deal, since it's FDI, in a way, the large chunk is coming from the Dubai-based Emirates NBD, investing around 26,000 crore to acquire 60% stake in RBL Bank. And this is, remember, one of the largest foreign investment in the banking sector. So the transaction is important and require cabinet approval, especially economic affair approval at this point of time, because after announcement in October 2025, they received all key regulatory clearances, right from the Reserve Bank of India, SEBI and other authorities. And following that, the capital inclusion and completion of mandatory open offer, which Emirates NBD will hold 60% of the expanded share capital of RBL Bank, is also under work, under progress. But deal is getting now cabinet approval is important because from the FDI it's always required kind of government approval, and deal is seen as a watershed movement for the banking sector as well. So this clearly 26,000 crore capital infusion is expected to significantly strengthen RBL Bank balance sheet as well, and their capital adequacy, etc. So the transaction is coming at a time when we are seeing a lot of chatter around FDI exodus. This will definitely be a big boost as far as this deal in the banking sector is concerned, and you will see perhaps some development and action in the cabinet meeting. However, they may not announce being a confidential deal in the briefing which they will hold today.
Okay. All right, Shimi, thank you so much for getting us that update. Of course, viewers will be tracking the story closely. But with that, completely out of time on this show. But do stay tuned to NDTV Profit for more news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and Sharad Dubey standing at the Profit Market Pit. Good afternoon, Sharad. Interesting day of trade because when we started off, it seemed will be slightly subdued, but absolutely it's played a catch-up in today's session with what's happening. Good amount of momentum that's being picked up as well across a lot of sectors, though Pharma continued to be the top gaining sector when we started off trade. Defense is something which is ruling slightly under pressure. What are the cues indicating?
Well, thanks a lot. Good afternoon, Hiral. And largely we see the markets are properly in green, and so am I. We are near the day's high level. A good attempt is being made due to that 24,000 levels. That's something to watch out for. But remember, yesterday there was a big sell-off also. So some positions are getting covered, and also the Nifty Bank setup, that also looks better than actually Nifty also. Let's just pull out Nifty Bank and see what's happening there. And that momentum is very strong. Why? Because the interest rate sensitive stocks are doing really well. And we are seeing a good momentum in the private banks where, of course, they have a high number of index constituents as well. But what are the key factors at play? That's most important. And remember, there is a little bit of index management also at play right now. Position is reversing from yesterday's selling which we had seen, and a good setup coming in for Nifty Bank. Nifty is testing this 24,000 level. Again, it's very important. Nifty Bank, of course, the resistance levels have been pushed up between 58,000 to 58,500. The benchmark indices are actually outperforming Smiths. That mean that we need some more clarity, at least on the broader indices. Strong momentum coming in Adani group of stocks and a good buying coming in. Remember, the AGM was also there today. Buying in interest rate sensitive groups, be it real estate, PSU banks, private banks, all are firing cylinders. Apart from this, also let's look at the rupee. That has strengthened after 3 odd sessions, and the concern, of course, is on the dollar index for most of the asset classes. It has gone up almost 101 levels. And remember that rate hike expectations is spooking a lot of major asset classes, especially on the risk front. So these are the important macro cues which you should be tracking for this. But Hiral, what are the important watch list stocks?
Okay, so in terms of where the watch list goes, I think before that we should just quickly look at what's happening in terms of Adani Enterprises. You have Morgan Stanley, which is initiated overweight, so that stock is in focus. In fact, there was an AGM today as well. Bajaj Auto, the buyback record date is today, and that's the reason why the stock has been trading under pressure. Tata Motors PV, where brokerages have remained divided on this counter. Ather, strong volumes that are being built up on this number, on this counter as well. Your IT sector is also in focus because JP Morgan is seeing headwinds in terms of growth. However, the sectoral impact is slightly divided, if you can say, because there are a couple of other brokerages which have a slightly positive view coming in on that one. Honasa, Fluence Pharma acquisition not really working well for the stock price. Textile companies continue to see an up move today, and this is after yesterday's note that MOSL released as well in terms of where they're seeing value in this category. JSW Infra, on the QIP, the stock has continued to gain. IRFC, the divestment of 2% by the government is what you're looking at via OFS. SIS as well has announced a share buyback on the 29th of June. Ramco Systems, again, 6-month intraday high is what you're seeing on this one. Strong volumes when you talk about a TCI Express, Pine Labs as well. So these are a few of the names that we are watching out for. But over to you to take the rapid fire, Sharad, with Krupali, Prakash Kumar Nakar.
Thanks a lot, Hiral, for that. Good afternoon, Krupali. It's always a pleasure to have you with us at NDTV Profit. We start the rapid fire round, and interestingly, Ather Industries comes to our focus. Your views on that and important technical levels to track, Krupali.
Good afternoon, Sharad. So Ather is a quality specialist chemical compounder. You can see that Q4 revenue has jumped around 305 crore. It's debt free. So at the CRAM story, it's playing out well. So technically, it's a clean uptrend currently, holding above its 50 and 200 DA averages. My only worry with respect to the stock is valuation, as PE is trading at 71. That's a quite high PE. It's priced for perfection. So for new investor, I would say hold and wait for a dip near 1100, and existing investors stay put, add only on declines.
Fair enough. Textile stocks, KPR Mills, we have Indocount, all of them doing well in trade. Of course, there was a Motilal Oswal report yesterday, but buying momentum continues. Anything looking good out of these counters?
Yes, KPR is one of the best textile run name you can see in India. Vertical integrated, ROCs of 20%, almost debt free. FY26 profit is 866 crore. But here's one catch, the stock is up 21% in just a month. So much so that exchange asked for a volume clarification. So that's an overheated stock right now. So new investors shouldn't chase it. Here, accumulate closer around 1,000. Existing holders can keep the stock and book a partial profits.
Right, and Krupali, another stock, SIS, is known for buybacks, largely a stable counter. What are the technicals suggesting more breakouts coming in this counter?
So SIS is value play here. So quarter four revenue has jumped 31% and it swung back to 100 crore profit from loss last year. So it's the cheapest in this basket on price to sales, trading at reasonably price to book of 2.3. The real trigger is the SIS Prosure IPO unlock. So now extended to September 2026. So the new investor can buy for value, but existing investor can hold it. And IPO is the main playing game here. You can apply for the IPO.
Right, and Krupali, apart from this, Ramco Systems, it's at a 6-month high levels. Good time to, take a little bit of profit out from this counter, or do you think there's a sustained move coming?
So Ramco system quarter four profit again jumped 25 crore, 60% of revenue is now recurring, and they have launched a new AI platform. But the stock is really hot right now. It's run up sharply, trades at P around 50 versus a sector P of 19. So that's price for perfection in a volatile small cap. So new investor avoid this levels, wait for 480 to 500 levels. Existing investors can book partial profits.
Right, existing investors can book partial profits. That's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks suggesting?
Let's pull up the trends and see what's actually trending today, because the markets are absolutely in the positive terrain. So I'm sure there is some bit of positivity that is trending on Google as well in terms of individual stocks. If we could quickly have those one on the screens. I don't think so we have that one, so we'll skip Google trends today. We don't have that one ready. But moving on, overall, Krupali, we've spoken about a couple of names in terms of stocks which are buzzing. But with the way the market has been set up right now, if you could help us understand anything that comes to your radar which could be a top pick.
So my top pick currently would be KPR Mills. KPR Mill, chances that the stock may go up again. Then Indocount, the one at 414 level. So possibilities there that it can go ahead. So these are my top two picks for now.
Okay, so that's with regards to where, individual names go. But thank you so much, Krupali, for joining in. Always a pleasure to speak to you as well. But moving on, Adani Enterprises, that's one stock to focus on as well. In fact, the Adani Group had their AGM today. Interesting comments that we heard from the chairman. But before that, you had a Morgan Stanley note which has initiated an overweight rating on Adani Enterprises. The stock nearly at the day's highest levels with gains of 2.5% coming in there. The target is 3,638. Now, what they're saying is that the company is anchored to the new India. In fact, India's premier incubator with exposure to multi-decade themes is what they're looking at. They're forecasting the EBITDA to scale up by 3 times by FY30. And they're saying that the EBITDA will be driven by airports, new energy and primary industries. What they've indicated is that FY27 also marks an earnings inflection point for the company. In terms of the drivers, they are looking at NMIA, that's the Navi Mumbai International Airport, the Ganga Expressway, and the copper plant, along with the new energy capacity expansion that the company is watching out for. So that's what you're looking at in terms of Adani Enterprises as we speak. In fact, by FY30, they're expecting the company to handle almost 145 million passengers across the airports. And by FY30, they're expecting the company to have a 2 gigawatt data center portfolio, which is through a JV route. Sorry, Krupali, I thanked you. But before that, if we can just quickly take a view in terms of Adani Enterprises, what are charts indicating?
So Adani Enterprises Group's incubator, airports, roads, as you mentioned, data centers, green hydrogen, plus steady mining service cash cow. So the stock has been strong performer, up 33% in last 6 months and trading right near its 52-week high, that is 3060 approximately. Technically, it's in a powerful uptrend, but the RSI near 71 says it's overbought short term. It's stretched on fundamental. Quarter 4 revenue grew by 20% to 32,000 crore, but slipped to a small net loss because last year had one time 3946 crore gain from the Adani Wilmar stake sale. So it's an optic issue, not an operational one. So new investor, I would recommend to hold and wait for a cool down towards 2,800. Existing investors can book partial profits.
Interesting, but another counter, Paras Defense is in focus. Of course, from last month onwards, Paras Defense has gone up by more than 50%. But there is just one thing to the story. There is one important portion of submarine which is called Periscope. Now, they are the only player in India to have that. Street is quite bullish on that. And also tomorrow they'll be meeting 65 investors, be it FIs, DIs, astute investors. But we did check a little bit the valuation. The stock has run up. But will it continue going ahead or not? And it seems like valuations are not attractive. 90 times is what the overall valuations PE number is coming. If you compare that with the 2-year average of 57 times, more than 40% of negative return potential is expected in the next 12 months. And even in the fourth quarter, the raw material cost jumped up 100%. So will this sustain or not? That's a very big question for Paras Defense. But to put things in perspective, Krupali, do you think more profit booking can come in Paras Defense?
Yes, definitely. Paras Defense is high quality niche play in defense and space, optics, electronics and engineering. Exactly the indigenization theme. The market loves this right now. The numbers back at Q4 revenue jumped around 58% to 171 crore and net profit surged 87% to 39 crore. Riding India's record defense production and the BEL order win. So, but here's my caution. The stock is up 56% in just 1 month, nearly 95% year to date, trading at almost 15 times book value. So that's euphoria right now. It's not a value stock. So for new investor, I would ask them to avoid this stock for now, and existing investors can book partial profit.
Partial profit booking and no new entry for Paras Defense. But another stock in focus is Trent. It's the top gainer in the Nifty index also. What are the key reasons for it? And there was an AGM also. To decode that, we are joined in by Mahima. Mahima, what's the story for Trent?
Right, so AGM takeaways, of course, and of course nothing new has come in, but they've given some guidance as far as the commentary goes from the management. They've said that overall only 2% of India's fashion and retail space is what we are covering right now, and we plan to grow 10x in terms of revenue growth. This has been the ambition since 2023. They've achieved 2.5%, 2.5 times growth in terms of revenue and 3 times profit growth already. Going forward, the growth remains intact. They've said that huge long-term runway for Westside. The potential could be 700 stores versus 300 stores today. For something like a Zudio, 5,000 stores versus that of a 960 stores today. This is, of course, from a very long-term perspective that they're talking about. Aggressive store expansion continues, 50 new Westside stores annually, 200 to 250 new Zudio stores annually, and 25 to 40 new, Star Bazaar stores annually is what they're aiming at. The like-for-like growth, the commentary is slightly, tilted towards a negative bias because store densification as well as higher productivity of new stores could affect, like-for-like growth, and early double-digit like-for-like growth, growth in terms of medium term is what the target is for Trent right now. Lastly, in terms of new business and categories, fine-tuning in formats like burnt toast, samosa, etc. is something that they're aiming at. They're also, planning to concentrate more in terms of new categories like footwear, innerwear, beauty, as well as lab-grown diamonds. And both Westside and Zudio is something that will be taking overseas over time. So they're planning to expand in terms of international business as well. Lastly, of course, this was the last AGM for Noel Tata, and he retires from here on after almost serving for 30 years. So this is the overall update coming in from Trent AGM.
Well, yes, but in the consumption space, one more acquisition has taken place, and this time it's on the nutraceutical part. That's for Honasa. Mahima, is this a very material acquisition, or is it like a trend coming in from the other FMCG companies as well?
Right, so it's not very material for Honasa because if you take a look at the acquisition and the numbers, it's for a 135 crore that they've made. And overall, they are buying 42%, the 58% stake right now, and 42% stake will be bought by in the next 5 to 7 odd years. And this particular acquisition, of course, is for 135 crore. But if you take a look at the valuations, it's 3.4 times price to sales. And the company is known for its differentiated, patented cyclical nutrition technology. They're right now into B2B, but they will, using Honasa's distribution, go to B2C network. In terms of financials, around 7.5% growth CAGR is what they've penciled in so far. EBITDA margin is healthier as compared to where Honasa goes at 20% versus that of 10% for Honasa. But, it's just 1.7 times Honasa's FY26. It's 1.7% of Honasa's FY26 sales. So not a very big, acquisition per se. This is important because there is rising demand in terms of where, beauty from inside goes. We've seen nutraceuticals pick up, and it's almost a TAM of 16,000 crore plus going forward. As you mentioned, it's a trend that we've been picking up. FMCG companies have been, expanding in nutraceuticals. We've, Oziva acquisition by HUL. We saw Marico acquiring Cosmix as well as Plix. So all of that is happening definitely in the nutraceutical side of business for FMCG companies.
Thanks a lot, Mahima, for that. We have kept you busy for 2 links right now. But now we are joining in with Nirav Ashar. Good afternoon, Nirav. It's always a pleasure to have you with us at NDTV Profit. We are just discussing a lot of consumption names. This, of course, includes your Trent as well as Honasa Consumer. Of course, 2 different stories. But nevertheless, out of these 2 stories, do you think fundamentally which is better placed right now?
Well, I think both of them strictly cannot be compared, but I think the consumption trends have been quite powerful, and we've seen companies like Honasa, Nykaa slowly but surely they've been finding their feet. And they've been performing quite well, and I think inorganic growth strategy today Honasa we have it's become a pure play BPC firm, beauty and personal care firm with a good portfolio of digital first brands like Mama Earth or Aqualogica, the Derma company, Dr. Sheth's, Be Blunt, etc. And of course today they have taken a step forward into the nutraceutical space and making an acquisition. It may be a small acquisition of when you consider the size of the firm, but I think this can be scaled up, and this will be definitely scaled up in a meaningful way going forward. So we've seen what Honasa has done with the other brands and how they have increased the penetration of these brands and various categories which are looking very, very exciting, especially the sunscreen space or the serum space, moisturizer space, etc. So I think remain quite upbeat over there. And the second stock which you pointed out about Trent, then I think one important thing is that Trent has gone in for a strong expansion in the recent past. We now have achieved the Judiofication of the portfolio with around 75% of the portfolio being Zudio stores, and I think around 20% of the West Side and the Zudio stores have been added in FY26, especially in the last quarter. So going forward, we are likely to see a good momentum in the revenue. Though I think the margins, the PAT margins may come under pressure due to increased depreciation costs or higher working capital requirements. But I think we definitely see a positive bump up as far as the revenues are concerned.
Right. Okay. So that's with regards to Trent. Thanks, Neera, for that. Stay with us. Infosys, now the management has actually used its FY26 AGM to reinforce confidence in the company's AI strategy and long-term growth prospects. Jasmeet joins us with more insights. The stock trading in the positive with gains of 1.5%. Jasmeet, what were the key highlights that you've picked up?
Well, Hiral, thank you for that. What we have noticed across this Infosys AGM for FY26 is that the company has been positioning itself into the AI space and also has given the outlook of how this is the overall AI space impacting the company going ahead. While Nandan Nilekani, the chairman of the board, calls out the overall AI transition to be different and be larger at scale, and also calls out the industry is going through an overall transaction. Now, while also they mentioned that the Infosys is better positioned than ever before for this particular overall transaction, but they mentioned that the AI, the main gap, what they say is into the AI deployment gap. Well, they say what AI tools can do versus what actually can be applied to the enterprise, and they see a huge gap between that. And that's the gap where in companies like Infosys, a huge opportunity. While Nandan Nilekani also comes out and gives out other opinions stating that a lot of companies and a lot of the clients are moving from softwares to building their own softwares in-house. So even that is an opportunity for the company going ahead. Well, look at the other key aspect. The company says the greatest value would come after combining the AI and the models with the traditional systems that the companies like Infosys have. So do listen to the overall aspect of what further he says on the overall AI and the Infosys front.
AI deployment gap in a large enterprise clients is real, and closing that gap is where the work is. AI will not replace companies like ours. It will amplify those who move with purpose and adapt with speed. The AI revolution has made legacy modernization urgent in a way nothing else has, and clients are moving to retire the technical debt accumulated over decades. The preference will be to build versus buy for software. All this creates even larger opportunities for us.
So larger opportunities in the AI space is what Nandan Nilekani is talking about. Neera, quick view when you talk about Indian IT, because it's a very mixed view that's coming in. On the back of the global sell-off, the pressure continues. But do you think where valuations are, this could probably be an opportunity to accumulate Indian IT?
Well, it looks very tempting when one looks at the valuations, especially we've never seen such kind of valuations as far as the IT sector is concerned, with PE multiples going below the 15 level. So I think purely from a valuation perspective, these companies are looking quite good. If you take into account the PE models, the balance sheet, the cash on the balance sheet, the liquidity position, the strength of the balance sheet, etc. But I think what has been a big disabler is the anemic growth. I think just about 2 to 3% growth during the last 3 years, consistently not being able to scale up. I think these are the factors which have put the IT sector on a weak footing, and I think that's why that's being reflected in the valuations. So it may look tempting at the moment, but it's advisable to stay away from the IT sector for the time being till we see some concrete improvements on the ground.
So that's with regards to where Indian IT goes. But thank you so much, Neera, for joining in. Always a pleasure to speak to you as well. But moving on, Adani going all in on power. Here's what Group Chairman Gautam Adani announced at the 34th AGM today. Let's listen in.
At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years.
Okay, so that's the word coming in. 45 gigawatts in 5 years is what Adani Group is targeting as well. But completely out of time with that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company.
Good afternoon, you're tuned into Lunchtime Trades with me, Shreyansi Singh, and this is a show that in the next few minutes is going to get you a heads up in terms of everything that is happening in terms of trade, all of the top buzzers at lunch, as well as news from the world of commodities. But first things first, here are the top headlines at this hour. Benchmarks inch higher after a lackluster start on Dalal Street. Nifty and Sensex stage recovery from opening lows while broader markets underperform in trade. IT stocks rebound while financials also see fresh buying. And Navratna PSU IRFC hits the block with the government planning to sell up to a 2% stake through an offer for sale to boost disinvestment proceeds. Meanwhile, Infosys chairman Nandan Nilekani at company's annual general meeting reinforces confidence in their AI strategy, saying AI is going to be complementing and not replacing the traditional software systems. Infosys targets close to $300 billion AI addressable spends by 2030. And from resilience to record investments, Adani Group chairman maps an aggressive growth roadmap, betting big on infrastructure, digital platforms and scale to power India's next economic cycle. A defining chapter closes at Trent, with Noel Tata stepping down as chairman after almost 30 years, marking the end of a transformative leadership journey. And Mumbai wakes up to relentless showers as the IMD sounds a red alert for the city, and Palghar warning of intense rain, thunderstorms and gusty winds as the monsoon really steps up its fury. Another time now to take a look at some of the sectors that are buzzing away in trade right now. When you talk about Nifty as well as Sensex, you've seen quite some bit of recovery really coming through in the next few minutes itself. And from those opening lows as well, you've seen the market really tick up. When you talk about Sensex, it's about 700 odd points higher. But when you talk about the sectors that are buzzing away in trade, it's actually Nifty Bank, financial services, IT as well as realty, and PSU Bank doing quite well for themselves. So it's actually some of those IT counters that are doing quite well right now. When you talk about what's on the flip side, you do have defense, energy, media, auto, all of those sectors trading with just a little bit of losses right now. A bunch of counters that are buzzing away in trade. It's actually a trend that's up 4.5% odd, and you do have a chapter that is really closed in terms of Noel Tata stepping down. And that is, of course, the top Nifty gainer as well. Add to that list an Interglobe Aviations, Dr. Reddy's, Adani Enterprises, Tech Mahindra, ICICI Bank, all of them in great shape right now. When you talk about the ones that are not doing so well from within the Nifty 50 pack, it's actually some of those auto names that make it to that list. So something like a Bajaj Auto, Tata Motors, PV, after the investor day at Tata Motors, Eternal, Maruti Suzuki, as well as NTPC, all of those stocks downtick of anywhere between 1 to about 2% coming in on all of those counters. But largely that's the kind of sentiment that you're looking at in terms of the Nifty and the Sensex and the benchmarks really doing quite well for themselves, and the benchmarks just really a little bit listless as compared the broader markets, in fact, a little bit listless as compared to the benchmarks. That said and done, let's also talk about an exclusive conversation right now. In fact, my colleague Piyush spoke with ESAF Small Finance Bank CEO K. Paul as well in terms of the roadmap going forward. The CEO has really outlined his growth strategy with a sharp focus coming in on scaling operations and building capacity in the microfinance business. Let's go across and listen in to that bit of commentary.
What would be your immediate priorities becoming the chair? How would you like to address and go ahead the issues that are pertaining to the MFI industry?
Thank you, Piyush. Thank you, Piyush, for having me on this show. And thank you very much for your support for promoting financial inclusion in this country. And for Sadhan is an association of impact finance institutions in our country. Also, Reserve Bank approved a self-regulatory organization. So for the immediate priority, because so the microfinance sector has been going through difficult times for the last 2 years. So ensure adequate funding for microfinance institutions, specifically for smaller microfinance institutions, because smaller institutions mostly depend on bank funding. So Sadhan has been working to increase the fund flow from banks to smaller institutions. So newly, Government of India has announced a new credit guarantee scheme for small MFIs. So I hope that will definitely improve the fund flow. It's not only fund flow. The second is the skilling, the capacity building and skilling of smaller institutions. Along with NABARD, Sadhan has launched an MFI acceleration program. Around 21 smaller microfinance institutions are part of this project. Through this project, we hope to build the capability of the member institutions. And also, we have been doing regularly for the last 25 years that providing support for timely guidelines, issuing guidelines to member institutions is also one of the priority. So we wanted to be really work as an accelerator for improving the financial inclusion landscape in our country. So the last year data shows that only 15% of Indian adult population have access to formal banking arrangement. So across the country, it is globally, it is to more than 24%. So we have a long way to go to match up with the global scenario. So we will be promoting more institutions to come to this space, and also to encourage our member institutions to go to newer region, unbanked locations, underserved locations. So last 2 years, the from the microfinance member base or the borrower base have been shrink from 83 million to 63 million. So there is a scope for bringing them back to the fold. That is another priority which we will be taking it up. And new to bank customers number also has been shrinked for the last 2 years. So that is also one of the priority area for SADA.
Right. Paul, sir, you have been a veteran in the MFI field. You were a MFI yourself before conversion to SFB. You have seen different cycles. The last cycle particularly was because of the lenders' fault, in the sense that people did not see whether a borrower of a lower income earning category had more than 3 or 4 loans. So there was this overrating, and this was a MFI driven or bank driven sort of a challenge that led to the adverse credit cycle. But now on the ground, how are you seeing things panning out in terms of fresh disbursements, the collection efficiency, and more importantly, what are the levers that they should be putting in place to avoid again, the industry prompted sort of a adverse cycle?
Yes, you are right, Piyush. I have been in the sector for the last 30 years. We started, ISAF started micro lending in 1995. So we have seen many cycles. And what was the unique feature of this latest cycle was it was bit more longer. So we have not all the other cycles which I have seen faced in the past was short duration, but this was something that is gone up to almost 2 years. So, but I can proudly say that together with the as an SRO, Sadhan's effort and all the member institutions' effort, we have implemented strict guardrails. In 24, we Sadhan issued Sankalp guidelines for member institutions to follow. So all member institutions have implemented it.
All right then, so there you go. That's really the word coming in from ESAF Small Finance Bank, and that's an exclusive conversation, mind you. But let's also move on and talk to you about what else is happening in the markets. And this time, let's actually shift the spotlight onto the commodities market, talk about oil prices as well as gold prices. When you talk about oil, you do have oil really extending losses, as you can see on your screen. So Brent really just about managing to hold on to that $76 a barrel level. And even when you talk about WTI, just about managing to clinch on to that $72 a barrel level on the back of Hormuz tanker traffic really coming back with greater confidence. And that's something that seems to be worrying the oil markets right now. Add to that the geopolitical risk premium that has been taken out of the barrel. And when you talk about gold prices as well, very quickly, it's actually the fall on the back of a stronger dollar. Add to that all of everything that has been happening when it comes to the safe haven demand, and that picture really changing very sharply. Let's also get you some more insights. In fact, Anuj Gupta, commodity expert, joining us on the show right now. Mr. Gupta, a very good afternoon, and thank you so much for taking the time out and joining us. As always, it's a pleasure talking to you. But when you talk about oil as well, right now, it's a very, very interesting setup. You do have all of the data really indicating that the tanker traffic in Hormuz, it's reached 35 vessels as of early this week as well. So when you look at this entire backdrop, what is the lowest in terms of where is the bottom of the barrel that you indicate?
See, if you check that in the month of Jan, when the war not started, it was trading around almost $60 per barrel. And in the month of March, when the war started, it increased by almost 10%. So I think somewhere around $60 to $65 would be the lowest level for the crude oil, because if you see that currently prices are trading at pre-war level. So I think, and even supplies are also increasing. Strait of Hormuz has been opened, and OPEC plus members and UAE are also agreed to increase the production. So we are expecting that
crude prices may correct further and it may test somewhere around $60 to $65 per barrel, and that would be the bottom level, I think.
Absolutely, and thank you so much for highlighting that. That clearly, outlines that the geopolitical risk premium seems to have been taken out of the barrel as well. But, Mr. Gupta, another thing that the market has been talking about is that the supply infrastructure issues that might take a longer time to fix, even with the 60-day ceasefire, in place right now. Given all of that is happening right now, do you think that the infrastructure issues is something that you would be worried about in terms of prices? Do you suspect that they're going to be keeping prices poked up at higher levels? Mr. Gupta?
Yes, definitely. Yeah. I think, yes, definitely there is some uncertainty probably is there because the nuclear deal between US and Iran, that will be, if there is no the deal that will create again uncertainty. So currently the keep eyes on the deal between US and Iran on the nuclear deal. If it done perfectly okay, then that will be positive for the ultimately negative for the crude prices. But if it not, so that will be a negative for the crude oil prices. So I'm expecting in the next 2 days we will see a clear picture between US and Iran on nuclear deal, and that will also provide support to the crude prices.
No, absolutely. And let's also talk about the opposite of support. And that's something that you see reflected when you talk about gold as well. Just wanted to try and understand what you think about that as well, everything that has been happening with gold as well. You do have the entire safe haven status that has really gone out of the window right now. And that's something that entire calculation seems to be shifting very drastically. Weigh in on that first, and then the outlook when it comes to gold.
See, gold prices, we are not expecting so much positive from here because there is a 2-3 events which providing a negative trend. One is the risk premium of the war, and we have seen that war is going to end. So the risk premium from the gold prices has been diluted, so that will putting a negative impact on the gold prices. Second one is that the hawkish statement from the Fed, because they are saying that they will increase interest rate 2-3 times in the coming time. That is also providing a negative trend. And the third one is the outflow in the gold ETF. In last couple of days, we have seen that $2 billion outflow in the gold ETF from America and Asian markets. So that will also putting a pressure on gold prices as investors are out of the market. So these are 3-4 things which are still working as a negative for the gold prices. And currently, investor and traders and pupils are waiting to buy the gold on the lower levels.
Absolutely, and just very quickly wanted to weigh in on silver as well. There's a bunch of factors that you're looking at. Just wanted to try and get a sense of the trajectory when it comes to silver prices as well. And do you think that dollar is going to be playing the spoil sport when it comes to silver as well?
See, silver is a part of the bullion, and it's also in trading in the tandem with the gold. So gold price is correcting and silver price is also correcting. And even in international markets, silver is trading on a 1-year low level. Means in 2026, it is trading on a lowest level. So that is also a negative for the silver. And the demand of the silver is not supporting the silver prices, and expecting further further prices may correct from here, and expecting silver may test $55 to $58 per ounce. So still the industrial demand is not there. People are waiting for lower levels to buy. But yes, in a longer term, we are very optimistic for the silver because the industrial demand may further rise in the longer term. So we can say that if somebody wants to invest the longer term, they can buy on a lower level.
Understood. Just very quickly before we let you go, just a yes or no answer to this question as well. Just wanted to try and understand if you think that $40 is something that you could perhaps be penciling in when it comes to silver as well.
No. I'm not expecting that it may touch $40.
Okay. Thank you so much for joining us with that entire roadmap when it comes to gold, silver, as well as oil prices as well. So there you go. That's the entire update coming in terms of how you should be looking at prices. So $55 per ounce is something that you could be penciling in when it comes to silver prices is a lower level here. But from moving on then from betting big on India's future in a fractured global environment to building scale amid intense scrutiny, Adani Group Chairman Gautam Adani lays out a clear vision at the group's 34th AGM. To walk us through some of the key highlights here, let's get in Puneet with all of those important details.
Well, thank you for that. There are multiple key aspects that were addressed, in the speech by Gautam Adani, and we'll get to, of course, the first quote that started it off, because there has been intense, what has been mentioned also, a year in which the world has essentially grown more fractured, complex. Energy security, mobility has also been returned to as well. But also there was stated that the center of national strategy and technology became inseparable from the sovereignty impact of things. So there was also mentioned by Gautam Adani that even in the face of these challenges, the Adani Group has remained anchored to one of the key important factors, and that has been unwavering belief on India's future, which cannot wait. Apart from that, also he mentioned about the other factors that the group has built in advancing its essential journey as the world's most integrated player in terms of infrastructure platform across energy, transport, logistics, as well as infrastructure manufacturing as well. Now, when you look at the other key takeaways, now he also mentioned about the progress that's been done in the last 1 year, did not come in calm conditions, as we've known about the geopolitical landscape, came amid middle of extraordinary scrutiny. One of the biggest key takeaways was the 25,000 crores rights issue, which was conducted earlier this year. More than a capital event, it was a referendum of credibility on the Adani Group as well. He also mentioned about the spirit of nation building as well as one of the key themes of the address, and hence focused on a couple of key aspects: accelerating infrastructure as well as leveraging the intelligence as well. When you look at the first key point, there are no longer two separate priorities, as Gautam Adani mentioned. They were both integrated, and hence, when you look at the first one, twin global engines that must shape India's strength going forward. Also highlighted that infrastructure remains the first engine for national growth. You have roads, ports, airports, all important key factors that need to be looked at. And these all were, including gas networks as well as transmission lines, all of which is being looked at by the Adani Group as well. Amongst the second engine, you've seen AI data centers as well as digital platforms as important key milestones as well as sectors that have also been looked at as well. In FY26, they've made record capital investment as well. 1.5 lakh crore in hard infrastructure has been invested by the Adani Group. That's almost 30% of India's total new private sector capex that's been done in FY25 and 26. Now, one of the important events, of course, was Operation Sindoor for the nation as a whole. And the Adani Group chairman has mentioned that, the drones as well as the anti-drone systems developed by the group were used essentially and supported the armed forces when it mattered the most. Finally, in terms of what we've seen also in terms of the financial performance, roughly 2.92 lakh crore in terms of consolidated portfolio revenue. EBITDA also reached new highs of almost 94,834 crores. And the net debt to EBITDA ratio currently stands at 3.3, below the 3.5 times mark as well. Finally, to end, we've seen, of course, a big quote coming in as well from the Adani Group chairman, where he mentioned that to build infrastructure that powers India and to also build institutions that ensure the human dignity at every level of the society continues to be one of the, to end what has been a record year for the group. Multiple key initiatives, of course, across different sectors and businesses, but these are some of the key takeaways coming through.
No, absolutely. And thank you so much, Puneet, for joining us with that as well. So it's a message really anchored in resilience, expansion, and long-term nation building as well. But let's also move on and talk about the electronics market. Now, rising memory prices are beginning to, in fact, chip away at the demand when it comes to mobile phones and laptops in India. Ridhima is joining in with some more details here.
So sales volume in laptops and mobiles have dropped after the RAM prices have increased. Now the sales volume in mobiles have dropped, likely to be dropped by 12 to 15% after the entry level prices in the phone increased, and for laptop sales volume likely to drop by 16 to 18%. Now remember that mobile and laptop prices have been rising since December of 2025, and mobile average selling prices have gone up by 20%, and for laptops this price has gone up by 15 to 25%. And this price increase in laptops and mobiles is likely to continue in 2027 as well. And we are seeing that second-hand phones and laptops are seeing an uptick, and the festive season could be a respite for the first-hand devices. Now, this is as per the dealer checks we've done and the IDC and counterpoint data. Now, if you see the consumer behavior below 10,000 rupee phone, there has been a decline of 42%, which you pointed out earlier, and around 10 to 20,000 rupees uptick of 6%, and above 30,000 an increase of 10% is seen. Now, this is negative for Redington and Dixon Technologies and positive for J&G Electronics, which manufactures second-hand phones. Now, the main reason behind the price increase is the RAM prices, which have gone up by 4x times from December 2025, and also the dollar, which has strengthened against the rupee, which has added pressure on the input costs, and the Gulf War has also added an extra pressure, apart from the AI and the data center demand, which has led to a supply crunch in the chip market. Now, how important is this segment for the mobiles, as in the memory? Now, 45% of the manufacturing cost of mobile comes from the RAM, and for laptops this percentage is around 35 to 38%. Now, this is something we need to wait and watch, that how companies actually manage their volumes and get to people buying more first-hand devices.
No, absolutely, and thank you so much, Ridhima, joining us with all of those details as well. That's crucial data that she's pointed out for us as well. But let's also keep an eye on the sky, talk about Mumbai as well, that woke up to relentless showers, as the IMD also sounded a red alert for the city. And Palghar also warning of intense rain, thunderstorms and gusty winds as the monsoon stepped up its fury as well. In fact, with that, let's also get in Juhi Yadav joining in with all of those important details.
The most awaited monsoon season has officially and finally begun in Mumbai. But the streets of Mumbai are full of water in its first rain only. Right now, I am standing at Sion Gandhi Market area. This is an hotspot area. Even if it rains for a little while, this area gets flooded with water. And right now, the situation is same because it is raining in Mumbai since morning. Even yesterday, it was raining. But today, since morning, it's raining heavily. And this very hotspot area of Mumbai, that is the Sion Gandhi Market area, is flooded with water. You can see right in front of me a BST bus is waiting, is shut down. In front of the BST bus, a tempo truck is also shut down. Also, the traffic is jammed because of this waterlogging. The BMC had stated that this year Mumbai will not face waterlogging because the nalas have been cleared up, but we can see the reality check over here that in the first rain itself Mumbai is facing waterlogging. People are facing problems because of this waterlogging, because it's Wednesday and it's morning time. People are struggling to reach their offices on time, but it seems that they won't reach their offices on time because of waterlogging and traffic jam. Now, it is to see that what the BMC gives clarification on this very situation. Also, orange alert has been declared in Mumbai today. Next 3 hours are very crucial for Mumbai because it will rain heavily. You can see water like my knees. The water has reached up to my knee level, and the situation of Mumbai in very first rain is really very much disastrous.
No, absolutely, and thank you so much, Juhi, for joining us with all of those details. Maximum city, minimum infrastructure as well. That's something that you see highlighted just in the first bit of showers as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the head
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Soumit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. So let's see what's on the show today. Firstly, we'll be speaking with the management of Royal Orchid. Now they have recently launched a new hotel, and how's the bookings looking like for the monsoon season is something that we'll be asking the management on the show today. Apart from that, we'll be discussing a host of stocks. Firstly, it's Bazaar Style. The stock has hit a 5% lower circuit for the third consecutive session. The stock is down nearly 24% since the month of May. When it comes to TCI Express, that stock had gained over 15% in trade, its biggest intraday move in over a year. So what could be the potential reason behind this is something that we'll try to decode on the show today. When it comes to Ramco Systems, that stock had hit a 6-month intraday high on the back of strong volumes. And if you look at, in fact, the gains are over 15% in trade. And if you look at the volumes are nearly 17 times its 20-day average. And lastly, we'll be also speaking about a stock called Roto Pumps. Now, that stock has been buzzing for the last couple of trading sessions on the back of strong volumes. If you look at the volume number, it's nearly 6 crore shares that have been traded on yesterday and today as well. And this is multiple times the last 20-day average that we have seen when it comes to volumes. So strong volumes has led to a strong price action as well when it comes to Roto Pumps. Now, if you look at the market, the Nifty, it's a strong day. We have reclaimed the 24,000 level, but we are still struggling to cross the 24,100 level. But still, a strong up move throughout the day is something that we have seen when it comes to the benchmark index. And this is largely led by the private banking names. HDFC Bank specifically, that stock is up nearly 2.5% in trade. If you look at the sectoral indices here, other than the energy and the PSU names, most of them are trading in green. Nifty Real Estate, Nifty Private Bank, Nifty IT and Nifty Bank are the topmost, gaining index up around 1.7%. While on the losing side, we have defense, energy and the PSU names which have been lagging in trade. And yet another good day when it comes to the small cap names as well. Varsha, which are the key stocks here that are buzzing?
Well, a lot of new stocks, I would say, which are on the radar. You have Ramco Systems, which is buzzing on the back of volumes. Volumes are trading at 8 times of its 30-day average. Let's pull up that chart. That stock is up almost 18% in trade. You have TCI Express also 75 times volumes of its 30-day average. Stock is up almost 12%. Steel Cast 60 times volumes. Again, buzzing on the back of high volumes here. Stock is up almost 9% in trade. Patel Engineering, KDDL are also buzzing in trade. You have even Patel Engineering is up almost 8%, KDDL is almost 7.8%. SP Apparels, Ambika Cotton Mills are also buzzing in trade, of course on the back of volumes, nothing else. On the loser side though, you have Black Rose Industries. We are seeing profit booking here. Even Salasar Techno and EMS are also seeing profit booking. EMS, we have seen a rally there, but now we are seeing profit booking. Salasar Techno is down almost 8%, EMS is down almost 6%. But one stock which is in focus is of course Royal Orchids, which is scaling up rapidly with multiple recent launches and a strong expansion pipeline with monsoon bookings now key to near-term performance. Let's bring in Amit Jaiswal, who's CFO at Royal Orchids Hotels, to decode growth visibility, demand trends and the outlook ahead. Mr. Jaiswal, welcome at NDTV Profit. Pleasure to have you. Before we talk about your launches, the recent launch that we have done, I just wanted to understand, because of the war, occupancies had seen a drop, which you mentioned in your last con call. Now, as we are seeing, situation easing up, are you seeing some kind of demand pickup, or what's the on-ground reality that you are seeing?
Thank you so much. Obviously, the war did impact the business of hospitality across India, but the major hit had happened only for the business hotels. Whereas the leisure destination have done very well in the first quarter and they continue to do well. The impact of the war on leisure destination was actually positive because the people, the domestic travelers who used to go to foreign countries like Dubai and etc. and all, they chose the Indian destinations for their leisure travels. Of course, the business travelers, there was certain impact because the foreign travelers were not coming in during the war period. But that now is going to ease out and we are seeing the improvement there also. As far as monsoon season is concerned, the leisure destination has got very good bookings and some of the conferences which was rescheduled during the war time will now take off in the second quarter.
So, given the fact that Q1 is now coming to an end compared to last year, was it better or was it slightly weak given the given the fact that war prevailed for a better part of the quarter?
No, as far as last year and this year is concerned, there is definitely a growth because the leisure destinations have outperformed all the targets and the budgets. But business hotels did suffer. However, overall as a company, we have seen a good growth in the first quarter and we continue to do so. The business hotels are also now looking to do well going forward. Good bookings are there on cards.
Right. So, sir, since you're seeing a good growth in FY27, what are the occupancy levels that you are targeting in the current year, that is FY27?
See, FY27, we are targeting a 70+% of occupancy overall. Some of the hotel outperforming even beyond 80%. But on an average, we are targeting an occupancy of around 70-71%. for the FY27.
Okay. Also, if you could give us what are your expansion plans? How many rooms do you plan to add in FY27? On that front, if you could share some details.
Yeah, so we have 50 hotels which are already there in the pipeline, which are signed. Around 3,600 rooms will be coming up. But the exact timeline, it is very difficult. It depends on a host of factors of the construction and licenses, etc. But in a 1 year to 2 years time, all these hotels will come up in time to come. And we are very aggressive in signing also. New hotels, our team is signing. So we are seeing a good growth, and as the roadmap we had given that by 2030 we will be crossing 300 odd hotels. So we are right on target there.
How will you be funding this? Via internal accruals or some debt will be taken up?
See, we have an asset-light strategy. Most of our hotels are under management or on franchisee. However, we are also doing some flexi leases. But those flexi leases will be funded by the internal accruals. Okay, the earnings which the company is doing, with that we will be able to fund, and we don't see looking at any major loan or debt being raised by the company unless until something really big comes up on the way.
Right, and sir, for your managed business, despite adding, I think 500 to 600 keys, the numbers remain flat. The business did almost 55 to 60 odd crore revenue and 20 odd crore EBITDA. Considering this is a high margin segment, is this managed business the future core engine for the company?
See, you have raised a very valid point. Let me explain to you. Whenever a new hotel comes up, it takes at least 6 months to 1 year time to stabilize itself and earn the kind of targeted revenue which the company looks at. And moreover, last year what had happened, the July, August, September season had seen a total washout in the hills. There were huge rains last year, and the business of so many hotels which are leisure destination in the hills, they got affected. That is why you have not seen a very good growth. However, the rooms what we have added and which we are going to add will definitely add a lot of value to the management business of the company.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Royal Orchid. Let's also welcome in our fundamental guest, D. Chokhalingam, founder and MD of Economics Research. Sir, you heard the management. They are quite optimistic on growth despite the fact that for the better part of the quarter, business was slightly impacted. How are you looking at this counter at current valuations?
Yeah, I heard him, and I also looked at basic fundamental parameters. Looks good to hold. One can even buy for medium to long term. The only concern is that there has been a significant margin decline in the last 3 years from 31% in FY23 to 23% in FY26. The margin decline. Otherwise, the stock is already down 41%, and EV to EBITDA also only around 17 times, which is much lower than many hotel company stocks. So therefore, one can hold. Even if there is a marginal decline, one can buy for short term itself.
Right, got that point. Well, small cap heat continues after this break. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaign.
Welcome back. You're watching Small Cap Buzzers, where we talk all about small cap stocks. But you know, new upcoming IPO which is on cards is NAC Packaging, which the IPO is set to open for subscription on July 1st. The company's high margin products are likely to remain the key growth factors in the upcoming quarter, says Talpesh Patel, who is the chairman and managing director of NAC Packaging. You know, while speaking to NDTV Profit, let's listen into the slice of the conversation we had with the management on IPO offering and growth outlook. So I just wanted to understand on the financial numbers. Now we've seen an increase in EBITDA margin over the years. There's a good spike in the margins. Are these margins sustainable? Where you want to take these margins to, कोई target है for the next 2 to 3 years in margins को, EBITDA margins को आपको कहाँ ले जाना है?
मैम देखो, हम तो मेहनत करने वाले लोग हैं, मेहनत करते हैं, बैग बनाना आता है हमको, और वो जो मार्जिन है वो अपने आप आते हैं। तो हम तो, मेरा फोकस है ऑलवेज इनोवेशन के ऊपर में। हम पिंच बॉटम बैग्स बनाते हैं, उसका प्रोडक्ट मिक्स काफ़ी लास्ट 3-4 साल में हमने उसको काफ़ी इंक्रीज किया हुआ है, और वही आगे की जर्नी में भी मेरा प्लान है कि वही जो प्रोडक्ट मिक्स के अंदर में जो हायर मार्जिन वाली हमारी जो प्रोडक्ट है, जो पिंच बॉटम बैग्स है, उसी को ही हमको आगे लेके जाना है और वहीं से ही हमारे को ग्रोथ लेना है। तो मतलब हम आज की तारीख में भी उसको ही मतलब मेजोरिटी फोकस है कंपनी का, और वहां से ही हम जर्नी कर रहे हैं। तो इबिटा और ये जो रीजन है सर, उसका 2-3 रीजन। हमारे पास में जो मेरा मेन एक्सपेंस होता है इलेक्ट्रिसिटी, जो इलेक्ट्रिसिटी है वो इलेक्ट्रिसिटी हम खुद ही अभी इसके लिए एक सोलर फार्म डाला हुआ है, विंड मिल भी हमारे रूफटॉप के ऊपर में। तो कंपनी क्या 60-65% इलेक्ट्रिसिटी सेल्फ मतलब वो जनरेट करके यूटिलाइज कर रहे हैं। तो इलेक्ट्रिसिटी का एक हमको सेविंग आया हुआ है। सेकेंडली हम मेरा प्रोडक्ट मिक्सिंग है, और मैम जो मोस्ट इंपॉर्टेंट है हमारा एक्सपोर्ट परसेंटेज। आज की तारीख में आप देखोगे तो कंपनी का 56% से ज्यादा रेवेन्यू एक्सपोर्ट से आता है, और वी आर एक्सपोर्टिंग नॉट 2-3-5 कंट्रीज, वी आर एक्सपोर्टिंग 71 कंट्रीज लाइक यूएसए, बहुत सारी डेवलप कंट्रीज के अंदर में मेरा मटेरियल जाता है। तो वी आर एंजॉइंग दैट एक्सपोर्ट्स एंड द इलेक्ट्रिसिटी सेविंग एंड द प्रोडक्ट मिक्स।
Right. And do you want to increase this export contribution, sir, from 56%, say, where you want to take this contribution to?
मैम ऑलवेज हमें ट्राई रहता है कि एक्सपोर्ट के अंदर में काफ़ी अच्छे मार्जिन भी हमारे कंपनी को मतलब उसका बेनिफिट भी है। तो आज की तारीख में उसके लिए मैम 100% भी ट्राई अवर लेवल बेस्ट और उसको काफ़ी ऊपर तक लेके जाना है। मैम उसमें एक चीज़ मैं और ऐड करना चाहूँगा कि कंपनी ने 1.5 साल पहले हमारे ही एक कस्टमर है मतलब साउथ मैक्सिको के अंदर में सैकोस करके मेरा जो कस्टमर उसके साथ में 13-14 साल से मेरा रिलेशनशिप था। तो उनके साथ में अभी 1.5 साल पहले हमने ज्वाइंट वेंचर किया था। वो प्लांट को हमने इंस्टॉल किया और अभी 1 अप्रैल से वो प्लांट शुरू भी हो गया। उसमें जो बेसिक रॉ मटेरियल जो हमारा फर्स्ट और सेकंड जो काम हो रहा है जो लेबरियस है वो हम इंडिया में करेंगे। बाकी की प्रोसेस है वो हम मैक्सिको के अंदर करेंगे। लाइक प्रिंटिंग हो गया, लेमिनेशन हो गया, बैग मेकिंग इंक्लूडिंग द अवर स्पेशलिटी बैग्स जो मॉडर्न ट्रेड बैग्स है वो पिंच बॉटम बैग्स है उसी को मतलब स्पेशलिस्ट बैग्स जो है वो हम वहां पर भी बनाएंगे। तो वो पर्टिकुलर मैक्सिको के लिए। तो मैम ग्रोथ जर्नी हमारी कर रहे हैं। EBITDA और मार्जिन तो अपने आप आने ही वाले हैं। वो हम ट्राई करते रहते हैं जितना बेस्ट हो करे उतना कर सकते हैं उसमें।
Right, so this was Snack Packaging, giving us an outlook. Just for the benefit of viewers, the company manufactures printed and laminated woven polypropylene bags which are used across industries such as, food, pet food, agriculture, fertilizers, building materials, detergents, cement, chemicals. But, Mr. Chokalingam, coming to you on this IPO, what's your view? What should investors do? And, if you could just explain a bit the industry also which this company is into.
Yeah, well, basically, woven polypropylene packaging. Risk-taking investors can apply. There is a little risk because valuation is around 28p on a diluted equity, which is slightly higher in my view. But still, there are short-term benefits possible. One, oil price has crashed, so its input prices should come down. And secondly, it is into consumer-oriented packaging. So particularly the return ratios were good before going to IPO. For these two reasons one can consider, but otherwise there is a little risk in the short term because valuation is already slightly stretched at 28p. So therefore, net to net, my suggestion is that risk-taking investors can consider applying for IPO.
Okay. The next stock that we'll be talking about is TCI Express. Now, at one point of time, the stock was up more than 15% in trade. Its biggest intraday move that we have seen in at least the last 1 year. Now, the stock is up around 12%. But what could be the potential reason behind this sharp surge in the share prices? Let's try and decode this with Puneet.
Well, thank you for that. As you rightly mentioned, one of the biggest moves that we've seen on the stock in the last year or so, and also that what we have seen that Q4 was very interesting for the company. So almost the highest volumes that the company did in Q4 of FY26 in the last 24 quarters. The growth was minimal at around 4% on a YY basis, but started to see some trend or revival in volume growth. They also mentioned that the SME mix, which is currently around 48% of the company, is expected to go back to the historical level of 50%, and management continues to have the recovery again because that is one of the higher margin segments for the company. But as a whole, the year has been a difficult one. Q4, of course, helped get the overall revenue growth for the year to 2.3% at roughly around 1230 crores. And that was the first time that the company's reported a revenue growth over the last 2 years. So 2 years of declines have been finally reversed. What they are expecting is that the EBITDA margin came in at 10.7%, profits came in at 89 crores, and that should be a good starting point for the next couple of years at least. They've also mentioned that working capital has been largely maintained at that 47 to 49 days, but free cash flow, the company was free cash flow positive also, or for almost 29 crores by the end of FY26. Finally, there is something that you have to watch out for also. The revenue growth is expected to be 10% according to the company in terms of volumes, and revenue growth will be 15% on an overall basis. It is ambitious targets given the historical last 2 to 3 years, but something to watch for the company. Also highlighted that there could be a margin expansion of almost 100 to 150 basis points, and that will be coming in from its crucial segments also. But overall, management balance sheet remains net debt free, ROC almost 20%. Also something to watch out for will be the current diesel price hikes amongst others, but overall good setup for going into the next year for the company.
Right. Mr. Chokalingam, how are you looking at this counter? Any view here? Should one think of buying this stock?
One can hold it. There is another 5-10% upside is possible. I'm not giving buy, rather I give hold because valuation is already stretched at 27 times. And this is stretched I call because last 3-4 years, the revenue has stagnated almost at same level. And operating margin consistently came down and therefore net profit also came down. That is why I believe 27 P is a very fair price. Of course, there's only one short-term benefit. The oil price crash will help this kind of logistic companies. That's why I'm giving hold, and I believe 5 to 10% upside is possible from the current level.
Well, moving on, let's pull up Ramco Siemens, Ramco Systems. Let's see what that stock is doing. Is up almost 19% in trade. Well, has hit 6-month intraday high. Gains, the volumes are trading at 17 times of its 20-day average. But let's bring in Jasmeet to give us more details, the reason behind this buzz.
Well, Varsha, thank you for that. As rightly, the stock has been rallying in today's trade and up nearly 19%. Well, before we get into key details and what's working for this particular counter, let's look at what the company does. Well, the company operates as a SaaS operator where they provide product and also IT services. Now, in terms of the overall performance, as rightly said, the stock has hit intraday of 19% and it's trading almost 15% above from the recent lows. Now, if you look at the overall volume, it's nearly 17 times the 20-day average. And if you look at the performance at a longer term in a broader view, we do get that over 6 months, the stock has rallied nearly 35%. Over a year, the stock is up about 63%. Now, while we see the other IT packs falling and almost half in the actual value, but something like a Ramco Systems is gaining in trade. Let's quickly understand the top 5 reasons why the stock is gaining. Well, the first one, the revenue growth has been constantly increasing for the company at a higher level. So in the previous quarter in FY26, we did know that the revenue saw an uptick of nearly 50%. Well, the second one, the overall revenue growth is supporting the EBITDA as well, given the costs have remained the same and the top line has expanded. The EBITDA is up nearly 1000 BPS from earlier 14% to 24% in FY26. Well, the third reason, the management does expect the near-term impact due to the ongoing war in the aviation segment, but given the war has halted as of now, so the overall impact can be negligible going ahead. While the fourth reason is the overall payroll business, the biggest segment of the company has been growing in a healthy phase, up nearly 25%, and the management has been constantly working towards the AI field, where they have also launched Chia, which is an agentic AI conversational platform, which is also helping the company to gain more traction. When you look at the overall FY26 revenue for the company, the revenues are 15% currently at 708 crore, while the EBITDA is currently at 158 odd crore, nearly doubled on YOY basis, while the margins are at 24% and the net profit is at a profit of 41 crore versus a loss of 34 crore in the previous quarter. So we do see a turnaround story coming for this particular counter, and the management also remains bullish going ahead about the overall AI spending and AI investments.
Well, thank you so much, Jasmeet, for all the details. Mr. Chokalingam, clearly turnaround efforts are underway, which will, lead to growth going ahead. But what's your view when it comes to this counter?
Yeah, I mean, I'm tracking nearly 3 decades this stock. For the first time in last 3-4 quarters, it is doing phenomenally well in terms of margin. Tremendous improvement in the margin. It is not like other IT services company. It is quite unique, as your colleague has explained the business profile. It's quite unique and coming from very good management. One can hold it. In case the company is able to sustain this kind of margin in June quarter also, then one can jump on and consider buying the stock.
Chokalingam, thank you for joining us and giving us your perspectives on the stocks that we discussed today. Well, and the last stock that we'll be discussing today is Roto Pumps. Now, that stock has been seeing exceptionally high volumes for the last couple of trading sessions. In fact, yesterday and today, 6 crore shares were traded on the exchanges when it comes to Roto Pumps, which is unusually quite high. Let's get in Parth with more details.
Right, so Roto Pumps has seen a very good move in the last 2 days. The stock has gained over 20% and over 6 crore shares have been trading daily in this counter from the last 2 days, which are almost 20 times the average is what we see in this counter. Now, this might be a relief rally because during FY26 end, the stock was trading over 60% down from its all-time high level. So this might be a relief rally that we are seeing right now. If we talk about the company, then they manufacture various kinds of industrial pumps which find their usage in sectors like wastewater treatment, oil and gas, marine and sugar industries. If we talk about the recent quarterly results performance as well, then revenue was flat at 79 crores in Q4 FY26, which was largely flat when compared to year-on-year last year. But the bottom line is where we saw the pressure. Their EBITDA declined from 20.3 crore in the last year versus just just 12.8 crore in the last quarter. So this was a major decline, and about EBITDA margins as well, they also collapsed from 25.7% to just 15.7%. The reason behind this was the percentage of raw material as of revenue that has increased from 29.74% in Q4 FY25 to 34.17% in Q4 FY26. So the key things to watch going forward will be if the company is able to win any further order inflows and if the raw material cost normalize for them.
Thank you, Par. Thank you for giving us all those details when it comes to roto pumps. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where...
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Mahima Vashajani. And over the next half an hour or so, we'll try and solve all your stock-related queries. To do, start sending them on numbers that are flashing on the top of your screen. You can also call us on the landline number and speak to our guests as well. But when you look at the markets today, it's been an interesting juncture because you've seen IT continuing to be under pressure over the last couple of days. Today, though, there have been one of the leading gainers, but currently comfortably above that 200-point range that we kind of lost out to yesterday. So IT up almost 2% on the index. The Nifty 50 now above the 24,000 mark as well, marching on as we look at at the highest trading point for today. The heat map also shows you that reflection of IT doing well in trade today. So you're seeing yesterday, of course, was the Infosys AGM. A few comments coming in from there. But trend continues to be the big gainer for today, up 4.4%. We'll also put focus on trend in India market close as well. Indigo up almost 4%. Tech Mahindra is also doing well. Adani Enterprises up 2.8%. DRL, Bajaj Finance, ICICI Bank are some of the other gainers. Infosys also, after taking a beating yesterday, now at up for 2.5%. But you're seeing almost majority of the stocks, almost 29 stocks currently trading in the green. And you also look at the sectoral heat map. IT, of course, continues to be the big gainer. Apart from that, though, you've also seen the realty index do very well, almost up 2%, and the private banks also continue to do well. The strength is clearly visible in the Nifty Bank today as well. Also, the advanced decline ratio is very interesting because you've seen consistent buying flows in the small cap compared to the mid cap names. We've just edged up yet again in terms of the advances, up almost 1400 at this point of time compared to the declines, and you saw that reversal happen through the day as well. And the mid cap and the small cap, and if you can pull up that index too, mid caps also doing well, buying seen from the lower end of today, so up 0.3%, small cap also reflecting that, and the BSE 500 before we start taking all those stock related queries now. TCI Express, we put in the stock in focus in the previous show, up 12%. KPR Mills, Aether Industries, Credit Access Grameen are also some of the counters that are doing well. But let me welcome in our guest now, Radharaman Agarwal, Managing Director and CEO at Sviom Advisors on the fundamental side of things, Sachin Janardhan, independent market expert on the technicals. Gentlemen, both of you, thanks so much for joining in today. The first question, being on EPAC Durable, one of our viewers, Bindu from Hyderabad, wants to know what's the good entry point for this stock right now. Radharaman, we saw almost a 10% up move on an update from Voltas, which is of course a major customer for EPAC. But would you wait for a little bit, get some more clarity post Q1, or is this a good time to enter the stock now?
I think one should wait for the clarity to emerge out, and once the Q1 numbers are out and get a full swing, then only we should be entering the stock. We should hold on as of now.
Yeah, would it be one of the preferred plays in the AC space, or would you rather play it via either the brand companies or via the other EMS counters like Ambar amongst others?
I think I would like to maybe go to the larger ones to that extent, so that the risk is far more diversified. But let's wait for the Q1 numbers to come out, and let's see in terms of how things move, and maybe preferring the bigger ones here.
Got that view. But let's go across and take another question on one of those retail favorite stocks right now, that's Ola Electric. Ram from Hyderabad is holding shares at 40 rupees per share, but he's holding almost 40,000 of them. So currently in the gains, what would you recommend here, Sachin? Because we've seen stock go up to almost 46, 47 and then retreat back to that level of 43. Should he be wise enough, book that profit right now?
So currently the stock is in a process from changing from downtrend to uptrend basically. So he can trail his stop loss of around 40 levels, and he can hold because it is in a process. But if once close below 40 levels, then again it will slip into downtrend.
Got that view. But the next question coming in now, and this is from Ganesh Iyer. He wants to know about ITC and if it's a good buy at the current rates. How are you viewing this counter, Radharaman? Because of course we've seen that pressure from the cigarette tax hike, but is it a good time to buy now?
I think it's a good time to look at in terms of buying in tranches this particular stock. So by and large, all the negatives seems factor in the stock, and overall even the taxation clarity by and large will emerge, and I think company will also take in calls in terms of pricing. So overall, I think it's a good time to start accumulating in tranches. So it's a good time to enter now.
Good time to enter. And what would be the time duration then, Radharaman? Because of course FY27 expected to be a year where you'll see earnings to fall compared to the last year. So is it more a 2 to 3 year call?
Yeah, obviously it's a medium term call, 2 to 3 years. And but over a period of time, you will see also pricing getting corrected. And by and large, the company will be able to pass on the hikes to the customers. So effectively, it's a 2 to 3 year horizon one should look at while investing in this.
Got that view. But the next question now coming in, and this one's on Wokhard. Prashant has actually bought these shares at 2,356, and he's holding 65 of them. So let's pull up the year-to-date chart as well to show, because it's been a good performance by the company, of course. But Sachin, at 2356. What would you recommend? I think he's bought it much earlier than this year, but what's your view on the stock now?
So currently, after a huge uptrend, right now it is into a profit booking mode. And currently, what we can see, if it is holding 1800 levels, then we can see again it can go about 2500 levels. So definitely he can hold, but with a strict stop loss of 1800.
1800 is the level to watch out for on work hard, according to Sachin. But next one, and an interesting one coming in from Sriram Raghuraman from Chennai, holding 100 shares of Tata Motors PV at 72. So he bought it, the PV cost actually has come down to 32 now, almost up 10x now, and he was smart enough to buy it in June 2020 during the pandemic. What would you recommend here, Radharaman? Because his buying price is so attractive, while we've had, a tough performance in FY26. Should we just, keep on holding since he's bought at very attractive levels?
I think first of all, congratulations to me. He's been a good patient investor. The one thing you should look at is that what patience he has shown in the past. I think he should continue showing that patience. I think there are a lot of tailwinds coming their way in terms of the company. Whole electric mobility is also taking pace, and with this whole piece happening on crude, I think there is a lot of government thrust coming on the electric mobility, which is going to happen. And Tata Motors obviously has led the way in that. So I think he should be holding on. I think he's already holding it for 6 years plus, and he should continue holding it for medium to long term from here.
That view, but let's stick with the auto theme now. M&M is the next counter that Vijay from Chennai wants to know about. Sachin asking what could be a short-term target? Is it a good time to buy? Because we've seen consolidation at the 3,000 odd range. What's your view?
So currently the stock is in a downtrend, and every time when it is making a new high, we are seeing like it is getting a counter selling. So basically it is making lower high and lower low pattern, which is basically a downtrend pattern. Again, with trading below all the moving averages main. So I think one should not enter right now. If someone is holding, then one should definitely keep a strict stop loss of 28.90.
Viewers, you can also call us for your stock related queries as well. The landline number flashing on the top of the screen right now, and Karthik from Bengaluru has exactly done just that. Karthik, very good afternoon to you. Welcome to the show. What's your query?
Yeah, hi, good afternoon. I have a query on Cochin Shipyard. I hold around 20 shares with an average price of 2069.
Okay.
I wanted to know if it is a good time to exit or average it. Just wanted to know on that if I can exit and look for investment in any other shares, or better in looking for the long term.
And Karthik, when you bought this, was this more on the view from the charts, or did you look at the fundamentals?
This was more on the charts.
On charts, got it. Sachin, what's your view on Cochin for a viewer, of course, because he's currently in the losses, but the shipbuilders not doing too much at this point of time. What's your view? Should he exit Cochin Shipyard, buy something else?
Definitely the stock is in a downtrend on a daily basis, but on a weekly and monthly basis it is actually has made a good higher base levels. So what he can do, basically keep a stop loss of 1350 on a closing basis, and he can hold. Once if it is closing below that level, then only he should exit, or else we can see some kind of a pullback levels on a higher side, but definitely not 2000 levels. He has to keep waiting for that levels. But as the short term trend is in a downtrend, we cannot say to average as well. So do not average, but at least he can hold with a stop loss of 1350.
Yep.
Okay, all right. So that's the view coming in on Cochin Shipyard. In fact, what our analysts said in the morning as well, right? The entire defense pack has been doing well, but a lot of these shipping names have underperformed. So that's something that, of course, you should keep in mind. But the next one is on Force Motors. Sriram from Chennai wants to know if this is a good time to maybe enter this counter. Sachin, what would your view be?
So on a daily chart, it has made a lower high, lower low pattern and has slipped below all the moving averages. Right now, it is not a good time to enter, but definitely if once 19,800 levels has been captured on a daily basis, the trend will be changed from down to up. So that will be the level. But right now, there is a risk of slipping below 16,900 levels. If it is slipping below 16,900, we can see more lower levels towards 16,000 and 15,000 as well. So one should wait right now.
Got that view, Sachin. But next question coming in now on Eon Exchange. Our viewers wants to know if it's a good time to buy this stock for the next 5 years. This is Birandeep who's writing it for the stock related query. But, Radharaman, we've seen the last 1 year stocks down almost 20%. I think from those highs seen back in 2024, mid 2025, not yet recovered. But a play on the water side, do you think that it's a good time to enter the stock now?
Not enter the current prices, the stock has been in downtrend kind of a thing. So it doesn't make sense to enter right now and maybe hold on in particular this investment. So you should not be buying at this current price.
And anything you like from the space that interests you? Because we've seen VA Tech Pava seeing a very sharp uptake. Anything that you like in the space, or do you feel valuations are stretched?
So valuation is a bit stretched. So as of now, I will not be very happy entering in the current valuation. So I would wait for the corrections to happen.
Okay, all right. The next one that we have is from Bhaira, who's asking about Pace Digitech. He wants a view on this particular counter from the next 6 months perspective. So, Sachin, what is the resistance and stop loss, and of course target price, if any?
So the stock, I think this has been recently listed. We don't have that much chart data on it, but still currently what the stock is doing after the listing, it has gone making a lower high, lower low, and right now it is into a pullback mode. So once if it is closing above 220 levels, we can see the all-time high levels and above levels. But till then, if it is not doing that, we can see there is a risk of going towards 160 and 150 levels as well. So if someone is holding, he has to keep a strict stop loss of 178 levels on a closing basis.
Got that view, Sachin. But also this week has been good for the company, got a big order win as well. So I think it has been buzzing this week at least for Pace Digitech. Let's look at the 1 week performance also very quickly on Pace Digitech as well as we move on to our next query, and that 13% jump that we've seen in this week itself on the back of the order win. But L&T is the next counter that that we're putting the focus on. Kohinoor Ghosh is actually holding shares at 2,100. So he's taken his name very, very literally, bought a good stock at a good price and sitting on gains of almost 6 lakh rupees at this point of time, almost 7 lakh rupees. Radharaman, he's asking a likely 1 year target because I think he's held the counter through what we've seen, of course, the war in Middle East and hence some correction, but back at that 4,000 level. What can he expect in the next 1 year, and should he continue to hold?
I think she should continue to hold the particular stock. I think the war is also getting over by the time the peace is getting prevailed. And L&T, one of the biggest beneficiaries once things start coming back. I think there will be a lot of rebuilding happening in that region. And not only that, if you look at within the country as well, so I think a lot of capex announcements should happen. And effectively, the biggest beneficiaries will be L&T. So I think she should be holding on. I think she is also entered and she is a patient investor. And one should be holding on with a clear view. I think anything between 20 to 30% gain, one should be eyeing in this particular counter over a period of maybe next 12 to 18 months.
Okay, all right. So that's the view coming in on L&T. I think we've got Pramod calling us from Bengaluru. Pramod, a very good afternoon to you. Go ahead, ask your question.
Yeah, good afternoon. Actually, I bought 30 shares of HL at the rate of 4,134.
Okay.
Right now, I'm sitting at the profit of 6%, but from very long time, it's not giving any kind of profits. So should I exit and invest in Proj Industries? So that's as an alternative I'm looking.
Okay, all right. Got your question, Pramod. It's a complete shift, right, Radharaman, from HL to something like a Praj Industries, but of course it's in focus today and down about 2.5% on the back of the core GE F414 engine deal, which has seen sharp escalation in terms of prices, which is used in Tejas. But any view on how should he continue to hold? He's sitting on profits of around 7,000 rupees. Should he exit, book profits and shift to something like a Praj?
I think he should hold on. He's got into a good stock. It's a matter of time. And when any investing, we need some patience here. So he should hold particular stock. I think it's a matter of time where the stock should move ahead. And he should hold on. He should not switch. He should continue holding this position. And he's got a good stock. I think there's a lot of tailwind happening on the defense side. So it will be good for him to hold on.
Got that view. Also another one for you is Radharaman. The next one's coming from SKF India. Dilip from Kolkata holds shares at 1,947 rupees per share, so slightly in the loss right now. asking if he can continue to hold on, or is it better to use that amount for the other demerged entity, which is SKF Industrial? What would your opinion be?
So I think he should hold on the current position. He should not book losses as of now, and wait for the right time to exit. So he should hold on to the current positions.
Okay, all right. So that's the view coming in, of course, on SKF. But time for a rapid fire round. Radharaman and Sachin, you both know how to drill. Try to keep your answers as short as possible. The first one is on Honasa. From a short-term perspective, our viewer is bought at the levels of 403. Continue to hold. Exit, Sachin.
So Honasa continues with making a lower high and lower low pattern. Basically, it is a good stock. If it is want to hold, the stop loss will be 398. We hold with that stop loss basically.
Bajaj Auto bought at 10,500 by Jay Krishnan. He's asking what he should do and if he can average down as well. Radharaman, the buyback's also on. So is it a good? Would you recommend him to apply for the same?
He should tender in the buyback. In fact, and buy it back once you get the value stocks.
Okay, all right. The next one is on Power Grid. Subramaniam from Bengaluru is holding 114 odd shares at the levels of 49. Continue to hold from a long-term perspective, Radharaman.
Which stock? Yes, missed that.
Power Grid.
I think he should hold on. Yeah.
The next one coming in, it's on Wipro. Our viewer E. Venkatraman, who's a senior citizen, bought shares at 194, so currently sitting on a loss. He's asking if he should add more at this price. Would you recommend that, Radharaman?
I think he should add at the current price.
Okay, the next one is on MTAR Tech. This is from Divya, who's writing in from Abu Dhabi. Wants to know if this is the right time to enter into MTAR Tech. What are the charts suggesting, Sachin?
So stock is in an uptrend. Someone wants to add. The levels will be 67.50.
Got it. But Radharaman, just quickly on Wipro, because the growth's been largely absent, you said that you should still look at adding the counter, right, at this price?
Yeah.
Okay. And the thesis is valuations, I'm guessing?
Absolutely, the valuations.
Okay, got it. Yeah. Next one's on Gordium IVF. Our viewer wants to know if he should continue holding his 200 shares at this point of time. What would you recommend, Radharaman?
He should not hold. He should sell it.
Okay, the next one is on Kirloskar Bros. Dr. Lavanya from Eluru has bought it at the levels of 2180. Continue to hold, sell, Sachin?
Yeah, he can hold.
Schaeffler India bought at 4150 by our viewer Satya, and he wants to know what price can you look at to exit. Sachin, what would be your opinion?
So to exit, basically 3980 levels. If it is broken, only then exit. Till then he can hold.
Okay, Varun Beverages from a 1 year point of view. Can I buy right now is what Kumar from Hyderabad wants to know. Radharaman?
He can add, yeah.
Shrikant from Bengaluru wants to make an investment either in Bharat Dynamics or Naib. Would you recommend that, either of those, Radharaman?
I prefer Bharat Dynamics.
Okay, the next one is from Murli, who's writing us from Hyderabad, asking about Tilaknagar Industries. He's got around 15 shares at the levels of 370. Wants to know if he can continue to hold this for a year or so. Sachin, slightly long-term view on the charts.
He can hold with a stop loss of 400.
IFCI bought at almost 86 rupees per share from Prashant. Sachin, he wants to know if he should continue to hold. What's the short-term view?
So hold with a stop loss of 70.
Can I enter Geo Finance right now is what Vedant wants to know. What is your view on this, Sachin?
Geo, no.
Sorry, what's your view, Sachin?
No, he should not enter right now.
Okay, got it. Chennai Petro also, if he should, the next query is Sachin, if our viewers bought shares at 932, asking if he should continue to hold this counter or sell out.
Hold.
Rakesh Gupta from New Delhi wants to invest 4 lakh rupees into banking names. He wants to know whether Union Bank, Karur Vysya Bank or RBL Bank, which one is a better bet, or any other that you like in the space. Radharaman?
RBL Bank looks quite impressive.
Anuj from Saket, Delhi wants to know about Ramco System. He's holding shares at 1,000 rupees per share. Again, Radharaman, been a rank underperformer. Should he still continue to hold stocks up? Ramco Cement is the one that I'm talking about. What would you recommend here, Radharaman? Is there a better play, or should he switch out to some other cement major?
I think he should switch to maybe other cement ones, the larger ones.
Got it. Well, that was the last question of the Rapid Fire in this edition of Ask Profit. Sachin as well as Radharaman, thanks so much for joining in and giving us your views. But viewers are out of time on this edition of the show. Thanks so much for watching. Stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform.
Very good afternoon. You're watching India Market Close, and we are looking strong. We're looking strong, at least for the last half hour or so. Markets near the high point of the day, slightly off, but near the high point of the day. 24,051. Alex, this is the range from which markets recede over the last 4 or 5 sessions. This is the tough one, right?
Yeah.
You get here, but then closing above here becomes difficult.
Now, it's been an incredible session so far, because if you called it over here and you thought that it's going to be a tough day, you've actually had multiple switches in the market breadth and indeed in the way that the benchmark has moved. The thing is that the broader markets are not looking as strong. So this is maybe a few large caps that are pulling the weight significantly. So banks are looking good, a few IT names are looking good, Trent is looking good. So these are the counters that stand out, of course. So therefore it's a small pocket of large caps that's doing incredibly well today.
So let's pull up the advanced decline ratio first, and then we'll get to the Nifty heat map to give that picture that we're showing you. And look at that, it's actually pretty even, Stevens, with the advances now nudging above, the green line nudging above, but the distance is not that much. So
I love the fact that we've had so many exchanges over the course course of the day.
Correct. It's been a range bound kind of a neck to neck kind of a day. Let's pull up the Nifty heat map and just show you who the key winners are. Indigo Airlines on a tear, you know, even as all of that worry about crude prices comes off, Trent is shining today. Tech Mahindra, Infosys, Adani Enterprises, remember the AGM and that big speech from the group chairman today. TCS doing well, DRL as well. On the losing side, it's a Bajaj Auto, Tata Motors PVs who are smattering of your autos and your insurance players, SBI Life, HDFC Life, both over there, as are NTPC and ONGC. But largely, you're right, Alex, and the Nifty contributors will show this as well. It's pretty much the Nifty that is pulling the weight and some heavyweights which are pulling the weight.
And the banks look good, right? So ICICI Bank, HDFC Bank, the private sector banks look good. In fact, pull up the Bank Nifty intraday chart because we haven't spoken about that. That index is looking particularly strong. And you had a Citi note earlier today, Tamanna, that spoke about that FCNRB FAQ that clarifies things to a certain extent. It allows banks to charge more. The benefits that they're getting on the statutory liquidity ratio as well as the cash reserve ratio.
The biggest thing, people who are putting in money in this product, NRIs who put money in this product can take loans against that deposit. So they've just sweetened the deal a little more. So one can expect those inflows coming in.
Particularly for the private banks that have an external facing business, right? So ICICI Bank stands out as one of the key gainers, and that's reflected in trade, the private sector banks.
But believe you me, and these are some of the conversations I've been having, Alex, the public sector banks are equally aggressive in going out and mopping up those deposits. So it's going to be an interesting race to watch out for some of those banking names today. Let's pull up the sectoral heat map as well before we get to the top gainers and losers on the broader markets and take a look at what's happening there. I mean, Nifty IT all the way. Realty making a smart comeback. Private banks are doing well, as are public sector banks, financial services. So it's pretty strong. India defense. Now, defense stocks, because of specific stocks and some news flow coming in around HAL, etc., Hindustan Aeronautics, etc., has seen a bit of a knock. Can we pull up the India defense constituents and that entire pack? So you'll see MTAR, Data Patterns, Paras, HAL. Actually, most of the pack is down in the red. But having said that, this is also one space which has run up a fair bit. So maybe a spot of profit booking.
Incidentally, we were speaking to an analyst on Paras Defense and the fact that it's trading at 90 times, right? So it's not like it's cheap. A lot of people, those that do have targets, actually have a 46% downside from this point. So it has run up like crazy.
We should pull up the intraday of Paras Defense, because if in case you missed this coverage this morning on NDTV Profit, we did a very detailed extensive spotlight on it, and we talked about whether there is more legs to go in Paras Defense or it's getting too rich in terms of valuations. So do check out that piece. Let's talk about 3% down. What else is happening? Here's really the overview of the markets. Nifty has continued to hover around the 24,000 marks. There's been a gain of over 200 points. Half of the gains, though, have come from HDFC and ICICI Bank. 24,100 to 24,150 acts as a strong resistance. Now, in 4 out of the last 6 trading sessions, the Nifty has struggled to cross the 24,100 to 24,150 zone. 23,800 to 23,900 are strong support zones. The rupee is also strengthened after 3 sessions, and buying an interest rate sensitive group is being seen because of the FAQ that the Reserve Bank of India released last evening. Now, benchmark indices are outperforming the small and mid caps. That's also a key factor of what's happening today. And as far as the Bank Nifty is concerned, it's all private banking names that are leading the index, whether it's HDFC or ICICI Bank. Resistance levels for the Bank Nifty at 58,200 to 58,300. Supports at 57,100 to 57,200. We have on the show today Osho Krishan, his Chief Manager, Technical and Derivative Research at Angel One. Dharmesh Kant, Head Equity Research at Chola Securities, with us as well. Very good afternoon to both of you. Osho, I'm going to start with you and your take on the Nifty. It seems to be this Bermuda Triangle that the Nifty gets stuck in for a while, and breaking out above it becomes difficult. Do you think that we're set finally to break through?
Very good afternoon, Tamanna. Firstly, thank you for having me at the show. Well, yes, no doubt our market has been hovering within a very strong, tight range. On the lower end, as you were mentioning, 23,700, 23,000 24,800 is a very strong support levels. While on the higher end, again, 24,150 is a very strong and stiff hurdle. So until we see a decisive breakthrough above 150, these levels are not very much comfortable for a long perspective. So I won't be very much aggressive on the long side at current levels. Wait for tomorrow's session if there will be any kind of dip or correction towards the zone of 23,950 to 23,900. That will be a very comfortable levels where I will be having a bullish positions in the market. Well, on the higher end, again, 24,050, 24,100 is a very strong resistance zone. So I won't be having or carrying very strong aggressive positions in Nifty for the time being. But the time Nifty gives a breakout above 150 on a sustainable manner, then from there onwards, the room for next leg of rally will open for Nifty, and on the higher end, 24,450 to 500 will be the immediate target. So that is the overall perspective for Nifty. But for now, buy on dips is the only approach that we are having as of now.
Dips is the only approach. Osho, individual stocks though that you're liking, and it seems like there's a little bit of fatigue that might be creeping in at the broader end of the spectrum. Do you see that as well?
Yes, definitely. Today's market is basically be driven by large cap counters. Like all the IT packs have started gaining some kind of positive movement. It's not a reversal, but there has been some positive developments. But the banking and financial, specifically the private sector banks and financials, have been doing very well. But again, for Bank Nifty, the immediate hurdle is around 58,200, 250 odd levels, although the maximum pain is adjusted towards 58,400. So that means from here onwards, we are expecting another 200 points of rally in the banking space. So some of the counters from Bank Nifty or private sector banks are looking quite positive to me. The first one is Axis Bank. It has given a consolidation breakout around the zone of 1370, 75 is the current levels. So I'm expecting that this might see a higher movement towards 1400 odd levels in the short term period, followed by 1450. So that can be seen as buying opportunity even at current levels, but with a strict stop loss of 1350. While from the financial space, Sriram Finance is looking very positive. Again, 1020, 1015 is the current levels, but overall the technical structure is very positive. So one should try to accumulate positions in Sriram Finance. 990 should be the advisable stop loss, and 1050 to 60 will be the advisable short-term target or intermediate target for Sriram Finance.
Got it. Okay. By the way, update that you might have seen on your screen, on the bottom of the screen just a short while back, Brent crude now trading very close to that $75 per barrel mark, 75.67 to be precise. But it's good news for the Indian equity markets. Dharmesh, Osho seems to be liking the banks on the technicals. I wonder if that is the case for you on the fundamentals as well, because private sector banks now, today at least, playing catch up. The FCNRB deposits look to be a positive move for them. Would you buy into any of them though at this moment?
Yeah, good afternoon, Alex. I mean, structurally, we have been bullish on the banking space since the announcement of the Q4 numbers. And the only hurdle was that one was the Hormuz issue going on, and the second thing was the impact of the monsoon. This issue, Hormuz, state of Hormuz seems to be resolved as of now. And as far as the monsoon issue is concerned, it's still ongoing, but looks like it's more or less content, because whatever inputs we are getting from the ground level pan-India basis, the credit demand is very robust. There's no problem out there. Second, the collection ease is also there. There's no stress on the collection efficiency ratios, so money is flowing in, and the traffic on the road is also very robust. There is no slowdown out there. So all these three factors point out to underlying economic momentum. We did see the advanced tax numbers. On the corporate side, they were a very strong set of numbers. Even on the non-corporate side, the advanced tax numbers were pretty strong, 11% kind of a year-on-year growth. So in light of all the macro headline news flow seems to be impacting inflation-led growth trajectory, which has not happened. So that's one structural positive. The second, valuation comfort is always being there with the banks. And as you rightly pointed out, FCNR, we will at least keep the NIM stable and with some marginal improvement out there. We are looking forward to NIA growth coming into this Q1 particularly, and the numbers with treasury income gains is likely to be on the upside and surprise all the analysts on the street as far as estimates are concerned. What we have been liking structurally in the banking space on the private sector bank is IndusInd Bank for quite some time. I think it's on the way to its mend, and very valuation, it's like one-time price to book 1 year forward. So with 12-13% kind of a credit growth playing out for FY27, the things would look pretty rosier, and ROA catch-up will be there. Management has guided for that. And the second name is Axis Bank. So these are two banks which structurally we think is on the recovery path. Valuation-wise, are deep comfort for comparables like HDFC and ICICI Bank. And a lot of good work has already been into place. So the benefits will come into Q1 and Q2.
All right, so that's on banks, but let's go to the stock of the day. And stock of the day, one of the top Nifty gainers is definitely Trent. Why is that? The management in their AGM has highlighted a strong growth runway with aggressive expansion plans across formats like Westside and Zudio. Mahima joining us with key takeaways.
Right, so Tamanna, they start by saying that right now we're just 2% of the entire market share, and there's a strong growth ahead of us, and that's why they've given tall targets as well. They've continued to maintain the stance that they will grow 10x, of which 2.5 times of revenue growth they've already done, 3 times of profit growth they've already done. This they've maintained since 2023, the 10x growth that they're talking about. Store expansion aggressively continues. 50 new Westside store annually is something that they plan to add. For Zudio, it's as high as 200 to 250 odd stores, and for Star Bazaar, it's anywhere between 25 to 40 stores that they plan to add annually. In terms of long-term, expansion story, what they're saying is that Westside has the potential to go up to 700 stores versus 300 stores today, 5,000 stores for Zudio versus of 960 stores today. So, a long way of growth going forward in terms of expansion. The like-for-like growth, the commentary was slightly from a cautious approach. What they said is that densification and higher productivity of new stores could impact like-for-like growth, but overall, medium term, they're focusing on early double-digit like-for-like growth for Trent. In terms of new business and categories, they said that they will put more focus and fine-tuning in terms of formats like Samoa as well as burnt toast. For new categories, their focus will be in terms of footwear, innerwear, beauty as well as lab-grown diamonds, and both Westside and Zudio will take overseas over time, and they do have good plans when it comes to international expansion as well. Of course, in terms of Noel Tata, who is set to retire as chairman, this was his last AGM, and just to take a look at how Trent has done under his reign. He joined as a board member in 1998 when his mother actually incorporated the company. He took over as the first MD of Trent in 1999. In 2004 is when Trent got listed, and since then the stock is up 500 times till date, and the 10-year CAGR growth has been at that 28% mark. Plus, from 0 to 300 Westside stores today and 0 to 960 Zudio stores today. So that's the growth trajectory that Trent has seen under his knee. Now, if you take a look at the valuations, we've talked about this earlier, 5-year average at 179 times versus current PE at 94 times. Still very high, but less as compared to where, overall 5-year average goes. Lastly, in terms of where analyst recommendation stands, you have 20 buy calls, 5 hold calls and 2 sell calls, with a return potential of just around 4.2% with UBS having the highest target price of 3633 for Trent. So this is the overall view of course, why the stock has been buzzing in trade today and what the future for Trent looks like.
Okay, let's talk about Trent. I want to talk about some of the quick commerce plays as well, whether it's a delivery, whether it's a Meesho, whether it's a Zomato because of that Blinkit play, whether it's a Swiggy. Let's talk about some of them as well. They're all going to be on focus. Eternal today about 1% down, as is Swiggy about 1.5%, 2% down. Now, why am I talking about this entire space? So the Amazon CEO, Andy Jassy, is in India, and they've talked about building India's largest delivery in minutes network. In fact, I want to get to a split screen if we can of Eternal and of Swiggy together and take a look at it. Now this is going to become important because we're talking about the quick commerce space, and really I would say the sleepy giant has entered in a way. This was a conversation we had with the India Amazon chief also a couple of weeks ago, where I asked him in great detail that where were you guys, were you late to the party? And he says, doesn't matter whether we're late or early to the party. fact is that now we're here. Now the question is what happens when a player of that size comes in, and I think that's what you're going to be seeing on the stock, especially the Eternal and Swiggy one, because they're going to expand their product, which is Amazon Now, to over 300 cities. And it's going to have an ultra fast delivery service. Now the point is, obviously the big guys, I mean the big Indian players have done it. What happens when Amazon comes,
And Flipkart as well, by the way.
with this full might? I would say Amazon with Andy Jassy here is the one to watch out for. Yes, Flipkart Minutes is going to do it as well. Others are coming in with Walmart's backing, etc. Not undercutting them in any way, but this is one to watch out for.
Statement of intent, you're saying.
But Alex, they are saying they've already started it. It's more than a statement of intent. They're already in several cities. Nani Jassy has come here now and he's talked about 300 cities, etc. Just want to know what Dharmesh Kant thinks about this, and you know, how are you looking at Eternal and Swiggy, especially in light of a statement by Dipinder Goyal recently. I think it was an interview to the Financial Times where he said that we can outspend Amazon if we need to. So more cash burn coming in.
Yeah, Dr. Tavanna, definitely, yes. I mean, last 1 year, our stand has been very clear. I mean, the day Eternal just 300, we had a clear sell rating on the company, and to be the best of the stock price action for next 3-4 years is already there. The best they can do is survive, give some profit, and keep on trading and bouncing back to those kind of levels. Because this cash flow is there, and you're forgetting one more name. Reliance is also into the same business through quick commerce, and they are also eyeing this, because if you see last quarter numbers, the dip in the margin was particularly on account of the quick commerce business, which they have been doing. 60 basis point kind of a dip was there. So these three are great cash burners, and Zepto is again coming onto play. So this entire space, I don't see light at the end of the tunnel as far as meaningful profitability to justify the current valuation multiples. If analysts don't have a choice, they go back and say FY35, 30 times or 35 times the revenue or EBITDA numbers, which is absolutely, I mean, I should not use that word, but one should stay away. At best, you can have technical trading plays.
Which word are you saying you should not use? Is it profitability?
I mean, it's nonsensical, Tamanna, to be very straightforward. I mean, profitability will not come to that extent.
Okay, so what would you do with an Eternal and a Swiggy right now if you own the stock, if you don't own the stock, in both scenarios?
So I will book out, definitely, yes. I will not wait for that 5-10% kind of a pop-up and to take exit. That chance I'm not going to take if I'm owning it. Even if I'm owning it at 300, the best way is to book out. There's a plethora of opportunities outside this world where you can make good money out there.
Tom is coming. Osho on the charts.
On the chart, Swiggy is already at a very strong sell-off position, so there is no buying or staying hold with Swiggy. But Eternal definitely is looking quite positive to me, so I will stay positive on Eternal. The technical perspective looks decent. There has been a kind of attempt, which is failed attempt, but 255 was a very strong resistance. The counter has emerged above it, so I was expecting that the continuation can be seen for a short-term target of nearly 280. So I'm expecting that Eternal chart is looking quite decent, but as of now, looking at all the overall news and the overflows that we are witnessing, there might be some kind of correction, but Eternal comparatively is looking quite better. On the lower end also, from here onwards, the risk reward is quite decent. On the lower end, 245, 240 is a very strong support levels. On the higher end, a sustained move above 255 to 260 can give a room towards 285 to 290 kind of a zone.
Just take a look at the Eternal 1-year chart and the Swiggy 1-year chart. Eternal in the last 1 year has given no returns, 0.40%, nothing. Swiggy in the last 1 year is down 37%. And this is before the storm is hitting. Just because we spoke about Trent as a stock of the day, Osha, I want a quick technical call on Trent.
Trent is looking very positive to me. I would say that this counter has emerged above the 200, the simple moving average, after a very elongated period of correction of nearly 1.5 years. So after 1.5 years, the counter has now surged higher. On the technical charts, there has been inverted head and shoulder pattern, and I'm expecting approximately 3750, 3800 to be seen as the intermediate target. But overall, looking at the recent traction, some kind of profit booking, some kind of correction can be seen, but that should be considered healthy. Any dip towards the zone of 3000 should be considered healthy and should be seen as opportunity to buy. On the higher end, 3750, 3800 is the target, and one should stay bullish in the count.
What about Trent for you, Dharmesh?
I mean, again, if you look at current valuation multiples, it's trading at 100 times on a TTM basis of PE multiple. So what management is guided for is it's doable. 15 to 20% kind of growth is still possible. Seeing how the other counterparts are doing in different geographies, be it Vishal Megawatt or V2 Retail. So everybody is in the Judio segment where they have been performing. Even DMart Apple business is picking up in the same range. So definitely unorganized to organized play is on, and Judio is the only segment which has done the re-rating for Trend. But again, the point here is what kind of a margin you can make by falling into this segment, and over a period of time, if 15, 20 or 25% kind of a CAGR can be there for say next 3 years, 4 years or 5 years time frame, when there will be more competition setting it definitely, because Reliance is also coming in a big way in the similar space across the categories. So having that in mind, how long you are willing to pay 100 kind of a P multiple. So to my mind, it's like 1 or 2 steps up and then again 1.5 to 2 steps down. So it's likely to stagnate between 3,000 to 4,000 kind of a price band. So not a structural wealth creator as it has been in the past. We don't see that happening in Trend from here on.
Dips 3 months back and you managed to get a 45% pop on the stock. I guess, Dharmesh, what you're trying to say is you might want to take some money off the table. But let's continue to talk about FMCG majors and the fact that they're going beyond staples and soaps and they're pivoting sharply towards wellness and nutraceuticals with the fast-growing 16,000 crore opportunity that they're all trying to get a slice of. Let's go to Mahima to get a deeper look at the fit and fab trend that is ongoing. Mahima?
Right, so Alex, you know why I've chosen to do this story is because we've seen this pivot, right? Last year, FMCG was all about beauty products. We saw a lot of new products getting introduced, a lot of D2C brand acquisitions in the beauty and personal care. And this year itself, we've seen a lot of acquisitions happening in the healthcare space or the nutraceutical space, as we say. Today, Honasa went ahead and announced acquiring of Fluence Pharma, which is into the same category. And now, a lot of FMCG companies have been doing this and just to understand as to how big this opportunity is, right? There is rising demand when it comes to beauty from inside products, and you know, as per the Honasa filing, the market for this is as big as 16,000 crores. So every company can have a pie of this. And just to give a perspective as to what are the categories that people are looking at in this and what is the opportunity like, protein is one of the largest growth areas where Marico and HUL are already there. There's women wellness, which is a premium segment where you know, HUL is making its mark. You have beauty from within, which is a high margin business where Marico Zydus is present. There's gut health, which is emerging right now as an opportunity where Dabur and HUL already hold some market share. Healthy aging is a very fast growing category where Zydus is already present. Functional beverages is where, you know, there's mass adoption. So you have Patanjali, Imami, Tata Consumer, etc. in that race. And there's Ayurvedic nutraceuticals, which has an Indian advantage. So you have Dabur, Imami, Patanjali, Zydus Wellness, etc. in this game as well. Now, if you take a look at, you know, different FMCG companies that have different products in this particular segment, you have Dabur, which has Scenes by Dabur, Chyawanprash, Honitus, Real Active. For HUL, they acquired Oziva very recently and has been growing significantly for the company, just like what Minimalist did in the beauty and personal care. Oziva has been doing it in this particular segment. Marico had acquired a stake in Plix in 2023. Recently, they went ahead and acquired a stake in Cosmix as well. Both of them are of the same category of nutraceuticals. Nestle has a JV with Dr. Reddy's where they have products like Nature's Bounty, Osteo, Biflix, Ester C, etc. There's Imami where you know, they are focused more towards Ayurvedic wellness products. So you have Zandu, Aloe Fruit, Axiom, Jeevanras, etc., which form a part of their portfolio. Zydus Wellness is where they are focusing more towards preventive health as well as herbal wellness. So they have products under Sugar Free, Nutrilite, Weight World, Max Medics, Right Bright, Complan, etc. And lastly, you have Patanjali, which is mainly Ayurvedic focus and has Chawanprash, Ashwagandha, Giloy and nutraceutical capsules under their portfolio as well. So this is just a wave that has probably picked up and something that could become big when it comes to FMCG, focusing on one of this segment called nutraceutical or something within the healthcare space.
Got it. All right. Thanks so much, Mahima, for that. And you mentioned Honasa Consumer. It, of course, has announced that it is entering into the space of nutraceuticals through the acquisition of a majority stake in Fluence Pharma. So what do you need to know about it? It's set to acquire 58% stake in Fluence Pharma. The acquisition is for a 135 crore enterprise value. They will buy the remaining 42% over the course of the next 5 to 7 years. And currently the sales for the target entity are entirely in the B2B space, but they will eventually create a B2C portfolio in the nutraceutical space and scale it up as well. It incorporates the arm Honasa Health for the nutraceutical B2C business. Now, let me go across to Dharmesh just for a quick view on this, and then we'll go to Somit Sarkar for what is heard on the street. Dharmesh, quick view on this one. Would you change your expectations on Honasa based on this acquisition?
No, Alex, I mean, this space is seeing a lot of traction. The only, caveat out here is in the nutraceutical space is left to the judgment of you and me for the certification of the product you are using, and the fashion changes very fast depending upon the last discussion you had with your closest friends. So this product is better, that product is better. So unless it's a structured certification, like in pharmaceutical space, where you know that this medicine is going to be so much effective. So that certification is not there. Somebody else comes with a good branding, advertisement, celebrity status kind of a person, doing the branding for it. And for a few months, that product works. So that's the only challenge in this space, the nutraceutical space. Though it's in fashion, but some certification needs to be there for this growth trajectory to be on a sustainable basis. That's the only thing. Otherwise, Honasa, to my mind, they have done fairly good last quarter. But we are watching it from a distance. And again, here is the same concern is there. The valuation part restricts us from recommending a buy.
Yeah, watching it from the distance is what Dharmesh is doing for Honasa Consumer. Let's go across now to Somit Sarkar, who's joining us with the chatter from the dealing room. Somit's very interesting day of trade where the advances and declines have shifted position multiple times. So quite a bit of churn. What are the stocks that the dealing rooms are focused on?
Well, the first counter is Nazara Tech. Now, dealers are indicating that there could be a management change very soon here. The buzz is that the new CEO might come in Nazara Tech. So keep an eye out for this counter going forward. For Tanfac Industries, the company did open their QIP yesterday. Dealers are indicating that the demand has been quite strong, nearly 2 times than what the company was looking to raise, and they have also indicated that a mutual fund and a prominent large HNI has been a buyer in this QIP that was started yesterday. For Shriram Finance, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter. Delivery volumes are expected to be on the higher side, and one of the concerns that Q1 could be on the weaker side is not the case, is what dealers are indicating, and in fact they're expecting Q1 to be quite strong for Shriram Finance. When it comes to Central Mine Planning, a recently listed company, dealers are expecting block deal very soon in this counter. At one point of time, the stock was up nearly 5%. It's now up just 2.5% in trade. And lastly, when it comes to Sai Parenterals, there are buy flows on the large HNI and PMS desk is what dealers are indicating. They're expecting a positive news flow very soon when it comes to this counter.
Okay. All right, so that's your daily dose of buzz that you should not miss out entirely. But let's go to what else is moving. Osho, just wondering how you're looking at some of the defense plays that have been drawn down today, and maybe profit booking coming in there, but it's still one sector which is on everyone's radar. Is there anything that you would like to pick up at these levels after the kind of profit booking we've seen?
From the defensive space, yes, as you mentioned that some of the counters are extremely positive, or there has been some kind of traction in the recent period. But overall, there is some kind of lack on the higher or elevated zones. the conviction on the higher end is still lacks in the defense space, but overall the technical structures are quite positive. So HAL is one of the counter which is still looking positive on the technical chart. It has surged above the short-term moving averages. Today, no doubt the counter is 3% down, but overall the technical structure is now positive. So I'm expecting that once it subsides or consolidates around the zone of 4400, then one may look for buying opportunity in this counter. 4650 is the first target that I'm expecting. Again, BEL is also looking very positive to me. BEL has been into a positive traction last week. In last 2 days, no doubt the counter has seen some kind of correction, but 410, 415 is a very decent zone for accumulating this counter. So one may look for accumulating in cash perspective, and on the higher end, 435.40 will be the short-term target or intermediate target for BEL as well.
Yes, here's what's happening with defense stocks and why HAL is in focus. There are media reports that the core GE F414 engine deal has seen steep price escalations. The GE engine is used for the Tejas LCA. And they're vital, of course, for multiple Indian defense platforms. So the government is looking at alternative supply partners. This might be negative for HAL. That's why you're seeing that 3% knock. But frankly, it's not a huge knock that you're seeing today. Pull up the 1 week chart, the 1 month chart, or even the 1 year chart, and you'll see what HAL has been doing in terms of its performance. And it's been phenomenal, just 2% this week, despite today's knock. Over a month, it's been flat. If you pull up the year's chart, also it's 11% down. Dharmesh, any favorites in the defense pack?
Yeah, Taman, the favorite is the one you have been discussing. HAL is a favorite out there. But this news is definitely taking note of, and it's a very sensitive news. Let's see how it pans out. To my mind, I mean, there's no alternative. You have to go ahead with the same engine. And this cost hit, the government of India eventually has to absorb it. There's no walking back from such kind of a structural thing. So let's see how it plays out. But seeing the kind of order book they are sitting on, almost 250,000 plus kind of an order book, which is 6x of the current run rate, and with technology transfer being in place, eventually these engines will be made in India over a period of time, which will be margin accretive. And it's the cheapest company in the defense play in the entire. If you look at the P multiple, growth numbers, and the margin profile with return on equity ratio, is the cheapest out there. So last 2 years it has not done much of it. But I think going forward, if this issue again resolves, if it is true, then definitely it's in for a big re-rating.
Okay. The other big announcement today came from the Adani Group. Big bets and bold ambitions. That's the message from Adani Group Chairman Gautam Adani at the group's 34th AGM. From positioning infra and AI as twin growth engines to record investments, a massive power push, nuclear entry and scale across ports and data centers. Here are 5 key announcements signaling a high-stakes, future-facing growth strategy. Listen in.
We have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future, with land identified and a 10 gigawatt targeted capacity by 2035, we are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030.
All right, so that's the word on a variety of the businesses. By the way, Adani Enterprises are the high point of the day. Morgan Stanley initiating coverage on Adani Enterprises with an overweight rating and a target of 3,638. That's quite the upside, even from this point. The stock is up as much as 4% in trade today. What are they saying? They're saying the company is anchored to the new India, India's premier incubator with exposure to multi-decade themes. They forecast EBITDA to scale up by 3 times by FY30. The EBITDA will be driven by airports, new energy and primary industries. FY27, which is the current financial year, marks an inflection point with regard to earnings for the company. They're saying the FY27 drivers are the Navi Mumbai International Airport, as well as the Ganga Expressway, the copper plant, and the new energy capacity expansion. They're also saying that by FY30, they expect the company will handle 145 million passengers across its airports. By FY30, they expect to have a 2 gigawatt DC portfolio as well. So it's quite a bit that is taking place. It's, of course, the airport business as well as the solar module business that is a part of ANIL, as it is called, that forms a part of Adani Enterprises, as well as the copper business, all under that same portfolio. But on that note, I'd like to thank both our guests for joining in, for speaking to us today. Osho as well as Dharmesh, thanks so much for taking the time. But to slip into a very quick break, we'll keep you updated with all of the trading strategies that you should keep in mind as we close trade. Stay tuned for that.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for
Welcome back. You're watching India Market Close, and just a little bit of a taper at the end of trade today for the benchmark Nifty 50, still holding above the 24,000 mark at 24,020. The question is, do we hold that psychological level of 24,000 at the end of trade today? The broader markets, as we mentioned at the start of India Market Close, still underperforming the benchmark, just about 1/10 or 0.2% of gains for the mid cap index, similar for the small cap index, but the breadth looks okay. The market breadth pulled the advanced decline ratio up just about edging the declines at this point, but the gap is not very substantial. Shivangi Sarda, analyst equity derivatives and technical at Motilal Oswal, as well as Sudeep Bandyopadhyay joining in to talk us through the last half hour of trade. Good afternoon to both of you. Shivangi, I'll come to you first. Levels for the benchmark Nifty 50, underperformance by the broader markets, but are you sanguine about the possibility of an up move towards the end of the week for the benchmark?
Very good afternoon, Alex. Thank you for having me. So we've seen that the indices have kind of witnessed a very smart comeback from the lower levels. In fact, the support levels have been respected tremendously today. And it's recouped most of the losses of the previous sessions. And we are kind of holding above 24K levels, which will be important to watch. We are looking at 24,200 and any declines to be utilized for buying. Immediately, of course, 24,200, but positionally, we're looking at 24,450 levels as well. We are entering into the monthly expiry week, so a lot of volatility will be expected here, of course. The support levels to watch out would be 23,850 levels for the Nifty index. Now, of course, we've seen Bank Nifty outperform the broader market, and of course, they have done most of the heavy lifting in this rally. We've seen that this index is mainly led by the private names today because PSU have taken a little bit of a back foot. But the Bank Nifty is looking quite attractive even at these levels with a great amount of follow-up buying. So we're looking at 58,850 next for the banking index with a support of 57,850 levels.
Okay. What about picks this afternoon, Shivangi?
Hi, Tamanna. So afternoon picks, I have identified Indigo, which has seen a good amount of OI spurt today after the consolidation of the last 7 trading sessions. And we've seen that, on the weekly basis as well, this one has kind of bottomed out. And we're seeing, the closing of the session is quite positive near the day's high. So this is one positive trigger. And we are expecting the stock to move upward towards 5,400 levels with the support of 5,100 levels.
Okay. Sudeep, very good afternoon to you. I'm actually going to ask you about Interglobe. Stock has already run up a fair bit ever since crude prices have gone down. And in fact, we should pull up the latest crude rates under $87 a barrel. So all of your crude sensitives are firing up. More distance to go for Interglobe?
Well, looks like that. I think it has recovered all the losses it had since the West Asia war had started, and it's back to levels beyond that. Of course, the crude prices sharply coming down does help, with about 40% of operational cost being crude oil purchases. Definitely helps Indigo when oil prices come down. There are a couple of niggling worries which we have in terms of consumption, demand, and things like that, which getting affected by monsoon not being timely and not being adequate. We'll have to wait and watch this space for that. Otherwise, I think things do look good for Indian aviation as well as Interglobe in particular, who hold 60% plus market share.
Got it. So that's interesting. The question is, Sudeep, and a lot of people will wonder this. It's gained quite considerably, right? Would you advise people to get in at this point? Is the risk reward favorable, or would you wait for better opportunities down the line?
Opportunities down the line. I think it has moved up very, very sharply over the last few days. And at these prices, the margin of error is very limited. Once we have the second quarter numbers, I think there will be a lot of disappointment. Not, practically right, because we know these most part of the second quarter, they were operationally under tremendous pressure because of oil prices being where they were. But still, the disappointment will be there once the quarterly results come out, and things may become a little softer around that time. So probably the time to buy will be then.
Point. All right. Let's talk about the IT sector, though. It is the top performer sectorally today, and it's had quite a bit of chop and churn over the last several weeks, hasn't it? Nobody's able to give you a very clear answer this way or that. Is this something that you can buy at this point because valuations are attractive, or is there downside? There's both a bull as well as a bear case. Let's line that up for you, because Jasmeet is joining in to do just that. Jasmeet, which is stronger? You'll tell us at the end, bull case or bear case?
Well, I'll tell you in the end of it, but let's quickly get to the bull versus bear case. Now, we did have two brokers coming in the morning where we had Access Capital, which remained extremely bullish on the overall IT pack, and they have also upgraded the entire IT portfolio into their stock analysis. But we also had JP Morgan's note, which on the other hand, cut a lot of target prices for the counters and see the overall delays in AI going ahead as well, and the pressure continuing. Let's quickly understand the bull and the bear case. Now, for Access Capital, they see that they did not see any AI-led deflation over last 3 years, and they see the AI-led deflation is a very small part of the overall growth, and they believe the overall demand has become slower for the IT company. On the other hand, JP Morgan, well, they see the headwinds of the AI have been impacting over last 2 years. This is a year 2 for it, and it also sees that continuing in the coming years as well. While the next bull case is when you look at the overall narrative of AI, well, it expected to create long-term opportunities for Indian IT, but on the other hand, the near-term uncertainties overweighs on the AI opportunities that what we are seeing. Given a lot of counters have been investing in AI regressively, and there are billions of dollars being spent into AI, but enterprises are still at a wait-and-watch mode where they are not going ahead with the order proposals, given they still want to see how can AI really change the overall narrative. That's why the demand has been slower. When we look at the other key aspect, the AI is expected to create new technology spending, while the AI uncertainty is delaying the overall enterprise tech spending altogether, which we have analyzed. Further, if you look at the next bull case, we also make a note that the overall AI needs IT firms for implementation. That's what even Nilekani yesterday told, that there's a huge gap between AI models and what actually enterprises can do. So we need IT companies as a service integrators. But on the other hand, AI is expected to reduce the demand for traditional service. Now, how much demand of the AI will really replace that is something to wait and watch. And even that's a major overhang that's been continuing. We look at the other bull case, well, we expect AI could improve overall margins for IT companies, because they start doing a lot of work with AI and they reduce the overall employee cost. But on the other hand, the revenue growth also becomes a key question for the IT tech. Given a lot of work which can be done by AI models, then they won't be charging onto the fixed case model where they generally charge for each employee. We look at the other key aspect, we do note that all of this bull and bear case brings up to the same question, which one is winning. But as of now, it's a wait and watch. A lot of people expect in the next couple of years, we would see the turnaround for the IT industry, but still, it's just wait and watch on the industry altogether.
You know, Jasmeet, I think you are brave to do a bull versus bear on the IT sector, simply because nobody is understanding what to do with this sector. Even top investors have come on the channel and said, we are confused about it. And nevertheless, I'm going to ask Sudeep what he thinks, because it's one step forward, 2 steps back, even in the way the IT index behaves, isn't it, Sudeep?
Well, I've been consistent in my view, Tamanna. I think we should avoid IT. The AI disruption is real, and we are probably seeing just the beginning of that. Well, there are arguments that Indian IT companies and IT service companies in general will be the ones to implement the AI tools for large corporates and things like that. But I think It's a period of tremendous turbulence and readjustment for IT services companies. They will do that, and I'm sure that transition will take some time. Whether that's going to be 1 year or 2 year, I'm not sure. But this 1-2 year will be a period of extreme turbulence. Revenues will be under pressure, profitability, margin, everything will be under pressure. And it's extremely difficult to predict who will be successful in pivoting their business towards AI implementation and things like that. So I would rather err on the side of caution and stay out of this entire IT pack at this stage. Let's wait and watch how things move. And again, I would repeat that we are seeing the trailer, just the trailer of the AI-led disruption. Much more is expected to come over the next, 1 year to 1.5 years. So wait and watch would be my policy.
Wait and watch, yeah, absolutely. And I guess the jury's out on how earnings will be affected, how much AI contribution comes through, how the reporting of that is going to take place, etc. And whether the purchases that have been made by some of these frontline IT companies will really bear fruit in the short term. Let's shift focus though to another sector, and this is the textile space where stocks have been rallying. Stocks like Indocount, KPR Mills up as much as 10% in trade. Jasmeet is still with us and he's here to explain why these stocks are rallying. Jasmeet?
Well, Alex, thank you for that. We are talking about two separate stories where Nifty IT is down about 30% over the last couple of years. And now we have textile, which have been rallying in trade, and some of the counters are up nearly 70 to 90% over the last couple of months. Let's quickly understand top 5 key triggers of why textile stocks have been buzzing over the last couple of months. Well, the first one, overall US apparel inventory has normalized after 3 years of correction. Well, this has happened when the extreme level of demand popped up after post-COVID, and it nearly took 3 years for them to clear the inventory. And now we are expecting a good demand turnaround for textile sector. While the second one and the major one, the overall US tariff hang is easing for Indian, given earlier we had double amount of tariffs, but now given the easing of the tariff is something that's rallying the overall sector. We look at the third part, we also make a note that India currently enjoys tariff parity when you compare to the other competitors when you look at Vietnam and Bangladesh. So that becomes a key positive trigger that US clients can prefer Indian textile companies over the other counters. When we look at the fourth trigger, we also have a lot of FTAs been signed across countries, which is again boosting. Recently we spoke about the UK and EU FTA, which could again bring back new trade deals for the counters going ahead. While the last one and the last positive key trigger for the particular counter is the global brands are accelerating China plus one sourcing shift, which basically means they don't want to put the eggs in the same basket and they don't want to really focus on one country for outsourcing, and they're moving away from China. So China plus one basically means China plus India, and that's why Indian textile companies becomes beneficial. While the last one, the government has been investing in the textile scheme in terms of PLI and other paybacks, given that they have been driving massive expansion and they're also getting a lot of plans for Indian textile so it can promote globally. Now let's quickly understand what's the way about and where can we expect the overall textile space going ahead, the key outlook. When we look at the new capex has been focused on the garment sector, and a lot of capex has been happening towards premiumization, which is creating higher margins for textile counters. When we look at the second key aspect, we also make a note that the better order visibility and the support is something that's boosting the overall stock. Let's really pull out the chart of the overall stock and let's see how much they have grown over the last couple of months. When we look at the counters like Indo, Count and Arvind and Welspun, they have gained nearly 92 to 56% over last 1 month, and today they are up nearly 10 to 5%. When we look at the last two counters, we also have KPR Mills, Pearl Global and Trident, which is again up nearly 50 to 20%. So all in all, we do see a positive turnaround for textile companies, but it's a wait and watch how does the Q1 pans out and how does the earnings start showing up given the stock performance have already rallied.
Good point. On the technicals first, the question is, what would you do with some of these counters? Particularly, for example, KPR Mills, that's up as much as 10% in trade today, Shivangi.
So looking at KPR Mill, today we've seen, of course, a price volume surge here, but then again, it's cooled off from its day's high and quite significantly for that matter. And we've seen that the stock is kind of settling below its resistance levels as well. So this one would be a little wait and watch here. Of course, there was a lot of euphoria and with the price surge today, but this needs to sustain here above the 1200 levels to again, sustain in this upward sloping channel.
Since it's 3:21, let's get a quick BTST, before we move ahead, I know you gave your picks a short while ago, but looking at where the charts are right now, and we're seeming like we will close at the high point of the day. A strong move up in the last few minutes or so, maybe Brent falling to the lowest levels since May 2nd has helped. But any BTST ideas that you would like to add on? Shivangi?
So for BTST, I have chosen Bajaj Finance, which is giving a kind of a bullish engulfing candle formation on the daily frame. And it has also surpassed its previous hurdle zone, which was met nearly on 7th May earlier. This year, beg your pardon. We've seen that this stock is showing positive divergence on the RSI front as well, and looking quite positive. The closing is giving me an indication that the volumes are going to add up and continue momentum. So 1020 is what I'm looking at for Bajaj Finance next, with a support zone of 970 levels.
Okay, Sudeep, quick view on the textile space. Given everything that my colleague just presented, there's also the aspect of the GST changes on non-cotton. So if the blends of some of these synthetic yarns goes up in some of these textile companies in the way that they make their product, they could see benefits on the margin front, wouldn't they?
Oh, absolutely. You're right. There are small multiple changes which the government did affect over the last 6-8 months, which is going to benefit these companies. But I think the biggest benefit, of course, will come from these FTAs. The FTA with UK has already come in place. EU is expected by the end of current calendar year. And at some point of time, we'll hope that the FTA with US also gets done. So I think we are in for good times as far as these companies are concerned. But remember one thing, the competition of these companies is predominantly with Bangladesh, Vietnam, and countries like that. It's not with China. So we have to be very careful of what kind of deals Bangladesh, Vietnam is getting with these respective geographies like UK, EU, and USA to understand the relative competitive position for our companies of Indian origin. And that needs to be monitored on a continuous basis. Amongst these companies, we do like Wellspun Living. I think it's got a significant potential. KPR was a favorite, but I think at this level, I would recommend a buy because it's already moved up quite a bit. One can look at Arvind as well from a long-term perspective.
Okay, let me go quickly across to Parth. Just about 6 minutes left to go. Parth, what are the stocks buzzing right at close?
So there are three really interesting stocks that I've brought along. The first one is Pearl Global Industries. The stock has gained over 25% in the last 5 days and has hit a new all-time high today. The stock is up over 10% today, which is the biggest single-day gain the stock has seen since May 2026. Also, the volumes today are 12 times its 20-day average. The second one is IRFC, which is down over 5.5% today, which is the biggest single-day fall the stock has seen since March 2026. The stock is now just 7% above its 30-month low, and volumes today are 5 times the 20-day average. The reason behind today's fall is that government has launched an OFS in the company to sell around 2% stake at 91 rupees per share, which was a 9% discount to yesterday's closing price. And lastly, I have Sanstar, which has gained almost 20% in the last 5 days, hitting a new 17-month high, and at the levels it was earlier today. Now the stock has obviously seen some profit booking. It was the biggest single day gain for the stock since July 2024, and volumes today are also 11 times the 20-day average. So these are the three stocks that you need to keep in your watch.
Okay, I want to get a take on IRFC. Sudeep, I want to come to you. After that OFS news, of course, you had a bit of a dampener on the stock, but do you see a potential here?
Well, the railway stocks, at the kind of levels where it went was unsustainable. There has been significant correction, and I understand amongst the railway stocks, IRFC, because predominantly it's into financing and the opportunities are humongous. They have also ventured into non-railway related financing. So I think from a long-term investor, if somebody is getting at 91, which is the retail OFS price, it may not be a bad deal if they are willing to wait for 1 year plus.
Got it. Okay. What about the charts then, Shivangi? If I extend this not just to IRFC, but beyond that to the railway plays, what would you say?
See, very honestly speaking, railway pack has been a very lackluster one from the last 2 years. It's underperformed, and it's clearly in the bottom of this entire rally. We've seen that these stocks have kind of made attempts of recovery, but failed to hold at those levels. And for me, I think railway stocks would be a little wait and watch for now, not on the radar as of now.
Okay. One top call, Shivangi, before we wrap up for this afternoon.
So one top call for you, Tamanna, will be Oberoi Realty. We've seen that, from the OI addition in the last 2 sessions, this one's looking quite positive. With getting ready for a consolidation breakout of the last 11 weeks, this stock is kind of getting ready for a fresh leg of rally here. So this would be my take for the next targets of around about 1800 immediately, and then 1850 little positionally. 1700 would be important support to watch out.
Okay, thank you so much, Shivangi and Sudeep, for joining us on this leg of the show as we wrap up. 24,050 continuing to be a tough nut to crack. Pull up the intraday of the Nifty, and it's quite interesting to see that broader markets have zoomed up while the Nifty's come off its high point of the day. Let's pull up the Nifty contribution chart and the heat map very quickly so you'll see what's happening there. Bharti Airtel is one of the key losers in the closing session. Can we pull up the intraday for Bharti Airtel just for a bit, because NTPC, Maruti have also joined in, some of that auto pack coming in. Yeah, you've seen that dive in Bharti Airtel, which has pulled down the Nifty to some extent. It has fair amount of weightage, but if you look at the heat map of the Nifty, you still have Indigo there, I presume leading the chart, 5% up. This has been a great day for Indigo. Trent, Adani, Ent, Tech Mahindra, Bajaj Finance and Infosys, some of the winners, but it's the banks which really are eye-popping, isn't it, Alex?
Yeah, not very often in the recent past that you've seen both HDFC Bank and ICICI Bank in the top list, in the top 10 gainers, but TCS also making its way there. Infosys and the IT pack doing particularly well, about 20 stocks in the red, and the worst performer, of course, Bajaj Auto. Of course, in the automotive pack, watch out for the buyback is being eyed very closely, as well as NTPC in the power space, Tata Steel, the entire metal pack losing ground. ONGC, of course, this is something that is going to be sensitive to crude oil prices, and if crude oil prices are cooling off, it's not necessarily the best news for an ONGC, but I think it's more or less what we saw through the day. Some strength building for Indigo, and some money being taken off the table for Trent at the end of the day.
But it's really the broader markets that have zoomed up and performed well, right? Let's pull up the small cap and the mid cap before we go to the advanced decline ratio. Actually, the Nifty mid cap looking completely flat. Let's see what the small cap stocks are doing and whether there's action there. It's pretty decent there. That's seen a bit of a climb. Let's pull up the advanced decline ratio and see if that has changed significantly towards close. Not really. In fact, narrowed down. So you have certain winners that have come to the fore more than anything else. The sectoral heat map is the next thing that we will see. We just have about 7 seconds left for markets to close. Look at the Nifty realty stocks. Oberoi Realty was one final call from Shivangi Sarda as we went into close. Nifty IT right there on peak. Private banks and the entire bank Nifty also doing well. So it's banks, IT and realty which is really moving up the markets. Everything else is kind of middling.
Yeah, in fact, I think this is something that we will talk about tomorrow at the start of trade as well, because Nifty Bank has been a technical call vis-a-vis the Nifty. And of course, the Nifty 50 did climb today, but it's an outperformance. Last week, all of last week, there's been a relative underperformance by the Nifty Bank. I wonder whether now you will see an up move, because we're ending very close to the high point of the day, and tomorrow is the weekly expiry for the Sensex. Let's see how that pans out.
Keep an eye for that. There will be a detailed statement on what's happened between US and India on the trade deal. That's going to be an important one as well. So all of the action continues, but for now, from Alex, me and the team that put the show together, that's all the time we have. Thank you for watching. Stay tuned to NDTV Profit.
Hello and welcome to NDTV Profit. You are tuned in to the Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin slips below the $63,000 mark on tech sell-off. Tech firms lobby Senate for Clarity Act. Morgan Stanley buys Bitcoin amidst June sell-off. MiCA deadline forces crypto firms to exit. Well, the first one, Mythbusters, the crypto operates outside the system, is one of the most common misconceptions about the crypto, that it operates completely outside the financial system. But that's a myth. Crypto has become increasingly interconnected with the broader financial system. Now let's take a look at stablecoins. That's an example. Stablecoins are digital assets which are designed to maintain a stable value, often being backed by traditional assets such as US dollars or short-term government securities. Now, looking at the major asset managers, banks, payment companies, and even publicly listed firms are now actively involved in the digital assets. From Bitcoin ETFs to tokenized financial products, crypto is increasingly being integrated into regulated financial infrastructure. Now, regulators around the world are also bringing crypto within established legal and compliance frameworks. Even in India, crypto platforms operate within regulatory requirements such as KYC verification, tax reporting, and even transaction monitoring. So, the next time someone says crypto operates outside the system, remember, crypto may have started as an alternate to traditional finance, but today it is increasingly connected to the global financial system rather than being separate from it. Now, as we wrap, remember, you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about the crypto regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes on CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that's going to get you a roundup in terms of everything that has happened thus far in the next few minutes. But first things first, let's kickstart the show by talking about markets. Then the Wall Street ends with a strong bounce back as benchmark indices finished near the day's high as well. The Nifty reclaims the 24,000 mark while the Sensex surges more than 700 points as well, driven by broad-based buying across sectors. Let's also talk about the sectoral trends that remain tad bit mixed at the close. Now, realty and IT stocks led the advances while defense and some of your energy names were under a little bit of pressure, reflecting a rotation of flows across sectors as benchmarks ended the day on a strong note. Moving on then, let's talk about Honasa Consumer that is expanding beyond its core beauty and personal care business with a foray into nutraceuticals. The company is going to be acquiring a 58% stake when it comes to Fluence Pharma at an enterprise value of 135 crore rupees and plans to buy the remaining stake over the next 5 to 7 years. Now, the company has also incorporated Honasa Health as it looks to build a consumer-focused nutraceuticals portfolio and tap new growth opportunities. Let's also move on and talk about Pearl Global Industries that extended its sharp rally as when gaining more than 25%. As you can see on your screens, about 10% uptick coming in just today, but 25% over the past 5 sessions, scaling a fresh all-time high as well, and trading activity really remained elevated with volumes jumping to 12 times the 20-day average. The stock also recorded its biggest single-day gain since May, reflecting strong momentum as well as heightened investor interest in the counter. Let's move on and talk about IRFC shares that came under sharp pressure, as you can see, with that 6.5% thereabout, almost 7% knock coming in on this particular counter after the government announced an offer for sale to divest up to a 2% stake in the company. The stock is now less than 7% above its 30-month low, while trading volumes jumped to 5 times the 20-day average as well, and the decline also marked the company's biggest single-day fall since March 2026. Let's also talk about Oberoi Realty that gained after the developer secured RERA approval for its maiden Gurugram project as well. So about 3% uptick coming in when you talk about this particular counter, and the clearance is really paving the way for launch and sales bookings, giving the company a strong entry into the Haryana market as well, spread across nearly 15 acres. You do have this particular luxury development that's going to be featuring low-density, hospitality-backed residences inspired by Mumbai's iconic 360 West project. Onto the word coming in from brokerages this time. Let's talk about Syngene that was up about 2% in trade. Macquarie has maintained its outperform rating and is quite bullish, even though they've cut the target price just a tad bit, citing some of the headwinds in the CDMO business. Now, however, you do have the brokers really believing that the recent stock correction has already factored in some of these challenges and is underappreciating the company's medium-term growth levers. Also sees stronger commercial execution and higher utilization as some of the key drivers of improved profitability and returns going forward. Let's move on and talk about Tata Power that has received a key regulatory boost after the Power Ministry extended the validity of its Section 11 directions. So some bit of profit booking that you saw coming in for this counter after the extension of the directions for the Mundra Ultra Mega Power Project until September 30th. Now, the extension mandates the 4,000 megawatt plant to really continue operating at full capacity to meet high seasonal electricity demand. The order also ensures cost plus tariff compensation, providing revenue visibility for this particular company. And Mundra, which houses about 5 units of 800 megawatts each, supplies power to Gujarat, Maharashtra, Punjab, Haryana and Rajasthan. Let's also move on and talk about City Union Bank that has approved a framework to raise up to 500 crore rupees through the QIP route, in fact, and the fundraising plan comes at a time of leadership transition at the bank, with R. Vijay taking charge as the new CEO from May 1st. The capital raise is also expected to strengthen the bank's balance sheet and provide additional firepower to support its growth plans going forward. Let's move on and talk about Yes Bank that has scheduled a board meeting on June 29 to review a wide range of fundraising options. The lender said that its board is going to be considering raising fresh equity or hybrid capital along with borrowings through the issuance of eligible debt securities. The move is coming in as the bank evaluates multiple avenues as well, and that's something that you're looking at in terms of the important update coming in to strengthen its capital base and support future growth requirements. Let's move on and talk about Ramco Systems that was in focus after the stock hit a 6-month intraday high, surging more than 15% with trading volumes really spiking to 17 times its 20-day average. The enterprise software company has gained 35% in the past month and over 60% in a year as well. Operationally, FY26 saw revenue growth driven by accelerating recurring income, while EBITDA margin expanded sharply to 24% from 14% a year ago. Management has also highlighted its payroll business as a key growth engine and launched its agentic AI platform for enterprise automation. Let's move on and talk about shares of Interglobe Aviation that climbed to a 5-month high after gaining nearly 15% over the past month. The rally has been driven by optimism around strong passenger traffic growth, improving operational performance, and a favorable outlook when it comes to the aviation sector. Let's move on and talk about TCI Express shares that surged about 15% in trade, 16.5% at close as well, marking their biggest intraday move in more than a year. The rally is coming in after the company reported its highest quarterly volumes in 24 quarters, with Q4 freight volumes rising 4% on a year-on-year basis. The SME segment now contributes 48% of revenue, with management really targeting a share of more than 50% as well. Investors are also betting on capex-led expansion and improving margins in the next phase of growth. Let's move on and talk about Bajaj Auto as well, that came under sharp pressure, about 2.5% knock coming in on this particular account after the company really disclosed a ransomware attack that impacted its systems as well as those of its tech unit. Now, the automakers said that it swiftly implemented precautionary protocols as well, and that the mitigation measures have been effective so far. The stock also remained in focus as June 23rd, in fact, was the record date for its buyback of up to 46.94 lakh shares, and that's also a key update that you're looking at. Moving on then, let's get you some business news. Gold and silver prices have witnessed a sharp correction in 2026, with spot gold plunging nearly 24% from its January peak, while silver has also recorded steepest decline coming in 4 years. The sell-off has been driven by a stronger greenback, expectations of high interest rates, and easing safe haven demand. Moving on then, let's talk about a rare move. Canada's Fairfax Financial has purchased nearly $1 billion worth of Indian government bonds through its local unit, Fairfax India Holding Corp. Reports, in fact, are suggesting that the investment could be linked to Fairfax's interest in acquiring a stake in IDBI Bank as India's privatization process gathers pace. The transaction comes after India's decision to exempt foreign investors in government bonds from capital gains tax, making such investments even more attractive. On to some national news now. A major rescue operation is currently underway in Kolkata's Taratala area after the roof of an under-construction warehouse collapsed. More than 30 people are feared trapped under the debris. Several workers were inside the 3-story structure when the roof gave way, and locals initiated rescue efforts before police, fire service personnel, in fact, and disaster response teams reached the site. So far, 6 to 7 people have been pulled out while search and rescue operations continue. Moving on then, Mumbai remains in the grip of heavy monsoon showers after intense overnight rainfall battered the city and its suburbs. Parts of the metropolis recorded over 200 millimeters of rain, and that's in just 24 hours, disrupting suburban train services and forcing the closure of schools The IMD, in fact, has forecast more spells of moderate to heavy rain, thunderstorms and lightning over the next 24 hours, keeping the city on high alert. And a shocking incident has rocked Mumbai's suburban rail network. A 22-year-old commuter was allegedly stabbed to death inside a first-class compartment of a churchgate Nalasopara East past local as well, after an argument over whether the train doors should be kept open during the raids. The attack took place between Andheri and Borivali stations. The accused fled the scene, and a manhunt is currently underway as police investigate this assault. Moving on then, let's talk about a major breakthrough coming in the Ketan Agarwal murder case. Pune police have in fact arrested his fiancée on charges of allegedly plotting and executing the killing. Investigators claim that the accused was involved in the conspiracy behind the murder, with evidence gathered during the probe leading to the arrest. Police are continuing their investigation to establish the motive and identify any other individuals who may have been involved. Moving on then, let's talk about authorities in Assam that are on high alert after torrential rainfall triggered flash floods in the state. In terms of one particular district as well, and the heavy downpours led to a sharp rise in river discharges, raising concerns of downstream impact in several districts of the state. Flash floods have also been reported near the Panur Lower hydroelectric project, where a spillway gate has been opened to release excess water and manage surging flows as well. Moving on then, let's talk about some international news. Southeast Asia could face a renewed bout of severe transboundary haze later this year as El Nino-driven heat and dry weather raise the risk of widespread forest and peatland fires as well. And you do have experts really warning that prolonged dry conditions may worsen air quality across several countries, disrupting travel, public health and economic activity. Governments in the region are closely monitoring hotspots and preparing mitigation measures ahead of the peak fire season. Let's move on and talk about Amazon CEO Andy Jassy, who's on a visit to India as the e-commerce giant really sharpens its focus on one of its fastest growing markets. During the visit, the company announced plans to expand its quick commerce network to 300 cities, significantly increasing its reach in the fast delivery segment. The move underscores Amazon's commitment, in fact, to strengthening its logistics infrastructure and competing more aggressively in India's booming quick commerce space. Moving on then, let's talk about reports suggesting that in a significant diplomatic development, Iran's president has reportedly invited PM Modi to attend the funeral of Supreme Leader Ali Khamenei as well. The invitation comes amid a period of heightened regional attention on Iran and its leadership. There has been no official confirmation yet in terms of New Delhi regarding the PM's participation in the ceremony. Moving on then, let's talk about Elon Musk, who's lost his trillionaire status after a sharp week-long sell-off when it comes to SpaceX shares that wiped out nearly $500 billion from his fortune already. The decline is coming in after Musk's net worth had surged to record highs, driven by soaring valuations across his business empire. Moving on then, let's talk about the world of sports. England and Ghana played out a hard-fought goalless draw in their FIFA World Cup 2026 group L encounter, with both sides sharing the points in a tightly contested match that you're looking at. Despite several chances at either end, neither team, in fact, was able to find a breakthrough. The result keeps the qualification race wide open, with both teams remaining firmly in contention for a place in the knockout stages. And Ronaldo delivered another record-breaking performance at FIFA World Cup 2026, scoring twice as Portugal thrashed Uzbekistan 5-0 in a dominant Group K display. Brace, in fact, added another milestone to his illustrious international career, while Portugal strengthened their position in the race for a place in the knockout stages. In particular, victory, in fact, underlined Portugal's title credentials as the tournament really gathers momentum. And big bets and bold ambitions, let's talk about that as well. That's the message coming in from Adani Group Chairman Gautam Adani at the group's 34th AGM, from positioning infrastructure and AI as twin growth engines to really record investments, a massive power push, nuclear entry and scale across ports and data centers. Here are 5 key announcements signaling a high stakes, future-facing growth strategy. Let's go across and listen in.
We have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future, with land identified and a 10 gigawatt targeted capacity by 2035. We are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030.
Alright, and that's all that we could pack for you on this edition of Market Express. Thank you so much for tuning in.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear.
Market ends higher as street claws back from yesterday's losses. Nifty springs back from support and ends above 24,000 mark into global aviation, and Adani Enterprise tops the chart. Broader markets underperforms the benchmark. Rupee ends higher as asset classes across Asia recover from Tuesday's slump. Currency back at 94.66 per dollar mark. 2036 bond yields ends at a 3-month low. Navratna PSU IRFC hits the block with the government planning to sell up to a 2% stake through an offer for sale to boost disinvestment proceeds. Sources tell NDTV Profit that the Cabinet Committee on Economic Affairs may approve landmark 26,000 crore rupee Emirates NBD RBL Bank deal. Emirates NBD to acquire a 60% stake in the Indian private lender. From resilience to record investments, Adani Group Chairman maps an aggressive growth roadmap betting big on infrastructure, digital platforms and scale to power India's next economic cycle. Commerce Minister Piyush Goyal and US Trade Representative review progress on India-US deal talks, explore avenues to deepen economic ties and push momentum towards a mutually beneficial interim agreement. A defining chapter closes at Trent, with Noel Tata stepping down as chairman after almost 30 years, marking the end of a transformative leadership journey. Mumbai woke up to relentless showers as the IMD sounded a red alert for the city, and Palghar warning of intense rain, thunderstorms and gusty winds as the monsoon stepped up its fury. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, let's see how the markets have really fared today, viewers. So the Lal Street has ended with a strong bounce back as benchmarks indices have finished near the day's high. The Nifty reclaims the 24,000 mark while the Sensex surges more than 700 points. And this has been driven by broad-based buying across the sectors. My colleague Parth is joining us with a complete market roundup.
Nifty has closed in green, up almost 0.8% today, led by Indigo and Adani Enterprises. Indigo has hit the highest level in 7 months, up almost 5% today, and Adani Enterprises also gained over 3.5% today. On the other side, broader markets have, however, underperformed the benchmark, with Nifty Midcap 150 closing flat today. The top gainers in Nifty Midcap 150 were JSW Infra and KPR Mill, both of which saw an uptick of over 7%. On the downside, we saw GE Vernova, TND and Hitachi Energy, both of which were the top losers in the index, down over 6% today. On the other side, Nifty Small Cap 250 has ended in green, up almost 0.2% today, led by Credit Access and Jyoti CNC Machines. Credit Access gained over 6% today, while Jyoti CNC saw an uptick of 5% today. On the sectoral side, we saw all of the sectors end in green except Nifty Metal and Nifty Auto. Nifty Realty was the top gaining sector of the day, up almost 2.2%, led by Brigade Enterprises and Phoenix Mills, both of which were the top gainers in the index, seeing an uptick of 3.3%. On the bottom side, we saw Nifty Auto being the top losing sector, down almost 0.5% today, led by Bajaj Auto and Tube Investments, both of which were the top losers in the index, each down 2.7% today. On the sectoral trend side as well, Nifty Pharma has ended in green for the 5th day in a row, while Nifty FMCG has snapped its 3-day losing streak. Also, Nifty Metal and Nifty Auto have closed in red for the 2nd consecutive day.
Thank you so much, Parth, for that. And viewers, the rupee is trading with a mild positive bias today as it closes at 94.66 against the dollar. Now, this is supported by the sharp correction in the global crude oil prices. Brent has slipped to around $75 per barrel mark, while WTI is trading below $72 and extending the losses by almost 2% each. And the decline in oil is easing concerns over the India's import bill, which in turn is lending support to the domestic currency. Now, softer crude oil also reduces inflationary pressure expectations and also improving the sentiment for the rupee in the near term. However, traders continue to stay cautious as global macro cues, dollar strength, and even the foreign fund flows remain key drivers for the direction. Meanwhile, viewers, months after the government has allowed 100% FDI in the insurance sector, sources tell NDTV Profit that insurance regulator has received applications under the new regime. And my colleague Shrimi is joining us with more details on this.
Well, that's right. India's opening up of the insurance sector to 100% FDI is beginning to see strong interest from the global insurers. What we are picking up is that IRDAI insurance regulator has received 3 to 4 applications from foreign insurance players seeking approvals for acquisition, joint venture and ownership restructuring under the new FDI regime. In fact, among the these proposals under review is Prudential's plan to acquire 75% stake in Bharti Life Insurance. Also said that regulator has received this application last week itself and said to be examining the proposal, including the implication of Prudential's existing stake in ICICI. So under the current IRDAI norms, Prudential may have to reduce its holding in ICICI below 10% of the transaction proceed, as the current rule won't allow them to actually hold majority stake in 2 insurance entities. Now, sources further indicating that a handful of global insurers are already in discussion with Indian counterparts and are expected to announce partnership, acquisition and even the stake increase over the coming quarters. In fact, some preliminary queries have already been made to Department of Financial Services under Finance Ministry, and that indication is quite positive as they are seeking some sort of changes in their ongoing talks. Now, given the interest emerging in the sector, industry expects significant changes this fiscal year itself. Just to underline, the space
already been buzzing in the recent past. For example, Alliance has announced a strategic partnership with Jio, Piramal Group and Shriram Group are exploring life insurance venture as well. Mahindra and Mahindra Manulife are also in active discussion. So overall, government officials expect the liberalized FDI regime to attract a lot of fresh capital, and as a result, a lot of action expected in the coming quarter.
Thank you so much, Rimi, for that. In fact, viewers, the Cabinet Committee on Economic Affairs is expected to meet today to consider a landmark banking transaction involving Dubai-based Emirates NBD and RBL Bank. So the deal, valued at around 26,000 crore, involves Emirates NBD acquiring a 60% controlling stake in the Indian private sector lender. And if approved, this would mark the largest ever foreign direct investment in India's banking sector, and also the first instance of a foreign banking entity securing majority control in a listed Indian commercial bank. So the transaction announced last year has already cleared key regulatory approvals and also includes a preferential share allotment, which is a mandatory open offer to minority shareholders, and also the integration of Emirates NBD's existing India operations into the RBL Bank. And viewers, from betting big on India's future in a fractured global environment to building scale amid intense scrutiny, Adani Group Chairman Gautam Adani lays out a clear vision at the group's 34th AGM. Now, to walk us through the key highlights, let's get in my colleague Puneet.
Well, what were some of the key important quotes as well as key takeaways coming in from Chairman Gautam Adani's statement at the annual general meeting of 2026? Now, he went on to mention at the start that it was a year in which the world grew more fractured, complex energy security models also returned to the center of national strategy, and technology became inseparable from sovereignty at this point of time. However, even in the face of these challenges, the Adani Group remained anchored to an unwavering belief that India's future cannot wait. While others debated, Adani Group built, advancing its journey as the world's most integrated infrastructure platform across energy, transport, logistics, and industrial manufacturing was one of its key quotes coming in from Chairman Gautam Adani at this point of time. Well, he also went on to mention some key important takeaways from the year gone by. Progress did not come in calm conditions, he highlighted, for the Adani Group in this year. Also, it came in the middle of extraordinary scrutiny in this year as well. Now, we have seen that apart from that, also one of the biggest examples, according to him, was the belief on the 25,000 crores rights issue that was done earlier this year. And, this was more than a capital event. He saw it as a referendum on the credibility of the Adani Group. And in quotes, he mentioned, and true to its spirit of nation building, the theme of the address this year focuses on accelerating infrastructure and leveraging intelligence as well. Now, he mentioned that these are no longer two separate priorities, but they are twin global engines that must shape India's strength infrastructure. Apart from that, also the first engine, of course, for national growth infrastructure, which includes roads, ports, airports infrastructure, as well as includes the key infrastructure like translines, gas networks, data centers, as well as digital platforms. Now, apart from that too, he spoke of the second engine as well, which includes all of these key aspects. But when you look at FY26 as a year, the Adani Group made a record capital investment of more than 1.5 lakh crore in hard infrastructure. Now, this also represents roughly 30% of India's total new private sector capex for the year of FY26 as well. Shows you the size of the magnitude of things that have happened in the last year. Now, of course, national security is precedent, and during Operation Sindoor, Chairman Adani also mentioned that the drones, anti-drone systems, missiles and ammunitions by the group was also supporting the armed forces when it mattered the most. When you look at the financial numbers, FY26 consolidated portfolio revenue came in at 2.92 lakh crore rupees, while the FY26 EBITDA reached 94,834 crores. The net debt to EBITDA, also at 3.3 times, is less than the group's target of 3.5 times as well. And at the end, he mentioned that to build infrastructure that powers India and to build institutions that ensure human dignity at every level of society, end quote, were some of the key highlights and the key takeaways from Chairman Gautam Adani's statement at the AGM.
All right, Puneet. So big bets and bold ambitions. That's the message from Adani Group Chairman Gautam Adani at the group's 34th AGM. And from positioning infra and AI as twin growth engines to record investments, a massive power push, nuclear entry, and even scale across ports and data centers. Here are 5 key announcements signaling a high-stakes, future-facing growth strategy. Let's listen in.
We have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. At Adani Power, we are implementing India's largest ever private sector power CapEx program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future, with land identified and a 10 gigawatt targeted capacity by 2035. We are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030.
Viewers, moving on. Commerce Minister Piyush Goyal and US Trade Representative Ambassador Jamieson Greer held multiple rounds of talks. Now, both the sides have reviewed progress on the ongoing India-US trade talks, signaling fresh momentum towards an interim deal. Now, Piyush Goyal has said that the discussions focused on deepening economic ties. And here is my colleague Rishabh Bhatnagar joining us for more details. Rishabh, what do we know about the meeting so far?
Absolutely. So what you have is the completion of the 2-day talks between US and India, a very crucial round given the fact that you had the US trade representative in India for the first time, Jamieson Greer. Now, according to the statement, what we're picking up is that substantial progress has been made by both teams in the recent months. There is fresh momentum. Both on the political side, you have Trump and Modi, who've also met a couple of times. You have Greer, who met the finance minister and the commerce minister. So a lot of political momentum to these talks is what we're picking up. But what we also saw that these discussions are continuously focused on the interim agreement. So the first tranche of that comprehensive PTA is what both sides are still sort of looking forward to, and there is no sort of announcement that has been made so far. We don't know where the deal is stuck so far. So that is something that both sides are now looking forward to in terms of sort of bridging that gap between both sides when it comes to the tariff bit. So I think that is where you'll have some sort of a worry coming in. But all hands on deck, the negotiations have been successful according to these statements. So we might expect something more coming in from the US Embassy later in the day, but we'll keep tracking that as well.
Right. Thank you so much, Rishabh, for getting us those exclusive details there and tracking the story so closely. And we are switching gears now. FMCG majors are going beyond staples and soaps, pivoting sharply towards wellness and nutraceuticals with a fast-growing 16,000 crore opportunity in focus. Let's go across to my colleague Mahima for a deeper look at this fit and fab trend and also the companies leading the charge.
Last year, FMCG was all about beauty products. We saw a lot of new products getting introduced, a lot of D2C brand acquisitions in the beauty and personal care. And this year itself, we've seen a lot of acquisitions happening in the healthcare space or the nutraceutical space, as we say. Today, Honasa went ahead and announced acquiring of Fluence Pharma, which is into the same category. And now, a lot of FMCG companies have been doing this. And just to understand as to how big this opportunity is, right? There is rising demand when it comes to beauty from inside products, and as per the Honasa filing, the market for this is as big as 16,000 crores. So every company can have a pie of this. And just to give a perspective as to what are the categories that people are looking at in this and what is the opportunity like, protein is one of the largest growth areas where Marico and HUL are already there. There's women wellness, which is a premium segment where HUL is making its mark. You have beauty from within, which is a high margin business where Marico Zydus is present. There's gut health, which is emerging right now as an opportunity where Dabur and HUL already hold some market share. Healthy aging is a very fast growing category where Zydus is already present. Functional beverages is where there's mass adoption. So you have Patanjali, Imami, Tata Consumer, etc. in that race. And there's Ayurvedic nutraceuticals, which has an Indian advantage. So you have Dabur, Imami, Patanjali, Zydus Wellness, etc. in this game as well. Now, if we take a look at different FMCG companies that have different products in this particular segment, you have Dabur, which has Scenes by Dabur, Chyawanprash, Honitus, Real Active. For HUL, they acquired Oziva very recently and has been growing significantly for the company, just like what Minimalist did in the beauty and personal care. Oziva has been doing it in this particular segment. Marico had acquired a stake in Plix in 2023. Recently, they went ahead and acquired a stake in Cosmix as well. Both of them are of the same category of nutraceuticals. Nestle has a JV with Dr. Reddy's, where they have products like Nature's Bounty, Osteo, Biflix, Ester C, etc. There's Imami, where they are focused more towards Ayurvedic wellness products. So you have Zandu, Aloe Fruit, Axiom, Jeevan Ras, etc., which form a part of their portfolio. Zydus Wellness is where they are focusing more towards preventive health as well as herbal wellness. So they have products under Sugar Free, Nutrilite, Weight World, Max Medics, Right Bright, Complan, etc. And lastly, you have Patanjali, which is mainly Ayurvedic focus and has Chyawanprash, Ashwagandha, Giloy, and nutraceutical capsules under their portfolio as well. So this is just a wave that has probably picked up and something that could become big when it comes to FMCG, focusing on one of this segment called nutraceutical or something within the healthcare space.
Thank you so much, Mahima, for that. And moving on from the FMCG space to the tech space, rising memory prices are beginning to impact the demand for mobile phones and even laptops in India. My colleague Ridhima is joining us with more details on the story.
Laptop and mobile sales have dropped down after RAM prices increased, so sales volume for mobile is likely to drop by 12 to 15% year-on-year in June after the entry-level price of the mobile has increased, and for laptops, the sales volume likely to be reduced by 16 to 18% year-on-year in June. Now remember that laptop and mobile prices have been increasing from December 2025, and mobile average selling price has gone by 20% from January to June period, and for laptop the average selling price has gone up by 15 to 25% from January to June period. Now because of this, the second-hand phone and laptops are seeing consumer interest, and but the first-hand devices could pick up in the festive season. Now this is as per the dealer checks and the IDC and Counterpoint data. Now, if you see customer interest under 10K of phones, there has been a drop in Q1 2026 by 42%. Between 10 to 20,000 rupees, there is a growth of 6%, and beyond 30,000 rupees a phone, there has been an increase of 10%. Now, this is positive for GNG Electronics, which sells second-hand phones and laptops, and could be negative for Dixon Technologies, which 80% of its revenue comes from mobile, and also they assemble the mobiles, and Reddington, which sells Apple phones. Now, why the price is increasing? The main reason is behind this is the RAM prices, which have gone up by 4x times from December 2025, and the Gulf War has also added to the pressure, and AI and database demand for the chips has created a supply crunch, and also the dollar, which has strengthened against the rupees, has added pressure on the input cost. Now, how important is this memory for the mobiles and the laptops? Around 45% of the mobile manufacturing cost comes from this RAM, and for laptops this percentage is around 35 to 38%. So now we have to wait and see how the companies increase their volume growth in the coming time.
Thank you so much, Rodhima, for getting us those details there. And viewers, Amazon has announced plans to build India's largest delivery in minutes network by expanding its quick commerce service, Amazon Now, to more than 300 cities across the country. Now, the announcement comes during Amazon CEO Andy Jassy's visit to India, where he reviewed operations at an Amazon Now micro-fulfillment center. And the company has said that Amazon Now is its fastest growing e-commerce business in India, with orders doubling every quarter since its launch. And Mumbai has woken up to relentless showers, viewers, as the IMD has sounded a red alert for the city and also Palghar, warning of intense rain. Now, thunderstorms and gusty winds have ramped up as the monsoons have, really stepped up its fury. So let's have a look at this report from my colleague Juhi Jadhav.
The most awaited monsoon season has officially and finally begun in Mumbai, but the streets of Mumbai are full of water in its first rain only. Right now I am standing at Sion Gandhi Market area. This is an hotspot area. Even if it rains for a little while, this area gets flooded with water, and right now the situation is same because it is raining in Mumbai since morning. Even yesterday it was raining, but today since morning it's raining heavily, and this very hotspot area of Mumbai, that is the Sion Gandhi Market area, is flooded with water. You can see right in front of me a BST bus is waiting, is shut down. In front of the BST bus, a tempo truck is also shut down. Also, the traffic is jammed because of this waterlogging. The BMC had stated that this year Mumbai will not face waterlogging because the nalas have been cleared up, but we can see the reality check over here that in the first rain itself Mumbai is facing waterlogging.
All right, as you can see that Mumbai is completely inundated with the advent of monsoons. And viewers, moving on, a commuter was killed on board a Mumbai local train after an altercation that reportedly started over a door-related dispute. Now, the victim has been identified as Mayank Lohar, and the government railway police is now investigating the case to establish the exact sequence of events and trace the suspect as well. Now, senior railway officials have visited Borivali station shortly after midnight, while the investigators have collected CCTV footage from the train and even the station. Now, Western Railway has said that it is extending full support to the probe as the incident again puts focus on commuter safety and even door-related disputes on Mumbai suburban trains. And a major rescue operation is also underway in Kolkata after the roof of an under-construction warehouse has collapsed. So, according to reports, more than 30 people are feared trapped under the debris after a portion of the 3-story structure gave way. Now, teams from the NDRF, police and fire services and disaster management authorities have been deployed at the site, while cranes and heavy machinery are being used to clear the rubble. Now, 4 individuals have been reportedly been rescued so far, and efforts continue as authorities race against time to locate and even evacuate those trapped. And viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
India Inc.'s most respected names, chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show.
Viewers, artificial intelligence is no longer just a tool for coders and engineers. It's rapidly becoming a workplace skill impacting careers across marketing, finance, consulting, HR, and even the leadership roles. Now, Scaler's latest India AI workforce report, based on the insights from over 11,000 professionals, suggests that AI is creating new opportunities, driving salary growth, and even expanding beyond India's metro cities. Joining us today is Anshuman Singh, co-founder of Scaler, who previously worked at Meta and was also part of the team that has helped build Facebook Messenger. Welcome to the show, Anshuman.
Oh, thank you. Thank you for having me.
So, Anshuman, before we get into the AI bit, let's start with your Meta journey. You know, you were part of the team that has helped build Facebook Messenger. So, when you look at today's AI revolution, does it feel bigger than the mobile and social media revolution you actually witnessed firsthand?
Absolutely. I feel it is as big as the internet phenomenon. Internet was the first time when, like a single human could have published a website and it would be noticed by the entire world. Like before that, that was not even possible. Very similarly, like this today with AI is the first time that machines are no more dumb and they don't need to be told every single instruction. Machines are intelligent now. So then now you're basically going and looking at every system that has been built over the last few decades and saying that, look, now that the machines are not dumb, how do you reimagine the system? So it is as big a change. And I think like that is why you're seeing these trillion-dollar companies being born, because everybody is just reimagining every single product being built out. And that just opens up a lot of opportunities.
Right. So with reimagining, it's also, unlearning that is happening, so to say, because we've been trained in a set pattern, but now everything is starting from the scratch.
Yeah, I mean, I think the fundamentals are still the same. The first principle thinking is still the same. People who have always been questioning why a certain thing happens a certain way will continue to still do well. But yeah, I mean, everything has to be questioned. Everything has to be questioned is this the most efficient way of doing something? And the answers would be very different in today's world than what they were, let's say, 3 years back.
Right. So Anshuman, what are the biggest lessons I would like to know from building products at Meta that eventually shaped your decision to really start Scalar?
Yeah, I mean, so Meta had this thing where like all around the office, you would have posters stuck. Every poster would either say move fast, break things, or the second slogan was make impact. Basically, what was drilled down into us was one, focus on impact, and everything else, including money, will follow. And the amount of money you make is going to be a function of the amount of impact you create. So that was the first lesson that I took with me. And the other was move fast, break things, which is focus on doing things and like moving really, really fast in doing those things. It is okay. You'll make some mistakes. Everybody makes mistakes. As long as you don't keep repeating the mistake, like you'll eventually succeed. So those are the two things I took away from there. Which I have sort of imbibed through my journey building Scalar till date.
Right. So even I'm going to take that, this very key suggestion that you've given and that, Meta really resonates with. And you've spoken to over 11,000 professionals, Anshuman. So what was the single most surprising finding that emerged from that research? If you could just share with us.
Yeah, I mean, two things. One is we thought that AI is primarily helping software developers, and that too, like junior software developers. Like what was surprising was that like one of the key impact of AI also has been people moving into leadership roles. AI has become this one channel where you keep, brainstorming different ideas and like figuring out like how to make decisions, or proof checking what you're doing, and that's helping accelerate the leadership journey as well. The second learning was like I think there's a lot of pessimism when it comes to AI, where people feel that it's going to take jobs away. When we talk to companies, when we talk to leaders, it's the impact of AI has been that it has reduced the time to get something done. Which means that the companies can actually now iterate faster, move faster, and it's not really taking jobs away. Like it's just enabling one person to do more. But there are so many other avenues now that are opening up as opportunity to do if you start doing well in a segment. So jobs not going away. That's learning number one. AI is also helping on the leadership level. That's learning number two.
So, in fact, coming to that question is only because one of the biggest fears today globally is job displacement. And your research suggests that AI is acting more as a career multiplier. So are we really overestimating the threat here, or are we underestimating the opportunity at this point?
I think both. We are overestimating the threat and underestimating the opportunity. The way economy works, and again, like I'm not an economy expert, but like basis my experience, the way economy works is if an industry moves at a fast pace, which means if an industry starts to see increase in adoption, then that industry needs more and more people. AI is going to actually enable every industry to move much faster now, because it's just sort of replacing the mundane work and like automating a lot of the mundane work that exists in the industries, right? So, for example, if I take something like drug discovery, uh, inventing a new drug or like doing a new drug discovery would take years and years for humanity earlier. And then like with AI, we're now reaching a point where you could probably reduce that time to 1/3 or 1/4 of what it used to take before, which means that now more and more drugs will be discovered for the kind of new diseases that keep getting that keeps ailing humanity, which means more revenue, which means more people in the drug making industry. And that I'm taking drug discovery as one example, but this applies to all industries. If industries move fast, more and more business gets generated for that industry, which means more and more people are then needed in that industry.
Right, Anshuman. And so, which roles, according to you, are most vulnerable over the next 5 years, and which roles become significantly more valuable because of AI?
Yeah, I think roles today that involve a lot of mundane work, they are at risk. So, for example, and I'm just taking an example, but like there are many such examples. For example, a lot of what happens today in, let's say, data entry, it doesn't require a lot of intelligence, but it just requires diligence. Those kind of jobs will get replaced, if not today, then probably in a year from now or in 2 years from now. However, jobs that involve decision making, or let's say taste, design, or intelligence in general, they'll become more and more important or more and more high paying, which is, by the way, like I believe that the Silicon Valley operates probably like a year ahead of us. If you see, look at the salary patterns in Silicon Valley as well. The top engineers, and if you look at the news, like top engineers, like one of the engineer had been offered like $1 billion salary. $1 billion is like roughly 10,000 crore salary. Somebody else was offered like $100 million salary, which is like 1,000 crore salary. Those numbers have never been seen ever in the past. Why that is happening is that if you're smart, if you're good, then you using AI, like you can do the work of, like 4 or 5 humans. So what your productivity or like your value to the company is just so much more. So hence, jobs that involve intelligence or let's say taste and design are going to become more and more valuable. Jobs that are mundane, where you're not really applying your brain, but you're just going through the motions, they will end up going away.
Right. And what do you have to say about the engineering teams? So will that be becoming shorter day by day, or, there is still space for them?
No, 100%. I mean, engineers are at the core of what is being built out. Like even for AI, if you see, the proof of the pudding is all the companies that are building AI, like the likes of OpenAI or Anthropic or Google, they're actually hiring more and more engineers. So that tells you something. You would require good engineers always. I think the distinction is in our ecosystem specifically, there is a distinction between good engineers versus really, really average engineers who are still doing very, very mundane work. I think those engineering positions where mundane work is happening, that will go away. And this doesn't only apply to engineering, it applies to non-engineering work as well.
Yeah.
Wherever intelligence is required, wherever brilliance is required.
Yes.
For example, I don't think, Himanshu, anybody can replace you for the work that you do. Because differentiation is required there. So wherever differentiation isn't required, you're just doing mundane work, those will get replaced.
Right. So Anshuman, on that note, what kind of courses are available at Scaler that could really help a professional working in non-IT fields like me? And how can they really excel in their respective careers with the help of AI? Or one needs to really change the entire career trajectory to to become an AI professional, so to say? Right.
I mean, so firstly, I wouldn't say that all the courses that we have is relevant for everybody. If, let's say, you were somebody in non-tech and you plan to, let's say, build a career in tech or in data science or in analytics, or let's say you want to go towards a business role, then like we have programs for each of those. We have a program for business, we have a program for data science, we have a program for analytics, we have a program for software engineering and AI. People who are in tech, if they want to go deeper into AI and machine learning, we have programs for those. So if you're somebody like that, then I mean, I'm biased, but I can say with a lot of confidence, like there aren't many better programs in the country today. In fact, like one of the things that that we've been focused on is today I spend a lot of time working directly with some of the frontier labs, right? So the names that you keep hearing, I can't name them, but the big names that you keep hearing in AI ecosystem, like we directly work with them to improve their AI models. And whatever learning we have on how those models are improving, and hence what is the kind of talent that like is going to be required in the future, and what is the kind of talent that these model companies need, we keep changing or making those changes in our curriculum to make sure that that kind of talent is being produced from Scalar. In fact, like for this work that we're doing with frontier AI model companies, most of our hires come from Scalar.
All right, Anshuman. And also, Anshuman, you know, one criticism often leveled at a professional upskilling platform is the affordability. So how accessible are Scalar's programs for learners from middle class or even modest income backgrounds? And what steps have you really taken to ensure that financial constraints don't really become a barrier to acquire future-ready AI skills?
Of course. I'll break it down into two parts, right? Like there are two parts, which is one is what is the price of the program versus what is the accessibility of the program. Those are two different things and are often confused to be the one and the same. Pricing, I would agree, is on the higher side for most of Scalar programs. And the reason for that is if you want to create world-class programs, you want to have the best kind of people. In our case, those are practitioners, people who are actually building these large systems to come and teach. And like build the right kind of ecosystem, get the right kind of mentors in the ecosystem, and that requires like the right kind of money to be spent. However, on the accessibility side, one thing that we've been actually always very focused on is like how do we create the right kind of financing for people who want to enroll, so that the immediate financial burden on anybody enrolling isn't very high, and hence like it's easy for them to enroll in the program. Our outcome rates are very, very high. So we get a outcome audit done every year. And then like if you go on Scalar website, you'll be able to see that. Most people end up seeing like 2 to 3x jump in their salaries post the program, which helps in paying back whatever they had paid for the program. Unfortunately, like we would have loved to give the program for as low pricing as possible, but then it doesn't allow us to hire the right kind of people who can build a world-class program.
All right, Anshuman, understood. So Anshuman, now talking about business, so what's the road to profitability looking like for Scalar? Also shed some light on the fundraising plans as well for the company.
Sure. So the last report that we had published, or the last audit that we had done, we were already EBITDA positive. And the focus is again to increase the profitability margin as we go forward, because that's the only way the company gets built sustainably. What we're looking at right now is, so we are profitable. I mean, I can share exact numbers once we get the next audited report. Right now, I don't have a number off the top of my head. That being said, like the focus for the next 3 to 4 years is grow the revenue by roughly 3 to 4x, and make sure that the profits in the company are a significant portion of the revenue. And hence, like we build the business sustainably. There aren't any immediate fundraising plan because right now the company is well capitalized. We aren't burning any money whatsoever. So I don't know like what I'll do even if we do go and raise funds.
All right. Okay, Anshuman. So fascinating insights there. And the message seems very clear that AI isn't just changing the technology, it's really changing the very definition of work. So the winners may not necessarily be those with the strongest technical background, but those who really learn how to effectively work alongside AI. Thank you so much for joining us, Anshuman, and sharing your perspective with our viewers.
No, thank you. Thank you for having me.
Yes. So with that, viewers, let's slip into a very short break and we'll be back with more action on the other side.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Months after the government has allowed 100% FDI in the insurance sector, sources tell NDTV Profit that insurance regulator has received applications under the new regime. And my colleague Shrimi is joining us with more details on this.
Well, that's right. India's opening up of the insurance sector to 100% FDI is beginning to see strong interest from the global insurers. What we are picking up is that IRDAI insurance regulator has received 3 to 4 applications from foreign insurance players seeking approvals for acquisition, joint venture and ownership restructuring under the new FDI regime. In fact, among the these proposals under review is Prudential's plan to acquire 75% stake in Bharti Life Insurance. Also said that regulator has received this application last week itself and said to be examining the proposal, including the implication of Prudential's existing stake in ICICI. So under the current IRDAI norms, Prudential may have to reduce its holding in ICICI below 10% of the transaction proceed, as the current rule won't allow them to actually hold majority stake in 2 insurance entities. Now, sources further indicating that a handful of global insurers are already in discussion with Indian counterparts and are expected to announce partnership, acquisition and even the stake increase over the coming quarters. In fact, some preliminary queries have already been made to Department of Financial Services under Finance Ministry, and that indication is quite positive, as they are seeking some sort of changes in their ongoing talks. Now, given the interest emerging in the sector, industry expects significant changes this fiscal year itself. Just to underline, the space already been buzzing in the recent past. For example, Allianz has announced a strategic strategic partnership with Jio, Piramal Group and Shriram Group are exploring life insurance venture as well. Mahindra and Mahindra Manulife are also in active discussion. So overall, government officials expect the liberalized FDI regime to attract a lot of fresh capital, and as a result, a lot of action expected in the coming quarter.
Thank you so much, Rimi, for that. In fact, viewers, the Cabinet Committee on Economic Affairs is expected to meet today to consider a landmark banking transaction involving Dubai-based Emirates NBD and RBL Bank. So the deal, valued at around 26,000 crore, involves Emirates NBD acquiring a 60% controlling stake in the Indian private sector lender. And if approved, this would mark the largest ever foreign direct investment in India's banking sector, and also the first instance of a foreign banking entity securing majority control in a listed Indian commercial bank. So the transaction, announced last year, has already cleared key regulatory approvals and also includes a preferential share allotment, which is a mandatory open offer to minority shareholders, and also the integration of Emirates NBD's existing India operations into the RBL Bank.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Your portfolios are currently looking significantly better than they did in March this year, and that's because markets have rebounded quite substantially, particularly at the broader end of the spectrum. Mid-cap index is up as much as 18% from the 1st of April to now, and the small-cap index is up about 25%. So if you're focused on the Nifty 50 and you're trying to get that to tell you what the market is doing, well, the perspective is entirely different. But if you look at mid-cap and small-cap funds and you judge the performance that has been seen over the last 3 months, and you try to look back over the last 7 years or 5 years to see whether these very schemes rank there, the picture might actually be a little different. I'm joined today by Harsh Kumar of Zvest, and we're going to talk about some of these factors and how you should make your decisions when you're investing in broader market funds. Harsh, thanks so much for taking the time. Let me first ask you about the outperformance of mid-cap and small-cap. In your opinion, why is this taking place?
So Alex, before I start the conversation, you said the context very right that 2026 has not been one market, it's been three different markets: large cap, mid cap, small cap. And the investors have had very different experience depending on the pocket where they were invested. Now, before discussing what happened after 1st of April or 30th of March, let's see the correction itself. So from 1st Jan 2026 till the lows of 30th March, all the indices, Nifty 100, Nifty Mid Cap 150, Nifty Small Cap 250, corrected by around 13 to 14%. Now, the assumption is when the correction is same or similar, then the rebound should also be similar, but that's what it didn't happen. And like you mentioned the numbers, that mid cap and small cap delivered significant outperformance over Nifty 100, which was up around 10%. But here, I would also want to say that you can't paint all the large cap in the same brush, because if I look at large cap universe, a subset of it, which is Nifty Next 50, delivered 21% performance, which is higher than what mid cap delivered. Now, the problem in large cap has been the top end of the large cap. So we have an index called Nifty Top 10 Equal Weight. And for the purpose of viewers, it's nothing but top 10 stocks with 10% weight. And that segment or that index has delivered only 4.5% return. So what we have seen is that larger large caps underperformed significantly, because of which even Nifty 100 performance got reduced or got compromised. Now, let's look at what are the reasons on why mid and small cap outperformed. So first, and the obvious one, is earnings. Now here, rather than getting into last quarter's earning, let me take data set for last 8 quarters, because I need to have a sufficient sample size for me to arrive at a conclusion. Now, if I look at last 8 quarters and if I take adjusted PAT for Nifty 100 companies, there has been only one quarter, which was December quarter, where the earning growth was above 10%. If I look at the similar thing for Nifty Midcap 150, then for last 6 consecutive quarters, their earning growth has been more than 15%. Now look at the difference here. Now, coming to small cap, in small cap, we had the best quarter in September 2025. After that, there has been some moderation. But despite that, small cap has been holding on to double-digit earning growth for last 3 quarters. So earning difference is clearly there between large, mid, and small. Second is the correction itself. Now, while we're discussing the average correction, let me get into the stock-specific correction. If I look at the data as on 30th March, and if I take Nifty Midcap 150, 40% of the stocks on that particular day were down by more than 30% from their peak. And if I look at Midcap 250, Small Cap 250, then 40% of the stocks were down more than 40%. So what is happening here? There is a value which is emerging between mid and small cap, because a good number of stocks are down 30 to 40%. And when there was a relief rally on account of ceasefire, some of these stocks, because of value buying, went up going up. Third is the flows, which most of us talk about, and I'm sure many viewers would be interested in that. Now, let's look at the flows from 1st April till now. What has happened? Foreign institution investors have been net seller to the tune of around 1.5 lakh crore. Now, that's a staggering number. Within this, we don't have the market cap-wise data, which is released by NSDL or exchanges, but we get sector-wise data. And if I look at the sectors which have contributed to FII outflow, first is BFSI, where the outflow has been to the tune of 40% of this 1.5 lakh crore, followed by oil and gas, followed by large cap IT services, and then FMCG. Now, all these are a part of large cap and not of mid and small cap. While if I look at mid and small cap, DII flows have been very, very strong. If I look at mutual fund flows itself, last 63 months, we haven't had even a single month where mutual fund net equity flows were negative. Now, you have domestic institution piling on to mid and small cap, foreign institution leaving large cap, and that's the reason we are reaching this situation. Now, I must, before I end this question, I must tell our viewers also that at this point of time, there is a view which is emerging among portfolio managers where they are constructive on large cap and they are cautious on mid and small cap. So please don't try to extrapolate the returns of mid and small cap for last 80 days into next 80 months. So be careful about it.
Yeah, it's an important point that you raise. But having said that, Harsh, it must be pointed out, and I think viewers of this program have also pointed out in the past, that we tend to look at time frames to kind of judge the performance of mutual fund schemes, but the tendency is to look a little shorter. That's not what we're trying to do. We're trying to actually give you perspective on how mutual funds have behaved in a certain time frame, but we always do look at the longer term time frames. What I want to understand is you can actually outperform as a mutual fund either by falling less than the market when it is falling or rising more than the market when it's rising. Very few funds manage to do both. So when we look at the outperformance in this period where there has been a rebound, which schemes stand out?
So, Alex, let's first look at the universe itself. So first, mid-cap. There are around 33 schemes in mid-cap. And if I look at the data between, say, 30th March and 22nd of June, which was the day before yesterday, there have been 13 schemes which have outperformed the benchmark. And there are close to 5 schemes which have just been at par with benchmark. So we can safely say that there are 18 schemes out of 33, roughly 55%, which have either matched or outperformed the benchmark during this period. Now, the standout performers in this has been HSBC, Helios, JM, Invesco, and these have outperformed the benchmark by 5 to 9% in last 3 months. So if you try to extrapolate it on an annualized basis, the alpha would look significantly higher. Now, moving to small caps, there are 36 schemes. Here again, 15 schemes outperformed the benchmark and close to 5 schemes broadly matched it. Now, the picture is remarkably similar to mid-cap because here also 55% of the schemes either matched or outperformed the benchmark. Now, the best performing schemes in this have been JM, Bank of India, Motilal Oswal, and Helios Small Cap. Now, the interesting observation here is that apart from Motilal Oswal, which has a AUM of around 6,500 crore, all the other schemes have an AUM of less than 2,000 crore. And if I ignore Bank of India, all the other schemes are less than 3 years. So what is the reason for the outperformance? A common thread across most of these funds is that they have been relatively low on cash, where a certain fund manager took calls on cash. Second, these were the funds which didn't have higher allocation in large cap. Now, the viewers may question why large cap, because by the mandate, mid cap and small cap, they are bound to have 65% of the allocation in their respective market cap categories. But there is a freedom with the fund managers to play on the remaining 35%. In order to manage liquidity, in order to manage risk, they have some part of that 35% into large cap. And wherever that was on the higher side, those funds underperformed because 4.5% performance by top 10 stocks dragged that down. Now, again, I must question the viewers here that 3 months performance, like you mentioned, is not an indicating of long-term return. So you need to look at long-term return to arrive at a conclusion.
So therefore, the question arises, you've pointed out that quite a few of these schemes that are outperforming, Harsh, don't have a very long history. But if you look at the broad space as a whole, if you think about those that are in the top quartile, how have they done where relevant and where the history exists over the last 3, 5, and 7 years?
So, Alex, again, for small cap, I can't do justice because, like I mentioned, almost all the schemes other than Bank of India are less than 3 years. So let's ignore small cap and not analyze it because it may give a wrong picture to the viewer. In mid cap, if I look at, again, we have out of the top 4 performers, Helios, which is 15 months old, JM mid cap, which is 3.5 years old, where again, we don't have a performance track record of 5 years and 7 years. But if I look at other funds, which is HSBC and Invesco, for last 3 years, HSBC has done quite well in terms of performance. Whereas if I look at Invesco, this has been much more consistent over last 3, 5, 7 years. Now, again, for viewers, the test of the fund is not how it has done in last 3 months or 1 year, but it's a question of long term. And sadly, here we don't have enough data points for these top performers on how they have done over a longer period of time because they were not existent for this period.
We'll circle back to that. We've spoken about the outperformers, Harsh, but what about those that are not necessarily doing well? Are there schemes that have ranked, if you look at the longer time frame, say 5 years, 7 years, in the top quartile, but over the last, say, 6 months or even in this outperformance period, are ranking in the bottom quartile, and why?
So this is a very interesting question, Alex. So let me take mid-cap first, because this is relatively less interesting than small cap, and I'll come to that. So in mid-cap, there are 2 schemes which have underperformed YTD and which have been consistent performer over a longer period of time. And one is HDFC Midcap and second is Motilal Oswal Midcap. Now, if I look at HDFC Midcap, it is also the biggest midcap fund in the industry at an AUM of 97,000 crore, while Motilal Oswal is the 4th biggest, again with a sizable AUM of 36,000 crore. Now, if I see the performance over longer term, HDFC has been very, very consistent. If I take any time period from 1 year to 10 years, there has been not even a single time period where HDFC underperformed benchmark. While we can't say the same about Motilal Oswal because last 3, 4 years, it's been having a little rough patch. Now, if I look at small cap, it's very interesting, like I mentioned. Top 8 funds by AUM in these categories have underperformed the benchmark. And to name a few, Nippon, Tata, DSP, Kotak, Franklin, Bandhan Small Cap, SBI, Axis, HDFC. Now, if I look at these funds for a longer period of time, funds like Nippon, HDFC, SBI, Axis, they have a very, very good track record for 5 to 7 years and even 10 years plus. Yet they find themselves in lower quartile. So what could be the reason? So one reason is that when the fund become large in this space, there is a drag which starts applying to them. So like we discussed earlier, 65% of the money has to be kept in small cap. But beyond that, to manage risk, you have to take some exposure in mid and small cap and in a mid and large cap. And in a time period where large cap significantly underperformed, these funds end up having underperformance. Second is that some of these funds have become very big in terms of the number of stocks they play on. So let me take an example of Nippon and Bandhan. Now, both of these funds have close to 250 stocks. Now, if you are managing 250 stocks, the ability for the fund manager to play active share reduces significantly. And that also leads to a situation where in times like this, you end up underperforming.
Yeah, it's a good point. Okay, I do want to also ask you about the volatility that these schemes have displayed. And this is a measure of standard deviation because a lot of people jump into small cap because they have the potential for higher return, but the experience is not necessarily very great if you don't have the staying power. And there can be a situation where it can lose a lot of ground very quickly. So what are the standard deviation readings on these?
So Alex, I'll just take 30 seconds to explain what standard deviation is. Now, standard deviation being high or low does not mean that the fund is good or bad. Standard deviation is just about dispersion. Just to give an example, there are two cricketers. One always scores between 30 to 70 runs in all the innings and remains very close to average of his career. That is the low standard deviation. While there is another cricketer who scores 10 runs in first match, 100 in second, 0 in third, 200 in fourth. That cricket is also equally important, but it has a slightly higher standard deviation. And that's what funds also display. Now, if I look at mid-cap category, in last 3 years, and here I've taken standard deviation data for last 3 years, calculated on a daily basis, most of the funds have been in the range of 14 to 17% in terms of standard deviation. The benchmark standard deviation is 17%, which means most of the funds have been having lower volatility than benchmark. HSBC, which has been the best performing fund for last 3 years, coincidentally has had the highest standard deviation at 18% plus. Now let's look at small cap. And again, very interesting observation. There has been not even a single active fund which over a period of last 3 years has had standard deviation more than benchmark, which means all the active funds had lower standard deviation than benchmark. Now, you could immediately jump to a conclusion and say that, look, active fund managers are doing a very good job because they are not just giving returns, they are also managing the risk. But there is a technical reason to this also. Small cap index is always into small cap stocks to the tune of 100% allocation. While in small cap mutual fund, you can have 10 to 15% allocation in large cap also. And large cap, because they are less volatile, at a blended level, your standard deviation seems to be on the lower side. Second reason where I should give credit to the fund manager is that many active fund managers, they reduce the portfolio size in a way where they remove allocation into speculative stocks which have higher standard deviation. Now, when you remove those stocks, definitely the standard deviation of the portfolio come down. So as a result, most fund looks better on this. But ideally, I would want to compare a fund which has all the stocks in small cap versus small cap 250 index, which is not there in the industry at the moment.
Right. But and we're running out of time, but Harsh, the bottom line, right, which is, what should you do with this information? And that's why we say that we have actionable insight on this show. So what you've told us is that the schemes that have outperformed over the last few months are those that are smaller in size, that are more nimble, that don't have large cap allocation. But should you extrapolate that to make your decisions on incremental investments? How should you decide? And do you have any schemes that you're recommending? Not necessarily recommending, but those that you like.
So, Alex, I would always say that we should look at any category of funds over a one market cycle. And for small caps, the market cycle can be really long because if I look at the time period from 2008 till 2020, which is for a period of 12 years, small cap index in itself delivered less than saving bank returns. So the index return was 3.1% average on a CAGR basis. So you should be very cognizant on where you're betting and what has been the track record for the fund for 5 to 7 years or even longer. And sometimes having some cash, sometimes having some allocation in large cap is helpful also, because we have seen situation where certain small cap, not mutual fund but PMSs, were not even able to honor the liquidity commitment during 2018 to 2020 period. So I would suggest viewers to look at risk parameters as well. So to suggest a few funds, like I was saying, that if I look at long term picture, we have Invesco, which has done well in mid cap. We have HDFC, which has done well in mid cap. If I look at small cap, then Nippon has done quite well. And coincidentally, this is also one of the biggest fund in small cap category. And then we have other funds like Bandhan, SBI. SBI has been lagging a bit for recent time, but the fund management is really good.
On that note, thanks so much for taking the time, Harsh. Pleasure speaking with you.
Thank you, Alex. Pleasure's mine.
We have to slip in a very quick break. On the other side, we talk about whether you need life insurance when you take a home loan. Stay tuned.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaning.
Welcome back. What are the rules that govern the requirement for life insurance when you take a home loan? That's the question that we're asking on this segment. And we're asking whether, one, a bank can force you to take a loan, take an insurance product. And we're also asking whether it makes sense for you to take an insurance product. I'm joined by Vishal Dhawan on this leg of the conversation. Vishal, thanks so much for taking the time. So this is something that a lot of people anecdotally talk about, saying that they went to a bank for a loan and the bank said the loan is conditional on you taking this insurance product as well. Is this something that you've come across?
Yeah, so I think it's a fairly common thing. Thank you for having me over. I think it's it's a critical item to sort of distinguish between. On one side, I think it's very, very important that people who are taking loans are clear that they have the ability to, number one, service the loan that they're taking, and number two, in case there is an unfortunate event that they have to deal with, there is an ability for their family to be able to be covered from the risk that this loan still needs to get paid back, even though the life situation may have changed because of an unfortunate event. So I think what banks do very often is they're coming from the right place in terms of asking the question, saying that, should I have a life insurance cover to cover that risk. Because especially when you take homes, for example, and home loans, which tend to be a very common place where this insurance requirement comes up, the value of the home that you're buying could be substantially more than your current net worth. And therefore, what ends up happening is if something did end up happening to you, there isn't enough resources available with the family to pay back that loan itself. And by putting the loan, getting backed by an insurance plan, in case that event happened, the insurance company would pay back the bank and protect the proceeds. What typically ends up happening though is that because there is sometimes a insistence on a particular type of loan to be taken, or that quantum of the loan is done independent of the rest of the financial situation of the family, it can appear to be an overkill in terms of this request and this demand.
Yeah, okay, so that's a fair point. But if you simply look at the logic of this, and if you say that there is, and usually these are mortgage loans, Vishal, in cities like Mumbai and Bengaluru and all of the metro cities, these can tend to be very large loans. And of course, the argument can be made to say that the loan to value, which ultimately is what decides how much you can borrow alongside the mortgage, which is the value of the house, is usually less than the value. It has to be less than the value of the house. So you're covered in that sense. But why is it a good idea to have that kind of cover?
So I think there are a few drivers on this which we need to keep in mind. Number one is that the bank is never lending you because of the fact that, you're going to buy a house which they can liquidate. So the house that is at the back end is more a security that can be liquidated if needed. But for everyone who has dealt in the real estate market, they will know that liquidation of real estate is not an easy process because there is no efficient price discovery mechanism. It can take a lot of time for that liquidation to happen. And the processes and paperwork involved in that can be pretty substantial as well. So what you will normally see is the banks are not just looking at the loan to value as the cover, but also saying that if I had to get back that money that I have lent out, because that loan that I gave out was given on the propensity to repay the loan. That is why I looked at the income documents of the borrower. That is why I looked at their past repayment history, etc. The existing property is only a additional cover that I have available in case everything else fails, and is not the primary backup system that I'm going to build on this entire process.
Okay. Now, when you look at how much term insurance you need, this is something that should probably feature in your decision as well. And ultimately, we're talking about term insurance and no other form of insurance, aren't we? Because usually if you're talking about money back policies, etc., then the life insurance component in that is pretty small, isn't it, Vishal?
Absolutely. So I think it's very clear that, the need for insurance is something that needs to include all your requirements of insurance that may be there to cover other goals that you may have besides this home purchase goal. And the most efficient way to buy this insurance is typically through term insurance. Now, specifically with the case of, loans that you take to buy a house, for example, one of the realities around loans tends to be that even though people may end up taking 15-year, 20-year, 25-year loans, a lot of India is very uncomfortable with having long-term loans. And you'll therefore find that a lot of these loans actually end up getting prepaid within the first 6 to 8 years after taking the loan. And therefore, when you take your insurance policy, you need the flexibility that this loan that is a very large loan that you're taking today is something that may be temporary and not last the whole 15, 20, 25 years. And therefore, I don't want to end up paying premium for that long, even though the loan doesn't exist. So the advantage of a term loan policy is that it gives you the flexibility that as long as you have your mortgage being paid out, you have the loan which is being serviced, you have the insurance cover matching to that amount. As that changes over a period of time, you have the flexibility to reduce your term loan amount as well, because you may have bought multiple policies and not a single policy. So you stop paying premiums on some of them. And second is that once your loan is over, if you don't have the need for that insurance coverage anymore, you can stop it, and therefore you're not locked in by default just because maybe 6 or 8 years ago you took a large value loan which needed to be protected against a life event risk.
Yeah, that's an important point, actually. And so, in your opinion, if you've ultimately, what is the purpose of a life insurance? You're shifting the risk of you passing away and future cash flows not being available to your dependents. So, if you've saved up a large amount of money, and if your corpus has grown over a period of time, at some point you might just decide that you don't need this life insurance. Is that something that people should actively consider?
Oh, absolutely. So the way to think about it is that there is no one standard method of life insurance. So unlike health insurance, where one might say that, everyone needs to have health insurance because you don't know what exactly will happen, how frequently it will happen, etc., etc. In the case of life insurance, it is essentially the gap between what you have already and what you need in the future. Insurance comes in and fills that gap, the life insurance piece. Now, once your values have gone up and what you need is more than supported by what you have, you probably don't need life insurance anymore, and therefore you can let it go. One important consideration, though, to keep in mind when you're thinking through this is how liquid are your assets, which you're assuming are the assets that you have. So if you have multiple pieces of real estate and therefore your total net worth is high, but your liquid assets are quite low, then maybe you still need the life insurance, because to liquidate those assets to pay back the loan might take its own time.
Yeah.
And in the meanwhile, the cash flows may not be available.
That's a fair point. All right. So we've had an interesting conversation. Vishal, as always, thank you so much for taking the time.
My pleasure. Thank you so much.
All right, let us know what you think about the conversations we've had today. And if you've got ideas that you think we should discuss, then let us know in the comment section. In the meanwhile, stay tuned. This is NDTV Profit.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital, joins in right now on the show. Sandeep, great having you. Thanks so much for taking the time out and being with us. Neeraj here, good morning. I believe you guys had a conference, your annual India Investor Conference, in the last 2-3 weeks sometime. Tell us, what has been your view by and large? Was it reinforced at the conference when you spoke to companies as well as your clients alike? And what's the post-conference outlook?
Well, we had the Asia conference, which happens every year in Hong Kong, and we have companies coming in from India and for the entire Asian region. And the outlook as far as India is concerned actually was completely benign and in fact a bit positive. We didn't see, we are not seeing companies showing any stress in top line growth. We are not seeing banks report any, any issues with non-performing loans with the MSME sector. So I think the sense one got is that for now the business is still strong. I think on a run rate basis we see automobile numbers all hold up well. Consumption was also broadly fine. So that's the message I got. But what I, of course, was very interesting was what the rest of the world, rest of Asia is seeing. And the whole focus was AI, chips, and Korea and Taiwan. And the biggest question was, how long will this AI rally last, and whether India can perform this year. So that was the real, interesting part of this conference. But underlying fundamentals of India seem to be holding up well.
Sandeep, so whether India can perform this year or no would be a factor of what the Nifty does, or will India set to have performed even if Nifty were to flatline, but individual pockets do well? I mean, normally people say don't miss the forest for the trees. Is this the time to let go of the forest view and focus on the trees?
Yeah, I would tend to agree with what you are saying. Actually, we are seeing a lot of movement and positive wealth creators below the Nifty headline stocks. So to that extent, yes, I would agree. But, finally, if you look at foreigners or large institutional investors, their exposure is still with the large cap stocks and Nifty and all these large movers. So to say that the market will continue to perform if these indices flatline may be a bit challenging, but that doesn't mean there's not opportunity below the headline stocks. That's the way I see it. But finally, the large institutional index players, so on, will still always look at the Nifty, and comparisons will be made across countries on headline indices.
Sandeep, Alex here. So therefore, that begs the question, couple of questions actually. One, if you're saying that the underlying growth, top line growth, and for banks, the asset quality, etc., is looking benign, it's looking good. So therefore, can the argument be made that the underperformance of large cap India vis-a-vis various other countries because of the favor that AI has found, when that unwinds to a certain extent, which to a certain extent we're already seeing, we'll see that catch-up trade? That's one. And two, is there still room at the broader end? Because we've seen at the index level itself, Sandeep, since the start of April, 25% on the small cap index, 18% on the mid cap index, and much more in the way of individual stocks. Is there still room on the valuation side?
So, I think there are two parts to your question. Yes. So one, whether India will see the catch-up trade. I think India can see the catch-up trade, but in the interim, India will see pressure. We are seeing pressure come through because, stocks in the region are coming off. So if there is a broad-based sell down in the US or in Asia, I mean, essentially the US, because if US sells off, then Asia will sell off, and then India will also sell off in the interim. Because on the large cap stocks, there's not still much big valuation comfort, or there's no real expectation of big earnings surprises. What I said was that we are doing fine. That doesn't mean we are going to surprise on the upsides in terms of earnings and fundamentals. India itself has come through a difficult phase on all prices. We've seen RBI cut its GDP growth numbers. We've seen RBI raise its inflation expectations. So net, while India is doing broadly okay, we are not going to be a big surprise. So the catch-up trade can only happen if there's an earnings surprise or there's real valuation, a comfort in terms of the valuations are very cheap. So I would think that in the near term, India will therefore remain in line with the market movements overseas, especially US and Asia. And then if we see real valuation comfort or earnings surprise happen, then we can see earnings, the market start catch-up trade and the reverse trade. As far as mid cap, small cap, yes, but these are very specific and very individual company driven. So to that extent, you need much more due diligence and much more research than some of the large caps, which are known items and have much better quality of disclosures and management. So the risks are higher in these.
Fair point, Sandeep. Let me ask you about your earnings expectations, right? And a lot of people are contemplating what the impact of the West Asia crisis will be on Q1 and what bearing that will have on the rest of the financial year. And I guess to a certain extent, we'll know in the next 2 to 3 weeks, right? At least we'll start to get to know. What is your baseline and what would surprise you on the upside, on the downside?
I think the baseline is around 12 to 14% earnings growth for the reported indices, but the real issue is whether we'll see margin compression happen in especially the reporting which happens in July. The June reporting, will be June margins will broadly hold up because I think the raw material inventory was at lower prices. So historical lower price inventory will come in and probably boost margins for the July quarter. But the July to September and October to December quarter is where the margin compression will come up. So that's what we need to watch for. So maybe, it's not in the next 2 to 4 weeks that we'll see margin and earnings compression come through. We'll probably see after the July-September quarter.
So that's with regards to overall markets. Sandeep Hiral here. My question to you is with regards to banks, because we were just looking at what's happened between PSUs and private banks, and your private bank underperformance is something which has continued. What is it that will take the private banking space to actually break out of that narrow range? And to add to that, you need some things that will be done at the global level as well. Like, for example, if you look at the Fed, people are expecting something from the Fed. You are seeing something that will translate into, what the RBI does as well. So overall, what is it that you're watching out for to start seeing private banks move now?
Well, I think the banks sector as a whole is doing fine. The private banks are essentially marred by one large cap bank, HDFC Bank, which has been a large underperformer. So if we see that change, then I think the private sector banks will come through. In fact, everyone thinks that the US should see a rate increase by the end of this year. India may also have to do a rate increase if all around the world we see rate increases just so that India's currency doesn't come under pressure. Broadly, NIMs for banks will actually be in a good place. The loan growth we are seeing across the board come through much stronger than it has been in the last couple of years. So banks' earnings will do actually better than average. The real question is whether we'll see some of the large cap private sector bank names start performing. If that happens, I think the entire private sector pack will also perform.
That's an interesting point that you make, especially when it comes to an HDFC bank, and that's what Neeraj was pointing out as well in our earlier conversations. The other question I have for you, Sandeep, is with regards to where CAPEX goes. Now, if you have to look at the corporate credit growth as well, how is the current pace of the kind of government CAPEX that you're seeing impacting your near-term corporate credit growth? How are you looking at that entire schematics of things play out? Because the West Asia crisis is something did put a lot of things on the back burner. There are jitters amongst within corporate India as well as to on what direction to go to. So how are you looking at it?
So we did actually a couple of tours also after the Asia conference. We've done West Bengal tour after the change of government. We also did a pharma tour in Hyderabad and Bangalore. And all across, clearly CAPEX plans are still ongoing. There's no big rollback, but I don't think that the entire bank lending growth will be driven primarily by CAPEX. It will still be driven by retail loan growth and private sector and individual loan growth. To that extent, I think as far as the economy holds up, there should not be a problem for banks.
Sandeep, I do want to ask about the earnings and what you referred to when you spoke to me, right? And you answered with regard to your expectations on earnings, and you spoke about margin compression. One of the features of the last few quarters has been the resilience in margins, and in several situations, pretty decent expansion in margins, but the top line growth was in question. Generally, when you have pressure on commodity prices, various other issues coming through on that front, the tendency is to gravitate towards market leaders because of the resiliences that they showcase, right, in their individual sectors. Is that something that you anticipate will play out in the first and the second quarter earnings?
So I think the large cap can show earnings resilience to the extent that we don't see margin compression. I think that may happen in the commodity sector, which have seen price growth. But I think we'll have to wait and see, and it would be a positive surprise if margins expand in the September-October reporting period. So if we see that happen, that would, at least to my mind, be a positive surprise for the markets. I would still think that there would be some margin compression in manufacturing come through in the second in the July-September period. Definitely, that's what I would expect, because the margin expansion which we saw in June was essentially due to lower priced raw material inventories.
Sandeep, there is one concern, maybe because of the delayed monsoon plus all that's happening in the conflict, so on and so forth, that the second half of the year might see a reduction in demand and finances for the household, for the state, for the center, etc., and therefore consumption may as a whole suffer, and therefore this 18-19% earnings growth being penciled in at the start of the year for FY27 might well come off, independent of the conflict as well. By the way, where are you on this argument, and therefore do you believe that if that were to happen, there is a downside risk to the headline Nifty levels as well, and therefore some of the other sectors might also get pulled down along with?
So we had a conference call with the chief economic advisor, Dr. Nageshwaran, and he said some very interesting points. He says that the fiscal deficit, the government wants to keep it under control and borrowing under control. We've seen these public sector OFSs happen to raise more revenue. India generally has missed its divestment target, but we are actually doing better on a run rate basis for the current year than we have done for a long time. So to that extent, the government is aware of the fact that there could be pressures on consumption, there could be pressures on top line growth, which is what you are asking me. We'll have to wait and see the interplay of factors. Right now, I would not think 18-19% earnings growth happens. I would think 12 to 14% earnings growth happens. And mostly the large cap names, undershoot in terms of earnings. And if that happens, the headline Nifty, as we have discussed in the beginning, would basically be flatline or single-digit returns at best. But under the hood, there is still strong fundamentals, strong growth happening in the economy. There's no real large cause for concern. If the physical supply of LNG, of oil, as we now expect and now see, comes into India, most of the pressures that we anticipated, India will be able to tide through by September, November. The real issue is now, how rainfall can hit consumption and agricultural output and broad consumer staple demand. So that's the only negative variable that we need to monitor.
Okay. Sandeep, that's on the consumption side as well, what we need to monitor. My question to you now is in terms of IT. Overall, the word on the street right now is that probably once you see the AI demand, or not demand actually, the euphoria around AI and the global markets tapering to some extent, then is when you will see that momentum pick up in terms of Indian markets as well. Currently, what is your stance if you have to look at Indian IT players, may it be large caps or mid caps, because it's a very divided view that everyone has right now?
So IT is clearly a pain point for this market. And in the interim, that doesn't change because the entire AI food chain, primarily starting from the hardware suppliers, are making a lot of money. Hand on heart, I don't think anyone exactly knows what is the medium to long-term impact of AI. We have leaders such as Nandan Nilekani say that India will actually benefit. I don't think anyone can, as an investor, I would basically continue to be a bit cautious. I've seen all kinds of meltdowns happen. We saw that happen after the Y2K boom, and everyone said that now there would not be any work. We saw that in the financial crisis in 2008 when IT budgets for banks and financial institutions were being cut, because that's the largest client segment for IT companies. And if they see cuts there, then there's clearly trouble. And now we're seeing the AI-driven issues on the entire IT sector. I would not be as bearish as what the prices are currently indicating. But this is clearly a transition period, and that transition period could well last for the next couple of months. So wait and watch, but it's not completely bad news in my view.
Sandeep, just to follow up to that, and of course, your focus is obviously India, but I do want to ask whether you have an opinion on this global dialogue, and you had people like Ashwant Damodaran weigh in and talk about the entire AI boom and what has happened to risk assets therein, and what the implications are. You referred to the dot-com boom and bust, right? And he juxtaposed the two, and he said that if there is a bust, it would be far worse than the dot-com bust because of the kind of capex spend that people are doing or companies are doing, and they're funding it with debt. If there is a bust, and nobody knows whether this will happen, what are the implications for India, which has missed this entire rally in the first place?
So exactly, I think that's the most debatable and the most important point. As I have said in the beginning, it's going to be Asian markets, US markets, which will decide the headline performance for India. Though despite that, broad economic fundamentals look good. So to answer your question straight up, I think if there's a major bust and there are real financial issues, fiscal issues in the US, then all markets will suffer, including India. So that's what I would think would happen. It's impossible to predict when and what is the extent of this blow up, and if that is something which is long lasting in terms of its fiscal impact. Clearly, in 2008, when there was a major financial crisis globally, every market fell off, and so did India. India did better eventually than other markets, and that's what I would think would happen if there's an AI bust up.
So thank you, Sandeep, so much. Your views are always welcome and always a pleasure to speak to you on NDTV Profit.
We're joined by Vijay Anand Ramamurthy, who's the Managing Director and Chief Executive Officer of the bank. Mr. Ramamurthy, thanks so much for taking the time. First, this is obviously a fundraise. It will add to the Tier 1 capital. What is the plan here?
Thanks a lot. It's just an enabling resolution. We have been taking this since 2009. We have utilized only once in 2013 or so. It's just the enabling resolution we have taken, and it's more of a formality.
Okay, so it's procedural. Where does the Tier 1 capital currently sit at, the CAR? How does it stand?
We are almost at 21.5%, as you would be aware. So now I need much capital.
Yeah, very, very comfortable from that perspective. Can you give us a sense of what the situation is on the ground? Because everyone is taking notice of the fact that banks are resilient on the asset quality side, but the real question is, how has the credit side moved? What are the signs that you're seeing, sir?
The growth is stronger. In fact, the portfolio has been behaving very well. I think whatever the MSME performance has been exemplary. We did not see much. I can speak only basis the numbers what we have got. I think the numbers are looking phenomenal in terms of portfolio behavior. And in terms of growth, I think our asset quality growth has been pretty good. The growth is stronger. The margin looks decent, and looks like we are as per the plan.
Mr. Ramamurthy, we were talking to an expert who did a lot of on-ground checks and suggested that despite the conflict, the asset quality, the disbursements, etc., have all stayed okay, predominantly for large banks and housing finance companies, but he extended that argument to well-run mid-sized banks as well. I would love to know, what is your experience been for what was arguably the troubled quarter, which is April to June?
Absolutely bang on. The portfolio behavior has been phenomenal. As you would be aware, we closed last year with SMA 012 at 2.5%. And even this quarter, we are running at the right direction. I think the asset quality has been phenomenal, and the bouncing back of MSME has been excellent. And over and above that, the ECGLS rolled out by regulator is absolutely fantastic. This is helping the MSME sector in a big way. As of now, the figures are quite comfortable. I don't see much disturbance on the portfolio behavior as we speak.
So here's the question, sir. Most people say that even on the earnings front or the growth front, we were doing very well as a country, but for this conflict to come in. Now that it's showing signs of receding, and if during this quarter as well things were good, can things become better in the next 3 quarters, or do you foresee a bit of a consumption slowdown ahead?
I'm quite optimistic on the growth because if we have managed this crisis well, and there is a good demand on MSME, I think I'm quite confident and optimistic for the next Q2, Q3, Q4 as well. I don't see much issues because the growth is stronger, as I said a couple of minutes before, and margins have been stable. We don't see much issue. We are quite optimistic on this front.
Okay.
And whatever we are speaking is as per the figures what we have got. I think this is quite good, encouraging.
Absolutely encouraging, and we'll speak very soon, Mr. Ramamurthy, to talk about your Q1 results, and I'm sure that we'll have a more detailed conversation at that point. Thank you so much for taking the time.
Thank you.
Hello and welcome to another NDTV Profit exclusive interaction with Sadhan's newly appointed chairperson and the MD and CEO of ESA Small Finance Bank, Mr. K. Paul Thomas. Thank you for joining us, Paul sir. First question, what would be your immediate priorities becoming the chair? How would you like to address and go ahead the issues that are pertaining to the MFI industry?
Thank you, Piyush. Thank you, Piyush, for having me on this show, and thank you very much for your support for promoting financial inclusion in this country. And for Sadhan is an association of impact finance institutions in our country. Also, Reserve Bank approved a self-regulatory organization. So for the immediate priority, because you know, so the microfinance sector has been going through difficult times for the last 2 years. So ensure adequate funding for microfinance institutions, specifically for smaller microfinance institutions, because smaller institutions mostly depend on bank funding. So Sadhan has been working to increase the fund flow from banks to smaller institutions. So newly, Government of India has announced a new credit guarantee scheme for small MFIs. So I hope that will definitely improve the fund flow. It's not only fund flow. The second is the skilling, the capacity building and skilling of smaller institutions. Along with NABARD, Sadhan has launched an MFI acceleration program. Around 21 smaller microfinance institutions are part of this project. Through this project, we hope to build the capability of the member institutions. And also, we have been doing regularly for the last 25 years that providing support for timely guidelines, issuing guidelines to member institutions is also one of the priority. So we wanted to be really work as an accelerator for improving the financial inclusion landscape in our country. So the last year data shows that only 15% of Indian adult population have access to formal banking arrangement. So across the country, it is globally, it is more than 24%. So we have a long way to go to match up with the global scenario. So we will be promoting more institutions to come to this space, and also to encourage our member institutions to go to newer region, unbanked locations, underserved locations. So last 2 years, the from the microfinance member base or the borrower base have been shrunk from 83 million to 63 million. So there is a scope for bringing them back to the fold. That is another priority which we will be taking it up. And new to bank customers number also has been shrunk for the last 2 years. So that is also one of the priority area for Sadan.
Thank you for taking time out. That was Mr. Paul Thomas in his exclusive chat with NDTV Profit.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market.
Hello and welcome to The Big Question. I'm Vikram Oza, and tonight we're asking this question. Honasa, betting on beauty supplements. So now the real question is, are capsules going to sell more than creams? And let me put that in context. This is why we're asking. The parent company of Mama Earth, that is Honasa, has announced its entry into India's fast-growing nutraceuticals market. They've acquired a 58% stake in Fluence Pharma, and this is at an enterprise value of 135 crore rupees. Honasa has these big plans. They are to buy the remaining stake over the next 5 to 7 years as well. So now their bet is on the future of the beauty business. That the future may not just be what you apply on your skin, but what you actually consume. You're talking about ingestibles. So this is a significant shift for a company that has been built around the success on skincare, of course, personal care products as well. What about Fluence Pharma? Now, this is a company which brings patented cyclical nutrition therapy, which is this strong dermatologist network. It also has a science-led approach to hair and skin wellness. So Honasa, meanwhile, believes that the next decade of beauty is going to be driven by the convergence. The convergence of what? Skincare, wellness, and nutrition. So these three coming together. So the opportunity is tempting. Yes, India's nutraceuticals market is already valued at more than 16,000 crore rupees. That's quite substantial. Consumers are increasingly embracing preventive healthcare, wellness supplements, collagen powders, gummies, and the so-called beauty from within products. So that's selling. But we pause to question if capsules and supplements can really become a mass market beauty category. That is why the question, is the science robust enough, or is this clever marketing which is dressed up as healthcare? And can an FMCG company successfully navigate a space where clinical evidence, where doctors, where regulation matter far more than branding and advertising? As FMCG giants from HUL and Marico to Dabur and Nestle, all these FMCG companies are deepening their wellness ambitions. The reason we are asking is this: if Honasa is betting big on the future of the beauty business, is this a strategic move, or are we looking at the future of beauty building into a certain kind of hype? That is the real question. Let's take it across to our panelists and let me introduce you to them. Joining us on the show, Dr. Dipali Bharadwaj, dermatologist and skin longevity specialist at Elska Clinic, and Manisha Chopra is with us, founder at Sea Soul Cosmetics. Great to have you both with us. Manisha, to you first. Honasa building this business. They're selling products where people apply stuff on their skin. Now it's buying into products that people actually consume. You think this is a natural evolution of beauty, or you think it's a completely different business altogether?
So I would say it's part of the whole beauty business, because I mean, there has been times, and all of us, we love to apply skincare, and that's something not going anywhere. But apart from that, people are much more active about what should be, like, if they want to have anti-aging. So what extra can they do apart from just applying some creams? And that's where they would like to have some collagen nutraceuticals or some kind of supplements. Or maybe if they're having a hair fall, they want to have a biotin as a supplement. So definitely it's somewhere connected as a part of the whole beauty business. I mean, it's definitely not separate altogether, but it is an addition. It is
you're saying, so both perhaps are going to coexist. Dr. Dipali, do you agree? From a dermatologist standpoint, how real is the beauty from within, that proposition? How real is this? Are supplements genuinely changing outcomes in skin health, in hair health?
Well, Vikram, I'm a strong believer of, your skin being the mirror of what's happening inside. So there is no beauty actually outside. And these nutraceuticals definitely have a strong holding, strong way for a good skin or a glowing skin. But very important with it will always remain what you're eating, your lifestyle, what you're breathing, how you're spending the day. Just relying on nutraceutical will not give you good health or good skin. So it's all a combination factor, which these companies should always remember when they're marketing their products. It's not that they just, they tell clients and people on their viral reels that you eat a supplement and you'll have shiny skin, better sleep, better sexual life, etc. It doesn't happen like that. It's going to be a lifestyle package which people should remember, not buy a dream.
So if there is a lifestyle shift that's happening, Manisha, explain this to us. Now that you're watching consumers spend on collagen and biotin and gummies and these wellness supplements, they're doing it like never before. But what is driving this shift? How much of it is actually backed by science, you would say?
So I would say it is definitely backed by science, but at the same time, it is also the awareness. The consumer today is much more aware than when we compare to our parents or grandparents. So today's consumer, I mean, they know what they want and how to get that. They'll just go a step ahead to be able to, achieve that. So if they want, as I said, if they want to have, like, say, skin lightening effects, or they want to have anti-aging, they will see that, okay, what else can I do? Definitely some dermatologist treatments, or along with that, is there some supplements that can help them to be stronger, doing things differently from what their parents had been doing all this time.
Suryansh Kumar is also joining us, founder and chief executive officer at Elevate Now. Good to have you with us as well on this discussion, Suryansh. You know, we're talking about a 16,000 crore rupee plus nutraceuticals market here in India. So now it's attracting everyone, from FMCG to healthcare companies. Everyone's interested. Is Honasa early to what could be a major trend, or you think they're simply following the crowd right now?
I think it's a bit of both. The trend is in the direction where nutraceuticals will become more effective as they're cohortized to your particular needs. And they will become mainstream because the need for instant gratification, the need for effective results is going higher and higher in the market. And these nutraceuticals can definitely give you better results because they can be personalized to what your needs are. And that's something which I believe is in the right direction. It's a trend which is catching up right now. And I think Honasa is in the right direction in there.
So you think they're moving in the right direction, and perhaps this coexistence point that has been made. But Dr. Dipali, is the evidence for most beauty supplements robust enough at this time, or is the marketing currently running ahead of the science?
Not really, some of the products are amazing, and unfortunately, many of the amazing products don't exist in India. We have to still stock them from abroad, like, say, supplements like NAD of 1000 mg, which is a normal standard adult dose, isn't available. So definitely there's a lacuna, and I hope that Honasa, being a big brand, is not going to come up with just proteins and collagen, which have already flooded, and some excellent qualities already exist in the market. But there is a huge gap which I see in the scientific thinking, research, and already proven products of wellness which are yet missing.
So then, would you agree that there are some exaggerated promises too?
Oh, yes, of course. And I strongly believe, and very unfortunately, I often meet patients who are, who've bought those viral reels, and they believe that if they're going to take this, or, they really think it's like a candy, all these gummies.
Yes.
And they feel that if they're on it and they're going to have shining skin, good hair, good nails, they don't even need a dermatologist. They don't need to eat iron or supplements. I think there are a lot of fake promises, and government should bring in really strong, the way these companies are coming, government should also bring in strong rules that there should be some sort of disclaimers. People talking about these supplements should be qualified professionals or having some background, not just everybody who's become a health influencer today. And that is leading to a lot of misery for the middle class, I would say, who are, really spending a lot of money and not getting results.
So how do we set that right over here, Suryansh? How much responsibility should brands actually have? Can we institutionalize that in the separating of the genuine benefits, perhaps, from the exaggerated promises that are often made? You see so much social media on them, and then you buy into it.
I think there are two parts to it. If you look at it from a perspective of information overload for the user, there will be a time when you will require a trust parameter like a dermatologist coming and talking about it. You can amplify that using social media and influencers, but somewhere that element of trust, as you go more scientific and more clinical in nature, will be needed. And probably going dermatology first here would build that credibility for a brand instead of just putting in numbers or putting in certain chemical names which users don't understand, right?
But a lot of this depends on outcomes as well. Simran Bagga is the founder of Nutrial Chemi. She's joining us too. Simran, thanks for making the time for joining us on The Big Question. I wanted to ask you, when it comes to skin aging or pigmentation, even hair loss, what do you think delivers better outcomes today? Are they the topical products? Is it nutrition? Or you think it's a combination of both? What really helps?
I would say it's the combination of both. Like, we need nutrition to heal from inside, and also the topical creams will help. But the main thing is that we should be, we should get good nutrition, eat good food, which is going to ultimately help.
yes, eventually it does boil down to having that kind of balanced lifestyle. But Manisha, traditional beauty companies, they would probably prefer consumers buying another serum. Do you see a future where supplements actually are taking wallet share away from the skincare products? Do you see that happening in the future?
I don't think so. I mean, they will coexist with each other, but when it comes to buying serums, I mean, serums is not something, or the topical skincare is not something that could be replaced by nutraceuticals, what you're eating. You know, I mean, they will definitely coexist. So they would be definitely applying a serum, but alongside they might be also consuming something active, the active that's present in the serum. So they might be consuming that same active as well, through a nutraceutical, but they will coexist. It's not that it's going to take away any market share of the atopic application of the beauty.
But Dr. Dipali, if a consumer could choose only one, better skincare products or targeted nutritional support, which do you say has the bigger impact on long-term skin health?
Wow, Vikram, you're putting me on like a hot spot. But I would actually go for, cleansing and nutraceutical. But I think somebody who can buy nutraceutical can eat well. So that's going to be the concept. But beauty is truly inside out. It's not outside in, because outside you can even, just do some, because it's not expensive. A lot of cheap products also come, which are cheap topically, but very effective. So
I'm just wondering, just to help us understand, where do skincare products enter where targeted nutritional support doesn't do the trick for better skin health?
They go in tandem, and if you're not pretty inside, like I always say, like your skin has the biggest fan club as the digestive system. So if you do not have good bacteria, you cannot have good skin. So if you're going to eat well, your body is going to shine inside, which is going to make your skin shine outside. So I'm a strong believer of inside out beauty. So I would actually vouch for nutraceutical and my favorite sunscreen. So just two products can definitely give somebody good skin if somebody doesn't want to invest more on their skincare at night.
So on the skin, sunscreen and nutraceuticals to kind of get your skin glowing as well. But Suryansh, what's fascinating me about the Honasa story over here is that the company is moving from influencer-led beauty into this category where they have to rely on doctors, on practitioners, on clinical validation, on doctors like Dr. Dipali as well. Is that going to be a difficult transition for the company to make?
I think AI is going to help do that transition a lot better than anything else, because you will be able to do DIY cohortization of users in terms of saying this kind of parameter, this kind of symptoms, and be able to cohortize the right kind of nutraceuticals and supplements for these users. I think if a company can do this well, it can take nutraceuticals which are more cohortized to the mass market, and that could be the future.
But Dr. Dipali, isn't that dangerous if we start relying on AI? Maybe not influencers, but if we start relying on AI, and I've had discussions on how AI is progressing. So yes, it's going to be determined by who owns AI and that information. At the end of the day, is that going to be a difficult one for doctors like you to answer if a lot of your clients are going to refer to AI and decide whether or not they need the nutraceuticals or not?
Well, truly, Vikram, this AI is not such a great friend, and it would really, I fear it will turn out to be an enemy in the long term, because all of us, I'm getting my housemaid, I'm relying on AI. I'm getting patients who are relying on AI. They are doing their skin routine as per AI, and they're leading to sensitive skin. If they will go for nutraceuticals with AI according to their age, I don't know how long this is going to last. Because AI is not accustomed to your lifestyle, to pollution, to your stresses, to understanding many things which the inputs have not been given. Interestingly, I would like to not disclose the name, but there's a very big company from the States who's ready to buy data of doctors like us for their AI usage. But somehow I have decided to refuse to them because I don't know how it's going to be used. So a lot of doctors may have said yes to such researches, but I don't know how much to rely on AI because I feel it's a very personalized and a tailored approach. I don't even give same nutraceutical and supplement to 5 members of same family or city. When they visit me, it differs, so according to lifestyle and so many comorbidities and factors.
Suryansh, what do you say to that, the pitfalls of using AI?
So I think it is to be an amalgamation of both. You will have certain places where you will probably require blood profiling to be done to be able to get a curated answer to the right kind of nutraceutical that is needed. But as you're talking about mass market, the adoption hindrance to it will lead to mass market becoming a class market rather than a mass market. So there probably AI can bridge the gap in the start. If you're seeing good results, awesome. If you're not, probably you go more customization as Dr. Dipali was saying.
But Suryansh, you'll never have a situation, at least now we don't see a situation where AI says, this is beyond my ambit of knowledge. You need to take this to a dermatologist like Dr. Dipali.
So the AI, you cannot just put it in a generic generative AI tool that exists right now in a common sense. As Dr. Diwali was saying, there are companies who will customize this in a manner that it is safer, and it stops at a particular point where the distinction is not possible for them to be able to make it. And that assisted, that constrained curated AI solution offered by companies in a closed environment is something that could work a lot better.
So again, a balanced kind of approach, but I don't know how much that works on a practical level. Manisha Chopra, what do you say? You think a company can successfully balance two very different forms of credibility? One is the kind of social media influence that you have. Another is medical trust. And when you talk about social media influence, right now I'm putting AI also in the same bracket. Do you think all of these can be balanced out the way Suryansh is saying?
See, there is definitely a possibility, but the biggest challenge that we have today, the influencers who talk about, the real-time influencers who are talking about beauty, they are not even qualified enough to be talking about beauty. And I'm sure Dr. Dipali will agree on this with me, because there would be influencers, every other male, female, they call themselves influencers once they have 2,000-3,000 followers. And same thing when it comes to AI. There are a lot of AI videos being used, but what is the source behind that information? How are we making sure that actually the right information is reaching to the end consumer? So definitely, I see this as a big challenge, because today, if you go on AI and you try to find out, okay, what works for you, what is the surety about that it's actually going to work for you? And definitely, again, we are talking about, more classes, but when you go to masses, I think what Honasa is trying to do is it's going to more on off the shelf products than actually going towards the AI. So that's all.
Simran, now weigh in on this, because we're talking about a mass market category. Can nutraceuticals ever become that mass market category in India? Or you think the kind of pricing that we have, also the kind of awareness that we could have, would keep nutraceuticals largely confined to the urban premium consumers?
I would say that nutraceuticals can reach any area, but the main point I would say that these companies have to prove the outcomes, not only just promise them. Once they are proving their outcomes, they can win the consumer trust, and then only they can, reach mass, even urban areas, or maybe the, high urban areas like hi-fi.
Yes. So you're saying that evidence is required, and that's what customers are ideally looking for. How is that evidence going to be presented in a foolproof fashion, Suryansh, if you please?
So, as I was saying, see, in my company, I get blood profiling done for each and every customer, and we customize it, right? But the trend I'm seeing is a lot of users coming in with a lot of knowledge there. And they will, if a company is not being responsible enough to be able to bridge this gap, this information asymmetry will lead to a lot of usage of supplements in a wrong manner, where people may not find result and have spent a lot more money, right? So from a result perspective, nutraceuticals allow you to do cohortized personalization. And if you do that, your effectiveness from a result perspective will be very high. People can publish results by saying in a particular small cohort, we found results. But when you're doing it for a larger mass market, it will make sense for you to be able to do it right the first time, because you're trying to build a brand here that resonates with the users. It goes wrong once, you're out.
Dr. Dipali had a point to make. Go ahead, ma'am.
Yeah, please. I would like to just correct or get corrected. I believe that nutraceuticals have been given to the world by India. I mean, we've always had it all over urban and rural India. We're the only people who used to have amla for centuries and decades. And amla is one of the biggest components of most of the nutraceutical products in the purest form of vitamin C. Triphala is what is there for everybody who wants to lose weight or who is having constipation. And if you look at tulsi, you look at neem, you look at ashwagandha, it's always all been there. In every allopathic prescription also, this combination of these Ayurvedic nutraceuticals give excellent results. If my patient is having dark under eyes, I've always recommended ashwagandha because it always leads to better sleep without addiction, without any side effects, of course, along with some magnesium creams in the feet, but it's always a combination. So nutraceuticals will always be a part of rural India, and it's always been. And there have been very big brands like Patanjali, etc., which we needn't even name, which have existed forever. So it's nothing new for India to have nutraceuticals in a very big gamut.
So have we capitalized on it enough? We talk about yoga getting appropriated by Western culture. Suryansh, when you're talking about the opportunity over here, nutraceuticals, you think India is doing enough? This Honasa could be more than just a trend. Is this acquisition really about beauty, or is it about finding a higher growth, higher margin wellness business as competition in skincare intensifies at one level, but also capitalizing on what India has and can really build on?
See, as someone was saying, it is all about effectiveness. If you're effective in the market and your price points are in a manner of, let's say, 1,000 rupees a month is what I need to spend, and the vanity quotient is very high there, you will find people who will be willing to spend that money if they are seeing that kind of results. Now, how do you get results more effective? As Dr. Dipali was saying, I'll give you an example. Neem is such a great thing to take, right? But taken in large quantities, it can lead to constipation. Now, if you don't know this, or if somebody is suffering from constipation and you add neem to it, it could aggravate, right? So that level of customization, that basic level of customization, if you do, the first level of disproportionate ineffectiveness in results can lead to disproportionate outcomes from a result perspective. And if you can make this adoption easier in the market, it is a mass market product then.
But Suryansh, if I can ask you very quickly, since we're running out of time, when it comes to the execution challenge for a company like Honasa for nutraceuticals right now, what would it be? Is it about the integration of a pharma-style business right now? Would you say it is about building consumer trust? Or would you say it's about to prove repeat purchase behavior, which can be an outcome-based kind of behavior?
I think it's going to be a lot more cultural thing, because making a beauty product and moving towards something which is more clinical, how you manage that, it's a lot more responsibility from a user perspective. When you put out there and say, okay, this is the effectiveness and this is a clinical product to be managed, and that transition, how do they make that would define how the company shapes up. If this is something that they want to go big on, if they're looking at it as a addition to say something which is slightly more scientific and keep selling the same way, probably it could be riding a trend kind of a thing rather than something which makes it really huge.
So we've already seen, Manisha, we've already seen HUL, Marico, Dabur, several others. They are moving deeper into wellness. So if this Honasa kind of move actually works for the Indian market in nutraceuticals, do you think a lot more beauty companies are going to need a clear nutraceutical strategy? Do you see that taking off soon?
Absolutely, yes, Vikram. I mean, if you look at it, it's a very international thing. I mean, internationally, a lot of brands which are into nutraceuticals and doing really, really well. And India is catching up with that trend. So definitely, a lot of FMCG companies are already into it. And I see a lot of, skincare or cosmetic brands stepping into it very soon, because at the end of the day, if you see, it's like a capturing the complete 360-degree approach of what you're applying outside versus what you're consuming inside, and holding on to the whole thing that yes, we care.
Dr. Dipali, last question to you. Will capsules eventually sell more than creams, or will beauty always remain that category where the topical products are going to dominate? Your one-line verdict on this?
I think topical can never go, because a woman always enjoys putting something. So yeah, but result-wise, oral would be better if you ask a doctor like me. Yeah.
Oral is better is what you say. Suryansh, you agree?
Absolutely. Absolutely.
Right. Fair enough. So we've got consensus over here for the most part. It's about coexistence. The bigger story isn't whether creams are going to lose to capsules. It's that beauty is increasingly moving beyond the surface. And now as consumers are looking for more holistic solutions, the winners could be the companies that can combine the science, the trust, and the efficacy rather than simply selling another product. Like we heard from Simran as well, it's going to be a lot about outcomes and providing the evidence very clearly, not just through AI, but very clearly these outcomes need to be proven. The track record needs to kind of tell its own story. My thanks to Dipali Bhardwaj, Manisha Chopra, Simran Bagga and Suryansh Kumar. Thank you for joining us on The Big Question. And tonight, the big takeaway is that, yes, we keep saying that beauty is only skin deep. Well, now it can be consumed and you can shine through by consuming some of these supplements. But it is the growing story when you talk about the business of nutraceuticals as well, one that we are closely watching. I'm Vikram Oza on The Big Question. Thank you for joining us. Good evening.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with
Presented by Suzlon, good energies that work.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that's going to get you a roundup in terms of everything that has happened thus far in the next few minutes. But first things first, let's kickstart the show by talking about markets. Then Bilal Street ends with a strong bounce back as benchmark indices finished near the day's high as well. The Nifty reclaims the 24,000 mark while the Sensex surges more than 700 points as well, driven by broad-based buying across sectors. Let's also talk about the sectoral trends that remain tad bit mixed at the close. Now, realty and IT stocks led the advances while defense and some of your energy names were under a little bit of pressure, reflecting a rotation of flows across sectors as benchmarks ended the day on a strong note. Moving on then, let's talk about Honasa Consumer that is expanding beyond its core beauty and personal care business with a foray into nutraceuticals. The company is going to be acquiring a 58% stake when it comes to Fluence Pharma at an enterprise value of 135 crore rupees and plans to buy the remaining stake over the next 5 to 7 years. Now, the company has also incorporated Honasa Health as it looks to build a consumer-focused nutraceuticals portfolio and tap new growth opportunities. Let's also move on and talk about Pearl Global Industries that extended its sharp rally as when gaining more than 25%. As you can see on your screens, about 10% uptick coming in just today, but 25% over the past 5 sessions, scaling a fresh all-time high as well, and trading activity really remained elevated with volumes jumping to 12 times the 20-day average. The stock also recorded its biggest single-day gain since May, reflecting strong momentum as well as heightened investor interest in the counter. Let's move on and talk about IRFC shares that came under sharp pressure, as you can see, with that 6.5% thereabout, almost 7% knock coming in on this particular counter. After the government announced an offer for sale to divest up to a 2% stake in the company, the stock is now less than 7% above its 30-month low, while trading volumes jumped to 5 times the 20-day average as well, and the decline also marked the company's biggest single-day fall since March 2026. Let's also talk about Oberoi Realty that gained after the developer secured RERA approval for its maiden Gurugram project as well. So about 3% uptick coming in when you talk about this particular counter, and the clearance is really paving the way for launch and sales bookings, giving the company a strong entry into the Haryana market as well, spread across nearly 15 acres. You do have this particular luxury development that's going to be featuring low-density, hospitality-backed residences inspired by Mumbai's iconic 360 West project. On to the word coming in from brokerages this time. Let's talk about Syngene that was up about 2% in trade. Macquarie has maintained its outperform rating and is quite bullish, even though they've cut the target price just a tad bit, citing some of the headwinds in the CDMO business. Now, however, you do have the brokers really believing that the recent stock correction has already factored in some of these challenges and is underappreciating the company's medium-term growth levers,
also sees stronger commercial execution and higher utilization as some of the key drivers of improved profitability and returns going forward. Let's move on and talk about Tata Power, that has received a key regulatory boost after the Power Ministry extended the validity of its Section 11 directions. So some bit of profit booking that you saw coming in for this counter after the extension of the directions for the Mundra Ultra Mega Power Project until September 30th. Now the extension mandates the 4,000 megawatt plant to really continue operating at full capacity to meet high seasonal electricity demand. The order also ensures cost plus tariff compensation, providing revenue visibility for this particular company. And Mundra, which houses about 5 units of 800 megawatts each, supplies power to Gujarat, Maharashtra, Punjab, Haryana and Rajasthan. Let's also move on and talk about City Union Bank, that has approved a framework to raise up to 500 crore rupees through the QIP route, in fact, and the fundraising plan comes at a time of leadership transition at the bank, with R. Vijay taking charge as the new CEO from May 1st. The capital raise is also expected to strengthen the bank's balance sheet and provide additional firepower to support its growth plans going forward. Let's move on and talk about Ramco Systems, that was in focus after the stock hit its 6-month intraday high, surging more than 15%, with trading volumes really spiking to 17 times its 20-day average. The enterprise software company has gained 35% in the past month and over 60% in a year as well. Operationally, FY26 saw revenue growth driven by accelerating recurring income, while EBITDA margin expanded sharply to 24% from 14% a year ago. Management has also highlighted its payroll business as a key growth engine and launched its agentic AI platform for enterprise automation. Let's move on and talk about shares of Interglobe Aviation that climbed to a 5-month high after gaining nearly 15% over the past month. The rally has been driven by optimism around strong passenger traffic growth, improving operational performance and a favorable outlook when it comes to the aviation sector. Let's move on and talk about TCI Express shares that surged about 15% in trade, 16.5% at close as well, marking their biggest intraday move in more than a year. The rally is coming in after the company reported its highest quarterly volumes in 24 quarters, with Q4 freight volumes rising 4% on a year-on-year basis. The SME segment now contributes 48% of revenue, with management really targeting a share of more than 50% as well. Investors are also betting on capex-led expansion and improving margins in the next phase of growth. Let's move on and talk about Bajaj Auto as well, that came under sharp pressure, about 2.5% knock coming in on this particular account after the company really disclosed a ransomware attack that impacted its systems as well as those of its tech unit. Now, the automakers said that it swiftly implemented precautionary protocols as well, and that the mitigation measures have been effective so far. The stock also remained in focus as June 23rd, in fact, was the record date for its buyback of up to 46.94 lakh shares, and that's also a key update that you're looking at. Moving on then, let's get you some business news. Gold and silver prices have witnessed a sharp correction in 2026, with spot gold plunging nearly 24% from its January peak, while silver has also recorded steepest decline coming in 4 years. The sell-off has been driven by a stronger greenback, expectations of high interest rates and easing safe haven demand. Moving on then, let's talk about a rare move. Canada's Fairfax Financial has purchased nearly $1 billion worth of Indian government bonds through its local unit, Fairfax India Holding Corp. Reports, in fact, are suggesting that the investment could be linked to Fairfax's interest in acquiring a stake in IDBI Bank as India's privatization process gathers pace. The transaction comes after India's decision to exempt foreign investors in government bonds from capital gains tax, making such investments even more attractive. On to some national news now. A major rescue operation is currently underway in Kolkata's Taratala area after the roof of an under-construction warehouse collapsed. More than 30 people are feared trapped under the debris. Several workers were inside the 3-story structure when the roof gave way and locals initiated rescue efforts before police, fire service personnel, in fact, and disaster response teams reached the site. So far, 6 to 7 people have been pulled out while search and rescue operations continue. Moving on then, Mumbai remains in the grip of heavy monsoon showers after intense overnight rainfall battered the city and its suburbs. Parts of the metropolis recorded over 200 millimeters of rain, and that's in just 24 hours, disrupting suburban train services and forcing the closure of schools. The IMD, in fact, has forecast more spells of moderate to heavy rain, thunderstorms and lightning over the next 24 hours, keeping the city on high alert. Moving on then, let's talk about a major breakthrough coming in the Ketan Agarwal murder case. Pune police have in fact arrested his fiancée on charges of allegedly plotting and executing the killing. Investigators claim that the accused was involved in the conspiracy behind the murder, with evidence gathered during the probe leading to the arrest. Police are continuing their investigation to establish the motive and identify any other individuals who may have been involved. Moving on then, let's talk about authorities in Assam that are on high alert after torrential rainfall triggered flash floods in the state. In terms of one particular district as well, and the heavy downpours led to a sharp rise in river discharges, raising concerns of downstream impact in several districts of the state. Flash floods have also been reported near the Panur Lower hydroelectric project, where a spillway gate has been opened to release excess water and manage surging flows as well. Moving on then, let's talk about some international news. Southeast Asia could face a renewed bout of severe transboundary haze later this year as El Nino-driven heat and dry weather raise the risk of widespread forest and peatland fires as well. And you do have experts really warning that prolonged dry conditions may worsen air quality across several countries, disrupting travel, public health and economic activity. Governments in the region are closely monitoring hotspots and preparing mitigation measures ahead of the peak fire season. Let's move on and talk about Amazon CEO Andy Jassy, who's on a visit to India as the e-commerce giant really sharpens its focus on one of its fastest growing markets. During the visit, the company announced plans to expand its quick commerce network to 300 cities, significantly increasing its reach in the fast delivery segment. The move underscores Amazon's commitment, in fact, to strengthening its logistics infrastructure and competing more aggressively in India's booming quick commerce space. Moving on then, let's talk about reports suggesting that in a significant diplomatic development, Iran's president has reportedly invited PM Modi to attend the funeral of Supreme Leader Ali Khamenei as well. The invitation comes amid a period of heightened regional attention on Iran and its leadership. There has been no official confirmation yet in terms of New Delhi regarding the PM's participation in the ceremony. Moving on then, let's talk about Elon Musk, who's lost his trillionaire status after a sharp week-long sell-off when it comes to SpaceX shares that wiped out nearly $500 billion from his fortune already. The decline is coming in after Musk's net worth had surged to record highs, driven by soaring valuations across his business empire. Moving on then, let's talk about the world of sports. England and Ghana played out a hard-fought goalless draw in their FIFA World Cup 2026 group L encounter, with both sides sharing the points in a tightly contested match that you're looking at. Despite several chances at either end, neither team, in fact, was able to find a breakthrough. The result keeps the qualification race wide open, with both teams remaining firmly in contention for a place in the knockout stages. And Ronaldo delivered another record-breaking performance at FIFA World Cup 2026, scoring twice as Portugal thrashed Uzbekistan 5-0 in a dominant Group K display. Brace, in fact, added another milestone to his illustrious international career, while Portugal strengthened their position in the race for a place in the knockout stages. The emphatic victory, in fact, underlined Portugal's title credentials as the tournament really gathers momentum. And big bets and bold ambitions, let's talk about that as well. That's the message coming in from Adani Group Chairman Gautam Adani at the group's 34th AGM, from positioning infrastructure and AI as twin growth engines to really record investments, a massive power push, nuclear entry and scale across ports and data centers. Here are 5 key announcements signaling a high-stakes, future-facing growth strategy. Let's go across and listen in.
We have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future, with land identified and a 10 gigawatt targeted capacity by 2035. We are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030.
Alright, then that's all that we could pack for you on this edition of Market Express. Thank you so much for tuning in.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Sandeep Bhatia, Managing Director and Head of Equity India at Macquarie Capital, joins in right now on the show. Sandeep, great having you. Thanks so much for taking the time out and being with us. Neeraj here, good morning. I believe you guys had a conference, your annual India Investor Conference in the last two, 3 weeks sometime. Tell us, what has been your view by and large? Was it reinforced at the conference when you spoke to companies as well as your clients alike? And what's the post-conference outlook?
Well, we had the Asia conference, which happens every year in Hong Kong, and we have companies coming in from India and for the entire Asian region. And the outlook as far as India is concerned actually was completely benign and in fact a bit positive. We didn't see, we are not seeing companies showing any stress in top line growth. We are not seeing banks report any, any issues with non-performing loans with the MSME sector. So I think the sense one got is that for now the business is still strong. I think on a run rate basis we see automobile numbers hold up well. Consumption was also broadly fine. So that's the message I got. But what I, of course, was very interesting was what the rest of the world, rest of Asia is seeing. And the whole focus was AI, chips, and Korea and Taiwan. And the biggest question was, how long will this AI rally last, and whether India can perform this year. So that was the real, interesting part of this conference. But underlying the fundamentals of India seem to be holding up well.
Sandeep, so whether India can perform this year or no would be a factor of what the Nifty does, or will India set to have performed even if Nifty were to flatline, but individual pockets do well? I mean, normally people say don't miss the forest for the trees. Is this the time to let go of the forest view and focus on the trees?
Yeah, I would tend to agree with what we are saying. Actually, we are seeing a lot of movement and positive wealth creators below the Nifty headline stocks. So to that extent, yes, I would agree. But, finally, if you look at foreigners or large institutional investors, their exposure is still with the large cap stocks and Nifty and all these large movers. So to say that the market will continue to perform if these indices flatline may be a bit challenging, but that doesn't mean there's not opportunity below the headline stocks. That's the way I see it. But finally, the large institutional index players, so on, will still always look at the Nifty, and comparisons will be made across countries on headline indices.
Sandeep, Alex here. So therefore, that begs the question, couple of questions actually. One, if you're saying that the underlying growth, top line growth, and for banks, the asset quality, etc., is looking benign, it's looking good. So therefore, can the argument be made that the underperformance of large cap India vis-a-vis various other countries, because of the favor that AI has found, when that unwinds to a certain extent, which to a certain extent we're already seeing, we'll see that catch-up trade? That's one. And two, is there still room at the broader end? Because we've seen at the index level itself, Sandeep, since the start of April, 25% on the small cap index, 18% on the mid cap index, and much more in the way of individual stocks. Is there still room on the valuation side?
So, I think there are two parts to your question. Yes. So one, whether India will see the catch-up trade. I think India can see the catch-up trade, but in the interim, India will see pressure. We are seeing pressure come through because, stocks in the region are coming off. So if there is a broad-based sell down in the US or in Asia, I mean, essentially the US, because if US sells off, then Asia will sell off, and then India will also sell off in the interim. Because on the large cap stocks, there's not still much big valuation comfort, or there's no real expectation of big earnings surprises. What I said was that we are doing fine. That doesn't mean we are going to surprise on the upsides in terms of earnings and fundamentals. India itself has come through a difficult phase on all prices. We've seen RBI cut its GDP growth numbers. We have seen RBI raise its inflation expectations. So net, while India is doing broadly okay, we are not going to be a big surprise. So the catch-up trade can only happen if there's an earnings surprise or there's real valuation, a comfort in terms of the valuations are very cheap. So I would think that in the near term, India will therefore remain in line with the market movements overseas, especially US and Asia. And then if we see real valuation comfort or earnings surprise happen, then we can see earnings, the market start catch-up trade and the reverse trade. As far as mid cap, small cap, yes, but these are very specific and very individual company driven. So to that extent, you need much more due diligence and much more research than some of the large caps, which are known items and have much better quality of disclosures and management. So the risks are higher in these.
So thank you, Sandeep, so much. Your views are always welcome and always a pleasure to speak to you on NDTV Profit.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300
Good evening and welcome to The Bottom Line. I'm Vikram Oza. This is that show on NDTV Profit which gets you past the headlines really, and we tell you why the news actually matters. These are the leading news stories that we're tracking on the show this evening. The Commerce Minister Piyush Goyal and the US Trade Representative review the progress made on the India-US trade deal. Talks are exploring avenues to deepen economic ties, and they're focusing on tech, trade and market access. In an NDTV Profit exclusive, Iranian oil minister is likely to hold talks with India officials tomorrow, and this as India weighs the return to crude imports. Both nations will discuss cooperation in the oil and gas sector. Today, the markets have ended higher, the street clawing back from yesterday's losses, the Nifty springing back from support levels, ending above the 24,000 mark. Interglobe Aviation and Adani Enterprise topping the charts. The broader markets, meanwhile, have underperformed the benchmarks. In the currency markets, the rupee ending higher as asset classes across Asia recover from Tuesday's slump. The currency is back at 94.66 to the US dollar. 2036 bond yields have ended at a 3-month low. From resilience to record investments, the Adani Group chairman mapping an aggressive growth roadmap, betting big on infrastructure, digital platforms and scale to power India's next economic cycle. Meanwhile, Amazon CEO Andy Jassy is in India. He met leading Indian CEOs at a roundtable in Mumbai discussing AI, innovation and India's role as a builder. Amazon plans to now expand Amazon Now to more than 300 cities in the country. A defining chapter closes at Trent. Noel Tata stepping down as the chairman of Trent after almost 30 years in the chair. It marks the end of a transformative leadership journey. The monsoon brings mayhem to Mumbai yet again. Flooded roads, trees uprooted, traffic disruptions. A man identified as a sanitation worker fell into an open manhole, and this happened right in front of the Mumbai mayor. And here's our top line on the show. Commerce Minister Piyush Goyal and US Trade Representative Ambassador Jameson Greer. The two gentlemen have had multiple rounds of negotiations, and they're reviewing the progress in the ongoing India-US trade negotiations, and discussions are getting focused on concluding that interim agreement under the broader bilateral trade agreement, that entire framework under discussion. Key areas under review include the market access point, also digital trade, supply chain resilience and the reduction of non-tariff barriers. Ambassador Greer has also highlighted India's interest in deeper collaboration in AI and emerging technologies. And on his part, Mr. Goyal has emphasized that both sides are working constructively to bridge the gaps and also to deepen economic ties and move towards a mutually beneficial deal. Just listen in to what we got from Ambassador Greer.
We know that India has a long history of agriculture, of manufacturing, but we also know that they're moving forward in technology. They want to move forward in AI. They want to cooperate and collaborate with the United States on the technologies of the future and trade of the future. And that's some of the exciting opportunities that we'll have between the United States and India, is to capitalize on that.
Let's put that in context. My colleague Rishabh is joining us. He's been tracking all that's happening on this front in Delhi. Rishabh, where are we now on the interim trade deal? How close are we really to a sign-off there?
Absolutely. What was expected was some sort of a breakthrough in this trade deal. Some more progress was perhaps expected, but that has not come. We're still at that 99% mark that a lot of these top US as well as Indian officials have echoed, that it's just that 1% of that bridge is yet to be, that gap is yet to be bridged, and that's what we're still looking forward to. But what we can pick up from the statement that has come in from India's Commerce Ministry, what they've said is that both Jameson Greer as well as Commerce Minister Goyal, both of them conducted a very comprehensive review of the core elements of the BTA, and this includes your market access, digital trade, supply chain resilience, as well as reduction of non-tariff barriers. Remember, the number one talking point of this trade deal is going to be the tariff rate at which India and US are going to trade at, and that is the number one takeaway. What we're looking forward to is a competitive advantage on that front. Remember, earlier there was 50% tariffs on India. There were talks, and that came down to 18% before the Supreme Court of the United States actually struck down those tariffs entirely. So what we're looking at as is something at a similar level to 18% or better, and that is to give us a competitive advantage versus other countries. So that's what we have after the latest visit and the first visit by the US Trade Representative, Ambassador Greer.
Yes, the first visit by Ambassador Greer, but now that we are stuck at 99%, that 1% remaining, we'll have to see exactly how it goes while he is around. But here's another exclusive that Rishabh is tackling amidst the reports of concerns around the GE F414 engine program. We're hearing from sources, Rishabh has been speaking to them, and they have clarified to him that Hindustan Aeronautics, the ongoing negotiations with GE, they remain on track, and that any reported pricing-related issues are not linked to those discussions between HAL and GE, and those are continuing as planned, is what Rishabh has heard. Rishabh, fill us in on this.
Absolutely. So what sources are telling us is that the fact that the HAL stock broke down today in trade it's a separate matter. There are two separate tracks of negotiations that are going on, and HAL's negotiations with GE are ongoing and they remain on track. They are continuing as planned. That's what we're picking up. That's what sources are telling us. The reports of this F414 pricing dispute are not linked to these separate track of talks. And that's what we're picking up. And this may... the other matter is, of course, the DRDO's AMCA program. And that is where the discussions are more in focus. And that's not with HAL. So the price coming down on the stock today and this particular development may not be directly related is the key takeaway from what sources are telling us.
Thanks very much for filling us in on two important stories we're tracking here on the bottom line. It's one is about the trade deal and the other about that deal between HAL and GE. Meanwhile, turning our attention to the monsoons in Mumbai, yes, a dramatic arrival, and it's left already a trail of disruption across the maximum city. Heavy rains and gusty winds, they've triggered this waterlogging. They have uprooted trees, causing structural damage in several parts of the city. In one very alarming incident, a parked car was crushed after a wall collapsed. It highlights the risks that are posed by intense weather. Also, in a separate incident that has drawn widespread attention, a civic worker, a sanitation worker, was swept into an open drain while he was carrying out field operations in the presence of senior BMC officials. In fact, the mayor of Mumbai was there as well. So search and rescue efforts are continuing from what we understand. So with more rain forecast over the coming days in Mumbai, authorities have stepped up monitoring because the city is bracing for further monsoon-related challenges. But it's an annual story as far as Mumbai is concerned. But why do we have that story? Let's discuss that. Is it poor urban planning? Anupam Shukla is with us. He's infrastructure risk expert and also the co-founder of Inspire Safety Foundation. Good to have you with us, Anupam Shukla, but not the best of reasons. A civic worker being swept into an open drain. Incidents of wall collapse. It doesn't change. These are serious questions about risk management in a city like Mumbai. You think these are isolated accidents or there are signs of a deeper systemic gap in Mumbai's infrastructure?
So this is the very common problem when the rain starts. There are the waterlogging and flood everywhere, particularly low level area like Dadar and Sayan. These are the areas where every time waterlogging happens. Municipalities do their work. They take this, pre-monsoon preparations on very serious note. But then sometimes what happens, the best is not good enough to, survive these kind of situations. These kind of problems happens because of there are the, several departments within corporation itself. There may be lagging up between coordination and cooperation between department itself. So that, these kind of preparations, they do not, get sufficient for prevention of these kind of issues.
But Mr. Shukla, for a city that's contributing significantly to India's economy, it's the same story year after year. You tell us, what's the real business cost of a single day of this kind of monsoon disruption in terms of productivity or logistics, commuting, the lost man hours? What do we lose when we have days like this?
Yeah, that's the biggest problem. Mumbai Municipal Corporation is the biggest municipal corporation in country. And having the biggest corporation, they have their own challenges and difficulties to handle these kind of problems. The older infrastructure that, since long years, is not good enough for current situation, and bringing the infrastructure at a whole change, this will require a very big challenge. corporations are doing at their best, but then that is the problem.
But Mr. Shukla, we're building more roads, we're building more flyovers. There is real estate construction that's happening over the years. I'm just wondering if infrastructure growth is outpacing drainage or safety planning. Is it creating new vulnerabilities now for the city?
That's the biggest problem. Development is happening at all across sectors. There are the agencies working. The roads are being built, the cables are being provided, electricity cables and drainage and sanitation. Everywhere the work is happening. But then the problem is that, bringing them to the feasible conclusion is the biggest problem. The coordination and cooperation must be there to, precause this kind of situation and take necessary action before they become the problem for common citizens.
So if you were advising city administrators right now, Mr. Shukla, if you were advising businesses today in the city that operate from here and have these annual issues when the monsoons arrive, what would you put down as the 3 most urgent steps that need to be taken before the next heavy spell hits Mumbai, which could be tomorrow itself?
Correct. So, at this stage, I will not blame, but then I will say that these are the agencies, they are responsible for welfare of the common citizen. They need to take, anticipatory actions. They understand that there will be the problems, the rain will come, monsoon will come, the drain will flow, and then the trees will be uprooted. So keeping these things in mind, they need to have the proper planning, proper execution of the planning. Maybe the planning is there, but then sometimes that the execution of these plannings is not happening. And that is the situation when we see that, corporation is not doing anything. It is not like that there are the officers, there are the people that they are responsible for planning and doing, taking correct actions. But
in that case, where does the buck stop, Mr. Shukla? Who should ultimately be held accountable for urban resilience? The civic administration, do you think? Is it the developers, the utility agencies? You think we've reached a point where everyone shares responsibility, or you think we need to have the buck stop somewhere so that there is some amount of accountability and we don't have such situations year in, year out?
Yeah, definitely. There must be accountability on the people, those who are responsible for maintaining and keeping the infrastructure in working condition. And that accountability must be there to the officers, to the government bodies. And they must take action, preventive action, that these kind of situations do not arise.
Well, every monsoon, Mr. Shukla, every monsoon, it exposes the same reality. Rainfall may be natural, but the scale of disruption is often man-made. Building a truly resilient city is not just, of course, a civic priority as we see it. It's an economic necessity. But thank you for joining us with your perspective on this. Appreciate the insights that you've given us.
Yeah. Thank you. Thank you very much.
Meanwhile, we are watching more developments take place when it comes to Iranian oil. We've got an exclusive update here on NDTV Profit. The Iran oil talks, they are back as Minister Mohsin Paknejad is set to meet Indian officials now. Discussions are going to focus on boosting energy cooperation because India is weighing resuming crude imports. So National Iranian Oil Company is reaching out to Indian refiners and traders. But there is caution that prevails amidst US sanctions, the kind of uncertainty that looms over that. But let's get more about this from my colleague Shesha Sen joining us. Shesha, what have you heard on this about now Iranian oil coming back into the fold and Indian side buying it?
That's right. Actually, what we have gathered so far is that India and Iran are set to hold discussions on energy cooperation with Iranian petroleum minister, likely to meet officials from the petroleum and natural gas tomorrow in the national capital. Now, sources say that the talks will focus on cooperation in the oil and gas sector. And we see that, this particular development comes at a time when India is evaluating the possibility of resuming imports of Iranian crude oil. What we have also learned is that the National Iranian Oil Company has reached out to Indian refiners and traders, as Iran looks to regain market share in India. However, industry sources indicate that Indian refiners remain cautious and are waiting for greater clarity on the U.S. sanction, or rather the temporary sanction which lasts for only 60 days before committing to any larger purchases. Payment mechanisms mechanisms, logistics continue to be key concerns, making any large-scale return of Iranian crude to India unlikely in the near term. A measured approach is what is likely to be followed by, by the Indian refiners before they actually, gradually revive any kind of imports from Iran. For context, Iranian crude accounted for about 11% of India's total oil imports in 2018. India halted imports from Iran in May 2019 after tighter U.S. sanctions were imposed. So we'll have to see, if Indian refiners resume their purchases again, to pre-2018 levels or not. But it is also to be noted that Indian refiners, they have resumed limited purchases of Iranian crude in April after a gap of nearly 7 years.
So limited kind of imports have started of Iranian oil, but whether or not there will be more depends a lot on American sanctions, and there is uncertainty on that count. We'll see how these negotiations progress. But Shesha Sen joining us with the very latest. Thanks very much. Meanwhile, even as diplomatic efforts appear to have lowered those tensions in West Asia, the war of words between Washington and Tehran continue. So US President Donald Trump has pushed back against reports suggesting that Iran plans to levy tolls or even additional charges on vessels that transit the Strait of Hormuz. And he says Tehran has assured Washington that no such fees or insurance costs are being sought. In fact, Donald Trump has also denied reports that the US had released funds directly to Iran, even as he indicates that some Iranian funds under American control could be used to purchase American agricultural products, and that includes corn, wheat, and soybeans. Meanwhile, on their part, Iran is portraying the emerging agreement very differently. So we've heard from Mohammad Bagher, who's the head of Iran's negotiating team, and he's describing the understanding that has been reached with the United States as America's declaration of defeat. Those are the words being used. And he argues that the outcome was driven by Iran's resistance and strength rather than external pressure. While Washington and Tehran continue to project that agreement as a victory for both their respective sides, one thing is becoming increasingly clear, and that's the bottom line. If the understanding holds, Iran could be among the biggest economic beneficiaries. From higher oil exports to access to frozen assets, that potential financial gain for Iran could be quite substantial. And we're talking about Iran exporting its oil to India as well as part of all of that. We'll see exactly how that pans out. Meanwhile, Swiggy's quick commerce arm Instamart seeing a top-level leadership reshuffle. COO Ankit Jain and CBO Hari Kumar stepping down from their roles. And sources are saying the company has already identified the replacements. A new executive is expected to join Instamart in the coming weeks. My colleague Ridhima knows more about this. She has the details. Ridhima, what have you heard about the leadership switches at Swiggy?
As you rightly said, that CEO and CBO of Swiggy Instamart have exited. It's Ankit Jain and CBO is Hari Kumar, which have resigned. Now, Swiggy, as per our sources, has already identified a replacement for the exiting executive. And these new executives are likely to join Swiggy Instamart in the coming weeks. Now, this is one of the, that's been happening in Swiggy, this leadership reshuffle at the quick commerce business. And these changes of top-level management come amid intensifying competition in the quick commerce space. We reached out to Swiggy. They haven't really commented on this. As far as where Ankit Jain and Hari Kumar would be going to, we are not sure of the companies they would be joining.
All right, fair enough, Ridhima. We'll leave it there. But of course, more to follow as far as the leadership change at the top of Swiggy is concerned. But this is the latest information that we have on the top executives exiting Swiggy, and then the replacements already being discussed. And we'll keep you on top of that. Meanwhile, big bets and bold ambitions. This is the message we are getting from Adani Group Chairman Gautam Adani. This was at the group's 34th AGM. From positioning infrastructure and AI as twin growth engines, to record investments, there is a massive power push, also a nuclear entry, and also scale across ports and data centers. We got some 5 key announcements which signal a high stakes and future-facing growth strategy from the Adani side. Listen into what we got.
We have the ability to connect every critical layer of infrastructure that is needed to power the age of intelligence. In FY 25-26, we made a record capital investment of more than rupees 1.5 lakh crore in hard infrastructure. To put that in perspective, this represented over 30% of India's total new private sector capital expenditure of the year. At Adani Power, we are implementing India's largest ever private sector power capex program of over rupees 2 lakh crore with a target of reaching 45 gigawatt of capacity over the next 5 years. Our entry into nuclear energy through Adani Atomic Energy is another confident step towards securing India's long-term energy future, with land identified and a 10 gigawatt targeted capacity by 2035. We are positioning ourselves early to serve the growing national demand for clean, round-the-clock power. Adani Ports handle over 500 million tons of cargo in financial year 2025-26, setting an unmatched benchmark for the nation and creating a clear pathway to 1 billion tons by 2030.
That's what we got at the AGM from Mr. Adani. Meanwhile, the Madras High Court has temporarily halted certain project works that have been undertaken by Foxconn subsidiary Uzan Technology India in Tamil Nadu, and this is amidst that ongoing contractual dispute with BNR Infrastructure Projects. So the court has ruled that Foxconn subsidiary Uzan cannot continue that project either directly or even through third parties until the 29th of June, when a 30-day post-termination period under that very contract expires. So that dispute stems from a construction agreement, an agreement that was signed in October last year. Foxconn subsidiary issuing a partial termination notice to BNR on the 30th of May over alleged delays. While the matter is now before an arbitrator, the High Court has observed that contractual obligations following termination must first be completed before project execution can continue. So that's what we've got from the Madras High Court today. Meanwhile, Indian green card holders in the United States could soon face this significantly higher cost of becoming American citizens. The US Department of Homeland Security has proposed raising the citizenship application fee by roughly 75%. It takes the cost of a paper-based naturalization application from about what was $760 to $1,330. So that proposal is also seeking to eliminate fee waivers and reduced fee options that are currently available to lower-income applicants. This move is particularly relevant for Indians. They are among the largest groups applying for US citizenship every year. Then this, of course, after they obtain their permanent residency. But the proposal is still in the consultation stage right now. It will need to go through a public review process before any final decision is taken on that kind of more expensive nature of citizenship for America. And now we'll see exactly what happens on that count as well. It's going to be very closely watched. Turning our attention to more geopolitical matters, and this is closer home. This is about Bangladesh Prime Minister Tariq Rahman, scheduled to meet the Chinese Premier Li. And this is going to happen on the 25th of June. Chinese President Xi Jinping on the 26th of June. This is during that ongoing official visit to the country. They're going to meet. A key element in those discussions is where our focus is. Between Bangladesh and China, there is a proposed plan. And of course, there will be final discussions for Bangladesh to acquire the J-10CE fighter plane from China. And this is what sources have confirmed to NDTV. Security analysts are saying this move could create a new dual-front air dynamic against India. Pakistan also operates these fighter planes, and these planes were reportedly used against India during Operation Sindoor, during which the Indian Air Force effectively neutralized terrorist threats from Pakistan. So now Bangladesh wants those same planes, is what we understand from our sources. We'll see exactly how that pans out after that meeting. Then there is Amazon, which is sharpening its focus on India's quick commerce space. CEO Andy Jassy announcing plans to scale their Amazon Now delivery in minutes network to more than 300 cities across India. And in a fresh update, Jassy has met leading Indian CEOs in Mumbai. There was a roundtable discussion on AI and innovation. And the conversation centered on how artificial intelligence could move from early adoption to real business impact, and India's growing role as well as a global hub for building technology. Amazon says that Amazon Now is currently its fastest growing business in India. Orders reportedly doubling every quarter since it got launched. And that's an important piece for Amazon, which explains why the CEO was in the country and having those important discussions. And that's where we'll wrap it up on this edition of The Bottom Line. I'm Vikram Oza from me and the team. Thank you so much for joining us. We'll see you same time tomorrow. Keep your date with us. Good evening.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook?
Presented by Suzlon. good energies that work.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where we get you all the buzzing stocks, mid cap, small cap, and is there any alpha to be made, and we do a detailed analysis and also the conversation with management. And today a very interesting company has come. It's a small cap, mid cap company, but before that, try to guess it, and it's buzzing all over the place. It's a distribution partner for tech brands. That's the first hint for you. And the second one, where a lot of news flow is coming, is the company will be acquiring 100% stake in VDA Info Solutions. Of course, you must be getting the answer by now. And company is backed by Madhu Kela's at entity, almost 2.44% stake as well. And the stock has more than doubled from March lows. Okay, these are the hints. But the company in focus is Rashi Peripherals. This is the company which we are talking about. And the main question is the acquisition announcement which has come in. So we need to understand, the first question is, what does this synergy come up between a company like Rashi Peripherals and VDA Info Solutions? Also, we'll try to understand the timelines and the acquisition details as well, and how the funding will happen. Of course, a major part of the conversation will be on this big acquisition coming in. Stock has also run up, but other key questions are also there which we need to ask the management. And of course, this also includes the timelines for the management, and also look at the business model and the moat. Does that change right now? That's the big question to be asked. Growth and margin outlook ahead. Does it change the entire trajectory of the company? And looking at the expansion plans for the semiconductor business, couple of announcements were there, so we'll try to delve into this. Apart from this, also there is a demand shaping up in the AI related products. A lot of that has come up. Are they onboarding new clients in that segment? Also, we'll try to understand, is there any other acquisition or tie-ups expected as well? So quite a strategic conversation we'll be having with the company. And of course, these are the two spokespersons also from the company where we will be asking our queries. But let's try to understand, how does the business work? What is the moat of this business? Or is there something fundamentally changing or not? The company itself is a Mumbai-based company. It was incorporated in 1989, but it's a recent listing in February 14, 2024. Almost 2.5 to 3 years of history is there. They have information and communication technology, which we call it ICT, products and solutions. And largely we can say these are related to tech. There are services also. This includes pre-sale activities, solution design, and technical support. So this is just not products. Services is also something which the company does. Apart from this, let's look at the key details. The company is backed by Madhu Kela's at entity, and that is pretty much a very strong point for the stock. A pan-India distribution infrastructure, it spans roughly across 700 locations. So the core business model is on the distribution front. They have 55 branches, 50 service centers, and 71 warehouses. Apart from these numbers, they have certain segments, the verticals. This is of course your PC enterprise solutions and lifestyle and IT essential, two verticals where the company is actually working with. Almost 78 global brands have partnership, and more than 10,300 channel partners is there. So of course, distribution is something which the company has the moat. That's what we are understanding. But this is pretty big. The VDA Info Solutions acquisition, that's roughly 550 crore valuation coming in. But we did a little bit of calculation. The deal comes in at a price to sales of 1.5 times. This is largely value accretive as per the street analysis. The acquisition will be funded by internal accruals. That means it will be funding from the company's book in the cash levels. So this is the overall picture of the acquisition, but the balance 3,300 will be acquired in tranches. That means a total 100% stake acquisition will take place up till August 2029. VDA is in the business of enterprise technology and digital solution space, and this is the entire picture. But the question remains is, synergy kya hai? Isse fayda kya hone wala hai? This is very much important. Do note it down. The full spectrum of enterprise technology value comes in. Deep tech experience, as we call it, that comes in from the company. The further expansion happens for Rashi Peripherals in the value chain. Now you understand there is a distribution at play, there is a tech expertise, both of them coming together with this acquisition. Already VDA is a partner to IBM, Dell, Broadcom, Cisco and Palo Alto Networks as well. These are the large names. So definitely they onboard also good clients. The distribution meets the technical enterprise, agar isko simplify kare to. So what are the FY26 numbers, the key factors to look at? They have stated that there is a rising demand coming in for the ICT products. Two other things which have been mentioned by the management, this includes the sustained tier 2 channel stocking. That is where we are seeing a lot of interest. And lastly, favorable pricing trends are coming in the key categories such as components and storage. But this was just the FY26 number. But let's try to understand the positive and the negative portion for this company. Video Info Solutions acquisition, this is giving a lot of synergies as we have discussed. That's one point. Secondly, the balance sheet is kind of strong as well. Of course, a little bit of borrowings is there on the higher side, but the net debt to equity ratio that has come down. They are expanding into the semiconductor footprint. This is the Singapore and Indian arms. That's what we are trying to focus on, and the distribution expansion continues for the core business as they are moving towards new states and new locations. And also, what may not work for the company, this is the execution risk for the acquisition. Kya pata samay, the timeline can be there for the execution, might be delayed. Secondly, the core business model is very low margin, 2 to 3%, that's all. So whether this will become value accretive and the margin profile changes after this acquisition, that needs to be studied. There's a lack of analyst coverage also for this company, and because of that, we tend to get these companies in KYC. Valuations are not attractive because these stocks has already seen a massive run up. So this is the entire picture for Rashi Peripherals, but let's try to get inside the KYC ratings, where we'll judge this company. Of course, this includes income statement, balance sheet, cash flow, the return ratio, the usual numbers, but also we get in the shareholding pattern, how things have moved. There is, of course, astute investors invested in this stock, and also largely the valuations and the outlook and street cred. How much has the company made money for the investors? Let's start with income statement. And I had already mentioned you the growth is coming in the top line in the operational numbers. Look at the 3-year CAGR. That is where a good momentum is coming in. 19% up, 22% up. So there is a good amount of trading revenue also being included here. Let's just see the Q4 numbers, how things have panned out, and I'll also explain you the margins. Largely the numbers were even Stevens here. Little bit of profit also going up, almost 65% on a year-on-year basis. But my only concern in this entire business model is the margins front. The margins has almost single-digit margins, and that's where a little bit of concern definitely comes in. But that is something which is the inherent nature of this business. But overall, the top line, the PAT, these numbers, CAGR is good. So it's a strong thumbs up for income statement. Balance sheet, let's have a look what's happening here. A little bit of concern for me comes in because of the elevated borrowing levels. Yaad rakhiye, is dhande mein working capital zyada lagta hai. That's why at times the numbers might look stretched, but this is the model for it. Almost 81 crores of cash on the books, and this will reduce as well because of the acquisition of VDA Info Solutions. So it's a neutral rating for the balance sheet. Let's come over and understand the cash flow segment. And of course, the cash flow will be impacted going ahead because of the acquisition which I had mentioned. But definitely there seems to be a little bit of positive momentum coming in and conversions in this business model. So net, it's a neutral rating for the cash flow segment. Return ratios, on the other hand, there seems to be a little bit of improvement coming in. It's largely a very stable ROC setup, but now this number is expected to come down because of the for this acquisition. But as of now, it's on the higher side, almost 16% coming in the ROC. Let's pull up the ROE numbers to show you what's the picture looking like. Of course, it was on the higher side at almost 19% in FY23, but then a little bit of downtick, but then now again this up move coming in, and that is why I've given this a strong thumbs up as well. But remember, for the future, the return ratios might show compression for FY27. Let's also talk about shareholding, what's happening here. Promoter stake, a minor up move has happened from 63% to almost, you could say, 64%. But look at the magic here. FIs and DIs, how things have moved. It's largely stable for FIs. DIs, on the other hand, have been increasing the stake from 14% to 17%, and astute investor Madhu Kela's at NTT also has 2.4% stake. So I'm going to give this a strong thumbs up when it comes to the shareholding. Let's talk about the street cred, what happens here. And remember, the company is having a very limited history from 2024 onwards, where its IPO was there. From its IPO price, it's doubled, it's up 107%. But look at the magic. The March itself, the lows, the stock has more than doubled up as well. So overall, there's a very strong momentum in the stock, and I'm going to give this a thumbs up. But remember, if the stock has run up, the valuations would be under the question. The 3-year average, what I've taken, is currently at 23 times. And the trailing 12-month P ratio, that stands at roughly 18 times. The 3-year peak which was there, that was also, you could say, almost 23 times, and it's just a reversal happening in this. But net the valuations are not attractive, so I'm going to give this a thumbs down. Also, let's talk about the outlook, what's happening here. And the street is bullish on this acquisition, but there are more details to it as well. We'll try to understand that. The focus is much more on the value addition product. Of course, a little bit of forward integration also comes in. Enterprise tech and digital infra, that is where the company wants to focus going ahead. And that's why this acquisition has taken place. The synergies are expected in the distribution and the deep tech enterprise. That's all we are looking at. So this is the outlook, and it's pretty much strong right now. But let's give you the entire picture, the KYC ratings for Rashi Peripherals, how it stands. Largely income statement, CAGR numbers were strong, but a little bit of concern for the balance sheet and the cash flow. The return ratios, the past numbers have shown a good up move. Shareholding is pretty strong because the DIs are increasing their stake. On the other hand, street cred, the stock has doubled up already from March lows, and that is why the valuations are not that attractive. Outlook seems strong. The final rating for the stock is roughly 6 out of 8, which we have given for Rashi Peripherals, and this is largely on the higher side of the average for this. Now we will be having a chat with the management of Rashi Peripherals, and of course the biggest news is their 100% acquisition of stake